Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a plug for a book called High Probable Japanese Candlestick Patterns. Before we get into that plug, we just want to give you our disclaimer real quick to remind you that this video is for illustrating. Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a plug for a book called Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and today we have a live webinar for you, Forex Trading Strategies Live, February 17th, 2021. And we're going to, let me give you a little bit of a background about myself real quick. I have over 30 years of trading experience in futures, Forex, stocks, options, and binary options. I have a degree in finance from DePaul University in Chicago. I have over 20 plus years of trading floor experience. I started at the CBOE, I was at the CME for most of my tenure, and also at the CBOT as they did the merge and became one exchange. I am the president and owner of Forex Trading Unlocked Incorporated. I am also the author of the book High Probable Japanese Candlestick Patterns. Really quickly, just want to show you our disclaimer just to remind you that this webinar is for illustrative and educational purposes only. And with that, I'll give you one quick reminder that if you haven't already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right, get ready to rumble with the Forex markets. Let's get on with this webinar. All right, today's focus, how to use the markets as an indicator, simple techniques to identify potential trade setups, how to reinforce your position outlooks, how to take actions on potential Forex trends, Forex, futures, options, and binary options plays. They are all related. We will discuss how you can integrate these for those of you that are not just Forex traders. We will have an interactive question and answer with the chat. We are also going to do a little freestyle market analysis, so if you have any questions about any markets as we go through this, after I get through the mainstream stuff, we will go and attack them and see what we can pull up for you live, okay? And we will help you to build up your trading arsenal. These are our goals for today. All right, so with that, let's get started. Okay, we have the Forex-Trading-Unlocked.com website already pulled up here, and we already have the workstation tab, which we got from the nav bar here. We pulled that up already. So we're going to scroll down. In today's webinar, we're not going to go over any numbers or anything. We're getting into the meat and potatoes of things. So we have the dollar index yesterday, which posted a short-term buy signal here. This yesterday's trading set not only a short-term buy signal right here, it also established a higher move low after a higher move high. This helps to secure the bullish trend. So we also have a bullish engulfing,
especially like on a day like today,
engulfing line
and the U.S. dollar, Japanese
buy
yen
signal
forming signals at the same time.
Okay, so this is a high probable Japanese candlestick pattern. This here is the bullish engulfing line. So for the index, we have a short-term buy signal, which is being generated off of a higher move low. Okay, so this low is higher than this low over here. So the trend right here, we established a bottom back here in the beginning of January. We made a lower move high, we made a higher move low, a higher move high, and now we've established a higher move low. All right, now let's get to the euro US dollar. Okay, so now that we've established that the trend for the dollar index and the dollar itself is bullish, let's take a look at the euro US dollar. Okay, let's see what's going on here. All right, so far we have, what do we have going on here? Today's trading, this is just in slight delay. We have a lot of selling action. Now we had a bullish engulfing line buy signal that had occurred earlier in February. Now, the thing is that it already established its target right here. And to give you a little bit of an idea about that, we're going to pull up the Euro US dollar on our Ninja Trader platform. And if you notice here, we have the bullish engulfing line marked, and last week we had hit this line right here at $1.2148 here, and we had set a short-term top here. This established a lower move high, then we made a little bit of a higher move low,
and then yesterday we spiked, making a higher move high. However, that was only on the hourly and short-term daily basis. Yesterday's spike high was lower than this high here. So after a lower move low, we established a lower move high, and now consequently we are selling off in a big way. I mean, between the high of yesterday, we have $1.2171, and the low of today is $1.2029. That's a very big slide in a 2-day session, which really has resulted really in 24 hours. Okay, so our downside target now here is $1.1951. We are looking for a retest of this last low over the next like 3 to 5 sessions, especially with the dollar index looking to lean higher. Okay, now let's just say that we're wrong on this analysis. Should we take out the high from yesterday? Well, then we're looking to challenge our extreme upside targets here at $1.2196 and $1.2243. So if you are bullish, or if you're looking for a breakout play, if you are short, you do not want to be short above this high from yesterday. So that's something you want to be mindful of. Remember that the overall trend for the Euro US dollar has been a bullish one. It has been rallying for the past couple months in a very, very strong way, and especially over as we made the transition into from the end of 2020 into 2021. So we've had a lot of volatility and a lot of bullishness here, a lot of bearishness to the U.S. dollar. So right now the dollar has been in what we will be considering a corrective phase. On the weekly, because in the daily it's now bullish, hourly it's bullish, but weekly and monthly for sure the trend is neutral at best, but still bearish in the long run. And the same is for the euro, which is the #1 component of the dollar index. Now, because of this sell-off today, this is helping to drive the dollar index higher, which is getting follow-through from yesterday's buy signal on the index basis. So what does this mean for you traders out there? Okay, well, we have some key levels for the Forex market. We know that right here we have this marked here at $1.2192. However, that was before yesterday and today's follow-through. So like we showed you on the Ninja Trader platform, this is now our new risk level. So if you're short, this is the level you want to be short against, $1.2171. Anything above $1.2171 will have this market hard pressed to be bearish. It will put us back on the rally campaign. So, but anything below here, especially with today's action here, we're looking for a test of this upward sloping support line, which has been holding this trend intact in the short run. And a failure from here will have us testing the low from back here where we had this initial buy signal. Now remember, this buy signal had already hit its upside target, so it was done. Okay, so now the fact that it turned around a few days later and now is having this reaction, this helps to follow through with the short-term trend, which has been progressively making lower move low, lower move high, lower move low. Now we have a lower move high that was established yesterday. Remember, the trend is your friend. You always want to try and be mindful of where the trend is going, but you also want to be trying to trade along those parameters as well. If you trade with the trend, odds are you're going to have yourself in a good way. You know, if you're trading against the trend, you need very strong signals. Now, speaking of trading against the trend, now let's go to the British pound, US dollar. Now we're going to show you this one here. They don't always work. See these 3 black arrows here? This trend has been very bullish, the pound US dollar, over the past few months, and especially because it's very commodity driven. Now, a lot of people, when they look at the Forex markets, they don't think about commodity markets. Well, they actually have a huge impact in it. We're going to show you some relationships and why. First of all, let's look at the US 30-year market. This is the futures contract. Due to CFTC regulations and data regulations, this has to be in delay, and we cannot show you the current pricing. It has to be in delay like this. So yesterday we had the market making lower move lows again in the Treasury bond market. The yield is stretching, meaning that the 30-year, the longer terms are demanding higher market rates while the short terms are locked at their ceilings. So there's a big spread there. Now, as interest rates go up by the market, that makes the currencies more appealing. That also makes the dollar more appealing. So because of the big sell-off in the bonds and follow-through yesterday, that's most likely why we're seeing this start to run out of gas here. Now, here's the thing is, see these arrows? Each one of these was a sell signal. We had a bearish engulfing line here. Then later on, we had this dark cloud cover that occurred here. And then we had another dark cloud cover that occurred here. So just because you get a sell signal or a buy signal, it doesn't mean that it's going to work. You have to have other rules to apply to these things to make sure that you will follow through and get, you know, these things to pan out for trades for yourself. So one of the reasons where normally at this point here, when this bullish or bearish engulfing line sell signal came in, I would normally take on a bearish trade. Now here's the thing is, oil is a very, very aggressive bull right now. We have a commodity-driven influence in the currency markets that is definitely in play now.
That's giving the dollar
last year, the coronavirus trade definitely overwhelmed a lot of trends. It definitely dictated a lot of dollar movement versus all currencies, versus instead of just having a free-flowing, you know, intraday differences. Just because the dollar is going up against one, it doesn't mean it's not going down against another. That's a normal thing to happen on any given day, and even in a long-term trend basis. Just because a lot of currencies are bearish against the dollar, it doesn't mean that certain ones won't be bullish. The pound right now is an aggressive monthly, weekly, daily, and hourly bull. Unless you have a really valid sell signal, I would say to keep yourself in a buy dip posture, meaning wait for a correction and then look to buy this market on a valid buy signal. The slope of the trend for this market is not too steep. It's been grinding, just buffering new highs. We do have today some selling action, which is helping to add to our dollar index trade. Now, while the euro is falling apart, and we'll look at some of these other major currencies, the pound is the second biggest weight in the dollar index. While these other currencies may start to fall versus the dollar, which that's what we're expecting to happen over the next few weeks and definitely a few days, the British pound US dollar has got a really big draw on oil. And as long as oil continues to make new highs, any sell-off in the pound will keep us in that buy dip posture. Only if we were to see, for instance, a big slide in oil, would we expect any extended downside correction with the pound versus the US dollar. Now, why is that? Well, if you think about relationships when it comes to currencies and how to figure out where they're going, you would want to look at the different crosses. So for the British pound US dollar, let's take a look at the GBP euro.
This is where around
okay,
where stop is right
what
here.
happens
We
here?
have it just
This market is a
below.
bull. So what does that mean? That
Today
means
we made
that
this
there's a
high
lot
high.
of strength
On
in
an
the
hourly basis,
pound,
we're still
right?
bullish, but it
There's
looks
a big
like
trend
the sell
here.
signal is
We
starting
have
to
pound
occur.
euro strength. So
Should
now we're going to look at the
we
British
take out
pound
the
versus
low
the
from
JPY.
Thursday here, which
Okay.
that would be,
Today we have a
very
short-term
negative
sell-off.
indication.
Well,
Let's see, the low on
okay,
Thursday
but
was,
overall it's a
was
bull, but we have a reversal
120.81.
today. So where is that?
failure
What does
from
that mean? That means that
120.81
Japanese
would
yen
definitely have the
is
euro-US
showing
dollar
strength
back on
today.
edge in a very
Okay,
big
now
way.
this is a big thing I want you to
However,
listen to. The
we still
pound
have this
versus
making
the
higher
yen
move highs and
is a
higher
bull
move
for the
lows.
trend, but today
if we
it's
take
reversing
this
and
high
the strength
from
is in the
bullish
yen.
engulfing
Remember, we're
line
trying to
and go
figure
to
out
our
what's going to
low
happen
here,
with the pound
we
US
can
dollar.
establish
So
a risk
now we're going to
reward
look at
level,
the
and that
British
would be
pound
here.
versus the Canadian
Pull
dollar.
this out. Oops.
Okay. This market is also an aggressive bull. Today, it's slightly lower. It did not make a higher move high. It actually made it failed to make a higher move high today, and it's slightly lower on the
Excuse me.
day.
So for an
it is a bull,
extreme
but
correction,
with a
so let's
short-term
just say that we've
reversal
maintained
forming
the,
today.
the higher move highs
Okay.
and higher move lows.
Now
Remember,
let's
the
look
trend
at
is
the
your friend.
British pound
Currently, that is the direction
versus
today's
the
sell-off
Australian
would just be
dollar.
a profit-taking move.
Australian dollar
So
overall, it's been in an
122.43
uptrend.
up
It's
here.
bullish.
That's our extended
The past few
upside
days, it was
target.
rallying into
However,
that.
if we
It spiked
fail
higher
from
today,
here,
but it is lower today. So the pound is weaker versus the Australian dollar
fail,
slightly today, meaning once
this
again
low here
weakness.
at $1.2081,
Now, let's
then
now
we're definitely gonna
think
start to
about
see
this. If
bullish.
the pound is showing
However, we are
weakness
looking
there,
for
meaning
possibly
that
a
the
potential
Japanese
turn
yen,
back to
the
support.
Canadian dollar, and the
We'll start to
Australian
see
dollar
why in a
are
little
showing
bit. Now
strength
we have
against the
British
pound what is the key
you want to talk
variable
about a
to
raging
look at?
bull.
Well, we
Do
already
not
know
try
that
and
the
fight this
euro
one,
US
folks.
dollar,
One of the
remember,
reasons the British
the
pound
US dollar has the
continues to
strength,
rally like
so
it
it's not
does,
in the euro.
most
Okay,
likely is
so
because of
that
the
means
oil
that
trade.
the
As long
British
as oil is
pound
progressively
is a
going
bear.
higher, and I
Okay,
would
so let's
not
get back
doubt
to the
it
British
if we see
pound, US
$75
dollar.
a barrel oil.
So the pound is
I would
trending
say
lower
at least
today
by June,
and has a bearish
or at
outlook
the
going
most
into
by June,
tomorrow
probably is very
because
likely that
it
we
is
could
an
see
overall
$75
bull
a
versus
barrel by
major
May,
currencies, but
maybe
today
even
it's
in
reversed
April.
versus
So,
the Japanese
with the
yen,
current,
the Canadian
administration
dollar,
stance
and
on
the
oil and
Australian
the fact
dollar.
that, well, they're
Okay,
trying to
now they
really
all have one thing in
put
common.
oil out of
All of
business.
these currencies
And
that
so
are stronger
quickly.
versus the pound
So,
are weaker versus the
ramifications of
dollar.
that, we'll
Okay,
yet
so
will
listen to what I
unfold,
just
but
said.
this is all good
All
for
of those
British
currencies
Petroleum
that the
and a bunch of
pound
other
is
companies around the
reversing
globe.
against
So,
today
as we lock up
are
US
also
oil, we are
weaker
giving,
versus the US dollar.
other
So
global
that gives
companies
credence
a
to the
huge,
short-term
huge,
turn
huge
on an
advantage.
hourly basis
And
and
this
on
will
a
have an
short-term
impact
daily
on
basis
currency pricing.
for a
We talk
sell-off
about
in the
the
pound
Canadian
US dollar.
the
And as far as a
Australian
trend,
dollar,
you would
look at the
expect
New
it to
Zealand dollar as
continue.
well, and definitely
Okay,
the British
so
pound.
now,
People don't
even
think
though we have the
about the
oil
UK
trade on the
when it
table,
comes to oil, but
if
when
we
it
can
comes to
maintain
UK,
this
they're a
posture with these
currency
other
giant, and they're
currencies,
also an
then we could
oil
confirm the British pound
mammoth
setting a
giant.
corrective
So,
move lower.
it's,
Most
definitely
likely
factor
first,
in the
we need to
trade. So
take
today
out
I
this
would key off of the high. They made a
$1.3775
higher move
level.
high
A
once
failure
again.
from
This thing
here
is a
will
bull.
then have us
I would
testing
say
this
that if
upward
you are
sloping
aggressive
support
or
line,
are
keeping the
just
short-term
getting
trend
into the market
intact.
being long
A
this,
failure there
market,
will have us hard
or
pressed to
if
be
CME,
bull
you've already
as
been
it
working
starts
the
to take
position,
out and look out for
key off
to
the low
test
from
this
Thursday. Anything below
$1.3566 area.
$1.3775 will
Okay,
have you in
so
a,
this is where we're looking at the British pound,
short-term
and we
corrective
figured
phase.
out that through the
Remember
different
that this market
crosses
is a
from the
bull.
other
We
currencies
have
that the
this
pound
upward sloping
is a
trend
short-term
line
bear,
here
at least
that's
on the
gonna
hourly and the
support line
daily.
that's gonna hold
So now
up the
remember the
trend.
dollar
A
index. The
failure from
euro
here
is
would
the
have us
biggest
looking to
influence
target
in
this
the dollar index. The pound
$1.3566.
is number
Even
2.
if we fail
So with
from
both
there,
of
we
those
have
two
this
falling off, that will
long-term
help the dollar
upward
index
sloping
continue to
support
go
line that's
higher,
holding the trend
validating the buy
intact.
signal in the
That's
index
probably the extreme
yesterday.
for any sell-off.
So remember, the best
Even if we
indicator
were
to
to
use
have
for any
a
market
huge
is the
bullish
market. So
turn
let's see
in the
right
US
now,
dollar,
do we
meaning
have
that
any
there's all
questions
kinds
in the
of
chat
factors
room?
weighing that
We
the
have
dollar should
no
rally
questions
against
in
all
the chat room
currencies.
currently. That's all
It's
right,
not
guys.
going to
Just
probably
keep
have
on
that much of
listening,
an
and
impact on the
we
pound.
will
I
get
think the
to some
pound
more
will
stuff
remain
in a
bull
little
for
bit here.
while,
All right, so we
especially
talked
now with
about the
current
pound. Now let's look at the
administration,
US
the way
dollar
things are
Swiss.
going,
Let's stay in the
in the
European
United States. I
trading
don't see any
zone.
major
Look at
sell-off.
this.
Now,
We
we'll
have
have
the US
divergence,
dollar Swiss.
and
We
we
have a
already started
big
to see
rally
this
going
where,
here.
the
Look what
euro
was
is
established
beginning to
also.
fall
We
against
had,
the
see
dollar
this
now,
little
and the pound
arrow
will
here? You know
continue
what
to
that
rally.
is? This is
So
a
be very
bearish
cautious
engulfing line
trying to
sell
become a
signal.
bear,
Bearish
with the British pound US dollar.
engulfing.
So now, one of the things that you have to take into
line.
consideration
Let's
why the
spell today.
dollar is rallying once again is the
Engulfing
US 30-year Treasury bond.
line
So since we've been
sell
talking, it's actually bounced
signal.
back a few ticks. It's
Okay.
only down a one hand.
So this bearish engulfing line
ticks.
sell signal
So
today
that's 41
it
ticks,
came
so
off a
that's
higher
41
move high, so we were
So,
looking
but
for a
it to come back
corrective
a
move
couple
lower.
ticks,
The,
no
the
big deal.
overall trend for the US
So,
dollar Swiss has been
but
bearish
anyhow,
since
the British
basically
pound
a
US
year ago,
dollar, this one we do
and
not
now
have
we're in a
any
short-term
real,
correction to the
I would
upside,
say,
a lot like the dollar index. The Swiss is a
points
major
yet that we
currency,
can
but
look
not
at
as
for the
strong in
upside,
weight as the
except
pound or
for
the
it's a
euro.
grinding
However,
bull,
the
you know,
Swiss
so if you're
is a
long,
flight to
look for
quality
some nice,
currency. If the flight to
just
quality
hang on
currency
and
is going
enjoy
down
the
versus the
ride.
dollar,
As far as
that
a
means there's a
downside
lot of dollar
corrections,
strength.
I
It
would
also
look
means
for
flight to
any
quality
nice
in the
little
dollar,
movement,
which
a
also
nice
helps to
little
support the
sell-off,
dollar index.
for instance,
Now
if
you
we
can
can
see
get
this
down
up
to
move
this
today in the
upper
Swiss. This is a
support line here,
radical up
that
move.
might be a good
Coming
area
off
to
of
buy
this
back
short-term
into
low
for
here,
another
yesterday it
high. So we're
established a
basically
higher
buying,
move low,
break
especially with
forecast
this
for the British
follow
pound
through
US
today. No
dollar,
one can deny
even if the
that.
dollar becomes a
Which
bull,
means that
unless
the
you
market
see
has
a
made
big
consecutive,
sell-off
made a higher
in
move
oil
low, a
and
higher
a
move
rally
high,
in the
made a
30-year
higher move
interest
low,
rates.
and
I
now
don't
it's
see
looking
the
to
pound
challenge this
getting any
90.48 level.
significant
The thing
sell-off.
about
Now,
this
should
bearish
all of a
engulfing
sudden,
line sell signal here is it took
the
out,
US
it
president
made
change
its
his
target
point
to
of
the
view
downside. So, and interestingly enough, we can look at this little thing here. Let's go to our Ninja Trader platform and let's see, US dollar Swiss. All right, so if you take the low from yesterday and we look for a risk reward trade and a projection, we have a target of 90.34. Okay, so this is what we have from yesterday's reversal of fortune and getting our bullish momentum back for the US dollar Swiss. So on our Ninja Trader, trader here, we applied this indicator. And let me show you how this indicator works, because it's actually a great little way to figure out risk reward. Now, I use different ways of projecting my price points off of these kinds of signals. If you read the book High Probable Japanese Candlestick Patterns, you will learn exactly how I do them. All right, so when you take that
lending, which will become more restrictive, which will
high point to the low, which is your risk, so we have our entry point, and we have our risk level. So it puts it back up to, like around this 90.27 level right here. Okay, so that gives us a nice little area to fall right below this high. So if our target for that level is right there, and we fall short, we hit the trade, that's a good deal. If it takes out this high, well, then that would confirm a higher move high after a higher move low. Remember, the trend is your friend, and that's what you want to pay attention to, because that is where the market is going.
Daily,
okay? So we have the U.S. dollar Swiss. We established that right now we have an upside target of somewhere between 90.27 and 90.48. Definitely a breach of 90.48 would have us in a very bullish mode. And I would say that if this happens, you are seeing the dollar index rally. You're probably seeing the euro fall apart. Now, the British pound, remember, has the oil trade. So while the Swiss and the euro may continue their trend, meaning the dollar will be a bull and those currencies will be a bear, the British pound may not do the same. Okay, so just be very mindful of what's going on with that. So now let's go and look at the U.S. dollar JPY.
Start to fall back on its
all right, the U.S. dollar JPY
with the EU
is coming back today. Now, the irony is you got to be like, probably some of you are out there asking, well, Teddy, if the dollar is so strong, why is it coming back off the JPY? Well, the dollar has been very strong versus the JPY for the past few days, especially after yesterday making a higher move high, after a higher move low, indicative of continuing a solid uptrend. So we're probably seeing a little profit taking. It did make a higher move high today versus the yen and the dollar. So you're probably seeing a little profit taking, and while you're seeing a rolling into these other currencies, a selling off of those and buying of dollars, you're probably seeing a rolling out of this and taking some profit. Now, because of the interest rate, 30-year interest rates where they're at, where we took a look at before, you want to be mindful of the fact that the yen has a lot of issues restricting it. So any pullback right now is going to be seen as a pullback to buy. Even if the dollar index reverses, we are a short-term bull against the U.S. dollar GP, or for the U.S. dollar JPY. The main reason is oil. Oil rally at the levels it's at. If it sustains here or goes higher, that's negative for the yen.
Then it will be hard for the U.S. dollar.
We also have the issue with
a bullish mode.
the other commodity-driven countries, as the CRB index, which is the Commodity Research Bureau Index of Commodities, as the grains go up, as gold goes up, as oil goes up. These are things that you have to be mindful of. Now, here's something that you also want to take a look at, is the fact that for the U.S. dollar yen, if you want to have an indication of what's going on with the U.S. dollar yen, take a look at where gold is. So just how we have the U.S. dollar over the yen, this is gold over U.S. dollar. Now, for those of you that are not gold traders or look at different markets as a correlation, a lot of questions, a lot of times I get the question asked, what is your favorite indicator? Well, I always say my favorite indicator is the markets. The markets are the best indicators out there. That's your real true price action. That is what the markets are doing. It is never in a lag. It is in real time. So, as you will notice, the gold market made a lower move low today. Yesterday it didn't do it, but it did today, and it followed through nicely to the downside. Now, it's slightly off of its lows. And here, look, it's pressing multi-week and also multi-month lows, because in December it made a low here on November 30th, the last trading day in November, it made a low. So with that being said, we're looking for more support testing. So why am I talking about gold? Well, if you look at this chart here, and you just go from 2021, see how this chart looks like there? And now we go to the U.S. dollar Japanese yen, and we go to 2021. Oh my gosh, look at that. It's an inverse relationship chart. It's the opposite. They almost are identical. In fact, their pivot points, their highs and lows, come around simultaneously, where you'll see a high in the U.S. dollar yen and a low in the XAU gold, and vice versa. So, and right now that is coming into play. So the question is will the yen rally again tomorrow, or is it going to continue to pull back? Well, I would watch the gold market. If you see the gold market get a nice rally back today during the rest of the session, or if tomorrow it reverses gears and really starts to build momentum to the upside, then you'll probably see a little more selling off of the U.S. dollar, Japanese yen. Overall, we are bullish the Japanese yen. We are looking for the U.S. dollar, Japanese yen to probably make a move that'll pressure up towards 108.40, as long as the market's above 105 even. And definitely anything below 104.40, that would take us off of the bullish campaign for the U.S. dollar JPY. Remember, the trend overall has been lower for months on the weekly and monthly. But now the weekly and daily are, well, the daily is definitely a short-term bull. The hourly is definitely a short-term bull. And now the weekly is neutralized. Another thing that we had here,
so we did have a short-term buy
which I don't know if many of you are familiar with classical bar charting, but this here is a
see how this works.
Shoulder.
Let's go
and right over here we have a
so with this tool
head.
Looks like right now,
and I think some of you know where I'm getting at right now.
We've already exacerbated our
and then we have here.
Okay, so does that
we
mean
have
that
a shoulder.
Keep on going?
So
absolutely,
we have for the U.S. dollar, Japanese yen. Besides the fact that we have a head and shoulders pattern here that started off this move and it's at the bottom. The head was the bottom. We also had at the same point here a high probable Japanese candlestick pattern. So you see this low right here. Let me get this high out of the way. Okay, so here was the low. This low right here is called a piercing line. That is a buy signal. Okay, so let me put a little
and the pound
arrow here.
Highs. The dollar index is not going to be the best gauge for which way the other currencies are going to go. Let's see, we got
piercing
a question from Captain Will.
line.
You show the technical indicator you use.
By signal. Okay, a piercing line is another high probable Japanese candlestick pattern. Okay, so this set off the head, which started this rally here. Then we came back, we made this low, higher move low, which is the shoulder, the second shoulder of the head and shoulders, and then it helped propel us up to here. Now, if you look at the dynamics of this, where we are buffering right now, this is a good point from the head and shoulders perspective to have a short-term correction. Are we looking for a major correction? No, but let's just give us a little valuation here. So we know that if the gold market starts to rally, we're looking for a correction in the U.S. dollar yen, right? So, ironically, the 50% level on the fib is right above this area here. So this 104.40 is a critical spot. Could it go lower? Absolutely, it can go lower and then go higher. Anything can happen. However, this shows how much of a key pivot level this is. So all bets are off to the upside for any short-term bullish action if we have a failure from the 104 area. So can you see how we form these levels here? If you guys have any questions, this is real simple stuff. We're not doing anything major here. So, and then let's see. Let's also give ourselves. You got this 0.618 level here. So also down to 103.97. We're at the bottom of this arrow. That could be support too, but right now we're more worried about the short run. So watch the gold market. If you see a big rally in gold, and if you see a sell-off in oil. See, here's the thing is, because of these commodity influences, if you start to see a rally in gold, we know that right now they're trading in an inverse or a direct relationship where gold goes up, the yen goes up. Gold goes down, the yen goes down. Dollar is the only common factor for the two. They're moving in tandem. So as long as that relationship's going on, remember that if oil sells off and if you have a rally in the 30-year Treasury bonds in the interest rate market, that would be bullish the yen. So that would help to support a correction to test lower levels. Okay, so that's what we're looking at with the yen. Staying in the same trading zone, let's go to the Australian dollar, US dollar. This gave us a bearish sell signal yesterday. We are targeting the 0.7658 level. 0.7566 is probably the extreme for any sell-off. Main reason being is that this market, besides being a monstrous bull versus the dollar on the monthly and the weekly, even the daily, it's neutral at best, and it's commodity driven as well. So besides gold, oil, and a bunch of other raw commodities, and the inflation in those commodities as well, that is helping to lift the strength in the Australian dollar as a whole. So be mindful of these things right now, even though we have this bearish engulfing line. We're looking at the sell signal. We're only looking for a short-term correction. Okay? So very minimal, nothing really extreme. Like I said, also remember that for the Australian dollar, this 75, 62, 66 area, this would be the extreme. Now, if it falls below here, that would be a big deal. The only way I see the market, the Australian dollar, US dollar getting under 75.62 would be if we have a situation where you have the oil market falling back to make lows versus highs, meaning we're at $60 right now, 60 plus. If we were to fall back to lower 50s or even into the 40s per barrel of oil, and especially if the yield curve comes back in the line a little bit with the 30-year getting a rally up above, say, the $1.668 handle, or especially the 170 handle, which is $4 to $6 higher than where it has been in the past 24 hours. That would be something that would be necessary to validate any type of extended
if we head back
rally
towards the lows of the day,
US dollar.
That would
so at best we're neutral. I wouldn't say that this
basis,
market, like I said, is going to become very bearish. You need some
other
variables to happen
take
first.
Out this low from a couple days ago.
I think that we're at the very beginning onset of a major inflationary move. With that, if that is true, and you do continue to see oil go up another $30, $40, that can't be good for most other markets. The cost of doing business will continue to rise. Inflation will continue, and that also will be bearish the dollar, which then also then becomes bullish for the Australian dollar. So short-term sell signal, be mindful, use the high of yesterday as your risk. In fact, what we'll do is this was our risk level before, and now we're going to move it to right here, which is the high of yesterday. So anything above there, we are definitely looking at as a major bullish breakout to the upside, and we will be expecting it also to continue higher on in a big way. Anything below the high right now, an aggressive short, like I said, we're looking for a nice little slide to get down towards this 76 half area, down to 76 even, with 75.62 being the major extreme. Now we're going to take a look at the New Zealand dollar, US dollar, which this one here, this one is being a little bit of a tough one. It's lower on the day. It's helping to give a boost to the dollar index, but this thing is a choppy sideways mess. It is getting some lift from commodities, not quite as much as Australian dollar. There's some other issues here. This market's had a big run, which you have to really key off of now is the fact that we made a higher move low after a higher move high, but we failed to make a higher move high. So only if we can breach the 73.18 area are we bullish. Anything below here, we are looking for a test of support. Now, if you look at this trend line here, it's kind of keeping the trend intact. It's just flattening out. This is by attrition. This isn't a failure of support here. This is just time going by, because you can see it's a range trade. There's not much going on. You really got to wait for a signal. Only, like I said, you can be an aggressive short below 73.18, looking for a test of the 70.93 area. Now, a failure from here, that would be a fresh sell signal. But unless we get a drop in oil and a change in a drop in interest rate prices on 30-year, I think it's going to be hard-pressed to really see this thing sell off in a big way. All right, so we will get back to another one with a trade here, U.S. dollar, Canada. Let's go to the North American trading zone. We have something interesting going on here. Yesterday we had a bullish engulfing line buy signal. Okay, so not only was it a buy signal, it was also a higher move low after a lower move high. The US dollar, Canadian dollar has been in a free fall, and especially with the oil trade existing, it's hard to get the US dollar to rally above Canada, especially because now the US is going to be a net importer, not an exporter anymore. Canada is definitely still exporting oil. With that, it's going to be hard to get any major upside move with the dollar versus Canada, but correction is not out of line. We do have
it was a really good discussion.
A higher move low with a bullish engulfing line buy signal. So in the short run, we're going to look at this as a nice little potential chance to catch a rally. If you go to our Ninja Trader chart here, we got a lot of mess going on here. Let's take this off.
So anyhow, we talk about how oil comes in, and we actually right before I go on that segment every Wednesday.
All right, so we had our bullish engulfing line buy signal yesterday, and as a price projection point, we have $1.2846 for you here. $1.2846 would make a good area to run into resistance. If you look at here, you had a lot of spiking and support kind of here, and then it was resistance in this area here. So let's see, $1.2846. Let's put a line.
Huge. So we are no longer going to be sending oil to Japan. This is huge for our relationship.
Okay, so as you can see, and this became resistance here before it had been support.
Stability when we have,
so this will be a good area as a gauge of strength.
Our tankers aren't dropping bilge into the water and all
resistance.
Kinds of stuff.
So if the market is to rally up just short of this area here, what did I say the number was here for the US dollar?
Green scale, we're going backwards, but also
128.46
pricing now is more manipulated because we are no longer.
So 128.46.
That is correct.
Should we hit this target and stop, that would make a lower move high after a higher move low, which would still keep this market in neutral.
This is huge for Australia,
though. Get above so it's going to be hard for the Australian dollar to take it out. Then we'll be pressing lower move highs. Right now that would be considered a nice bullish breakout on the longer term.
If we get a close, lower where it's at right now, or lower today on an hourly basis, we'll have levels for you, but we have to wait for the signal to happen. Remember, this is
in this regards here, we bounced off this downward sloping resistance. You can see that we've been kind of bottoming over the past month and a half, 2 months. So are we ready for an upside turn? Well, we're getting close, especially if we take out this downward sloping resistance area here. That's our first indication of maintaining their neutral posture, confirming that the higher move low is at least putting the brakes on the major bearish action in the US dollar Canada, and then it sets us up for a challenge of this resistance area here at $1.2847. Anything above there, we will be looking for a big move higher.
Just below this,
that we'll have to project later, but right now let's first get to this challenge part here and see what we don't want to get ahead of ourselves. So we have $1.2847 is our upside target off of this bullish engulfing line. Now let's look at the US dollar Mexican peso. I don't know about you, but I could use a vacation, but I know I'm not going down to Mexico anytime soon. But I have a lot of friends with their kids in college, and they're trying to, whether spring break is canceled or not, I think a lot of them are still going to go. Can't stop the college kids, which is a nice little thing here for Mexico. Should they get a little surge of
not when it goes this way, that's just sideways. Now remember, on the daily basis.
Well, 2 days ago we set a higher move low in the US dollar Mexican peso after a higher move high. So we established this low back here even if it was January, which was the last lower move low. Then we established this higher move high here as we headed from the end of January to February.
It's not going to be like last year.
Sell off here that ended a couple days ago on Monday. We set this low here, which is a higher move low, and now we are spiking high with a higher move high today. I'm only a little higher on the day now. We've lost most of the gains, but it looks like no matter what, that we have a bullish short-term view for the US dollar Mexican peso, and we are looking to see more and more upside action come through. As far as price levels, I would first look for a challenge of this 2060 area. Anything above here, then we're looking to actually get back up towards 21.5. So we're looking for a nice little move, a good, almost a whole peso and a half.
So New Zealand dollar,
US dollar peso and a half from where it's trading right now. All right, so let's get back into some of our fundamentals as far as getting trades off.
Well, what do we hammer this down?
So we have Forex and we have futures, we have binary options, we have futures options. What can you do with these
this
trades
right here, guys.
All right, so first of all, Euro US dollar
closes above $1.
If you are trading the futures or binary options, you would look to use bearish strategies like credit spreads in the futures options, or even in ETFs, where you would be selling the strike price calls somewhere around this high, and then buying back the next ones above it.
Give you targets,
usually about 20 cents or 50 cents to $1, depending on the gap in the pricings of the different options.
Now the good thing is for all
as far as binary options, you would definitely be staying below $21.71 over the next 2 sessions as you go into expiration on Friday for binary options. And as far as for FX traders, obviously you would be short this right now using $21.71. This is your risk level, but you would want to use it a few pips above that, okay? If you want to, if you're going to be short on this one right here. Now remember, we had some indifference on as far as euro.
So real quickly, I want to show you guys.
Remember, we broke it down by ways of trying to figure out strength and weakness with the pound. So let's do that with the euro. So if we look at the euro GBP release, which we already know is going lower from our British pound example. Euro weakness is here. So the euro is a bear versus the pound. Now let's look at the euro.
So if you guys are wondering,
look at the euro versus the JPY. Now the reason we're going over these now and we not before is because now it'll make sense to you. So euro JPY, obviously right here, the euro, this here is what? If you were
just go to Forex trading,
read the book High Probable Japanese Candlestick Patterns, we have a bearish engulfing line forming right here. If we were to settle right now today, which we only have a few more hours left in the trading day, this would be a sell signal for the euro JPY. Why is that important for us when it comes to the euro US dollar? Because or for the euro US dollar, because the US dollar Japanese yen is strong. If the dollar is strong versus the yen and the yen is strong versus the euro, well then the dollar is going to be strong versus the euro. Okay, so let me say that once again and be clear for you. If the euro, or excuse me, if the yen is strong versus the euro, and the dollar is stronger than the yen, then the US dollar will be stronger than the euro. Makes sense? It's just a relationship like that. So we have the sell signal here. If this happens to close in this around this area today, I would expect follow through over the next couple of days, meaning euro weakness, Japanese yen strength. Now let's look at the
click on this, and you can find access.
Now let's go back to the euro.
Just to make sure that you
US dollar.
On board with that.
Okay. So as the US dollar gains strength versus the pound and versus the yen, then that means that it also will gain strength versus the euro, since the euro is losing ground to the pound and to the yen, and especially with the yen having that reversal signal right now, that's setting us up now to be very bearish. So now we've figured out that for the euro US dollar here, you can start to look at bearish plays. So either the bearish futures options plays like credit spreads, or even just buying puts. We have option expiration coming up in the futures in March, so you still have a little time for that. So those would be options or different trading opportunities for you, especially with the Forex market. Once again, we would have our risk level above $21.71, and we're definitely looking for a test with $19.51. Now remember, overall this market has been a big bull on a monthly and weekly basis, but right now we have all the indications for the euro US dollar why we should be like-minded Forex traders and futures traders that are interested. Tuesday reversal was a lower move high
ideas with other traders and information about what's going on. So usually when we do things like this, we have some good questions, and we also have some
downside target is around $1.19
information to lay out to you guys. So
only never know what's going to show up. Is that should we take out that high at $21.71 then we're looking at $22.43 as our upside target, which would have us trading back up around this area up in here. Okay, so we could still swing higher and then come lower. Anything can happen, but right now, with the way the markets are hinging and setting up, we are looking for that trade. And so now we know that we are bearish to Euro US dollar. We have a outlook and a plan. We know our risk, we know where we can get in, and we know our targets. The same thing is for the British pound US dollar. Should we close lower today? Well, remember, this one is a totally different one as far as because of the commodity-driven action.
Okay, so
but
US dollar, Canadian dollar,
short term, the British pound, remember we looked at those crosses, is a bear and why. The British pound JPY is reversing today, meaning the Japanese yen is stronger than the pound, and we know that the dollar is stronger than the yen. We also have the Canadian dollar. British pound versus the Canada is a bull, but it's reversing today, also with a sell signal. As the Canada is also weaker versus the dollar, this gives credence for the dollar to be stronger versus the pound. Australian dollar, remember we had that sell signal? So the Australian dollar is a bull versus the pound, or excuse me, the pound was a bull versus the Australian dollar, and now it's starting to turn with the sell signal. Then you complement that with the British pound, or the Australian dollar, US dollar, where that's falling apart. So that gives strength to the US dollar. So you have strength in all these other currencies versus the pound, and you have strength in the dollar versus all of them. So we're looking for that to continue lower. The US dollar Swiss. Okay, so for your futures and futures options players out there, it's a bull targeting at 90.48. So for any binary options, you just got to be looking to stay above this area here from the low from yesterday, or even the low from today. I would say be a buyer against those levels. If you are a bear, well, especially if it gets above 90.48, you got to be out. It's just you're going to be making higher move highs. Remember, the trend is your friend. So we're making higher move highs and higher move lows. We are looking for still a challenge of resistance. So buying the Forex cash market, buying the March futures contract, March of 2021 for outright positions, then you want to use, and we're going to raise our risk up to the low from yesterday, okay? So the low from yesterday, this is a bullish engulfing line right here, by the way, also. So that is a buy signal right there. So this is a higher move low after a higher move high. We have an accelerated buying rally that's gone on today, confirming strength in the market, and markets tend to go out like they go in. So if you put a line right between these two,
pricing of inflation and oil and transportation starts to really creep into the market. The ability for US
so if you have this little line right here, let's make it a little bit
US
more
consumers
distinguishable
to import from Mexico will start to diminish. The cost is going to rise significantly.
There we go.
We know we already have food inflation. It's already creeping in.
You see this little line here, and this little,
as much because they're decreasing the food sizes and keeping the pricing the same. But everything from seafood
we have this dissecting line right here. The market came down like this into this low, so now we're anticipating a nice surge back up. Markets typically have a symmetry. You know, as even here you can see it came down like this and accelerated back up here. It was trending lower, so of course it failed. Now this case, the market's trending higher, so we're anticipating actually a breach of 90.48, key resistance, making higher move highs, confirming once again a stronger bullish trend. So those are our trades for the European currencies. Now let's go to the US dollar yen once again. All right, well this one, remember we are coming to a point where we're looking at for maybe a short-term correction. Overall, we are a bull, the US dollar, Japanese yen, remember because of the commodity aspects and the interest rate aspects as well. These are all things that play into, come into play, rather.
Especially for the costs of that.
So, and let's see, any questions on the chat? Okay, we got some interesting comments. No questions? All right, that's all right, guys. You don't need to have any questions. All right. So,
all right, well, we have
this level here. Let's go and look at our Ninja Trader chart for our US dollar. Where was it? US dollar JPY. Oops.
Bonds right now.
We lost it. There we go.
30-year bond down now at full handle.
Chart.
24 pips. So it's making new lows.
So US dollar yen. We took out that high previously yesterday, setting a higher move high. Obviously today we're trading a little bit lower. Our upside target off of this low, which we use from our Ninja Trader risk-reward trade projector. That took that out, obviously, because we made higher move highs. So we've already accelerated through, and as far as upside targets, well, we have longer-term targets, but we're looking for a short-term swing back and a break to buy. So meaning right now, especially if we can see a little pullback in oil, and we do have a rally in the interest rates, so that could be one of the reasons why we're seeing a little slight pullback. Remember, this is also possibly profit taking. I would expect to see a mimicking of what happened here, where we made this high, came back, broke for a couple days, and then turned this baby right around.
All right, so
U.S. dollar strength definitely versus the yen is in play. So remember that when we look at the different currencies, you know, when we did those other crosses, we did show that there is yen strength versus other currencies in the short run, but then also in the longer term, not so much. So the yen has a lot of issues as far as gaining strength and trading capacity. One of the reasons why is, besides the commodity-driven aspect, the interest rate variable on their end is locked. They're not doing anything. So their rates are going to stay pretty much at the negative rates and be very low for a while. They're not changing anything. Australian dollar, U.S. dollar, remember we had the sell signal. We have this market trade targeting that 76.58 level, with 75.66 being 62 being the extreme. We'll see that how that unfolds. Remember, right now that we're looking for just a short-term correction with this market. The New Zealand dollar, U.S. dollar. Remember, we don't have anything going on with this one whatsoever. We're not looking for any trades here, so there's no action there whatsoever. And then we have the U.S. dollar Canada, which we are looking at as a short-term bull. So for your futures and options traders and your binary options traders, you want to key off of the low from yesterday. So let's put this in perspective here. So the low from yesterday is definitely going to be your level to key off of. So you want to be aggressively a bull, looking for a continuation of upside momentum and a breach of this downward sloping resistance. A breach here would take us off the bearish trend, confirming neutralness. I mean, we have been basically trying to bottom for months here, still making lower move lows and lower move highs. But remember, like we said earlier, today or yesterday's bullish engulfing line buy signal, this is a higher move low after a lower move high, signaling neutral. Short-term possible bullishness. So with that being said, you take the combination of a higher move low, the bullish engulfing line buy signal, and now we're about to possibly breach downward sloping resistance that's holding the trend intact. That gives us a real good reason to say the U.S. dollar Canada is neutral to higher in the short run. So for futures trades and options for options trades, you might want to look to sell credit spreads below, put spreads below the $1.2611 area. So remember, and then also you could look to buy calls or even out of the money calls, buy binary options. You can look for expiration for the U.S. dollar Canada to expire above $1.2611, some strike price, either just below it or just above it, as your trade going into forward, looking into Friday, because you have 2 days left until expiration for those. So those are some trades you can find for the U.S. dollar Canada. Now the U.S. dollar Mexican peso, remember this is also in an upswing. I'd be cautious with this one. I think I would be more mindful of the fact that if you're going to Mexico, wait to buy your pesos for at least another week or so, because you'll probably be able to save upwards of a peso, which I know probably people think, well, what's a peso? But you know, when you're spending hundreds or thousands of dollars, a peso does start to add up. You know, especially when you're looking at a conversion right now, what is it, just above 20 pesos to a dollar, and we could see 21 and a half pesos. That's a nice little substantial boost that could give, you know, save a couple percent on your trip. So right now we are bullish the U.S. dollar Mexican peso. Remember the dollar index, as we started, had this bullish engulfing line buy signal that is helping to give a lift to the currency markets. We are looking to continue this trade higher. And then also remember to be mindful of the 30-year Treasury notes. Right now they are trading off the CME website here.
The cost of that
they're
is going
up 20 ticks.
Obviously,
They call them ticks and futures, not pips, when they're in the Forex market.
Consumer.
So we're having a nice little profit-taking rally. Remember also to check out, watch the gold market when it comes to the relationship with the U.S. dollar yen. Just as the yen is coming off of its high, or the U.S. dollar yen is coming off of its highs and is slightly lower on the day. You can see how the gold market took a nice dive, making lower move lows, but it's significantly off. It's almost 50% off of its lows on this daily range for the day. So, and then also be mindful of crude oil. Absolutely, this is a commodity-driven effect that's impacting the Australian dollar, the Japanese yen, the Canadian dollar, the U.S. dollar, depending on the relationship, and definitely the British pound as well. Be very mindful of these markets, and as they especially press new highs, we are looking for a lot of volatility to come back into the market, to stay in the market rather, and remain for quite some time. So the euro U.S. dollar is hard pressed now.
Down in price,
kind of
and
slowing
it's
down.
keeping inflation at bay.
So I think we've covered everything. We showed you how to use gold as an indicator for where the Japanese yen, U.S. dollar yen trade is going. We also showed you how to look at various currency crosses that you normally wouldn't look at to figure out your strength and weakness. So remember how with the euro U.S. dollar, we'll give you one quick refresher before we end this webinar. Why are we a bear for the euro U.S. dollar? Well, we looked at the euro versus the pound, and it's in a bear trend. We looked at the euro versus the yen, and it was in a bullish market, but right now reversed recently, and it started to sell off. It is bearish.
Pushing and driving shortages.
The pound versus the U.S. dollar. The U.S. dollar is a short-term bull because of the reversal today. And we look at the U.S. dollar Japanese yen, where we know that the U.S. dollar is a yen.
So as we are talking right now, we're getting a nice little rally here in the euro-US dollar.
That means that when we look at the euro-US dollar, because there is strength in the pound, there's strength in the yen versus the euro, and since the U.S. dollar has strength versus those two currencies, then that would reflect why the euro-U.S. dollar is trending lower on the day, and we're looking for a continuation and follow-through of this trend as we go into tomorrow and the rest of the week. So for the directional trades, you know, you have your Forex direction. We gave you your risk levels with the pivot points of the lows and the highs that we're coming off of. We gave you target points to use, so definitely be mindful of those. Now, as far as the tools and how we've broken down this analysis, you can easily do this all the time on your own. Remember, if you go to forex-trading-unlocked.com, we have our nav bar here. You can pull up under market analysis and education. Go to the Forex Trading Unlocked workstation page like we have here, and then you can change the symbols as you want and do whatever work you want to do on them. Also, if you go to the nav bar, you can see when you go to markets up here, we have Forex futures, binary options, commodity stocks, Bitcoin, and like right now we have the commodity markets pulled up. So when you hit the commodity markets, then you get a page like this, and you can scroll down and it will give you the grains, the meats, the energies, the metals. You just click on the link, it will take you to that dedicated page, just like the ones we have here. Like for crude oil, we have this page up here, which also, like see here, we can see we're streaming live right now, and then we also have crude oil, Brent futures daily, a couple other charts on here and stuff, and information flowing in that can help you out with your analysis. Forex-trading-unlocked.com also, we have all kinds of information when it comes to other things for you. So from our navigation bar, you can go to products, courses, and services, and you can see how we have mentoring, trading courses, etc. The book High Probable Japanese Candlestick Patterns, which we suggest that you read. You can either follow our methodology for how to trade those patterns, or you can integrate them into your own trading systems. We definitely encourage people to do that, and there's all kinds of trading rules that are valuable and good for all levels of traders, even if you're an experienced trader, just as a reminder. And if you want to download the NinjaTrader platform, you can either go to the bottom of our homepage, or you can go to the tools section here and go to NinjaTrader trading platform.
Currency pricing.
You can get information about it first, and then you can download it there, or from our home page. Why is that? Because there's gold storage. It costs money to store gold. Or if we are on our home page, forex-trading-unlocked.com, as you scroll down to the bottom, you can get recommended trading platform, NinjaTrader. You click on this little link right here. It's like I always tell you up this page here to get started. You can download NinjaTrader for free. It costs nothing. You have end-of-day data for free. You can get Forex, stocks, options, futures, all kinds of stuff. End of day, it's a great tool to learn and get used to the trading platform. Now, if you have a trading account, you can integrate it with it, and you can trade from that platform. So remember, you can go to our website, forex-trading-unlocked.com, and you can interact with charts live in real time. Only our futures charts are delayed. Everything else is in real time. And then we also have for you here something also to take a look at. So if you want to read and get a glimpse of the book High Probable Japanese Candlestick Patterns, you go on the link here, you pull up this tab, and then you can take a little view of what's going on with that. So since we don't have any questions, we want to thank all of you very much for checking us out for today's webinar. Also remember to like and subscribe to our channel Forex Trading Unlocked on YouTube and Twitch, and definitely check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And we will see you again soon. I want to thank all of you for participating and leaving your comments, and we will see you soon. Take care. Thanks a lot.
That's the way we've been trending as far as today. So
hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today on Tuesday, February 16th for a live Forex trading analysis turnaround Tuesday edition. Before we get into everything, I'm going to show you our disclaimer.
Please look at US dollar gold. That is a cross. It's just a physical version of the dollar.
And this is just to remind you that this webinar is for illustrative
here,
and educational purposes only, and if you have not done so, please subscribe to our Forex Trading Unlocked YouTube channel and Twitch channel. That way you will be notified when we come live whenever we do during the week and during trading hours, especially when we have big events coming up, which we have one coming up tomorrow, which we will let you know about. So, okay, there's our plug, and also check out the book High Probable Japanese Candlestick Patterns, or available in Kindle and paperback versions on Amazon.com. All right, let's go to our live action screen here. We have the Forex-Trading-Unlocked.com website pulled up already, and we already have our workstation page set up for you. We're going to skip past the economic numbers, and we're going to take a look at what's going on. So we're coming off of a holiday market from Monday that was a very dull trade because the U.S. markets were closed. Currencies really didn't get very much action. As you can see today, however, once the markets opened last night, we did get a rally against the dollar. As you can see, the euro posted a higher move high today after a higher move low that was done on Friday. Now today it's kind of settling right there in the middle of the trade, as you can see. And we're kind of coasting. We had a buy signal right here.
Trading day sideways, maybe even a little bit higher.
Bottom right here. This was a bullish engulfing line right here. So for those of you that are unfamiliar, a bullish engulfing line is
especially if we run out of gas here.
It's a Japanese candlestick pattern, and this happens to be a buy signal. All right, so
if that's kind of clear to you. Especially with dollar strength.
So far, we actually had last week touched our target 1 level that we had established already. In fact, we're going to show you something here on NinjaTrader. I don't know if any of you are familiar of our viewers with NinjaTrader. It's a great charting platform that you can connect your Forex futures and equities accounts to and trade directly from your from the charts. We're not going to get into that today, but what we are going to look at is how we had already established from this bullish engulfing line these two levels right here. So as you can see, we touched this $21.49 last week.
Today we pierced through it, so we have been making higher move highs and higher move lows, as you can see on the daily basis. This upper 121.95 is our next upside target. So the question is does this euro have the bullishness to make it back up there? So let's go back to our chart right here. So we've established that we've hit the target 1. This $21.92 here would confirm a higher move high after a major lower move low. Currently on the hourly and daily basis, we've been making higher move highs and higher move lows. It looks like it's starting to wane. The hourly definitely has shown, we'll pull this up right now, a few hours ago, this was a sell signal right here at $1.21.5. Now the market's trading here at $1.2108. I think that maybe for the day we don't have much left in it for the trade. I don't know. We'll see. The markets are pretty quiet after the U.S. Open. The one reason we have to go be a dollar bull, however, is that right now, let's see what the Treasury bonds are at. The 30-year Treasury bonds have been just tanking. Let's see. We got the CME website pulled up and the interest rates. And here we go. We have the 30-year bond is down 1 whole full basis point plus another 14 ticks. Those would be pips in Forex terms. That's a big move for the Treasury bond market that was closed basically since Friday. And also remember that interest rates are a function of currency pricing. So even though the interest rates with the Fed and the banks are remaining restrictively low, the market is now dictating higher rates. And the fact that the Treasury bond, 30-year bond, is down another full basis point to a full handle, that's a big deal. So that's 32 ticks plus those 14. That's a 46 tick move for the futures contract, for the March futures contract, which is the front month, which is definitely helping to give the dollar a boost. So usually there's different reasons that interest rates can make the currency swing, but it's because of the fact that the spreads are so tight with the short terms. The spread is now widening in a very big way between the very short term and the long terms. That's giving the dollar a boost. So we'll see how this is impacting these currencies. So right now we have established that this buy signal here that was part of this downside correction. Remember, the euro-US dollar is an overall monthly, weekly, and daily, monthly and weekly bull. Daily, it's been in a corrective phase for a while now, since the beginning of January. And now in the beginning of February, we've gotten a nice bounce. So the question is will the big euro bull come back, or is the US dollar bull going to start to come into play? Now we have divergence in currency pricing right now with different currencies, basically because of commodity-driven reasons. So when you get to the Canada, the Australian dollar, New Zealand dollar, and those are definitely impacted because they're highly, one of their biggest products is raw commodities. So, and the U.S. is also impacted by oil, but not so much as these other currencies are. And we'll see how that is going. So right now we have the euro a little bit on edge on the hourly basis. It did make a higher move high. So on the daily and hourly basis, we are bullish, but right now it looks like it's starting to run out of gas. Remember, we did have the Ninja Trader platform pulled up here. Now, here's something that you might want to take into consideration, and that's why I like using this Ninja Trader. See how we've established this was our target zone. We had already hit our first target, and we were long this, currently still long the euro-US dollar. We've raised our stops to right here where this low is here at this where this point is, which, by the way, if I were you, if you are currently long the euro-US dollar, then this would be Forex.com. They are based out of that's Gain Capital, which is now actually FC Stone. I actually took them over. Okay, so here we take this low. IG is one of the only characters. I don't know if you're in the U.S. or not. You can, if you're a U.S. citizen, so this is where around where our stop is right here. We actually have it just a few pips below this low. If you're not going to trade with Forex.com, today we made this higher move high. So on an hourly basis, we're still bullish, but it looks like the sell signal is starting to occur. Should we take out the low from Thursday here, which that would be a very negative indication. Let's see, the low on Thursday was it 120.81. So So a failure from 120.81 would definitely have the euro US dollar back on edge in a very big way. However, we still have this making higher move highs and higher move lows. So if we take this high from the bullish engulfing line and we go to our low here, we can establish a risk reward level.
As far as Forex pricing and solid company,
and we're going to pull this out.
Ideal, like I said, with the Nadex, which is a company they own. So as far as FX, in fact,
and this establishes a whole nother target.
YouTube channel.
Excuse me. So for an extreme correction, so let's just say that we maintain the higher move highs and higher move lows. Remember, the trend is your friend. Currently, that is the direction. Today's sell-off could just be a profit-taking move. So 122.43 up here, that's our extended upside target. However, if we fail from here,
however, I don't have a partnership relationship with them like I do with Forex.com.
From this low here at $1.2081, well, then we're definitely going to start to see this bullish. However, we are looking for possibly a potential turn back to support. We'll start to see why in a little bit. Now we have British pound. You want to talk about a raging bull. Do not try and fight this one, folks. One of the reasons the British pound US dollar continues to rally like it does, most likely is because of the oil trade. As long as oil is progressively going higher, and I would not doubt it if we see $75 barrel oil, I would say at least by June
or Forex.com.
At the most by June, but probably is very likely that we could see $75 a barrel by May, maybe even in April. So with the current administration stance on oil and the fact that, well, they're trying to literally put oil out of business and so quickly. So the ramifications of that will have yet to unfold, but this is all good for the British Petroleum and a bunch of other companies around the globe. So as we lock up U.S. oil, we are giving other global companies a huge advantage, and this will have an impact on currency pricing. When you talk about the Canadian dollar, the Australian dollar, a little bit the New Zealand dollar as well, and definitely the British pound. Most people don't think about the UK when it comes to oil, but when it comes to the UK, they're a currency giant, and they're also an oil mammoth giant. So it's definitely a factor in their trade. So today I would key off of the high. It made a higher move high once again. This thing is a bull. I would say that if you are aggressive or just getting into the market, being long this market, or if, excuse me, you've already been working a position, key off the low from Thursday. Anything below $1.3775 will have you in a short-term corrective phase. Remember that this market is a bull. We have this upward sloping trend line here. It's going to a support line that's going to hold up the trend. A failure from here would have us looking to target this $1.3566. Even if we fail from there, we have this long-term upward sloping support line that's holding the trend intact. That's probably the extreme for any sell-off. Even if we were to have a huge bullish turn in the U.S. dollar, meaning that there's all kinds of factors weighing that the dollar should rally against all currencies, it's not going to probably have that much of an impact on the pound. I think the pound will remain a bull for a while, especially now with the current administration, with the way things are going in the United States. I don't see any major sell-off. Now, we will have divergence, and we already started to see this, where the euro may fall against the dollar now, and the pound will continue to rally. So be very cautious trying to become a bear with the British pound US dollar. So now, one of the things that you have to take into consideration why the dollar is rallying once again is the US 30-year Treasury bond. So since we've been talking, it's actually bounced back a few ticks. It's only down one handle and 9 ticks. So that's 41 ticks altogether on the day. So, but for it to come back a couple ticks is no big deal. So, but anyhow, the British pound US dollar, this one we do not have any real, I would say,
because of the fact that it has such a weight in the
points yet that we can look at for the upside, except for
it's a grinding bull, you know. So if you're long, look for some nice, hang on and enjoy the ride. As far as any downside corrections, I would look for any nice little move that you get, a nice little sell-off. Like, for instance, if we can get down to this upper sloping support line here, that might be a good area to buy back into and look for another pop. So we're basically in a buy break forecast for the British pound US dollar, even if the dollar becomes a bull. Unless you see a big sell-off in oil and a rally in the 30-year interest rates, I don't see the pound getting any significant sell-off. Now, should all of a sudden, miraculously, the U.S. president change his point of view on oil and stop being so restrictive, then you may see a turn back to lower prices. However, we know that that's not going to be the political plan is to destroy the oil industry. So it's not going to happen as far as the U.S. So we're just going to we're going to stick with the trend and ride the oil trade. And as far as interest rates, they can keep interest rates all the way at zero all they want. The market now dictates higher rates after what we went through in 2020 and the businesses that are collapsing, with even CNBC announcing that upwards of 40% of all businesses currently still open will be shuttered before the end of the year in the United States.
When these things came
that does not bode well for credit, let alone the extension of credit. So expect interest rates to continue to rise, especially for any type of business lending, which will become more restrictive, which will also help to fuel more and more inflation in other commodities and other markets as we move forward. So the bull remains in the British pound US dollar.
All the experienced guys love it because they're like, this is really
here now
all interrelated.
With the next one, we're going to go to the US dollar.
Railing like it was, and knowing that on January the 20th,
we're going to try to here.
That there was going to be executive orders that would already start to mess.
This market is coming off a nice little correction. Overall, it is a bear. The dollar is definitely a bear in all these currencies on the monthly and the weekly still. Daily, the U.S. dollar has come back a little bit over the past week and a half, but it looks like it's trying to make a turn. I think the dollar strength here is where you're going to see a little bit of a bounce in the U.S. dollar Swiss, but this will remain to be seen. So right now we're using this low from today as our basis point. Anything below the low of today would have us hard pressed on this 88.36 level. A failure from here has the daily, weekly, monthly all coinciding in the short term with a bearish market. So if there's a big turn in the U.S. dollar, where for instance we have a big sell-off in oil and a rally in interest rates, then most likely you'll see the U.S. dollar Swiss start to fall back on its lows. However, with the EU having all of its financial difficulties, and now with post-Brexit where the UK does not have to contribute to bailing out Italy, Greece, and all these other countries and be following these plans that the EU wants to do moving forward, that's another reason why the pound is so strong. It doesn't have to pay for the EU anymore. It's done. It's gone. They have their own sovereignty once again. They have their issues, but they're UK issues and not the rest of Europe's issues. And they got problems over there, that's for sure. Especially because they've seen more inflation in Europe in the past month than they've seen in the past 5 years. But then also we're seeing that here in the United States as well. So, but remember, people voted for that, and that's what we got, and now that's what we have to live with. So trade accordingly. I have to say, like, the past couple months have been great with the oil options. I'll tell you that. That's for sure. It's almost like a layup. You just know what's going to happen, which is rare in the markets. So U.S. dollar Swiss key off the 90.48 level. Any breakout above here through resistance would bring back the bulls in a big way. This, I think, what you would get is if you continue to see oil rally and if you continue to see the 30-year interest rates pound the lows, then it will be hard for the U.S. dollar Swiss not to come back towards a bullish mode. So right now we're waiting for a signal. We had a sell signal here a couple of weeks ago. This here is a bearish engulfing line sell signal, another high probable Japanese candlestick pattern. Remember to check out the book, High Probable Japanese Candlestick Patterns, on Amazon.com. So we actually hit our first target down here. This is kind of like what the euro did. It's already hit last week to our first targets for the dollar sell-off, and now we're pretty much bobbling, trying to just kind of feel the waters, and it looks like the dollar strength is about to come
come back in. Speaking of dollar strength, let's take a look at this. The U.S. dollar, Japanese yen. Wow, look at what it did today. It's maintaining our upward slope here. This is a nice almost 45-degree angle, very manageable correction to the upside. Remember, the U.S. dollar, Japanese yen has been on a monthly and weekly bearish trend. The daily trend, obviously, higher move highs, higher move lows. We have a higher move high today, confirming the bullishness of the U.S. dollar, Japanese yen trend. Especially with oil continuing to rally. I know I'm hammering these commodity numbers, but remember that commodities are also a function of currency pricing, especially with what we have going on as economies are trying to come back on full capacity. Remember, travel around the world still, I know all the U.S. airlines is hovering right around, just around 50% of what it was pre-COVID. So you're going back to 2019 or January of 2020. So we have a year now where we are looking at ahead, being can we grow with travel? Is that possible? Well, if U.S. dollar strength comes into play, it'll give more incentive for people to travel, especially to Mexico with spring break coming up. We'll take a look at that one in a little bit. So anyhow, U.S. dollar, Japanese yen, what do we do with this? That's a good question. That is a very, very good question. We're going to keep on watching this trade. It is a bull. I would not try and jump in front of this freight train. All right, so now let's go and see what's going on in U.S. dollars. I don't know if there's any of you out there in the chat room. Still making higher move highs. Now here's a nice little thing that's going on guys or not. Do any of you guys trade like this? Go ahead and jump in on the chat anytime if you want. At least in the short run, it will raise this right here, this 8836 level to this level right here. Any questions like yesterday? And this would be yesterday was the dead trade. Everyone's trying to force a trade on a holidays and kept saying like, well, there's nothing there. I'm looking at right now. All right, so U.S. dollar yen. What do we have here? Over the next trade. Like I said, we're just going to keep on following that one. Let's take a look at our Ninja Trader here. We're going to pull this one up. Let's try that extension formula. When we had this earlier buy signal down here, this is a piercing line on the daily. We used that extension tool, and it worked out really nice. So we did have a short-term buy signal here. Now this is one that, if you read the book High Probable Japanese Candlestick Patterns, you will be able to see how this works. I always say, well, if it affects the bonds, then it will affect the currencies. If it doesn't impact the bonds, it's not going to do anything to the currencies. It looks like right now what we've done with the yen is we've already exacerbated our upside targets. Okay, so does that mean that we can't keep on going? Absolutely not. What it means is now that I think this corrective phase with the dollar is more than just a corrective phase, but we have divergence in currencies. So remember that the dollar index, the euro and the pound are the two biggest components. So with the pound rallying, it's hard for the dollar index to look very bullish. Okay, so if the euro is neutral or even slightly higher on any given day right now, and the pound continues to make new highs, the dollar index is not going to be the best gauge for which way the other currencies are going to go. Let's see, we got a question from Captain Will. Do you show the technical indicator you use? I'm not quite sure what you're talking about from where you jumped in on that. Right now, what I use mostly is for entries, I use Japanese candlestick patterns for buy and sell signals and for continuation signals. I do have some other methods that I use apply. As far as indicators that I use, I don't use very many indicators. I use those for confirmation for long-term signals. Just because most indicators are lagging. So what I like to do is use the most present price action. I always say that the best indicator truly of the markets is the market. So when I look at any of these currency crosses, like for instance the dollar for the yen trade, I look at it as in reference to commodities and also relationships with other currencies. So that's what I use for most of my technical indicators. It makes it very easy as far as because it is what it is. It doesn't doesn't get too overly done with math. That's one thing you have to be careful with when it comes to all these like
this high right here,
whether they're lagging
that's
or
probably it.
somewhat forward-moving indicators, is that the math for all of them is very similar. So over time you come up with a lot of the same results from different type of approaches because of the way it's just the dynamics of averaging, which is what most indicators are basically drawn off of some sort of average number. So, but that's what I use. I use the high probable Japanese candlestick patterns for the most part. For instance, let's go back to our Euro US dollar. You know, as we can see, we have this bullish engulfing line here. If you're not familiar with that pattern, you can read the book High Probable Japanese Candlestick Patterns that I've written. It's on Amazon, or you can just Google that thing. This is not going to be a lesson today in the dynamics of each pattern. But, so that's one entry. So like this got us in on this trade here. We are still long one contract. We got out last week just below this high here for the short-term target one trade. In fact, if we look at, I think I have it up on
that is also going to impact the dollar. You're going to see
no, that's
the U.S.
the
dollar
trade. Let's see.
Here
we go. The Euro US dollar chart here on the Ninja Trader. Yeah, our second target here
also,
is
US
right
dollar
here
JPY,
around, well, it's actually $1.2115. This is $1.2119 on this chart. So we're looking for any extension here, and most would be up to this level. However, with our Ninja Trader risk reward projector, we have $1.2243 as the extreme. And I would say that for sure, if the dollar is going to be a bull versus the euro overall over the next couple months, this would be this zone up here is the high point of what I would say you're going to get to over the within the next week or so before we start to see newer move lows. And with the way today's trading, it's a little choppy. It's tough right now. You're making higher move highs and higher move lows, so it's hard to fade this bear. You always want to trade with the trend, and right now this one is it's a little choppy. So like I said, we're still long. However, we raised our stop up to where this low is here. So as far as indicators, Captain Will, a lot of what I use for indicators for managing trades is definitely prior swing highs and swing lows as you work a trade. And then I have also trading rules for as far as it has to reach a certain point towards a target direction before I even put a break even or start to adjust the stop. So I don't, I try to keep winners. I try not to let a winner turn into a loser, but also you have to do a trade time. So I have certain rules for that, and as long as I stay disciplined on them, they usually average out to in a good way. All right, so let's get back to these other markets here. We left off on the yen. Australian US dollar just got an interesting little
you never know. It's
action going on here. Okay, so what do we see?
Hopefully we'll have this one.
With this.
New Zealand dollar, US dollar still
we have a potential bearish engulfing line sell signal forming today.
Right now, who knows?
If we head back towards the lows of the day, that would give us on the hourly basis a short-term sell signal. And then if we could take out this low from a couple days ago, that would have us looking to lean on this upward sloping support line. Now this is a line that's fairly close to 45 degrees. It's a decent, nice stable line holding the trend intact. It's very likely by attrition that we will cross through it no matter what if we just go sideways. So key off the 78.22 level, any rally above here, obviously the long-term bull is back. Right now it has been making higher move highs and higher move lows. Use caution if you are a aggressive short. Now would be the time to do it. I would wait for a lower close than, let's see, we'd have to get below 77.65. So basically we have to settle just where we're at or lower right now for this to be a short-term hourly and daily sell signal. And then you would want to be using 78.22 as just above that as your risk for your stop. Which is actually a low risk short, fading the trend. Normally I would say try and find a trade with the trend. We're not trying to pick a top here, we're trying to pick a top or a bottom, but with a sell signal that's valid, at least on the hourly. And remember that with interest rates going where they're at, that's going to start to put a lot of pressure on all the currencies with the dollar getting bullish like that. If we see another dollar break in the bonds tomorrow, let alone another, if it gets down another 1 or 2 full basis
basis points over the next couple of days to the end of the week, it's going to be hard to not be a dollar bull.
Look at this, gold came back already.
The only thing would be is if we have an extreme rally in oil that would hold up the Australian dollar, US dollar. Now, especially if we have a pullback in oil all this week, and we have oil numbers to come out tomorrow on Wednesday, so you got to be careful. In fact, speaking of Wednesday, if you
that'll be interesting to talk about. So we have this video to refer back to.
Thought I had it
to see what we were talking about today, so we can see if we were right or wrong tomorrow. It'll be very interesting to see.
Oh, yes, I do have it pulled up. Okay, so if you go to our website, forex-trading-unlock.com, obviously on our homepage you can see us streaming, which we're streaming this right now, and we usually have our weekly analysis up here. And by the way, if you want to download NinjaTrader for free, you just go to our tools bar on the nav bar, hit NinjaTrader trading platform online, and you can go down here and give you information, and then you can download it for free. But what we want to see right here is if you go to
sign up and
our
check it
market
out. Tomorrow will be a
Forex market analysis page,
and
we always have past videos we did. We actually have our streaming and recent stuff. Here we had a video from eoption.com. But here you can see us every Wednesday on tfnn.com. And we had a big discussion about interest rates and what have you. I would say if you get a chance to check out this webinar or this interview from last week. I'm tongue-tied this morning. So it was a really good discussion about what's going on with interest rates and the currency markets, and especially with gold and the equity markets. And we're on there almost every Wednesday at 9:40 on tfnn.com. So I would say if you get a chance, check it out, and you can always access it from our website as well. So anyhow, we talk about how oil comes in, and actually right before I go on that segment every Wednesday, we get the oil numbers, and Tom and Tommy O'Brien, the hosts of the show, they always go over them, and then we end up usually showing or talking about how it interrelates with the currency markets. So Australia being a big oil exporter, and now with the U.S. being basically getting shut down slowly but surely, where we are now going to be importing oil again. This is huge for Australia. It's absolutely huge. So we are no longer going to be sending oil to Japan. This is huge for what our relationship with Japan as far as the yen, and even business-wise, because stability, when you have, especially we're a regulated oil producer, our tankers aren't dropping billage into the water and all kinds of stuff. So we're not contaminating the environment like these other producers are. So on the green scale, we're going backwards, but also the ability for pricing now is more manipulated because we are no longer a global player. That is correct. The United States is no longer a global player in the oil industry. We are off the table now. It's taken off the table.
It's a little bit of a mix.
It's going away. This is huge for Australia, though. So it's going to be hard for the Australian dollar to have a major sell-off. But right now, we're looking for at least a short-term correction. Like I said, if we get a close lower where it's at right now or lower today on an hourly basis, we'll have levels for you, but we have to wait for the signal to happen. Remember, this is forming. For all we know, the market's going to reverse gears today, make new highs, and maybe even take out this high at 78.22. But after the close today, if we don't have our video out yet for aggressive shorts, I would say use the 78.22, maybe about 78.25 as your stop if you're going to go short, and look for a nice little test of this downward sloping support line. And we'll know if we get the sell signal later on today, what those levels will be. But otherwise, I would say you would probably get a good chance at getting down back towards this, not 76 even, but maybe 76.20, 76.30, somewhere around here.
You have to remember,
just below this upward sloping support line, kind of stressing it. And remember, that just would have us in a neutral outlook. Now let's look at the New Zealand dollar, U.S. dollar. Okay.
So between
all right, what do we have here? We have
probably going to be a bit of a slow start to this.
We got some nice people number on YouTube watching besides Twitch. Thank you guys.
But you never know.
All right, New Zealand dollar, U.S. dollar made a higher move high today. This thing is wedging, and by attrition, it's coming through its upward sloping support line. It's holding the trend intact.
Is that bearish if it gets through here? Not when it goes this way, and that's just sideways. Now remember, on the daily basis, it's been making higher move highs and higher move lows. It made a higher move high today. So key off of that, we don't have a signal here at all. Even if it was to close lower today, it's not going to be like the Australian dollar. Remember, divergence is the key to currencies this year. If you're not mindful of that, it's not going to be like last year where it was dollar driven, whether it was a dollar bear or a dollar bull, and all the currencies reflected it. We had the coronavirus that was on the table and all kinds of other things that really just focused it on a one-way trade. There wasn't much. So I mean, on a daily basis, you would have one up versus the other. However, the trend was very much a dollar-driven trade. The dollar index was basically a true reflection of dollar strength or weakness. Not so much anymore. Now we're getting back to free-floating markets. So be mindful. We're getting back to what is normal for markets behavior. You know, whatever that really is, because it's always changing and adapting. So New Zealand dollar, U.S. dollar, we need to wait for a signal. Now let's look at the U.S. dollar, Canada. Another oil-driven trade here. Well, what do we have here? We have a potential bullish engulfing line forming. This has not formed yet, but look at this right here, guys. Okay, so if the market closes above a dollar, right now it's trading $1.2682. So dollar index is not going to be the best gauge. A dollar, it needs to get above, yes, where it's at right now. This has a $1.682 or higher today on the close. That would confirm a short-term bullish engulfing line buy signal. Now we will give you targets to the upside once we establish that buy signal. We have not established the buy signal yet. So now the good thing is for all of you guys that are paying attention today, it's close to 10 a.m. We're not going to jump off here. We got a lot to still cover here because we got some interesting stuff happening tomorrow. We will be doing a big live webinar interactive event that we've been promoting across LinkedIn and across our institutional and commercial networks, and I think you guys are going to be really interested in it. The nice thing about it is, remember I said today, these signals we've been looking at that are forming, by tomorrow they will have formed. So real quickly I want to show you guys, and I'm going to give you guys access to this right now. If you go to LinkedIn and you go to our company page, Forex Trading Unlocked, okay, we always release our current videos. Like when we do the thing on Wednesdays, we put it out there. We put out our weekly and daily analysis. We'll even be putting out a link to this video also for you guys. So if you guys are wondering how to really get involved with Forex Trading Unlocked and get the signals and know what's going on and get access to a lot of really good Forex and also futures and other trading information, follow us on LinkedIn. And you just go to Forex Trading Unlocked Inc. or just Forex Trading Unlocked, and you'll find our company page. And as you can see, we have just under 8,900 followers throughout the industry. Well, we have an event that's tomorrow at 10 a.m. So if you guys are around, I want to share this with you right now. I'm going to give you the link to this. So you can go tomorrow and watch us for this webinar, and it costs absolutely nothing. All right? And you will be where able to when the other currencies gain a little strength. All right, so we've got this here. I'm going to go and give this to you guys for all you Twitch followers out there. I'm going to put this out right now for you. So this is our webinar for tomorrow. We will still February the 17th at 10 a.m. So we will be on TFNN at 9:40. You can see me live on there with talking to the guys. We're going to talk about the markets, and right after the oil numbers. Okay, that's TFNN.com. You can find them on YouTube. Like when you go to our website also, Forex Trading Unlocked, when you go to our website here, you can click on this, and you can find access to that link also, just to make sure that you are on board with that. Okay, so I just sent the link to you guys on Twitch, and now I'm going to do it to you guys on YouTube.
I wouldn't expect much today because, like I said, because of the holiday, if it falls below here, then your target will be this level here. This will be a key low.
All right, for the YouTubers, there is the link also. So tomorrow, remember, at 10 a.m. Central Standard Time, which would be 9 minutes from now, will be 24 hours from then, we will be going over all of these signals, whether they did or did not form. It looks like right now, the way things are going, we're going to have a lot to talk about tomorrow. And it's going to be a fun webinar, because right now we have signed up 263 people. So if you guys that are watching right now join it, if all you guys show up, that'll be over 270 Forex traders to interact with tomorrow through our YouTube and Twitch streams and Mod Crush. You are watching us, we will be streaming out to all of you guys. This is not a restrictive thing. You do not have to pay for it, but it will bring together a large group of like-minded Forex traders and futures traders that are interested in swapping ideas with other traders and information about what's going on. So it'll be usually when we do things like this, we have some good questions, and we also have some good statements and information to relay out to you guys. So we'll see. You never know who's going to show up. So it could be some people who I've been active with in the business for 10 years or maybe even 25 or 30 years. Who knows? It'll be interesting to see what happens. So right now, U.S. dollar, Canadian dollar, we are looking at a potential inverse relationship where sorry about that, folks. I knew there was something I forgot, and I got to turn off the landline. I didn't turn off the cell phone. Okay, so sent you that information, and by the way, always remember to go to Forex Trading Unlocked and check out when we have these things posted. Also, if you're not going to follow us on LinkedIn, but we would like it if you do anyhow. So, in fact, what I'll do. Oh, actually, you got it. You'll be able to find it when you sign it when you go to that link there. Okay, so with the U.S. dollar, Canadian dollar, let's go now to U.S. dollar, Mexican peso. How many of you guys are looking to go on spring break or have kids that are getting ready to go on spring break in the next month or so? I heard supposedly that schools are canceling spring break. Yeah, right, sure. Like the kids aren't going to blow off school for a week and go down to Mexico. You know, so we do have a very bullish move here in the Mexican peso. Now, this is the interesting thing about the dollar. Remember I told you the dollar index, because of the pound and its weight on the dollar index, it's going to, for instance, if the dollar is bullish against all the currencies in the world, but the pound's going the other way, that's going to keep the dollar index from looking very bullish, the dollar, or bearish conversely if it's the other way, because of the pound's impact and weight for the number of its influence on the index. But since we've been looking at all these smaller currencies, there's still major ones, but there's the lesser ones, the degree of dollar strength today is very impressive. So as we looked at the Canada, and now we look at the Mexican peso, this is a very big move to the upside. Now, the market has been an overall bear for almost a year. Right now, it looks like it's trying to bottom. It did make a lower move low, a lower move high, but it made a higher move low. So we're keying off this 1987 level for the peso from last Friday, from actually yesterday. As far as any trading below there has us back on the bearish campaign. Right now, I think we're more likely, as we're wedging here, to take out this downward sloping resistance line and make a challenge for $20.60 pesos to the dollar. How much above here we can get? Yeah, I wouldn't get too overly bullish with this one. However, it looks like if you're getting ready to go on spring break, don't buy your pesos yet. I think you'll get a better deal over the next week or two, and especially if we do get above 20.60 pesos to the dollar, I think you're going to maintain an upward trend, corrective trend for sure, especially if dollar strength is coming in with a lot of the other markets. Now, it's a mixed bag of goods when it comes to commodities and stuff, but here's the thing is, as the pricing of inflation and oil and transportation starts to really creep into the market, the ability for U.S. consumers, even Mexican U.S. consumers, to import from Mexico will start to diminish. The cost is going to rise significantly. We know we already have food inflation. It's already creeping into your markets. Most people aren't noticing it as much because they're decreasing food sizes and keeping the pricing the same. But everything from seafood to, I don't care, even if you're a Costco customer, you can see the fact that inflation is here. So prices are either going up slightly, or the prices are staying the same, and the quantity is actually being reduced significantly, which is the same difference. So inflation is here. It is not going away. I think it's going to weigh a lot on the Mexican economy. They have their own basket of goods of issues, and especially as world travel, if we continue to have lockdowns like in the UK, people from the UK aren't going to Mexico, and they're not coming back with the restrictions. I mean, people are not going to put their lives on hold just to go to Mexico for a week. As much as they want to, but if it's going to mean that they have to quarantine coming back and going forward, that's how many. I mean, I know Europeans get holidays, but I don't think the people are going to spend 1 week on the beach and spend 4 or 5 weeks in a restricted hotel room, especially for the costs of that. So these are the things that are going to weigh on the peso as we move forward. Let's see what else is going on. Now let's go back to Euro, US dollar, and see what's happening now. All right, well, we don't have very much action. Instead, it's going a little bit lower. It's kind of quiet on the day. Not really much to say. Let's look at the bonds right now. Oh, wow. 30-year bond down now at full handle, 24 pips. So it's making new lows. That's a big deal. That's a huge deal. Like I said, the dollar is going to get strength from that interest rate move. You know what? Since we're talking about this, let's take a look. 30-year when you go to our navigation bar, just like when you go to Tools to download that NinjaTrader platform, you go to our markets. We're going to go past Forex. We're going to go down to futures, and we're going to take a look at now, due to market regulations and data regulations, unlike the FX market, which is only in a slight delay because we're streaming, we have the futures market, which can only be in delay because you have to be a paying customer to have data, to view data that's live, that's regulated. Now let's those of you that are unaware. All right, so weekly Treasury bonds are up here. Let's move to the daily. All right, the Treasury bond market was closed yesterday until the evening, and it tanked. So at $1.6506, this is where it settled, making new move lows. This was yesterday. All right, 165.06. They're trading at 164.15 right now, so that's almost a full dollar lower than it was in the night trade last night. So that bar right there is actually today's trade continuing forward, and so that puts you $1.14. Let's see, it's $1.64.15, so that puts it right here. So 64. So right where this line is right here. So I'll put a little drawing a line here just to give you an idea. 164.
I would use this 78.24 as your risk level. Any trading above here.
So right now, currently, this yellow line here, that's where the Treasury bonds are at right now. Look at this. Bear. Newer move lows, daily, lower move highs, lower move lows, indicative of what? A bearish short-term daily. That means the dollar is going to most likely keep strength as long as the interest rates keep on puking and the oil rate keeps on going up. In fact, since we looked at the Treasury bond market, let's pull up Forex Trading Unlocked, and we'll go down here. We go down to commodities. All right, now this has all the different. We have the meats, we have the grains, we got the sauce, we got the energies, we got the metals. Let's take a look at crude oil here. Crude oil as of nightly trade. Look at this. We popped $60 a barrel on crude. If you think you're paying higher prices, which you are, then you were definitely a month and a half ago, let alone just 3 weeks ago. I mean, just in February alone, oil's gone from $52 to $60 a barrel. That's a huge jump. It's almost a 10% jump in just 3 weeks, folks. That's huge. It's an accelerated rally. This is a bull. It is not going to stop. There is no. Look at this forward curve here. This is so radical of a slope here. The way this is turned, you just don't see this. You just don't see this at all. Like, it's rare when you see this. So, and with oil right now,
the only thing I think you have to watch
where is it at today?
In order for this to happen, for
going to maintain this trend. Okay, so remember, as oil continues to rally and the 30-year Treasury bonds continue to break, meaning higher interest rates and higher oil, that's going to bring in inflation. So here's the other thing too: is as interest rates go up, the cost of carry goes up. Now, I don't know if any of you are familiar with the short-term cost of carry. All commodities, once they leave, say, like when corn leaves the farmer's land, when oil is pumped out of the ground and it starts to be transported and moved, whether it not be even before the refining process, any physical, gold mined and transported, whatever, once it is out of the ground or harvested, there is a cost of carry, okay? And usually you have to store stuff while you're in transport, no matter what. There's an interest rate for that because you are paying forward. So when they move, they don't pay right away. So you're charged X cost for the delivery or the holding. But there's also an interest rate. It's basically, it's finance. So you have to pay X amount, and as you pay that, any unpaid balances, there's an interest rate. Obviously, you understand how credit works. But it's a credit-based system for how you move commodities, because you couldn't just be exchanging cash every single time or making transactions, so they do it in that fashion. So the cost of carry variable now is going to go up. So any excess oil or food sitting anywhere that is either in transit or being held before its delivery date, the cost of that is going up. Now, obviously, if that cost goes up, who does that impact? That impacts the consumer. So that will hit you at the food price, at the food counter. It'll hit you at the gas pump trying to get to the food counter. It's going to impact you refinancing. If you did not refinance your homes over the past, you had the best chances ever up until November of last year. If you actually, basically, was when COVID hit. If you didn't refinance between the spring and the fall of 2020, you are probably not going to see those rates again. The only thing that would change things is if all of a sudden Biden says, you know what, we're going to start pumping oil again, we're going to open up the pipeline, where this is just, we got to do this slower, we have to actually think about how we make a transition from oil instead of just cutting oil and destroying jobs. That's what they have to do. That smart thing would do is to transition away from oil, which is what we've been doing slowly. That's why oil's going down in price, and it's keeping inflation at bay. But see, remember, your economists, they always say we need to maintain inflation. You know why you need to maintain inflation? Because that's an economist's view of how things are supposed to be. Think about it. Do you think you should pay more for an apple every year from moving forward, or anything that you buy, just because time goes by? No, that's the most ridiculous concept in the world, but we're not even going to get into why economists have that, because it's more political than anything. So it's about trying to break the free market. So it puts an artificial, forced inflational strain on the market. It's done by design. So as these things all add up, so right now we basically have a war in the free market system that is pushing and driving shortages and also higher pricing. This is not a political view. This is just math of how things work. It's the dynamics of how markets move, how supply chains are interrupted, and how currencies are impacted by it. So as we are talking right now, we're getting a nice little rally here in the Euro-US dollar. So we talked about a bunch of trading signals that are forming today. We also got you the link here for tomorrow's webinar. Remember, tomorrow at 10 o'clock. It's now 4 minutes after 10. So this time tomorrow, 24 hours
Remember
from now,
that there's a holiday in the U.S. Dollar bears are definitely.
All right, we got some questions here. Hi, I'm new trading. I'm just tumble on your live. Nice to meet you. So this is one ton gaming.
So there's dollar strength and there's dollar weakness out there.
Cool. So keep following our videos. If you got any questions, you just go ahead. Don't be afraid to ask. Doesn't matter if you're a newbie or not. That's what we're here for.
We have a little bit of action here with some of the traders that are playing around.
If you haven't already, subscribe to our Twitch or YouTube channel so you know when our videos are coming out. And tomorrow especially, we got the live interactive Forex Strategies webinar at 10 a.m., which is going to be on YouTube, Twitch, Mob Crush, also on Tumblr and what have you. It will be pretty good. It's going to be a highly interactive video. We have webinar because we have, hopefully, if everyone shows up, we're going to have over 200 people online for the chat. Okay, Lolly, I see. Sorry for being off topic, but taking a look at, U.S. dollar gold, absolutely. For sure. All right, this is for Lolly on YouTube. All right, this one's for you. Let me pull up the US dollar XAU chart. Okay, so XAU US dollar,
the monthly, the weekly,
the
daily, even the
okay,
hourly.
we got the daily here.
Catch a falling knife here.
Let's go to the weekly first.
Okay,
we will
so
continue to
what do we
monitor
have
this
here
one.
with
We
the
do
gold
not have
chart?
a signal
It's
right
kind of
now,
funny.
so you just have
Well,
to wait
I don't
with
know
this
if you
one,
were
but as long
catching the
as
beginning
oil's
part of the
rallying,
webinar.
it's gonna be
Before we
tough
have
to,
our
be
10
a
a.m.
buyer of
broadcast
this one. I would
on our
look to.
networks
Now,
and
if you
streaming
wanna
out
do
at
I guess, a
9:40
low-risk
Central
buy, you
Standard
could try
Time,
sometime
I will
between
be
now
on
and the next,
tfnn.com,
day or
and the
so.
guys that
Buy
run
against
that show, we talk about the oil
$25.91.
numbers
This
and
would
the
be
currency
risk
markets
level.
because they all come out
Any
right around that
failure
time.
here, you should
And
not be
also,
long. All I can
they're a
say
big
is you're on
gold
the
guy,
wrong side of
especially
the market,
the one
because you're
guy.
gonna be pressing
Gold is
newer
his
move
specialty,
lows
so we
on
always
the
talk
monthly,
about
but
that
before the
interrate
daily,
relationship
what have
because
you, the whole,
the gold and
gauntlet. So
yen and the
momentum
yen
build,
actually have a big
and especially
relationship.
if
So
at that point
you
there
wanted
is
me to
a
pull up the chart,
rally
and here it
going
is.
on
We got the
in
gold market in a little bit of a
oil
retracement.
market.
Okay, so
Any
why
type
is
of
gold suppressed? Why is it
corrective
having
bounce in
such a
interest rate
hard
market
time
that we
lately?
looked at,
Well, one of the
or,
reasons
you know,
is
there's a couple
what
other
we were talking about earlier.
variables
When
that
if
could
you
really
guys have been
drag the
listening, when I
US
talk
dollar.
about the 30-year
All right,
Treasury
let's take a
bond
look
and
at the
interest
euro
rates,
US dollar now that
interest rates
we
are a
crossed
function
that
of
830
currency
timeline.
pricing. They're
Well,
also
see,
a
nothing
form
going
of
on. So that's
also a
pretty much
valuation for
what
gold.
we're gonna
Also, they do
expect
have an impact.
for the
Why
rest
is
of
that?
the-
Because
here we
there's
go.
gold storage. It
You
costs
need
money
think
to
the
store
British
gold. There's an
pound,
interest
you really
rate
feel
factor
that
in the
drop
cost
down
of
right
carry,
now.
in the
Okay, so you must
production
have,
of gold,
got,
and putting it
JF right
into
here,
supply.
on the,
And then there's also
chat
a
box.
cost
Let
of
me go
carry
back to
of
British
supply
pound, US
also,
dollar.
just maintaining.
Yeah,
Like,
obviously wasn't
it's like
here
I
from the
always tell
beginning.
people
Okay, we'll catch
when
you
it
up to
comes,
speed.
I look
Yeah,
at
this one
gold
here,
and Bitcoin
as
as
far
the
as a
same
drop,
thing.
let's take a look at the
I think that
hourly.
all the money in
Okay.
gold is
So,
through
if you
gold
wanna trade
stocks,
this on the hourly, it's a
equipment
safety
that's
holiday
used in
trade.
mining.
Here it is
I always
right here.
say it's like the
We
Levi's
topped
model.
out
It's like the morning
back around,
miner
what was it,
49ers.
2 a.m.,
The
it was
money
actually
is
just
not
6
in the
hours
gold
ago.
rush or in the
We
gold.
made a higher
It's
move
in the
low,
picks and
we made a
axes, the
lower
jeans,
move high, and right
everything
now
that
we
takes
have
for the
this
people
little
to
bearish engulfing
produce
line.
the gold, move the gold, and maintain
I don't
the
like
gold.
using this
That's
so
where
much
the
on the
money's really
intraday,
at,
especially
because
on holiday
gold isn't
markets and
going
stuff
anyway,
like that,
going
but I
anywhere.
would
That's
say
where all your risk is.
you probably,
But
if you sell
the other
against the
things,
high of the day
they're not
today,
going anyway.
and
There's no risk in
especially
that.
if
I
you
mean, there's
take out
obviously a
this
risk
low
in
from
mining
last
that you
hour,
run out
which
of gold
was
to mine and things like that. But
$1.3893.
in general,
You might get a
in
nice
the
little
main
corrective
focus
move
of
down to
things,
$1.3860,
same thing
somewhere
with
in this area. I don't think you're
Bitcoin
gonna
mining.
take out
Like, where's
this
the money?
bottom that was
Well,
formed
the
here back
technology
on,
selling that right
Friday.
off the bat. Those companies, anyone that makes the
This is a
machines, the
steep
hardware,
hourly
for
trade here,
those
but that's also
operations, there's money in that right there. Also in the power, anywhere you're selling power to where they're mining.
rally against the dollar.
That's a big thing too. So that's where the money is, or at least that's where you are guaranteed to have opportunities and not have to worry about the pricing. So enough of that. Where's gold going? Well, it's really sideways right here, that's for sure, huh? We don't have any thing to go on here except for this. Lower move lows, lower move highs. That's the way we've been trending as far as today so far.
And then they'll snap
We are
back tomorrow.
lower
once,
on the day.
All the other algos and stuff start to kick
Bounced
into-
all the way
into
back.
gear.
So what
as
I would
far as,
do is key off of
pound
this.
US dollar for J. Freud.
So this is,
think
remember,
we could get
this is
another
currency
drop
too.
maybe
If you
on
look
the
at it,
hourly,
U.S. dollar
but
gold,
it's,
that is a
you know,
cross.
I would
It's just
say
a physical
don't risk more
versus
than
the
the high
dollar.
of today.
All right, so,
So yeah, for a
$1,855 here. I would say
short,
this is your upward breakout level. Let's just go with the trend dynamics. All right, this is for you, Lai, and anyone else is paying attention. Remember, the trend is always your friend. This market made a high here and made a low here. It made a lower move high around here, lower move low here, lower move high.
Oh, here, since you
Right now we're looking for a lower move low. The trend is your friend. So we are looking for a breakout to the upside here. This would take us off the bearish trend, or we are looking for a test of 1784 and meaning going lower. Especially with the price of oil going up too. What does that do to the price of mining? That price of mining goes up. So that means that mining gold becomes more expensive. It becomes more restrictive. So until supply starts to impact supply, which might lift prices again, I think you're going to see a suppressed value in gold, because those that truly hold and produce, they don't want to hold it. They want to get rid of it. Their whole point is to find it and sell it, or mine it and produce it and sell it, or drill it and what have you. If they can't do that, then all of a sudden it changes everything. So right now, lower move lows, lower move highs. The trend is your friend. Let's look at the hourly. Okay, so on the hourly short term here, let's say maybe for the next couple hours for the rest of the trading day, sideways, maybe even a little bit higher. I think you're going to have
problems here around this 1830 level. You might have a choppy range trade between 1820 and 1830. But if we start to head south again, especially if we run out of gas here, this might be a good area to sell. Should we get up into that area? I'm looking more of a test for a test of support how much the pound is beating up on the dollar side as well. So if that's kind of clear to you,
as far as using that as
especially with dollar strength, if like I said, if we can see a continuation of the trend in interest rates, where 30-year continues to press lows tomorrow, oil continues to press highs tomorrow, especially with those oil numbers coming out, well, we might see this going down. Now, here, you know what's interesting? Since we have the gold, you're a gold guy, you want to know about the direction of gold. Let's also look at the yen chart. Let's go back to this one. So we go to
the euro.
Let's go JPY.
Starts to get strength versus the U.S. dollar, things like that. Then
look at this.
Probably will see
instead of doing U.S. dollar JPY, which is how we normally look at the currency, let's look at it as we did the gold
that's a way
price.
Of kind of gauging strength.
JPY USD
indicators
looks very similar, doesn't it? Remember when I said there's a relationship between the yen and gold? The yen made a lower move low, meaning a higher move high, because if we go to U.S. dollar, JPY is the way we're used to looking at it. See, it's the inverse of gold. Now, you did XAU USD. If you go USD, XAU,
just because it's the North American trade zone.
Oh, wait, we can't do that.
There's a trade there.
Sorry, back to this. U.S. dollar, XAU.
The markets aren't as strong in Mexico as
XAU,
comparatively with the pound versus the
U.S. dollar
versus the U.S.
Right. So let's pull this up so this looks kind of clear to you. All right, so if we just go from the beginning of 2021 and we look at where we're at right now with this chart right here, now let's go back to the
U.S. dollar.
JPY USD.
The daily.
Look at that.
So,
here we go, as we've been talking. I mean, not completely identical, but the waves, it's topped out here at the beginning of 2021, had a harsh break, and it had a nice little bounce, established a lower move high, and then boom, it fell out right here. So let's look at the dates here. So this is February 5th is where it bottomed, right there.
The thing is, the pound trade,
XAU, USD.
The euro does make a spike up there with that.
And this bottomed on February the 4th. So,
especially if the pound is strong
the dog wagging the tail, or is the tail wagging the dog on any given day? Who knows? Okay, but it's interesting right now if the U.S. dollar yen, or excuse me, the yen over the dollar is making new lows. This one's bounced back. I would say that you should probably be leaning on the short side of this one, because as long as the U.S. dollar, or excuse me, the yen continues to be in its free fall versus the dollar, you're probably going to be hard pressed to get a big rally in gold. So does that help you, Outlaw? I hope it did. I hope you gained something out of that, and especially all the rest of you. Remember, I think one of you guys, Captain Will, you said, do you show the technical indicator you use? Well, I just, as you see, I use the markets to figure out my pricing and direction. So, yes, I do show you the indicators that I use. And as you can see, the yen, U.S. dollar yen, is also a good indicator for the dollar. That's why I mentioned the show that I'm on Wednesdays, because the one head guy from TFNN.com, Tom O'Brien, he has a gold report, you know, so not to give him just a plug today, but I am, and those guys are great, and we talk about these things. That's why he brings me on the show to explain to other people why we have this relationship with the yen and gold, you know. So just like I always say, if you want to know what the market, you know, just like the question Captain Will, a lot of people ask me, and these are veteran to brand new traders, they say, what is your favorite indicator? What do you use as, what is your best way to indicate which way the markets are going? And I always say the same thing. I'm like, I always look at the market. The market and the markets are the best indicators of market direction. It's price action. All right, we got a new question here from Kiki Boo Bear. Okay, nice name, Kiki Boo Bear. Also new here. Wasn't sure when to ask. Any thoughts on IG Forex platform off topic? Actually, that is not off topic. It's a Forex question. IG, absolutely. If you go to, let me show you this real quick.
Answer them. Otherwise, we're just going to get ready to.
If you go to our YouTube channel,
we'll have a couple other webinars
Forex Trading Unlocked,
over the course of the day. Once the
you're going to get
after the holiday market is over.
Okay, this is our screen here for Forex Trading Unlocked. And then as you go down here, featured channels, the Nadex. We do work with them. The Nadex is owned by IG.
Hello everyone, this is
IG is, there's only a few platforms that you can use in the United States to trade the markets. So we endorse FX, or not FXCM, excuse me, Forex.com. They are based out of, that's Gain Capital, which is now actually FC Stone. I actually took them over. So IG is one of the only I don't know if you're in the U.S. or not. You can, if you're a U.S. citizen, you can only trade through Forex.com, IG, or Owanda. If you're not going to trade with Forex.com, which is now International FC Stone, which is originally a futures FCM. I remember them from the trading floor days. IG is a very good platform. I happen to be the ones that own the Nadex, which are binary options. It's a binary options exchange, and if you are FX traders and if you do trade binary options globally, I highly suggest that you stop, and if you're going to trade binary options, you only trade the Nadex options or the CBOE binary options, because one, they're regulated, and two, you get the real pricing and real deal. You do not get the spreads are very bad with other platforms, but IG, as far as Forex pricing and solid company, absolutely. I deal, like I said, with the Nadex, which is a company they own. So as far as FX, in fact, if you go on my YouTube channel, Forex Trading Unlocked, we have a whole thing here for it's the Nadex. So we have a playlist. So if you pull up this Nadex, you pull up the full playlist, and you can sort them and see all of the different webinars that I've done for the Nadex exchange, which, like I said, once again, is owned by IG. So yeah, I do endorse them. However, I don't have a partnership relationship with them like I do with Forex.com. But as far as a good competitor and what have you, I have to say, yeah, I endorse them for sure. You know, I would say I don't have anything bad to say about them. As far as Owanda, globally, they're very, very big. I am not a fan of them because of issues they've had over the past, and I'm not really happy with a lot of how they treat their customers, especially when the markets are really flying all over the place. But they are one of the only deals in town if you are a U.S. citizen. Now, Kiki Boo Bear, I don't know if you're outside of the U.S., then absolutely stick with IG or Forex.com. Please do not go with any other carrier. You're less likely to get good latency for one, which is a big deal. Your spreads will be wider. Don't be fooled by them giving you better margin deals and better leverage on your the different size of positions that you can have. So cool. You're welcome, Kiki Boo Bear. And please, if you haven't already, subscribe to our YouTube channel and our Twitch channel, and definitely follow us, whenever you got time on forex-trading-unlock.com. And any questions you got, just spit them out while you're on the chat here. And even when we stream, there's times when we stream out replays of videos, and we check our chat room. Sometimes we're around while we're doing work and it's playing, and we will interact with you. And then there's other times where we will just read back on it, and we will bring them up in our next videos or where they are pertinent. So let's see, we have any other questions on YouTube or Twitch? It doesn't look like, or Tumble, no. All right, you guys have been great so far. We appreciate this interaction today. So that's okay. So we got a nice little lesson here on the gold and the yen. In fact, for all you guys that are watching here today, when we talk tomorrow, I'm going to make a special note about that, about doing the gold yen cross trade. This will be a good discussion where other traders that are veteran traders from the gold markets and the commodity markets and even the yen. I think from the list, there's definitely some old CME currency traders that are going to hopefully be chiming in and giving us a little bit of commentary
You might have some jokes. Every once in a while, I get some of the trading floor guys, and they usually like to make a couple of comments that usually get a couple laughs out of some people. So, but that's all fun and games, and we're all about that here. So, especially with our old buddies from the floor. All right, so let's see. Let's go and look at what's going on with the Euro US dollar right now. So, like I said today, this turnaround Tuesday still continues to go on. The U.S. dollar is moving in a nice way. Oh, you know what? We never did. We never looked at the dollar index chart. Can you believe that? How did we forget that? All right, so we have here February the 15th. This was yesterday's action, as you can see. Now today it actually made a little bit lower move low, and now it is higher on the day due to what's going on with most of the currencies except for the pound. Remember that this market has been making higher move highs and higher move lows. It has not taken out this low right here that it made back on January the 22nd. Until it does, the trend is your friend. Remember, overall, the dollar is a bear. But I think neutral to higher is going to be the game plan. Now, as far as rallying significantly, I would say as long as, remember, the British pound, U.S. dollar, as long as this raging bull continues, because of the fact that it has such a weight in the dollar index, you're not going to be able to see the dollar index carry you in the direction of where you're going. So let's do a quick lap around the world and see what's going on. See if we get any other questions. All right, so we're looking at the pound U.S. dollar coming off its higher move highs once again. If you're looking to be an aggressive short, I would say use this $1.39.5 high as your risk level, a couple pips above it, because if the market gets above there, I mean, this is a grind. You know, just like you don't want to try and catch a falling knife, you don't want to try and get in front of a one-way freight train to the upside, you know, and wait for a signal. We don't have a valid sell signal yet. When we do, now here's another thing. They don't always work. If you read the book High Probable Japanese Candlestick Patterns, which I told you about, they don't always work. We had a sell signal here. We had a sell signal right
drive the dollar index higher.
Here.
Which is getting
and let's see, where else did we have one? We had one also.
So what does this mean for you traders out there? Okay, well, we have some key levels for the Forex market.
Okay, so 1, 2, 3 sell signals that did not work. Now,
however, that
typically, when this came into play, this first one, by the ruling of how I usually trade these signals and use those, like Captain Will, you want to know what's my indicator? My indicator is usually these patterns. When these things came in here, this one you were selling it in the hole right off the bat, never really had much ground to work with. This one here, pretty much the same thing, it was a grind. However, if you follow the rules that are in my book, there are times when you do not take the signal. And one of the reasons is the oil trade. Remember how I've been talking about oil and interest rates? Now, a lot of people are like, why does he always bring this into the mix? Well, all the experienced guys love it because they're like, this is really all interrelated. When the oil market was railing like it was, and knowing that on January the 20th, that there was going to be executive orders that would already start to mess with the oil industry, because that was the only thing that was promised, and it was delivered, that's where these signals failed. So when this came in front of this, I knew the inauguration was coming, did not take the trade. When this came in also, right after the inauguration, did not take the trade. When this one came in, did not take the trade. Right now, to be quite honest with you, I don't care what sell signal there is for the British pound, U.S. dollar moving forward. As long as oil is going higher, the only signal I will use for the British pound, U.S. dollar is a buy signal, meaning looking for a break, waiting for a sell-off, and then waiting for a buy signal, especially if oil prices remain firm to higher. So that is the only way I would trade the British pound, U.S. dollar. As far as being a bear right now, I think you have way too many influences that are going to override you. So I don't care if the euro and the Swiss and the yen all collapse against the dollar. Unless you see a collapse in oil prices and a change in the posturing of oil, do not jump in front of this freight train. You're going to get chopped up. You're going to see corrections no matter what to the downside, but they are going to turn on your face so fast. And I would look for a lot of binary and futures option spreads to really start to light up. I would think that you can make a nice monthly income on credit spreads
on any pound US dollar correction now for probably the next 6 months, 6 to 24 months at least, maybe even upwards of 36 months. You know, I would say until basically the 2024 election, you can look to be a bull for oil, a bear for interest rates, and a bull for the pound US dollar. Now that, like I said, see these arrows? The pound is the second biggest weight in the dollar index. So even if the dollar index rises, it will not rise that strong because of the pound. You get a sell-off in the pound, you'll see the dollar index pop like there's probably, you know, you'll be like, now what's going on? Because you'll see all of a sudden a reaction from that weight in the dollar index. But that remains to be seen. So remember, these things don't always work. If you read the book High Probable Japanese Candlestick Patterns, we have a whole discussion on money management and how to manage these trades. And then you would see where if you pay attention to certain things like that, that's when you get off the table. Now where we didn't not follow the signals was in the Euro US dollar, where we had this bearish engulfing line back here at the beginning of January. Do we care about oil prices when it comes to the euro? Absolutely not. Do we care about the US president when it comes to the EU? Absolutely not. So this is a free-flowing currency. That's why no matter what oil does, the interest rate equation is definitely in play for the euro without a doubt, and a little bit with the pound too, but the oil outweighs the interest rates when it comes to the pound. When it comes to the euro, oil is not an issue except for the fact that rising oil prices screw the EU because the EU doesn't have oil, and now that the UK is no longer part of the EU, they will get zero breaks on oil, meaning discounted, you know, volume buys. That's off the table now. Big difference now. Post-Brexit, they're allies, but they are now going to be competitors and also have edges that they have to work on people, you know. So, that being said, we have the euro back trending lower right now, coming off its higher move highs. We'll see how the follow-through is tomorrow. I think tomorrow with the oil numbers, that's going to be the big thing to watch out for, and especially it'll be at this time tomorrow when we're talking during our webinar. The pound is the second biggest Forex trading strategies live webinar that we were doing at 10 a.m. and it'll be for about an hour, from about 10 to 11 o'clock tomorrow that we'll be doing this. So for any of you guys that have time tomorrow, please, all you got to do is go to our YouTube channel. We'll be streaming it, or on Twitch. If you're not already a subscriber, you can just go to our channels and watch it there, or if you're a subscriber, you'll get the email link, so you'll have a little warning ahead of time. And then also remember, on the LinkedIn page, if you follow us on LinkedIn for Forex Trading Unlocked, you can find out our strategies, or excuse me, the sign-up link for here. It'll give you a direct access to it as well. All right, so now let's go and see what's going on with the U.S. dollar Swiss real quick. Okay, still making higher move highs. Now here's a nice little thing that's going on here. A positive close like this helps to really solidify this bottom here, at least in the short run. It will raise this right here, this 88.36 level, to this level right here. Okay, and this would be key to figuring out whether or not dollar strength is going to remain or if it's not going to remain. I'm looking at right now that you're most likely going to see some follow-through over the next trading days, over the next 2 trading days, into Thursday afternoon. After that, Friday, I don't know. We'll have to see between now and Friday. A lot's going to happen. We have to wait for unemployment claims on Friday as well. This is another big thing, too. Okay, unemployment. I've been a bond trader since I started trading 30 years ago. Unemployment is one of the biggest bond days of the year. When it comes to economic numbers and stuff like that with currencies, I look at them, but I don't give them as much credence as I do as far as I always say, well, if it affects the bonds, then it'll affect the currencies. If it doesn't impact the bonds, it's not going to do anything to the currencies. Thursday's unemployment claim number is huge. Now, here's the thing is, it's going higher. It's going higher. There's just no reason to not think that it is not going higher. Ironically, what is going to happen with the Treasury bonds if unemployment claims go higher? You're probably going to see the Treasury bonds trading down around 100. If they're trading now at 164.14, in fact, we can go and look at that. They're actually at 164.09 right now. So the U.S. Treasury bonds now are at 164.09. That's where they're now trading. They will most likely be trading, and I'm going to put this down on a weekly basis. So look at this. See this? This high right here? This is big. I told everyone 167 down to or excuse me, 168 is the key threshold. Trading below that really has this interest rate on edge. This is a multi-month, multi-year low now. Okay, this is a big deal. It's a big, huge thing as far as what's going to go on with the treasury markets and currencies. A higher unemployment rate on Thursday, higher unemployment claims will probably have us trading down to, I would say, around 162.
The Canadian dollar and the Australian dollar. Okay.
162.
Now they all have one thing in common.
Or 60,
all of these
130,
currencies
that are stronger
versus the
okay,
pound
right around there
are weaker versus the dollar.
So this would be a very good area around 160, 130, 162 to see the market get back down to. This would be probably when you start to see a little bit of basing, kind of like what you have here, and spiking around. But overall, this trend is now going lower. We spiked high back in March of
and
2020,
you would expect it to continue.
This high right here,
okay,
that's so now, probably it. Most likely that's done. Remember how I said if you didn't refinance between the spring and fall of 2020, this here in August, when they were talking about record low interest rates, never been that low before, the treasury bonds at that point were at $183. Now they're at $164. It's a $20 move in the bond market, folks. That's huge. A $20 move in the bond market, that is a monstrous trend directional move. The high is in. It's over. Hate to tell you, folks, we may see a rally over the next year or so. If with the buying that the Fed has to come in and do, that'll get it back up to this 176, maybe 180 area, in which I'm hoping it really does, because I'm looking for the real long-term short. Like I've already been short and I've been nibbling around on this thing. I'm looking for one last rally to the upside to sell into, and then I'm short for the next 3 to 4 years, rolling them down no matter what. And that is also going to impact the dollar. You're going to see the U.S. dollar Swiss break out and go back up to this 92 half area. That is very likely to happen. Also, U.S. dollar JPY, you know what else is going to happen? You're probably going to see this also continue to rally to the upside. You'll probably see the yen back up around 109, 110 area within the next 6 months, especially as interest rates collapse. And gold, if that continues to go down as well, that's another big thing. If that goes down with the yen going down, where's the money going? It's going into dollars. That's where it will be going. It's a flight to quality. Remember, there's 3 flight to quality currencies out there: the U.S. dollar, the yen, and the Swiss. Well, if the yen is going down against the dollar and the Swiss is going against the dollar, that means there's flight to quality in what? The U.S. dollar. As much as there's dollar bears out there and everyone's bearish to dollar, that's the biggest thing, is never run with the herd. When the herd's all saying sell, 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 most likely it's a good time to buy. And conversely, Australian dollar, U.S. dollar, once again, we'll take a look at this one. Potential bearish engulfing line sell signal forming. We will be talking about this tomorrow for sure with the group, because we're going to have a lot of guys that trade from Asia involved also. So it's a good group that we're going to have during this webinar. Hopefully we'll have some nice participation from a lot of the players that are going to be joining us from London and also from Germany, and we actually have some traders from India. We may be talking about the rupee tomorrow. There's a good chance we'll be talking about the South African rand. The Mexican peso is definitely likely to be talked about as well. And even the Canadian dollar. So we have some interesting things lined up tomorrow. We'll see what kind of comments. It's always, you never know. It's a freestyle event, and we will have these signals to talk about. Hopefully we'll have this one. New Zealand dollar, U.S. dollar, still quiet on the day. This is a nothing trade. We'll have something to talk about, I'm sure, tomorrow. But right now, who knows? Nothing really to look at it right now. It's quiet. Gotta wait for a signal. U.S. dollar peso still up on its highs. We'll be talking about this one tomorrow, and what the spring breakers had to look forward to as far as a cost reduction. It'd be cheaper for them to go out and pay for T-shirts and beer. And for U.S. dollar Canada, remember we do have the oil trade that's on the table, so it's going to be hard to look at this as anything more than a short-term buy signal should it happen. If it closes where it's at right now, that would confirm a bullish engulfing line buy signal. And here's the key: a buy signal like this would be, we made this higher, we made a lower move low after, we made this lower move low here back at the end of January. We made this lower move high at the end of January, afterwards a week and a half. And then today we made this higher move low. Well, a higher move low after a higher move high is indicative of what? A neutralizing of the trend. So short term on the hourly and into the daily, we are looking for a corrective move to the upside. Remember, we are bearish to U.S. dollar, Canadian dollar. But when you have an ABC correction now looking for a D wave up with a buy signal like that, with a higher move low after a lower move high, these things together all spell short-term buy. So is it going to be for the next month? I don't know about that, but I would say let's look at the next few sessions going into Thursday and Friday's trade, looking for that to happen. And also, let's look at, remember we had the XAU USD, since we were talking about that. Oh, look at this, gold came back already since the yen is hanging on its new move highs. Gold is slipping. We'll be talking about this gold US dollar trade also tomorrow during our video, during our live freestyle event. And let's see, who knows, maybe if the yen continues to make new highs tomorrow, then we should see gold back around this 1784 level, don't you think, guys? That'll be interesting to talk about. So we have this video to refer back to see what we were talking about today, so we can see if we were right or wrong tomorrow. It'll be very interesting to see. All right, so back to the euro US dollar for one last look, and then we're going to call it a day. Since we don't have any more questions from you guys, I want to thank you very much for your participating. Remember, anytime you want to get information, go to forex-trading-unlock.com. Also, remember to check out our Forex trading strategies live tomorrow at 10 a.m. Central Standard Time, Wednesday, February the 17th. You have the link on the chat boxes here in Twitch and also on YouTube. Please sign up and check it out. Tomorrow will be a very interesting, fun event, and we'll have a lot more Forex stuff to talk to you guys about. So with that being said, just want to remind you really quick once again, if you haven't read the book, High Probable Japanese Candlestick Patterns, check it out. It's available on Amazon.com in Kindle and paperback versions. If you're an Amazon Prime reader, you can read it at your leisure. High Probable Japanese Candlestick Patterns. Learn how to apply these patterns that work in all markets: Forex, stock, equity, options, and futures markets, binary option markets, ETFs, you name it, these signals work. They even work in Bitcoin, folks. And we may even talk about Bitcoin tomorrow as well. We didn't want to do that today because it's just, we just don't want to get into it. So I want to thank you very much once again. I'm Teddy Keckstedt from Forex Trading Unlocked, and we will see you. If you want to have an
Hello everyone, this is Teddy Keckstedt, and welcome to Forex Trading's Forex Market Analysis for the week of February 15th through the 19th. Real quick, we want to show you our disclaimer, just to remind you that this is for illustrative and educational purposes only. And also, real quick, if you haven't subscribed to our YouTube channel, please do, Forex Trading Unlocked. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. That is what the markets are doing. Right now we have our Forex-Trading-Unlock.com website pulled up. We have the workstation page already also pulled up, and we're going to go all the way down to our chart where we already have the dollar index Dixie chart pulled up. Okay, so we have last week where the market kind of settled, the broad-based FX markets was settled kind of neutral after the last 3 days of trading, but the first two definitely unloaded, and the dollar bears got a little bit of an edge on the US dollar. Now, today it's a little bit of a mixed bag of goods. We had reached our downside and upside targets for multiple currency crosses last week. We
hit our target zones. Some of them hit their extreme target 2s, and some of them just pierced into the target 1 band. So let's see how that is shaping up real quick. All right, so first we'll start off with the Euro-US dollar. The Euro-US dollar remains in a bullish trend for the long term and medium term. The short term, obviously, excuse me, on the daily has been bearish, while the shorter term hourly has been bullish. We did have a bullish engulfing line buy signal that was triggered right here.
I would watch the gold market.
As you can see, this $21.50 area was our first target level that was reached. We had long positions on that we had executed back
and really starts to build momentum to the upside. Then you'll probably see a little more selling off
level target 1, as I said last week, and then now it's been bobbling around. As you can see currently right now, it's very quiet. You have to remember, U.S. markets are closed. European markets will be closing soon. Asia, so the week is off to a little bit of a slow start. If we didn't have much action, and you got to remember there's Chinese New Year going on as well. So between those factors, there's probably going to be a bit of a slow start to this week. I wouldn't expect to see very much volatility, but you never know. Anything can happen, especially that's why be very careful if you're trading today. If you already have positions on, then I would say work them. Make sure you have your stops in place. Today is not a good day to enter a new trade, at least until this evening's trade, when the Asian markets come back online and starting Tuesday's trade. Like I said, with Chinese New Year going on and U.S. markets having a holiday for not all of them, but some of them, there's not really going to be very much activity. So, but for the most part, since the banks are closed, they're done, especially for the currencies for the rest of the day. So what we are looking for, basically nothing today, and then with any luck, we'll see another pop up to this $21.96 area. That most likely will put a cap on the rally for the Euro-US dollar. What it really needs to do is get above this high here, which if it does, that would mean it does take out this $21.96. Should it do that, you may begin to see momentum build to the upside and press resistance a little bit more. On the dollar index, as it's starting to sag, see, here's the thing, is we have a mixed bag of goods. The British pound, which we will get to next, is the second biggest weight in the dollar index. As you can see, the dollar bears they didn't get much except for last Monday out of the euro. After that, there wasn't very much left. The dollar bears out of last Friday, and then today, as you can see, it's just slightly lower on the day. So not looking for much today, looking for some follow through to the upside. So dollar index is not going to be the best gauge, especially when you see how the British pound is rallying like this. This has a long-term, medium-term, short-term, daily, and hourly trend is all bullish. Do not try and fade this. Eventually the top will come. However, with oil being strong and other commodities being strong, and since the UK no longer has to fund the disintegration of the EU and their financial system, that's probably giving a lot of strength to the pound versus many currencies, which it is if you look at the pound crosses. In fact, one thing you want to look at here is the British pound, the euro. See that? The British pound over the euro is making new move highs today. It broke out to the upside. That is why you're seeing the euro kind of weak against the dollar, as well as not doing much on today's trade. So this is showing you how much strength there is in the British pound. So I think this is one of the, since it's the second biggest weight in the dollar index, it's going to make the dollar index hard to use as an indicator as long as this is trending so fiercely. This, as far as long-term projections, how far can this go? Well, anyone's guess is on this one. The UK does have a lot of issues with lockdowns and things like that, so I think that for the most part this is commodity driven and EU separation post-Brexit driven. I would look for the pound dollar to see a turn before you'll see it with the pound euro and stuff. So the pound is going to be probably a very choppy trade as it does develop a correction. You might start to see moves like this where we'll see a harsh sell-off and then get like choppy like this, and then most likely not continue to trend higher but develop a very wide range trade, which would be indicative of pound strength versus other currencies, meaning that if the pound is strong versus the euro, the Swiss, and other currencies, not so much against the dollar, you'll have sell-offs where when the other currencies gain a little strength, you'll see a nice pound US dollar sell off. But as soon as the pound starts to gain strength on those other currencies, that's where you'll probably have to look for a bottom with the pound US dollar, meaning that we will still probably continue to make higher move highs and higher move lows, which is indicative of what? A bullish trend. Be careful trying to fade this. Now let's look at the US dollar Swiss. As you can see, last week, except for Monday, there was really not much, or excuse me, Tuesday, there really wasn't that much of a trade that hammered this market. We did have a sell signal here, a short-term one, and this hit its target actually. This low from last week at 88.90, this is going to be key support. I wouldn't expect much today because, like I said, because of the holiday. If it falls below here, then your target will be this level here, because this will be a key low. Most likely because you're going to have basing because of the amount of trading that has happened in this area right here. So across here, I think around 88.32 to 38, this little support band, you're going to find a lot of support. So maybe we still dip down to there. This might be a good place to look for a buying area. It does look like the US dollar Swiss is starting to set a base. The overall trend is a bear, so use caution, but we've had signals giving the dollar some strength, and I think that you'll start to see, at least with some nice little swings like we had when it sells off, when dollar weakness comes into play, be very careful. So keep your stops tight on your longs, and definitely be careful with your shorts, because this can grind higher. So we'll see how this works. Right now we don't have a signal. We hit our downside target last week. It's a holiday market right now. We're going to have to really gauge things more tomorrow, or if we get some decent trade that develops once the U.S. markets open in 6 more minutes. Okay, so let's cruise on over to Japan. Now the yen, their markets were open today, obviously. You can see, look at this, US dollar got a pop against the yen. Well, this is, I would say, probably because we have a good inverse relationship where, meaning that while, say, the pound and the euro could be strong against the dollar, and even the Australian dollar and New Zealand dollar, doesn't necessarily mean that the yen will be, especially with the rising price of oil. So remember when I said we have a commodity-driven trade with the pound? Well, now that we will no longer be exporting oil anymore in the U.S., that's also a big deal for Japan, because it limits their ability to get supply from yet another global carrier and producer, which puts also geopolitical tensions more on the stage for them, because we have very good dynamics between Japan and the United States, have for many decades, and even over the past recent 10-15 years, because of the fact that the administration is now cutting off oil exports and production in the U.S. This will put a strain on Japan, because obviously they're an island and they don't have oil. And as much as they have been going in towards the greener stuff, if anything, solar and wind-powered stuff and water-powered stuff has been very huge over there for decades already. But they have all kinds of other problems too. You got to remember that they have an aging population, and they are a big exporter. So no matter what, a lot of what they need the oil for and gas for is for ships and heavy equipment, which definitely right now are not being run on electric power, which would just cause, I mean, there's just the dynamics of it just don't work right now. We're not at that level of technology yet, but who knows? Maybe who knows what happens, and it can happen any day. It'll pop up with something that all of a sudden can run a big backhoe and a Caterpillar tractor for hours and hours and hours. So anyhow, this is why I think you're seeing this as far as fundamentally getting the dollar bull. We are making higher move highs and higher move lows, and now with this explosive move to the upside today, I would say that you're looking for a challenge of this high up here North American trading zone.
From a couple weeks ago, you can see that the short-term trend here continues to make higher move lows, higher move highs, but remember that the overall long-term trend on the monthly and the weekly is still bearish. We have become neutral on the daily. This is still gauged as an upside correction. Should we get a swing point through here at $1.577 and breach this level, I think you have a good chance of getting a whole dollar up to about $1.106.5. The slope of this trend is not too steep. It's almost a 45-degree, which is a relatively smooth slope for any short-term or long-term trend. Right now, we're still viewing this as a short-term corrective trend to the upside. We would need, obviously, a lot more time and price action to figure out whether or not it's a true turn in the market. It is bottoming and basing right now, though, with this type of correction, because this correction's been going on now for over a month and a half. So we'll go on the side of dollar strength when it comes to the yen, especially as long as oil is remaining higher. And also, you got to remember that 30-year Treasury bonds, that's another market that has continued to pound lows. In fact, here's a quick lesson for you as a gauge for any type of currency direction with the U.S. dollar. When you go to forex-trading-unlock.com, go to the commodities under markets, you pull up the commodities tab, so bring in this index page up. When you toggle down, oops, wait, we went to commodities. I'm sorry, we want to go to interest rates or futures. You go to the futures tab, and you toggle down, and what this will have is some stock index and also some bonds. We start with the 30-year bond, go all the way down to the euro shots. Why do we have these things? Well, the euro, interest rates are a function of currency pricing. This is the Treasury bond market. It has been trending lower now for months. Okay, this goes all the way back to August of 2020. So this is in a 7-month decline. Okay, now this is a big deal. This is the weekly, here's the daily. The Treasury bond market has been slamming new lows now for weeks. As this continues, it's hard for the dollar to be too bearish because of the interest rate equation. The fact that the market settled on Friday at $1.6605, this is huge. 166.05 rather. This is a big deal. Any trading below this 168 level is definitely very bullish to U.S. dollar. So that's another thing that's giving a lift to the U.S. dollar yen. So as the 30-year continues to remain low, in fact, we can even check on this right now to see where it's at right now, because the electronics market should still, they may be, even though the banks are closed, this may be open. Let's see, $1.6501. Okay, yeah, that's right. They're not. The Globex is closed right now, so we won't see anything on. That's another thing too. The snap, because of the interest rates being closed for that extra day today, they'll open up this afternoon. That's when you might start to see some swinging action in the U.S. dollar yen, as well as all of the other currencies. Now let's look at the Australian dollar, U.S. dollar.
So we have $1.2847.
By the way, if any of you out there have any questions, you go right ahead and
now let's look at the U.S. dollar Mexican peso. I don't know about you, but I could use a vacation
video still. We will be
soon. But I have a lot of friends
going back to the euro, but first let's finish up with the Asian zone. All right, Australian dollar, U.S. dollar. We had a nice little rally here. This is another commodity-driven currency. So as dollar bulls try and fight and grapple with certain currencies, they're going to be really hard-pressed with the Australian dollar, U.S. dollar. As you can see today, we poked a higher move high after a lower move low. That puts us on the neutral campaign. However, I would use a lot of cautions being a bear. If you're a bear, I would use this 78.24 as your risk level. Any trading above here is very bullish. The trend for the Australian dollar in the long term is a bull. The medium term bull. Daily, it's been neutral because it's been making, well, it's been short term daily up until the last week was a little bit bearish because we've been making lower move lows and lower move highs, which is indicative of obviously a bearish trend, but this is viewed only as a short-term bearish correction. So key off these pivots. Any trading above 78.24, this would be bullish. I would do not, maybe use caution, do not try and sell in front of this one. If you want to get short in front of it now,
this is your risk level, looking for some sort of a test back down here. Remember, we have this little upward sloping support line holding the trend intact. It's pretty much a 45-degree angle, which is holding that also up. I do not expect to see much of a slide off of this one. Should we take out this line, then the next level would be the 75.66 area. This would be a key failure level. If we do not take out the 78.24 and we end up falling down on support and taking out 75.66, well, that would be a lower move low after a lower move high and on a major daily basis, which would help us to really view this as a corrective trend lower that could have probably, I would say, the ability to get down to the 74, maybe even 73 even area. The only thing I think you have to watch about this is, in order for this to happen, for the Australian dollar, US dollar to get down to this levels, the 30-year bond is going to have to remain kind of around where it's at, not any big rally there. And then also you would need to see a sell-off in crude oil. I don't see that happening anytime soon, and if we do, it's just because of expiration. Remember that the futures on oil, they have rollover every month versus the financials, which have it every third month, which we are coming into rollover for the currencies coming up in the next few weeks, and we will be paying attention to that as it unwinds. So right now, a little neutral on this one, aggressive bear only against those highs from before with the Australian dollar and US dollar. Now we have the New Zealand dollar, US dollar. This is another tricky one too. It's kind of neutral. I would key off of the 71.37 level. A failure from here will have us back on the 70.94, and then we can probably see this correction being pressed down towards the 69 area. As you can see, we have this upward sloping support line keeping the trend intact. Even if we just go sideways, eventually we'll bounce off this and test it. That would take obviously quite a bit of time yet, a few months. But this one here is kind of locked in neutral. Short run, it's been making higher move highs and higher move lows. So, like I said, key off the 71.37 area. A failure here would take us off the neutral to higher path, and then put us back on the neutral to lower path. This is also commodity driven. We're waiting for a signal. We just don't have anything right now. So we'll see how things pan out after Monday's trading is over. So let's go to the U.S. dollar, Mexican peso, because for all of you thinking about your spring break trips and how much it's going to cost and what have you. The nice thing is that if you haven't booked your tickets for Mexico yet, your deal on the peso is a lot better than it was in January. So hopefully you didn't try and buy the peso then, because you're getting basically almost a whole peso higher right now. So we'll see what's going to happen with this one. Short-term correction to the downside. This is more of a basing. We have to see how things come out with the economy and the coronavirus. If tourism really starts to come back to Mexico, that will be a resurgence to their economy. We do have a lot of transitory things going on between the U.S. and Mexico. The question is Biden going to overturn the rewritten NAFTA that both sides even say was a disaster the first time? Obviously one side does, but both sides said that NAFTA was a disaster, and we're all for the restructuring of it, which happened over the past couple years. If this gets disrupted and goes back to the way it was rewritten, then you will see a lot of issues and probably see a lot of volatility in the peso as well. And that would also diminish the value of the dollar versus the peso. We'll see what happens. Right now, key off the 2050 area here and the 1954 area here. Right now, we don't have a signal. We did have one here. This 2-day slide, which has continued to press the lows, but we're pretty much in the area where our target is, and like I said, with this neutralizing here, this is going to be a choppy mess here. I would really wait for a true swing trade that would either take us below 1954 or above 20.5 to give us any real trend-based move to really trade off of. U.S. dollar, Canadian dollar, let's go take a look at this real quick. U.S. dollar, Canadian dollar, this one's trying to base. Boy, is it having a hard time doing it. but it may actually have done it. We'll see what's going on here. Today, obviously, it's lower. Remember that there's a holiday in the U.S. Dollar bears are definitely having a little bit of a good day today, but not much. I mean, look at how the yen was. We looked at that and a couple other currencies already. So there's dollar strength and there's dollar weakness out there. Obviously, dollar weakness is coming into Canada as the U.S. markets is now 8:36 Chicago time. So we have a little bit of action here with some of the traders that are playing around in the markets. Remember, most of them are closed, especially the bank markets. Currencies are open because they're global, not because they're U.S. based. So, what are we looking at here? Continuing to make lower move lows and lower move highs. Key off this $1.2884 area and this $1.2591. Oil is another driven part of this trade. Canada's not going to stop drilling oil and producing oil. They are a commodity country. So that is going to weigh on the U.S. dollar. Canada, should we see a correction in oil, then I think we could see another challenge of this $1.2884 area. I'm not bullish the U.S. dollar Canada by any means in any long-term way. It is a bear on the long term, the monthly, the weekly, the daily, and even the hourly. So we are not trying to catch a falling knife here. You never should try and pick a bottom. So we will continue to monitor this one. We do not have a signal right now, so we just have to wait with this one. But as long as oil is rallying, it's going to be tough to be a buyer of this one. I would look to now if you want to do a low risk buy, you could try sometime between now and the next day or so. Buy against $1.2591. This would be your risk level. Any failure here, you should not be long. All I can say is you're on the wrong side of the market because you're going to be pressing newer move lows on the monthly, the weekly, the daily, what have you, the whole gauntlet. So momentum could build, and especially if at that point there is a rally going on in the oil market, any type of corrective bounce in the interest rate market that we looked at, or there's a couple other variables that could really drag on the U.S. dollar. All right, let's take a look at the euro-U.S. dollar now that we've crossed that 8:30 timeline. Oh, see, nothing going on. So that's pretty much what you're going to expect for the rest of the. Oh, here we go. JFUD. Do you think the British pound you would be able to do another drop down right now? Okay, so you must have. We got JF right here on the chat box. We're going to go back to the British pound, U.S. dollar. He obviously wasn't here for the beginning. Okay, we'll catch you up to speed. Yeah, this one here, as far as a drop, let's take a look at the hourly. Okay, so if you want to trade this on the hourly, it's a sleepy holiday trade. Here it is right here. We had topped out back around, what was it, 2 a.m.? Was actually 6 hours ago. We made a higher move low, we made a lower move high, and right now we have this little bearish engulfing line. I don't like using this so much on the intraday, especially on holiday markets and stuff like that, but I would say you probably, if you sell against the high of the day today, and especially if we take out this low from the last hour, which was at $1.3893, you might get a nice little corrective move down to $1.3860, somewhere in this area. I don't think you're going to take out this bottom that was formed here back on Friday. This is a steep hourly trade here, but that's also in lieu of knowing that there was a holiday market in front of it. So there may have been, that's another thing you got to watch out for. The rally against the dollar that happened on Friday into today could reverse in a very big way tomorrow once the U.S. markets come back online, just because of the fact that a lot of traders could be playing on the fact that a lot of people won't be working in the U.S. Banks are closed, traders aren't going to be paying attention to stuff, interest rates aren't going to be moving, things like that. So this is the way they can push the spreads, and then they'll snap back tomorrow once all the other algos and stuff start to kick into gear. So as far as British pound U.S. dollar for J. Freud, I think we could get another drop maybe on the hourly, but it's I would say you don't risk more than the high of today. So yeah, for a short-term little short, no pun intended.
So U.S. dollar yen.
Yeah, you could probably risk that little area, but anything above the high of the day today, you do not want to be short. Just remember that. You are trying to get in front of the freight train. So cool. Glad you like that. Got a good answer for you. I don't know if there's anybody else. Oh, here, since you probably missed the beginning part, Jay Freud, here's another one for you. Let's look at the pound versus the euro, which we did earlier. This is another reason why the pound is going to be hard to sell off with the dollar. If the euro especially starts to go up against the dollar and the pound is up against the euro, then the pound versus the dollar is going to remain bullish just because of that correlation. So that can also give you a little gauge. Something I always tell people, the best indicator of the market is the market. So especially when it comes to currencies, and so for anyone that is now listening and didn't listen before, when you're, like for instance, for the pound US dollar, our friend here is looking for a little break in the market. Okay, well, if the pound is strong versus the euro, okay, and then we go back to the euro versus the US dollar, and the euro US dollar here on the hourly is weak, okay, that means that if the pound is strong versus the dollar and the pound is strong versus the euro, if the euro especially starts to turn positive, then that's going to give more credence towards the pound going higher. If the euro continues to go lower versus the dollar, then that shows you another sign of how much strength is either coming in on the pound side, or also how much the pound is beating up on the dollar side as well. Okay, so as far as using that as a gauge, like I said, if you're bearish the pound US dollar, what you would want to see would be, for instance, the euro US dollar continue to go down, but then you would also want to see with the British pound euro, you would want to see all of a sudden the pound euro start to go down. If the pound euro starts to go down, while also the euro starts to get strength versus the US dollar and things like that, then you probably will see the pound, British pound US dollar, get a little sell-off. Okay, so that's a way of kind of gauging strength instead of using just indicators in one market. Look at how it's faring versus the others. So meaning, once again, like if the pound is your focus, look at how it is comparing to the other big currencies, especially. So if you look at the pound versus the Mexican peso, it's probably not going to give you a very good indicator of how it's going to do versus the dollar, just because it's the North American trade zone. There is a trade there, but that's a whole nother wide dynamic, and the markets aren't strong in Mexico as comparatively with the pound versus the UK versus the US are comparable as far as business structure, and especially in finance and the banking markets and currency markets. So if there are no other questions here, let's go back to euro US dollar. We'll go back to the binary daily. Okay, so here we go. As we've been talking, got a little bit of a lift. The euro US dollar is up a couple pips. So yeah, once again, we need a challenge of $1.2150. If it can breach that, then $1.2196 will be our next little gas to the upside. Now, here's the thing: is the pound trade, once again, if the euro does make a spike up there with that giving that strength, then especially if the pound is strong versus the euro, you cannot fight the pound US dollar. It will just accelerate that rally. So we'll be watching that, but don't expect much until, like I said, the Asian markets open up later. So since there's no other questions, just want to remind you guys, if you haven't subscribed to our YouTube channel or our Twitch channel, please do so, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And also, if you guys are going to be around around on Wednesday. If you look at in the chat, there's a thing for let's see, I think I have
currency markets. We are looking to
continue. I did not post it yet. Here, let me give you something to look at for the next couple days. On Friday, if you guys are around, I got something for you guys. You're gonna like this one.
20 ticks.
So let's see. Let me get this to you. Hang on one second. I'm putting this out in the chat for you.
So we're having a nice
okay. So for all of you guys that are watching,
remember also
here
to
on
check
Twitch,
watch the gold
I
market
have a link here. So on Wednesday at 10 a.m. Central Standard Time, we will be having a live interactive webinar. We will be going through any of the Forex markets you want to ask questions about and see what's going on. We're going to try and get as many people on the chat room to get a lot of conversation with lots of traders. Right now we have, according to LinkedIn, something like 200 and something people signed up that are planning on coming to attend that day. So that'll be a great day to chat with a lot of Forex traders, a lot of professional traders from around the world, and see what they have to chime in as we go over the markets and different trades. The holiday trade will be over, so that'll be something to definitely get into and pay attention to as well. So, do you guys have any other questions out there at all? Anything at all? Just let me know, because we will answer them. Otherwise, we're just going to get ready to end this one, and we will have a couple other webinars over the course of the day once the after the holiday market is over. So thank you very much for your time. This is Teddy Keckstedt from Forex Trading Unlocked. We totally appreciate you guys sharing your questions and asking, being involved with us. And we will see you again.
Well, congratulations to you, first of all, Tommy, on the new addition to your family.
Thank you so much, man. I really appreciate it. As I say, you know, nothing like new life, exciting times, man. Everybody's doing great. Everybody's healthy, and I appreciate the well wishes, man, for sure.
Well, you can see how grateful and happy you are. That's for sure. You're glowing.
Thank you, man. Thank you. I can't hide it, right? Nothing.
Right. For sure. So anyhow, let's talk about the market. So since we talked 2 weeks ago, right? We had our follow through. Remember when we last talked, we had a little direction as far as that being a dollar bull. And Friday, we finally hit our targets for multiple currency crosses, and we obviously had a big reversal. Now, I would be careful for any one of your followers out there that are becoming perhaps dollar bears. I think this is, remember we've been talking about the British pound for a long time? So,
yes.
Okay, well, it's a commodity-driven trade what's going on right now, and you can see how that really is, the divergence is playing off in the market. So if you look at the dollar index and you really look at the basket of currencies that's out there, it's the euro and the pound with their major moves over the past few sessions, especially from Friday into today, that are driving the index lower, okay? The other ones aren't necessarily hammering the dollar, okay? So now you look at the price of oil, we're hovering just below $60 a barrel, and we know we're going to $100 a barrel in oil within the next 6 to 12 months. It's just not going to not happen, that's for sure.
Okay.
You know? So, and that means that besides that, that's going to cause inflation. We already know the CRB is already going up inflation. Corn's up, wheat's up. I mean, every physical commodity that's used as far as consumption right now is definitely appreciating in price globally, okay? So that's what's also going to help to contract certain currencies versus the dollar or expand them versus the dollar. So remember I told you how Australia and the New Zealand dollar, those are going to be very neutral, even though they're a little bit bearish right now, but the commodity part is holding them up. And you can see how they're kind of more neutral. They're not really bullish right now. It's the pound that's driving the dollar index right now. And that's an oil-driven trade. It has to do with the fact that British Petroleum is so huge, you know, and they also influence a lot of other parts around the globe because of that. So that's giving a lot of support to the pound. But the euro, if you notice, it's coming off a high that it made a couple weeks ago, and then we had this nice little dollar rally. Now it's coming back again, but not in a strong way, not like the pound. The pound keeps on making higher move trend highs, okay? The euro-US dollar hasn't done that. It's not running at that kind of capacity. So the dollar index really is coming from the pound, basically, from as far as where its direction is looking. So you can't use that as a total indicator for most of the currencies. So, but I think the pound, without a doubt, as long as oil keeps on railing, and the EU, you got to realize Germany has to flip the bill for a failing Italy, and now Spain and Greece also are coming back into the picture. So I think that you're going to see a lot of strength and weakness in the dollar, but it's going to be really definitely divergent across the board. And watch oil.
Man, we're going to have to clip this segment, I think, folks, to our producers and get that up on our website and our YouTube channel, because that was a great summation, man, across the board of everything. Yeah, the pound, the euro, you know, I've been out of the office a little bit, Teddy, as you know. I've been keeping track of everything, but boy, I mean, those are some big moves, man. Even the pound, it's been a one-way rocket ship since September 23rd, almost, from 126 to 138. And yeah, as you mentioned, the euro, a little bit of different action, but just recently, some big action. You know, what's that day that we made that low? Even February 5th, you just traded from 119 up to almost 121.2. Let me ask you, Teddy, for those not familiar, I mean, you're on with us every day, every Wednesday at 10:40. I mean, the vast knowledge that you just gave us in 4 or 5 minutes is incredible, man. You know, I know the listeners, we got emails, appreciate it. How did you get into Forex in particular? I know you're in the markets. You know, if you're in Forex, of course you're watching the markets. How did you get into Forex in particular, so in depth, the way that you understand things?
Okay, well, that really comes from when I was on the trading floor. When I was in the S&P pit, we used to have the boards all around the trading floor. So no matter what quadrant you were in, you could look up outside the pit and see different markets, you know. And when I was in the S&Ps, my biggest indicator, I mean, this is before Globex first came on, you know. Originally it was just the trading floor. Then the electronic markets came on, but they were broken, you know. And then when the FX markets came on, it was the first time where you could trade electronically purely from Sunday night to Friday afternoon, 24 hours a day. No matter what, there was no breaks in it, you know. So that started to draw me in, just because of the ability to not have those closes. Like when we used to have the closes on the floor, like I would put on positions, for instance, in the bond pit when there were still the mini bonds, you know, because I knew that the 30-year was closing, but the mini bonds were open for another hour, you know. Yes. And then there was the night bonds, so you know they'd be closed for a couple hours, then they'd open up at night. So you'd leave from work, go have an early dinner, and then, you know, hopefully make a couple ticks in the night bonds. But usually it wasn't the night bond trade, it was that gap between them, you know. So when as electronic trading came on with futures, you know, it was, the liquidity was better with the currencies, you know, and I was a bond trader at first, so I was really apt to following the interest rates and currencies, because currencies, interest rates are a function of currencies, you know. And so with knowing that, that started to really get me into watching like the yen and the pound and stuff, and then also watching the other physicals, because I was in the commodity business. I started to see how they all kind of played on each other, you know.
It's just so cool, man, because like you talked about, I mean, we're seeing it with, I got a real lesson myself with, in the last few years, of negative interest rates, you know, and the driving currency action. And you know, whether you want to try and hedge something, or how negative rates are playing, and why are you going negative when the U.S., you know, why are you going negative in, like, you know, abroad, when the U.S., the strongest economy in the world, man, is giving you 1%, 2% to kick off, you know, 2020, and Forex is driving so much action, man. So listen, we appreciate the education, man. We look forward to it every week, and I appreciate the well wishes, folks. Forex-trading-unlock.com. Check out Teddy over there, and Teddy, we will talk to you another week, man. We'll see where we are.
Absolutely.
And we appreciate it as always.
Cool. Take care. You have a good one.
Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here for a Forex Market Weekly Analysis for February 8th through the 12th. And before we get into that, real quick, we want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And real quickly, I also want to remind you to, if you have not already subscribed to our YouTube channel, Forex Trading Unlocked, please do so you'll know when our new videos and lessons are coming out, and when we are broadcasting live as well, like we are right now currently. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. We will have some of those signals in our analysis today. So we have the Forex-trading-unlock.com website pulled up, and we already have pulled up our workstation page, which you can access from the navigation bar by going to this Market Analysis and Education, and then you can access that link. So we're going to skip skip past the numbers for the week and get right to our chart. So we already have pulled up a Dixie dollar index chart to see how things ended the week last week. So Friday was a big sell-off in the dollar. However, the market has been making higher move highs and higher move lows, so I'm looking at Friday as more of a corrective profit-taking day. There was a big move in the euro, and you'll see that as we get into the analysis. So it was really only a few currencies that really generated this big move in the dollar index. I would say it's a short-term reversal. Remember that the overall trend for the dollar index in the long-term and medium term is bearish. However, the short-term daily and hourly is bullish. So I'm looking at this as just a first corrective phase. Now, we already hit our upside target on Thursday, this first target range, and now this I'm viewing as a pullback because we broke the long-term trend with this downward sloping resistance line. This upside target area is now our extended upside target area because we had already hit our initial one on Thursday and actually poked all the way near the top of it. So now we're raising this range because we have this long-term trend that was broken last week. We now have a new upward sloping line. There's going to be our support base for the short-term trend. Now we are looking at this as still a corrective move higher. So we're short-term a bear, looking to see how the dollar reacts as we start the week. It's a little on edge, and I expect it to be so for probably into the trading of tomorrow. And then I would expect that we still get another rally and a pop-up to here. As we get into the analysis for today, you'll see why we're coming up with that. So we are just looking at the short-term little slide in the dollar as just that. Now here's the euro. The euro has been in a nice aggressive bull pattern versus the dollar. This is the biggest weight in the dollar index, so this is like a little reversal. There was not a sell signal in the dollar index. It was a reversal day without a doubt, but it was not a sell signal. Whereas we have the euro-US dollar that did produce a high probable Japanese candlestick pattern, which you can read about how to trade that signal in the book I mentioned earlier. And that was our Friday signal. And as you can see today, it is slightly higher. It pulled back a little bit and gave some aggressive bulls a chance to get long. But as you can see, it's not really pushing very much. Now, the U.S. stock market has just opened. We will get into Bitcoin, obviously. Those who are watching the markets today know that Bitcoin had a monstrous rally. That has a little something to do with what's going on with the currencies. Not that Bitcoin makes the currency markets move. However, when people are pulling cash out of the market, it's coming from somewhere. So they're either using cash or selling equities and other derivatives to purchase. And we'll even get into that because now we have funds. And the CME just listed another cryptocurrency on their exchange, which by the way, there is huge margins to try and trade the cryptocurrencies with the futures through the CME. But we'll get into that as we progress through our analysis. So the euro-US dollar has a short-term buy signal that is now targeting this $1.2149 to $1.2198 upside target zone. Should we breach this downward sloping resistance line, which is holding the short-term corrective trend lower intact, I think we will have a good chance at definitely hitting this area. Now it's going to get dicey above here because should we take out $1.2198, then that really puts us back on the bullish path for the euro-US dollar. So that would have us very bearish in the dollar index. Then should we get a rally up past this $1.2198 area. So we'll be watching that over the next few sessions. Like I said, this right now is our upside target zone. We're viewing it as a correction. The dollar is in an upside correction right now, and we're looking at a little short-term profit-taking move to the downside against the dollar for the next couple sessions, and that would give this euro a good chance at popping up. As you can see, since we're talking right now, it actually just lifted just slightly a little higher. They must be listening to me. So we'll see how it gets above this line or does not get above this line over today's and tomorrow's trading session. By attrition over the next couple days, we will get through this. So that still puts this into play. I think you're going to have a lot of resistance at this $1.21 $21.49, and if it spikes underneath here, because you can see this last high here, that's right below this $21.98. If we take that out, that's a higher move. It's a higher move high after a lower move low. That would put us on the neutral campaign. So we could go into a big sideways chop with the dollar index actually for the next couple months. Remember, elections are over. Now we have all kinds of executive orders that are coming into play. So we have to see what kind of ramifications these things are going to touch off in the market. Now, and we still have the coronavirus on the table, but everything's opening up. Globally, everyone's resisting now, and except for in the UK and a certain few other countries like Canada and Australia, the hammer isn't really coming down on the people who are resisting. So we'll see what happens if these things open up and we don't have another monster wave like they had supposedly this past year. When you look at the numbers, you're still looking at, it has crossed 400, I think 20-some thousand in the U.S. You're still looking at less than 0.5% of the population. So that's we have more suicides and things like that. So it's, I don't know, we'll figure it out later, I guess. But the British pound U.S. dollar is slightly higher also, which is helping to lift the dollar index above $1.3760. This market remains a bull. Now, this is the tough part about the pound. It really needs to take out this $1.3567 area to the downside to set new move lows to confirm at least a short-term bearish correction. This market has been a raging bull no matter what for months, weeks, days, into the hourly trade. This is an aggressive bull. So we've had a sell signal here where our pivot point is to the upside. This happens to be a dark cloud cover, which is a high probable Japanese candlestick pattern as well.
We'll pull this up right now.
Let's see, a few hours ago, over here.
This was a sell signal right here to $1.21.
Okay, so this day right here, this was a
I think that
dark
for the day we don't have much
cloud
for the trade. I don't know.
cover.
The markets are pretty quiet after the U.S.
It's
open.
not zero sell. Signal.
Dollar bull, however,
so far no
right
questions
now,
on the chat. You guys are quiet today.
You
You guys must be very interested in what I'm saying.
Have been,
Or maybe not, I don't know. So anyhow, we had the sell signal. We came down to this low that we set last Thursday, and now we have rallied since then. See how the pound was up on Friday, just like the euro was against the dollar? That's why you had such a big move in the dollar index. Notice how this is stalling. One of the big things we have to watch with the pound is the price of oil and a couple other commodities. As long as this bull market is existing in the CRB index, and especially in the fuel sector such as gas and oil, I believe that's going to be lifting the pound, just like it supports the Canada and a couple other currencies versus the dollar. It's a commodity-driven trade. We're going to get into the interest rate factor too. That's going to really make things a little bit snappy with this. But let's clear through this. Unless we get above $1.3760, this market is sideways to lower. We are looking for a test of support again here down at $1.3567. I would watch oil. Should we get a big correction in oil, say maybe a $4 or $5 correction, maybe even or more, which I do not see coming in the short run, that would probably help to create a sell-off in the pound. Even if the dollar is a raging bull, the pound is very strong right now because of that. So I would be very leery and use caution as a seller, just as I would be very cautious buying at these highs. It's kind of running out of gas. Now, if we get another accelerated move higher in oil, then I would probably say that if you're short this market, you're going to get squeezed, and the longs will drive this market above this $1.3760, probably all the way up to $1.39 even. So we'll see how that pans out. One thing that is restricting things and showing some relief is the fact that the Swiss had a major breakout. It's hit target areas that it's kind of hard on the daily to see, so we're going to look at the weekly. On a weekly basis, we are targeting up to this 93.37 area, up to 94.69. This downward sloping resistance line on the weekly chart for the U.S. dollar Swiss is containing a long-term bearish trend. Right now, we are looking at this as an upside correction with the Swiss, just like we're looking with the dollar index as an upside correction. We had hit earlier on the daily the numbers for the U.S. dollar Swiss last week. with this high on Thursday. It blew through them, and now we're kind of waiting for a reaction here. It's most likely going to digest the next couple days. That's why you can see on Friday there was that big sell-off. So I'd key off of that pivot above Thursday, or excuse me, above Friday's high. We are bullish, looking for an extended move higher into a more bigger, higher zone that we looked at on the weekly chart. Otherwise, we're looking for a little bit of a consolidation in the short run as the euro and the pound. So as you can see, the Swiss was actually higher, much higher today. Now it's on its lows. That's because the pound and the euro are pushing their highs right now of the day, but they're not that excessive either. So that's why I would view Friday's move as more of a profit-taking correction that will probably be pressed into today or maybe even into tomorrow before we start to see a turn once again to the upside. We have a lot of divergence in currencies, so the dollar index as a whole is hard to gauge a lot of them, but the pound and the euro especially, is one that is driving that trend. What we did have here is an upside breakout. We had a head and shoulders pattern. Here's the shoulder, here's the head, here's the shoulder for the U.S. dollar Swiss. That confirms a big bullish breakout. We had a buy signal besides that came into yesterday or Friday's trade, or Thursday's, excuse me, and then reversed on Friday. So we hit the short-term targets, but the longer-term targets, like I said, because of this head and shoulder bottom, it's going to take probably a few months to reach those targets. I would not think that it's going to happen anytime soon. But probably as we get into March and into April, we can hit those up more higher price points for the U.S. dollar Swiss. All right, now let's jump around to the U.S. dollar JPY.
So 122.43.
All right, Japanese yen also hit our target short-term targets last week, and now is correcting off them. As you can see, the dollar's got a little strength here. We're going to take a look at the weekly chart on this one to give you some points. $107.11 up to 108.20 is our upside target range. That would take out this downward sloping resistance line that's holding the short-term trend intact. This market is an overall bear. You can see this other downward sloping resistance line here. We would have to take that out and get above this target zone to become an aggressive bull for this market. But it is having a nice correction versus the dollar, and I think you're going to see dollar strength also continue against the yen for probably the next couple months. So we may have a little divergence where the pound may be neutral, probably most likely, or a little bit stronger versus the dollar, maybe even making higher move highs, while the Swiss may be kind of neutral in a grind, making lower move lows, meaning higher move highs with the dollar versus the Swiss. And the euro could be a chop fest. We'll see what happens. But right now, the euro is probably going to lose a lot of steam because of what's going on. You have the revolts now in Italy. All the businesses are basically saying, okay, well, we're all opening up and we don't care anymore. Their government has collapsed. Their country is completely broke. Their people they have to open up. They have no other way. They have to start doing things because there's no bailout for them. So before people start starving, they're going to do what they have to do for themselves. And that momentum is growing throughout Europe. So I would assume you're going to see a lot of unrest. It continues in the EU. Remember, the UK, because of Brexit, is no longer part of it, so they don't have to flip the bill. Germany will have to, and that's going to weigh on them. So right now in the US, for the Japanese yen, we're looking for a little digestive phase the next couple of days. Once we get a price point, we'll figure it out. Now, this has been a very steep rally on the daily basis here. So if you look at this trend here, here, you can see it's sliding maybe back down into this area, and then we'll see what happens. We would have to fall all the way back down here below this 103 to 103 half area before we start to get bearish. So that would be a big correction. That if that happens, well, then we know we're back on the long-term bear. Remember, this is a long-term bear, monthly, weekly, but now on the daily, the U.S. and hourly, the U.S. dollar, Japanese yen is looking to become a bull. So this one is another currency where in the dollar index, which just does, the yen has a heavy weight, will start to help to keep the dollar index positive and keep it from becoming such a bear. So remember, like I said, that it's going to be a hard gauge. We have divergence now in the currencies. Coronavirus trade is off the table. We're getting back to trade zones and free market movement again, I think. Hopefully. Australian dollar, U.S. dollar is continuing to aggressively be a bull on the short-term basis against the dollar. However, we've been making lower move lows and lower move highs. We are viewing this current rally in the Australian dollar, US dollar, as only a correction. We would have to take out this downward sloping resistance line and then also this 0.7767 pivot point to confirm a neutral to higher trade. Now this market, Australian dollar, US dollar, in the monthly and weekly is definitely a bull. This is being viewed as a short-term daily hourly correction phase that we entered at the beginning of January. And right now we are on the hourly obviously bullish, and on the daily we just came off a lower move low after a lower move high. That means the trend is still lower. So we are an aggressive sell rally forecast. This could have been the base and starting another wave higher. Who knows? We'll see what happens. But like I said, right now we are looking for this downside target area to be reached over the next month and a half. But we still have to run out of gas and take out this level here at 75.65 first. That would confirm new lows and really put the downside target area in our sights. So we'll see what happens. But because the dollar seems to be having a little bit of a reprieve, and we'll get more into that as to why we think the dollar will have a short-term little bit of a hit today into tomorrow, but it's only if that's going to run out of gas and come back in the dollar's favor. So we're building it up for this, and we're going to get to it in just after we get a couple more currencies. So U.S. dollar, Mexican peso has entered a neutral zone. It's basically going to be hovering, I think, between this 19.54 and 20.59 range for a while. A violation of either level would cause the market to break out and confirm a new trend, but right now we're looking at it basing and going sideways for a while. We'll see what happens if the spring break trade comes in. It's kind of funny, everything's opening up, and then also they're saying everything's getting worse, so we'll see if spring break travel starts to really happen or not. That's going to be a very big thing for them, as well as to see how now I guess Biden's going to overturn the NAFTA agreement that was just negotiated a couple of years ago. That was better for America because if everyone agreed on both sides, it corrected a lot of bad things, and now I guess that's going to be reversed again. So we'll see. U.S. dollar Canada. The U.S. dollar Canada, this is also like the British pound. Because of oil, it's going to be hard for the Canadian dollar to become a bear. And the dollar to be a bull versus it. And now we did set a nice bottom here. We had a nice rally. We hit our target points short term. We did breach the slope of this downtrend has been so severe on the U.S. dollar Canada. And it's been very, very long. This downward sloping line goes all the way back to a year ago.
This market is coming off a nice little correction overall.
That could be just by attrition, but we are coming off a little rounding low here. Our key pivot here is right here at $27.37. We'll have to watch it if we continue to take this out. If we hit support more today and we do fall below here, that would be a lower move low after a lower move high, which confirms that this is at least in a neutral to continuing a bear trend. This may continue. We may see new lows down below $1.26 within the next few weeks, maybe even the next week and a half. Like I said, if we have a big rally in oil, besides the pound getting a lift and then seeing that probably make new highs, you most likely will see the U.S. dollar Canada make new lows. We did have this breach, like I said, this arrow here shows when we came out of the long-term trend, but as you can see, it's more sideways and choppy, so we don't have much to go on there. Let's go back to the Euro US dollar and see what we're doing. Yeah, they're still hovering, as you can see. Now let's take a look at what's going on with the 30-year Treasury bond. Interest rates are a function of currencies for pricing. Now the fact that the bonds really took a tank on Friday, now this is ironic. While the dollar was getting beaten down, the interest rates were rising in a big way, making lower move lows, meaning higher yields in the long-term end of the curve. We had this $1.70 and $1.68 as a big neutral zone, holding that sort of dollar could fluctuate and bounce around every which way. Above $1.70, it's hard for the dollar to be too much of a raging bull. However, below $1.68, it's hard to not be a bull on the dollar just because of the fact that market rates are dictating higher rates. It's a function of currency pricing. It doesn't matter with the banks; they can be lending at just above zero, like they
US
are.
dollar Swiss key off
Excuse me, central banks and then the other banks, whatever, they're making their spread. But the market now is dictating no matter what, and it's impossible because we have to not have higher rates come into play now. We have inflation that's being forced by executive orders. We have oil that is now railing. This is being forced because of executive orders. A floor is now being put on the price of oil.
So right now
so we have no matter what now, oil will not get below $30, $35 a barrel again for years unless they change their tune on what they're doing in the U.S. So that alone is going to drive inflation in all the other commodity markets, because now you got to remember, heavy equipment, no matter what, it runs on gas. It doesn't run on electric.
First target
you can't run
here.
big
This
cranes
is kind of
or
like what the euro did. It's
mining equipment on electric power. It just doesn't work. Not to mention the cost of that would be just completely go against what you're trying to do. So that being said, you are going to see continued inflation in the CRB. If you're not into commodities, it doesn't matter, but for currency pricing, you should be aware of what's going on because it does impact them. Bitcoin had a monstrous breakout to the upside today, obviously, and we'll see how this thing goes. This is another thing, is one of the reasons it probably is getting this rally is that the CME now launched the second cryptocurrency that can be now hedged on a global exchange. The margins to trade these things are outrageous to hedge, so you need deep pockets. These are all whales. However, funds are now getting involved in the crypto space. This is a bad idea on many levels. Everyone that saw what happened to GameStop, fund managers are not traders, they're money managers, they're just used car salesmen who happen to trick a lot of people with a lot of deep pockets and big money into giving them money to manage. They get paid just for holding it. They don't have to do anything, and they're making money. Eventually, no matter what, they all blow up because they're not experienced. They do stupid things like go short GameStop without having a hedge. Ironic, hedge fund managers did not have hedges on positions with unlimited risk. Of course, what do they care? It's not their money. So what are they doing now? They're buying, because of these derivatives on them, funds are now having crypto funds and being allowed to invest in them. Universities have their big endowments now are buying into these. So big amounts of cash are coming out of their selling liquidable assets in the real markets and pouring cash into cryptocurrencies. So that's going to definitely weigh on the dollar and other currencies as well as far as liquidity, because now you are tying up major amounts of money into these, well, crypto assets, if you will. So it will not end well.
Everyone's trying to
it will
force
not
trade
end
on a
well,
holiday,
especially for the fund managers and the people actually who have their money in the funds. But the sucker and his money are parted easily. So remember, the interest rate curve equation is going to pressure the currencies. Most likely, you're going to see this euro continue to pressure resistance over the next day and a half. We do have this short-term buy signal that comes up into this upside target zone. So will that happen over the next 2 days or 3 days? Probably not. We're not looking for an aggressive rally to happen, especially right now with the cryptocurrencies moving the way they are. Because here's another thing too, is that if you want to look at how, if you go to our forex-trading-unlock.com website, you can always pan and check out these markets really quickly. Now let me show you something here. When you have the Forex markets here, this will pull all of your Forex crosses where you can just go to them. And if you go all the way to the bottom, you can go to the Bitcoin crosses. So just like we were looking at the Bitcoin versus the dollar, here's the Bitcoin versus the euro. Look at that. It's doing the same thing. It's rallying against all currencies, right? Okay, so that's why you're having cash and euros being pulled out, and they're being converted to crypto assets, and whoever's selling these things now is hoarding these currencies, okay? This is a big deal. So at these levels, because Bitcoin is not trading at 2,000 or 400 or whatever, $40,000 or plus a contract, that's a lot of equity at a time to be absorbed. And now you have big funds that are buying at these levels. So what does that mean? Where's their money coming from? They're not sitting on that much cash. They have to liquidate other things. So it's going to put a lot of strains on the markets. It's going to also cause some vacuums. I would expect to see a lot of swinging markets in probably a derivative meltdown that will most likely hit us within probably the next 7 to 12 months. Not anytime soon, but I would say it is lurking in the shadows in a big way, especially as the cryptocurrencies continue to press higher and fund managers start to get involved in the space. So anyhow, I want to thank you very much for your time. If you haven't already subscribed to our YouTube channel, please do, Forex Trading Unlocked, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, and always come and check us out at forex-trading-unlocked.com for your Forex information and needs, and we will see you soon.
Hello everyone, it's Teddy Kekstead from Forex Trading Unlocked, and we are here with a US dollar Turkish lira Forex market analysis for February 1st to 5th, 2021. And before we get into it, we want to remind you that this is for illustrative and educational purposes. Very similar, so over time you come up with another reminder is to, if you have not already subscribed to our Forex Trading Unlocked YouTube channel, please do so. Pass it on to your friends in the Forex and online trading community, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Let's go back to our live dollar trading screen here. We have the Forex-trading-unlocked.com website pulled up from our nav bar. If you go to Products, Courses, and Services, the lower number link there is to High Probable Japanese Candlestick Patterns, the book we told you about. You can read a little excerpt there, and here is how you get the workstation page, which we already have pulled up. So we're going to go past the weekly calendar, and we're going to go straight to our chart here for the US dollar Turkish lira. As you can see, the market has been in a bear trend now for a few months. It's been making lower move lows and lower move highs, which is indicative of what? A lower trending market. As you can see, the market bottomed there at the beginning of 2021, and then it started to make it made a lower move high here, then it made a higher move low, and then a higher move high. It would set us up for neutral trading, of which it has been doing for the most part. However, today, as you can see, this market is on edge, looking to try and make a lower move low. So, is this market going to turn around? As you can see, this downward sloping resistance here is holding the trend in a bearish way, but by attrition, just by over the next couple days, if we go sideways, we will breach that level and then push that out, which definitely keeps us in the neutral campaign. So we're looking at these as our pivots. 7.546 to the upside confirms new strength and buying pressure, and below 7.2435 we are looking for a continuation of the medium bearish trend. Now overall, this market had been in a bull market all year up until the fall. In the beginning of November, all of a sudden this market went into a free fall. So this could just be a correction before it goes making a run for new highs. Let's remember what the dollar index has been doing. It started to bottom in the beginning of the 2021 trading year. Had a bullish engulfing line buy signal. It's something you can learn how to use in your own trading, or use our methodology in the book High Probable Japanese Candlestick Patterns. And from that moment on, we've had the dollar index in a little bit of a daily and intraday bullish mode. It has been consistently making higher move highs and higher move lows. However, the long-term and medium-term trend for the dollar index is lower. So I want just to remind you to be very careful of what you do with using the index as an indicator right now, because it's on shaky ground. Right now it's going neutral, kind of like the Turkish lira. If this index falls below 90.03, then all bets are off, and most likely the US dollar bears are going to start really romping on the dollar in many different currency crosses, especially the majors. And then probably have a little bit of an impact also on the US dollar Turkish lira. That would have us looking to lean on this back to the US dollar US dollar TRY chart. Right now we are under pressure, but remember, most of the markets have not opened up yet, so I think it's a little follow through from Friday. The US dollar is under pressure versus most currencies this morning as the markets open up, but it's only the Asian markets that are open. So I think we'll see as and these are also moving into Turkey as well. So until we hit the European trade zone, I wouldn't be overly zealous on this one, but just know that if you're an aggressive bull, then just have your stops right here at 7.2435, because anything below that is very negative, at least in the short run.
because the long-term trend is up. This is a correction that is now extending itself. It looked like it was trying to bottom out, just with like the dollar index has been, but now as the last couple days of trading, as Friday into today, it looks like it's definitely looking for the bears to come back and really make an impressive move to the downside. So it's going to be a little rough right now. If you're already short, just know that you do not want to be short if the market takes out the 7.546 level. Any rally above here would be indicative of probably a beginning of another major wave north, especially when we have to see what goes on now with the coronavirus as we move forward through the first quarter, if things really do or do not start to open up. So we'll see how that ends up happening. But right now, like I said, key off of those two pivots, and we'll be monitoring this trade and see what happens. And also don't forget to subscribe to Forex Trading Unlocked.com and get on our email list, and then also go to our YouTube channel and subscribe to our Forex Trading Unlocked channel. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, and then you can learn how to utilize those patterns and integrate them into either your own trading methodologies and systems, or to use the ones that we highlight in the book. So I want to thank you very much for your time, and always remember to go to Forex-Trading-Unlocked.com.
Okay, so if you go to our website.
Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here for a
obviously
US
on our
South
homepage you
African
can
Rand
see us
Forex
streaming,
market
which we're streaming
analysis
this
for
right now,
February
and we
the 1st through the 5th, 2021. Real quick, we want to show you a disclaimer to remind you that this webinar is for illustrating and educational purposes only. And also, we want to remind you that if you haven't already, subscribe to our YouTube channel, Forex Trading Unlocked, and also our Twitch channel. We have lots of content on the YouTube channel for Forex, and also kinds of lessons and what have you. Lots of interesting stuff, and we're always updating and adding stuff every week. High probable Japanese candlestick patterns available on Amazon.com.
Videos we did, we actually
paperback and
streaming
Kindle
recent
versions,
stuff.
stuff
Here we
you
had
should take a
a
look
video
at.
from
And now we're going to go to
But here you can see us every
website.
Wednesday on
There we are.
TFN.com.
Now we have the
We had a
Forex-Trading-Unlocked.com website. And if you go to products, courses, and services, you can see high probable Japanese candlestick patterns there. You click that link, and then you can read a little portion of the book. Also, here for market analysis, we have the workstation tab already pulled up.
It was a really good
And
discussion.
we're going to skip past the calendar for the week, and here we have the U.S. dollar South African Rand. Now, this market has been in a bearish way for the long term and medium term, and was making lower move lows with lower move highs consistently up until the end of 2020. Then it rounded a bottom, and since then has had a nice corrective wave all the way up to here. So we've set now this downward sloping resistance line holding the trend intact. From that high, we made a higher move low down here. This now becomes a key pivot for us. Since then, the market has pretty much settled in a neutral to higher trade. So we're looking at these pivots as our big breakout here. So this first one would be right here, and that would have us pressing on this new move high. Obviously, a breach of that level would then have us going higher still. And the same is to the downside. We have this last low from last week that would have us right here pressing support, and if it does, I think that that's going to actually start to set off new move lows and resume the bear trend, because here's the downward sloping resistance that would be consistent with that. However, since we have been making higher move highs and higher move lows on a daily basis, and even on an hourly and intraday basis, we have to think that most likely the trend is your friend, and that we're going to see a run up and take a challenge of this 15.37 level for the US dollar ZAR. If we, like I said, get above here, and that would mean newer move highs, and that would target the 15.68 level. So we don't want to get ahead of ourselves. A rally above there, well, now that would be kind of significant, but might as well, since we brought it up, point out what might happen here. So we'll go to, yeah, this is still the 50% level. I don't know, we can go to 0.618. Okay, let's get rid of this.
But after the close today, if we don't have our video out yet for aggressive shorts, I would say use the 78.22, maybe about 78.25.
So now it's a little bit easier to see. So the 16.21, I think, would be the highest corrective level you would see for the U.S. dollar South African Rand. Now, if you want to look at another reason why
otherwise I would say you would probably get a good chance
this probably is going to challenge resistance is because of the dollar index. The dollar index had a low set a few weeks after the U.S. dollar ZAR did, and we had a bullish engulfing line buy signal that sparked a rally, which has now had the dollar index making higher move highs and higher move lows. It is only bullish on the short-term, hourly and daily basis, not on the long-term or medium-term. This market has been in this index has been in a free fall for a while, but right now we are expecting a challenge of the 90.97 level in the dollar index, and then maybe if we can cross that bridge, that would mean that we are making higher move highs, momentum in the U.S. dollar versus
not when it goes this way, and that's just sideways.
Currencies that are sparking that index to rise would most likely precipitate momentum up to the 91.73 level.
We don't have a
above there, it's going to get a little dicey. 92.36, I think, would be definitely the extreme. So now let's go back to the U.S. dollar.
Divergence is the key to currencies this year. If you're not mindful of that, it's not going to be like last year where it was dollar-driven, whether it was a dollar.
If the U.S. dollar, if the Dixie, the dollar index, continues to buffer resistance, then that would most likely lift the U.S. dollar ZAR. It seems like this is not like it's just following the index, but it definitely is not hurting the bulls here in the U.S. dollar ZAR with the dollar index pressuring resistance. Now, if we definitely take out this 14.94 level, be very careful because of failure from 14.76, and all bets are off. Remember, the long-term trend is bearish. Lower move lows, lower move highs are indicative of a lower trending market.
So New Zealand dollar,
on the daily and intraday, and remember I said this rounded out a bottom at the end of 2020, sparked this corrective move here up to this point level, setting this lower move high. Now we made a higher move low over here back in the middle of end of January, or middle of end of January, and now we've gone neutral to set pretty much sideways since then. So let's see what happens. Like I said, a breakout to the upside would confirm bullish strength, and then a failure from 14.94 definitely has this market back on edge. So just remember to pay attention to what's going on with the dollar index a little bit. A strong dollar index would usually, I would say, in the short run, with this position with where it's looking at, probably give a little lift to the U.S. dollar on South American trade.
Now, the good thing is
the bulls will drive the dollar up and help that trade going on. So also, we'd like to remind you once again to subscribe to our Forex Trading Unlocked YouTube channel and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And we will definitely check on the U.S. dollar ZAR later on in the week and see how it's shaping up. And I want to thank you once again for joining us here at Forex-Trading-Unlocked.com. And always remember to have a trading plan, have your risk all set, and know what you're going to do. Don't be subjective while you're in your trading. Have a good set of rules. And if you want to apply some of those high probable Japanese candlestick patterns to your own methodologies and trading systems, I think it's a good idea. They definitely help to be like a double whammy for confirmation. So just like we use that in the dollar index to give us a guide for a low and setting that new trend in place, the same happens in the South American ZAR as well.
So if you guys are wondering how...
Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here for a U.S. dollar Mexican peso Forex market analysis for the week of February the 1st through the 5th, 2021.
Follow us.
Real quick, excuse me, we want to put up our disclaimer just to remind you that we are going to just be presenting this for educational and information purposes only. Also, real quick, we want to remind you to subscribe to our YouTube channel.
We have an event
Trading Unlocked, as well as check out the
you
book
guys
High
are
Probable
around,
Japanese Candlestick Patterns,
which
is available on Amazon.com in paperback and Kindle
tomorrow
versions.
And watch us for this webinar,
going over
and it costs absolutely nothing.
All right, we got our live action screen here. We have the Forex-Trading-Unlocked.com website already pulled up, and we have our workstation page that you can access from the navigation bar. And we pulled up a U.S. dollar Mexican peso chart, and we have some stuff going on here. So what do we have going on here? Well, we have the bullish engulfing line buy signal right there, and it started in the middle of January and sparked a new rally and made a lower move low on a trending market that has been bearish. And then now, over the past week, we have had broken out to the upside and also gotten into our upside target zone. So I think it's probably going to be a little choppy. I think today what you're seeing is a bit of profit taking in the Forex markets. The U.S. markets, the South and North American markets don't open up for hours yet. We still have the European markets that haven't even opened up yet. So as Asia comes online, I think we have some profit taking going on with the U.S. dollar, Mexican peso. On an hourly basis, it's now neutral, but it was in a very bullish way on the hourly basis. On the daily basis, we've been making higher move highs and higher move lows. That is indicative of an uptrend. So since we've hit the target zone, I think that we're going to start to get a little choppy. I would keep off of this 0.26 pesos to the dollar and 20.39 pesos to the dollar. This little buffer zone here, I think, is going to contain any real bearish sentiment over the next few days, and expect it to probably make another run for newer move highs. I do believe that 20.79 pesos is about what you're going to see for the any type of really extended move to the upside. Now we have March 21st through April 21st marked here. Why is that? Well, that's kind of like the spring break zone, isn't it? So travel is opening up, and now everything that's going to be all mobile and whatever. Everyone's going to be moving around, and everything's all over with coronavirus now for as far as travel and what have you. So I think people, especially the college kids, they're going to be invading Mexico for like there's no tomorrow, unless there's restrictions as far as traveling to and from Mexico, most likely coming out of Mexico, which I don't foresee coming, because I think they want the U.S. people to come in. And I believe that since we've had a bounce in the dollar index, or maybe even take a look at real quick, one of the reasons the peso, I think, is falling a little bit against the dollar is because, one, it's been rallying against the dollar for months, and as you can see, the dollar index bottomed at the beginning of January. It's making higher move highs and higher move lows. It's looking to break out to the upside. It is under pressure as we speak, starting off the week, but it is Sunday night, and just the Asian markets have only been open for a few hours. A challenge of 90.97 is in our outlook. Only a failure from this 90.03 level in the dollar index would have us bearish and looking to probably get back on the bearish U.S. dollar outlook. Right now, we are looking for a challenge, like I said, of 90.97. Above here, expect more momentum in the currencies to push the dollar index up towards this 91.73 area, with this 92.36 being the extreme. So let's go back to the Mexican peso. So we have the bullish scenario, meaning that for the Mexican economy, that's a good thing, but as far as spring break, but it has to happen first. Right now, with the lack of people traveling down there and a bunch of other issues, the Mexican economy is definitely struggling very hard. So, and with a lot of things that have been closed down, I'm sure that a lot of the people that send money back to Mexico usually are not able to send as much back as they have in the past, especially with the shutdown of all the restaurants across the country. So, and not to stereotype anything, but we know that there's definitely a lot of people that are in that industry that are of the Latinx population, of which a lot of them do send money back to Mexico on a weekly and monthly basis. So with that being said, that also is probably why you're seeing the U.S. dollar get a little bit stronger versus the peso, because dollars are definitely worth more right now, until like things get back online. However, we did hit our upside target zone, so the trade is off. As far as for the first objective here, I would say that this 20.79 is most likely the extreme of what we will see. We'll see what happens. It could keep on going for much longer. Now, if the coronavirus actually starts to cause a lot of issues again, then we may see continuation of buying momentum, which will drive this market back up towards 21.5 to 22 pesos to the dollar. However, we are not looking for that to happen in the near future. We're just looking for a little bit of a correction. Remember, like I said, the U.S. dollar peso has been in a free fall for months. So please like and subscribe to our Forex Trading Unlocked YouTube channel. Pass it on to your currency trading friends and other market trading friends. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon Amazon.com, in paperback and Kindle versions, and then you can learn how to trade those bullish engulfing lines that were in the U.S. dollar, actually the U.S. dollar index, as well as the U.S. dollar Mexican peso. Once again, thank you very much for your time here at Forex-Trading-Unlocked.com. We'll see you soon. Always remember to have a trading plan, use discipline, and always know
start to diminish.
Hello everyone, this is Teddy Kecksteff with Forex Trading Unlocked, and we are here for a U.S. dollar, Canadian dollar Forex market analysis for February the 1st through the 5th, 2021. Real quickly, I want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. Also, if you haven't done so already, please sign up for our YouTube channel at Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com. Paperback and Kindle versions are available. Okay, with that, let's go to the Forex-Trading-Unlocked.com website, and we will already have the workstation page pulled up with the U.S. dollar Canada chart ready to go. We're going to skip past the numbers and things like that as far as they're coming out at economic releases, because we got a lot to talk about here. The U.S. dollar, Canadian dollar has completed a head and shoulders bottom as of last week, and right now, as you can see, it's trading a little bit lower starting off the week here, but this red line here, this is where you can see how it has taken out the head and shoulders and has launched that. So right now we have coming off that first shoulder, that is our higher move low, and now we are looking to see if we can continue to make higher move highs and higher move lows. As you can see, on Thursday and Friday of last week, we pierced through this $28.30 up to $28.41 range and settled just below it on, or excuse me, just below this first one here on Friday. Now we're trading a little bit below it, which I think right now you're just seeing a little profit taking on this one. And they're most likely going to see some U.S. dollar strength coming in. As far as a big upside turn of events, that is not what we're looking for. We're looking for a breach of the high from last week at $28.87 above there. Most likely to see a little fresh buying momentum targeting this upside target zone at $29.85 up to $30.80. So that is the prognosis to the upside. Key levels to look out for here. We have this $26.81. This here is a significant monthly number as far as being a pivot, and it looks like it found a nice little base here with the head and shoulders formation, which gave us the buy signal. And now with that, if this signal holds, then the upside target zone would be about where that would take it to. Now this is being looked at as just a short-term correction. Overall, remember, the long-term and medium-term trend for the U.S. Canadian dollar is lower. It's been making lower move lows and lower move highs for months on end. The fact that oil prices are going up and the XL pipeline now has been cut off from Canada, that's going to probably bring up the price of more commodities once again, especially oil and natural gas. So, and that's, I would think, going to give the U.S. dollar bulls a little bit of a tough time trying to get a big rally going. I think right now, if anything, what we're going to see is a continuation of the short-term, hourly, daily bullishness that will, as long as we keep making higher move highs and higher move lows, that will keep us in the short-term bullish mode. But remember, that's only on an hourly and an intraday basis and daily basis, because we just bottomed just a little over a week ago. So we have the head and shoulders formation. We have our bullish breakout line that we still are trading above. And once again, unless we fall below $26.81, I think you're going to see that as a support base, to which we will most likely see another run for newer move highs, and especially if we can get a rally above $28.87, that would confirm new highs after higher move lows, which is indicative of what? A continuation of a bullish trend. And then most likely we would see the upside target zone hit right into
that $1.2985 with $1.3080. Like I said, I think this will be the extreme. I'm not looking for any major upside move. This market has been just getting beaten up for months on end, so I think that's really what we're looking at, is a chance for the dollar to get a little bit of a correction. And if you look at the dollar index as well, the way it ended last week, it's kind of in a neutral zone here, but as long as it doesn't fall below 90.03 here, this market will, the index will be bullish. Now, we had a bullish engulfing line buy signal that was triggered at the beginning of January, and we've made higher move highs and higher move lows. So as long as we do that, we're looking for a challenge of resistance here at 90.97. Currently, to start the week off, the market's under pressure, but right now we only have the Asian markets open. European markets are coming online yet in another few hours, so I think you're seeing just a little follow through from Friday because there's not really that much action going on yet. And especially for the U.S. dollar, Canadian dollar. Now, should we see a little bit of a slide in oil prices, then I think you might have a chance at seeing the U.S. dollar, Canadian dollar continue this rally and definitely hit the target zone, as well as if we see interest rates in the 30-year note, if they continue to stay choppy and if they fall below $170 basis points, then that would be a bearish indication, especially if it gets back down to 168 to 167. While the short-term interest rates are at the ceiling, that means long-term rates are pushing to try and make rates higher no matter what the Fed does. It's going to dictate higher rates in the marketplace because of the risk and that is on the table moving forward as we go into the first quarter of 2020 or 2021, excuse me. So that's what we're looking at here for the U.S. dollar, Canadian dollar. And I just want to remind you to definitely subscribe to our YouTube channel, Forex Trading Unlocked, as well as check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com. Now, paperback is going to go up. And if you are listening to our stream right now, we'll be back in just a few minutes with another live video. We're doing some individual market snippets right now. So we have done a weekly video for market analysis for all the markets already. So that will hit you at the food price, at the food counter. Thank you very much for your time. Hit you at the gas pump trying to get to the food counter. US dollar Forex market analysis for February the 1st through the 5th, 2021. Over the past, real quick, we just want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes. Also, we want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, so that way you know when we have our upcoming videos, and also go to our channel. We have lots of great content to see those Forex and other markets. And also, we're going to talk about some trading signals, and we have a high probable Japanese candlestick patterns. Start pumping oil again. We're going to open up the pipeline. We're just Amazon. We got to do this slower. We have to actually think about how we're going to transition from oil to our trade of the day. Our live action scene here, we have our Forex-Trading-Unlocked.com website. We have the workstation page already up, and you can get that through the nav bar. It is the first one that toggles down if you want to pull it up on your own computer. And also, if you want to read an excerpt of High Probable Japanese Candlestick Patterns, go to our Product Courses and Services tab, and at the bottom you can see that listed. And click on that link. All right, now we have the Australian dollar, US dollar pulled up. Now, there's some interesting things that are shaping up in this world when it comes to the dollar and multiple currency crosses. Australia being a commodity-driven country, the price of oil and a couple other commodities are helping to maintain bullish strength. Now, this market has been in a rally against the dollar for a year. It is right now just, this is one of the first times in a while, as you can see, where it is buffering off of resistance, and at the most part it's more sideways than bearish. However, we have a dark cloud cover sell signal that occurred here at the beginning of January. Also, since then, we had made a higher move high, low, then a lower move high, a lower move low, a lower move high, and as of last week, a lower move low. We pierced through the 76.41 first downside target level. We're looking for a continuation of this trend over the next few weeks to get down to 74.07. if, and this is a big if, this is if the U.S. dollar remains a big bull. So let's go look at the dollar index chart real quick so you can see what's going on in the world. Dollar index was a little bit sideways last week, but still it's coming off of a higher move low, and we're looking for a breach of 90.97. Should the dollar index get a rally above here, that does two things. It takes out this critical pivot. It also confirms higher move highs. Higher move highs after higher move lows is indicative of what? A bullish trend. Overall, the dollar index, just like the Australian dollar, US dollar, it is in a long-term and medium-term trend that is bearish the dollar. However, short-term, as you can see the dollar index, it is a short-term bull on the hourly and daily, and we're looking for this challenge of resistance. Should it do that, we're looking at most likely another run up towards this 91.73 to 92.36 area. If we fail from 90.03 and take out this low from a week and a half ago, that would be very negative. That would probably mean that we would be at the very best sideways, but probably getting back on the bear side of things. So now let's go back to the Australian dollar, US dollar chart. So this is an inverse reflection of what's going on there. We are looking for, once again, lower move lows and a grind. This is not going to probably sell off or move like, say, the euro or the pound or a couple other currencies that are in flux with the dollar. Main reason being is that right now we're looking at this as a short-term correction. We have a confirmed short-term top with our dark cloud cover sell signal from 3 weeks ago. So that's, and also we've made lower move lows and lower move highs, which is indicative of a lower trending market. So on the daily and on the hourly, we are bearish. But once you get into the weekly and monthly, we're still a long-term bull. So I would say that maybe getting into neutral in the medium term, maybe, especially should we hit the downside target area and get down towards the 74.07. But then let's just say that the dollar index really becomes a raging bull. If the commodity inflation rally continues, especially with oil and a couple other of the mining things that come out of Australia, I believe it will be hard for Australian dollar to be so an aggressive bear when it comes to the dollar. I think if anything, it'll hold up and be pretty neutral. It won't slide as severely. We are due for a nice little correction, but this because this market has been rallying against the dollar fiercely, and you can see especially the last few months from November alone, just into the beginning of January. Look at the slope. Now we took out that slope. We had confirmed once again the trend, analysis, which is lower move lows and lower move highs. So we're riding that. Now we did touch our first target. We could stop here and go sideways. Key level to watch would be this 78.05 level. Any breach of this resistance would confirm new move highs and the raging bull is back. Is it going to be extreme or a grind? Who knows? But if it takes out 78.05, you do not want to be short against this level at all, period, because you're just trying to, it's like trying to catch a falling knife to the downside. You don't want to do that, just like you don't want to try and catch a rocket flying to the moon, or stop a rocket flying to the moon. So we are bearish. That's our call for the Australian dollar, US dollar for the next couple of weeks, especially going into the beginning of this week. We'll see what happens tonight when the Asian and European markets come online. And like I said, we're looking for a test of support. Should we take out this low from Thursday also, this is another key level, then I would say at 75.97, a failure from here would have us definitely leaning towards the 74.7 level over the next, like I said, probably 1 to 3 weeks. That's a big. So with that being said, I want to thank you very much for your time today. Subscribe to our YouTube channel, Forex Trading Unlocked. Pass it on to your friends. Check out the book, High Probable Japanese Candlestick Patterns, so you can learn how to trade the dark cloud cover sell signal. There's also other sell and buy signals in that book, High Probable Japanese Candlestick Patterns, and you can check out a little short read of it on our website, forex-trading-unlocked.com. Check out our website always for your Forex needs and information, and to get in touch with us. So, and we look forward to seeing you guys again soon as this week progresses. progresses,
So
and
this
look
is- remember,
forward
this
to
is
seeing how these
currency, too. If you
trades
look at
manifest.
US dollar,
All right.
gold,
So I
that
thank you
is
very
a
much once
cross.
again,
This is
and
the
good luck in your
physical
trading.
versus
Make
the
sure you
dollar.
have your risk
All right,
managed
so
and your
18,
profit targets
$1,855
set,
and
and you
I
have
would
a
say this
trading
is your
plan. Don't
upward
just be
breakout
willy-nilly
level.
out there entering the
Let's just
markets.
go with
Otherwise,
trend dynamics. All right, this is for you, Lai, and anyone else.
hello everyone, this is Teddy Keckstead from
Remember,
Forex
trend
Trading
is always
Unlocked, and
your
we're
friend.
here for a
This market
US
made a
dollar
high here, it made a
JPY
low
Forex
here,
market
made a lower
analysis
move
for
high around
February
here,
1st
lower
through the
move low
5th,
here, lower
2021.
move high.
Real quick, we just want to show
Right
you
now we're
our
looking for a
disclaimer to
lower
remind
move
you that
low.
this
The trend
webinar is
is
for
your
illustrative and
friend.
educational
So we are looking
purposes
for a
only.
breakout
Also, we want to
upside
remind you to
here.
subscribe
This
to our
would take
YouTube
us
channel,
off the
Forex
bearish
Trading
trend.
Unlocked, so you know when we're
Or we are
broadcasting these
looking for a
videos
test of
and more. Also, check
1784
out our
and
channel.
mean
There's
going
all
lower.
kinds of great content down there.
Especially with
And also check
price
out
of
the
oil
book,
going
High
up
Probable
to
Japanese
what does that do to the
Candlestick
price
Patterns,
of
available
mining?
on
That price of
Amazon.com
mining
in
goes up.
paperback and
So
Kindle
that means
versions.
that mining gold
All right,
becomes more
now we actually have
expensive,
a
it
high
becomes more
probable Japanese
restrictive.
candlestick pattern that we're going to show you.
So
We are at the Forex-Trading-Unlocked.com website. We already have the
again.
workstation page pulled up, which if you go to the nav bar is the first one. You click on that.
Gold
Also, if you want to read the
those that
book,
truly
High Probable
hold
Japanese
and
Candlestick
produce,
Patterns, a little excerpt,
they
you
don't
go to
wanna
this
hold,
product
they wanna
courses and
get rid of it.
services,
They
and
want-
you
their
can
whole
see at the
point
bottom
is
of that,
to
there's a link
find
to
it and
go
sell
check it
it
out.
or mine it.
All right,
mine it
now
and
we
produce
have
it
the
and
US
sell
dollar
it or
Japanese yen
drill it and,
page
what
already
have you.
put up here.
They
Now
can't
the
do
US
that,
dollar
then
yen
all
has
of a
been in a
sudden
free
it
fall
changes
for
everything.
almost a year,
So right now,
and it
lower
is
move
in a
lows,
long-term
lower move
and
highs,
medium-term
trend is your friend.
bear
Let's look at
market.
the hourly.
However, at the beginning of January,
hourly
there was a
short term
piercing
here,
line buy
let's say maybe
signal.
for
The
the next
piercing
couple
line is a
hours, the
high
rest of the
probable
trading day,
Japanese
sideways,
candlestick
maybe
pattern.
even a little bit higher.
That is just low,
I think you're
and
gonna
with the
have
way it's settled, it's
problems here
touched
around
off the beginning of the
1830
bottom.
level.
Now,
You
one
might
thing
have a
also we
choppy
have here
range
is we
trade
have
between
a
1820 and
very
1830.
interesting little
But
other double
if
buy
we
setup
start
here.
to
We
head south
have
again,
this here
especially if we
is
run out of
what?
gas
This
here,
is a
this might be a
shoulder
good area to sell. Should we get up into
right
that
there.
area?
This first
I'm looking more of a
low
test
right
for a
here,
test of support
and then
than
the
for a
low
rally.
where the buy
So
signal
that's
was
kinda
triggered
clear
right
to me.
here. This is
Especially
a
with
head.
dollar strength. If, like I
And I
said,
think
if
I
we
know
can
that
see
many of you
a
are catching on to where
continuation
I'm
of the
going
trend in
here.
interest rates,
And
where
then
the
this
30-year
last
continues
low
to press
here
lows
was
tomorrow, oil
another
continues to press
shoulder,
highs tomorrow,
which gives
especially
us
with those
what?
oil
A
numbers
head and
coming
inverse
out.
head and
Well, we might
shoulders
see,
pattern, correct?
this going
And what
down.
does
Now,
that
here, you know
mean?
what's
That means
interesting?
that we
Since
have
the
a
gold, you're
buy
gold guy, you
signal.
wanna know about
All
the
right,
direction
now
of
let's take a
gold.
look at this.
Let's
So
also
we have the
look
piercing
at
line
the
that
yen
was
chart. Let's go back to
triggered
this one. So
already
we go to
in the beginning of January. And then a week and a half ago, we set this
Look at
low
this.
here. This was a
Instead of
higher
doing
move
US
low.
dollar
Now
JPY,
remember,
which is
we
how we
had
normally
the
look
head,
at
which
the
is our
currency.
total low
Let's look
here.
at it as we
We
do
rallied
the
up to this
gold
point and set a
price.
lower
Okay.
move high, still a bear market.
JPY,
Then we
USD.
came down and
Looks
made
very
this
similar, doesn't
higher
it?
move
Remember what I
low.
said,
This
there's
is
a
our
relationship between the
shoulder
yen and
right
gold.
here.
The
We
yen
pierced
made a lower
this
move low,
high right here,
a
which
higher
now
move high,
confirms
which
a
you go
head
to
and
US
shoulder
dollar,
breakout.
JPY,
Okay,
is the way we're
and
used to
that
looking
also
at it.
confirms
See? It's the
more
inverse
buying
of
momentum
gold.
because
Now,
after
you
a
can
higher
XAU
move low, we're making a
USD.
higher
If
move
you go
high.
USD,
So
and
we're
XAU.
no longer on the neutral. We are on a hourly and daily short-term bullish momentum play right now, and especially with the close above this past lower move high, that's significant. We're expecting more follow through to the upside. We're expecting a challenge of this 105.36 area. Now you see this little yellow line back here?
The beginning of 2021.
That has been going on
look at where we're at
all
right
the
now with this
way. If
chart
we
right
go
here.
back to,
Now, let's
oh
go
look
back
at this,
to
the
the
end of February of last year. So we're pushing
JPY
almost
USD.
1 year on this downtrend. So we're not calling for a bottom, but we definitely have a confirmed
Identical
short-term
practically.
bottom.
I mean, not completely
Remember, the
identical, but the ways
overall
it's
trend,
topped out
long-term
here
and
at the
medium-term,
beginning of
is still
2021,
bearish. But right
had a
now, we're
harsh
looking to
break,
press this
and it had a
correction
nice
up
little
towards
bounce,
this downward
established a
sloping
lower
yellow
move high,
resistance
and then
line, holding
boom,
the
it
trend
fell out
intact.
right here.
By attrition,
Let's
we
look
can
at the
go
dates here.
sideways
This is
and reach
February
that on
5th
its
is where
own.
it bottomed,
But definitely,
right
as long
there.
as we're above this 103.33 area right here, this is the key pivot that's holding this rally
This
intact.
bottomed on
We are
February
looking for a
4th.
challenge of 105.36.
So,
106.23 is most likely going to be extreme on any aggressive
any
rally
given
over the
day.
next, I would say,
Who
1 to
knows?
3, 4
Okay.
weeks, maybe
But
even
it's
5.
interesting right now. with the US
Remember
dollar
that the
yen,
dollar
actually,
index The yen over the dollar is making new lows.
Bottom back in the beginning of January.
as you can see here, and that had a bullish engulfing line buy signal. Whenever you have one of these signals in the dollar index, that usually means it triggers them and if you get them in other major highline currency crosses at the same time, that usually is a very, very good indication that the dollar has made a short-term top or bottom, depending on the signal. And right now we're looking for the dollar index to get above 90.97. Should this get above here, there is a very good chance that the U.S. dollar JPY will also continue to maintain its bullish strength. I think all your weak shorts and aggressive shorts now, they're like, hey, this market's a bear, this can't go any higher. They're going to get squeezed. There's going to be a short squeeze that will drive this most likely up towards this 105.36 area. Then I expect it to get dicey. I don't see us just railing up to 106.23. Anything can happen and will in the marketplace, that's for sure. But right now, we are short-term bulls. We're looking for a challenge of 105.36. Definitely 103.33 is your risk level. You do not want to be long above or below 103.33. Any failure from support here will have us looking for new move lows to take out where the bottom was here, set back at the beginning of January. So this is very critical stuff you got to pay attention to. Please don't forget that. Okay, so that's how we're looking to shape up for the beginning of the trading week for the first week in February. Remember once again to subscribe to our YouTube channel and pass it on to your friends. Forex Trading Unlocked is the channel, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, so you can learn how to trade these signals or incorporate them into your own trading.
Actually, that is not off topic.
We will be following this trade over the course of the week. If you subscribe to our YouTube channel, you'll be keeping up with our videos. So with that being said, good luck with all your trading. Always stick to a plan, have good risk management,
to our YouTube channel,
rules in place, stay disciplined, and persevere. You'll be fine. Keep on trading and moving ahead. So,
okay,
we will see you soon here. And remember, always check out us and all your Forex trading needs.
Down here.
Hello, everyone. This is Teddy Keckstedt with Forex Trading Unlocked, and we are here today with a U.S. dollar CHF Forex market analysis for February 1st through the 5th, 2021.
In the United States.
Before we get into our analysis, we just want to remind you that our webinar is for illustrative and educational purposes only. Also, we want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, and pass it on to your friends, and so you know when we have videos coming out. And you can also see all the other stuff and content we have that's growing over on our YouTube channel. Also, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com.
If you're a U.S. citizen, you can only trade through Forex.com.
With that being said, let's go to our live action
screen
here. We have the Forex-Trading-Unlocked.com website, and if you go to the Products, Courses, and Services tab, you can see at the bottom that little drag down thing pops up. It says High Probable Japanese Candlestick Patterns. That's a way you can check out the book and read a little bit of it first, get a taste of it. So we're on the workstation page. We're going to skip past the numbers for the week and just get right into the analysis here. So we have a bullish engulfing line buy signal that was triggered in the beginning of January. If you want to learn how to trade it, read the book High Probable Japanese Candlestick Patterns. Now, as you can see, this U.S. dollar Swiss has been buffering up against resistance for the past couple weeks, and this key pivot level here at 89.23 is just so hard to cross. We're looking for a challenge of that this week. If we can get above this key pivot level, then we will be leaning on this 89.78, which is a long-term pivot level also, and above that, then it hits us right into our upside target zone, which is our longer-term.
We have a whole thing here for it's the nadex. So
that upside target zone is our longer term area that we're looking for. So right now we're looking for a challenge of 89.23 sometime over the next couple sessions. A breach of that level would mean that most likely the weak shorts will be knocked out, causing a little bit extra fuel to the fire for buying momentum, pressuring the market up to 89.78. I would expect it to become a little dicey and touch and go up here, and then maybe see a range trade develop above 89.23 as becoming support, and then being 89.78 being the next area it tries to get above. Any trading above 89.78 will have us leaning on resistance here, hitting up the bottom part of our upside target zone of 90.26. 90.91 is the extreme for any upside move. Now, there is a head and shoulders formation that is forming. Here's a shoulder, here's a head, here's a shoulder. We just have not had a violation yet. Should we take out this key pivot level, that would confirm a head and shoulders bottom, which the head is a bullish engulfing line buy signal in itself. So you have two big high probable signals then confirming at least a short-term bottom in the U.S. dollar Swiss, and also laying credence to where buying momentum in the dollar should most likely pressure resistance up into near our upside target zone. That's about all we're looking though for the upside. Let's take a look at the dollar index. The dollar index is kind of doing the same thing. Dollar index here, as you can see, it has a head back here, and it had this bullish engulfing line buy signal. This is also a head and shoulders forming. Should the dollar index get above 90.97, most likely if it does, that means that the euro is making new lows. The pound is either neutral to making new lows, also probably. Now, there may be divergence between those two currencies, so the pound is not the best indicator, but if you see the pound lower versus the dollar for sure, with the euro US dollar also lower, then odds are that the dollar index will be trading above 90.97 as far as the average is concerned. And what does that mean for the US dollar Swiss? That would mean that this US dollar Swiss is going to be very likely doing the same thing. That would mean that it would have, at that point, should have breached this key pivot level here at 89.23. And then I would think there would be enough buying momentum to fuel a spike up to 89.78. Once again, I think this will be an area where you'll probably get a little dicey and touch and go. We are not looking for, like, for instance, if you look at this chart, these big breaks that we had in the U.S. dollar Swiss. We're not looking for a rally to explode like that. However, having this bullish engulfing line and then also having a head and shoulders pattern that will be confirmed if we get above this key pivot level, that's a double buy signal and a very strong technical situations that put the odds in your favor of maintaining at least a short-term bullish move so we have here breach resistance in a good way, meaning that we should extend the correction definitely up at least towards the bottom of this target zone. But first we got to get above this key pivot level. So we'll see how the market opens up tonight when the European and Asian markets come online. And like I said, if you see the dollar index rallying, making new highs, or if you see the euro especially making new lows and looking to test support in a big way, and the pound as well, if that starts to fall apart, then odds are that the dollar bulls will have the strength to correct this current upside move up towards our target zone. Now remember, overall, this market is in a free fall. It's been in a bear market for months. Long term and medium term, we are bearish the U.S. dollar Swiss, but the daily has confirmed a lower move low, higher move high, higher move low, and now we're looking to see if it can make another higher move high. So it's already on the neutral stage when it comes to the daily, and on the hourly, it's definitely bullish the U.S. dollar versus the Swiss. So short term, we're looking for this correction, which we're looking at this as a correction off of this current low to continue. So we're not looking for another run at support right now. We're definitely looking for a challenge of resistance. So we'll see how things go with this key pivot level once again at 89.23. A breach of that will have us definitely over the next 2 to 3 weeks targeting this upper trading band of 90.26 to 90.91. Now, let's just say we do get this and it does happen. And the dollar bulls are really hitting these other currency crosses. We have divergence in the currencies, so if we had, let's say, a major dollar rally over the next month and a half, don't expect the U.S. dollar Swiss just to keep on going. It's a flight to quality currency. If the euro does start to come into problems, which I think it will because of the financial issues it has with losing the UK and post-Brexit, Germany has to support Italy, which is now bankrupt and falling apart at the seams, as well as many other countries. It's going to put a lot of stress on the euro. So you might see a rallying pound and a breaking euro. That would also lay credence to a Swiss trade not going to rally too much, but also probably not come back. We could have a digestive trade between 90.91 and 89.78 for a month. So we'll see. We still have to get through tonight's trade first and open up the markets, but right now we are short-term bulls. And remember, if you want to read the book, High Probable Japanese Candlestick Patterns, you just go to the top of any of our pages, go to the nav bar, products, courses, and services, is, check out High Probable Japanese Candlestick Patterns. Read the book, learn how to trade these signals. And also, remember, if you want to learn when these things happen, what we got going on with them, check out and subscribe to our YouTube channel, Forex Trading Unlocked. And also, once again, go to Amazon.com and get the book, High Probable Japanese Candlestick Patterns, available on Amazon.com. In paperback and Kindle versions, it is loaded with money management stuff, like besides just the trading strategies, the discipline guidelines and things for traders. It applies to all markets. It's a very good read. With that being said, I'm Teddy Keckstead at Forex Trading Unlocked. Please check us out at forex-trading-unlocked.com every day for your Forex trading needs. Good luck in the trading week ahead. Always make sure you have a trading plan. Use discipline, know your risk, and make sure you stick. Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here for a British Pound US Dollar Forex market analysis for February 1st to the 5th, 2021. We have our disclaimer pulled up here just to remind you that this webinar is for illustrative and educational purposes only. And also, please remember to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. So, without further ado, let's get into the meat and potatoes of why you're here. We have the British Pound US Dollar. What's going on here? Well, last week it's been buffering under these highs. It's set a higher move high. This actually happens to be a sell signal here. We have a dark cloud cover sell signal that had occurred. Dark cloud cover is a high probable Japanese candlestick pattern. Dark cloud cover
6 to 24 months at least,
signal,
maybe even upwards of 36 months.
All right.
You know,
so where does that have us targeting? Well, right now we're looking to get down into this target zone here, right around $1.34 to $1.34.37, down to $1.33.63. Now, this is our downside target area. We are looking for this to occur over the next probably 1 to 4 weeks. The pound is very resilient and strong as a bull right now, but its slope is pretty steep. So the key pivot here is this current high set last week at $1.3758. All trading above there, even if it's just minor, which it probably will be, as it's been making highs, it's running out of gas. It's just poking highs. And I think one of the main reasons for that is we are in post-Brexit. The good thing is going for the UK and the pound is that they don't have to support the EU. They will be trading with the EU, but since they have left the EU, they are no longer obligated to donate all kinds of funds to bail out all these countries. Like Italy is collapsing, Germany has to pay for it. So this is something that's giving a little strength to the pound in post-Brexit action, because the euro is getting it's under pressure because of these things. And also, you got to remember, there's a commodity inflation going on across the board, where
and a little bit with the pound
things such
too,
as oil and other things that the UK actually either produces or has control over globally global production. That's helping to give support to the pound in the short run. So where the dollar bulls are starting to wreak havoc in a lot of currencies, they're having a tough time with the pound, and I think it's mostly commodity driven and post-Brexit driven, because there's no reason to be such a bear on the pound, because they've done all the right moves with that. However, coronavirus lockdowns and some other things are causing some issues. I would think that you're probably going to see a reversal of tunes going on with that too in the UK, because there was a meeting last week between Boris Johnson and two major UK medical directors and another science director for the UK, and it was all about COVID-19 and the handling of it over the past year, and with certain new findings that they had been staunch against. So it's going to be hard for them to save face when they've been so adamant against certain things. We'll see how that pans out. I don't know if that's really going to impact the currency trade with the pound, but it may help to open things up faster and later, and that's where I think why you think you're going to have a sideways trade. However, we do have the sell signal, so key off of that high right there, and then also this low that was set last week. Any failure from this would confirm lower move lows, which would make us a short-term bear. Okay, so now just like we have
US dollar Swiss, real quick.
This arrow here, it goes up to that. Now this is another key level. So if we take out this low at $1.3608, we will be leaning on $1.3524. This is a key pivot level. That's why it's marked $1.3758 and $1.3524. they're going to contain this market's trading for the next probably 1 to 2 weeks. A breach of resistance to the upside confirms strength. Remember, the market's been making higher move highs and higher move lows. It is still in a bull market. Right now, we have a short-term sell rally forecast. If you look at the hourly, we actually have a sell signal that has gone on. Yes, it was in the middle of Friday's trade in the during the U.S. session, and it was right here. So right now, the market, as it ended the last trading hours of the week, while the U.S. was open and the other markets had closed, this one started to fall apart. It's a short-term hourly sell signal that is complementing a short-term daily sell signal. Now, these are counter-trend trades. This is a bull market, so we're not trying to call a top. What we are calling right now is for a short-term correction, and we are looking for a test of support down to $1.3608. Should we do that, and it fails here, that would confirm a lower move low after a higher move high. That would take us off the short-term bull path. Long-term, medium-term, we are bullish pound US dollar right now. But we are now seeing a short-term shift on the hourly and the daily, giving us a reason to think that support will be tested more than resistance will be challenged. A failure to $1.3608 then would have us leaning towards this next key pivot at $1.3524. Obviously, taking out $1.3524 would have us then leaning on our downside target area. These are some key levels. We'll probably bounce off them first before we start to see any type of upside movement. So right now, let's see if we can get lower move lows, because right now we are confirmed neutral short run. Short run on the daily, we made a higher move high after a, we made a higher move high. We're looking to make a higher move low. Okay, so until we do that, we can't confirm anything. But right now, we have had a higher move high with a higher move low and then a lower move high. Now with hourly confirming pressure, with that follow through, if that happens to occur when the European markets open up, that will help probably gain a lot of selling momentum. I would expect that your weak longs are going to be tested, and the weak longs will probably be stopped out,
right around there,
adding to selling pressure. And then, like I said, if that starts to build, well then we'll see how that pans out. But right now we are a short-term bear, we're a long-term bull for the pound versus the dollar, but definitely in the short run we're bearish. Real quick, we're going to look at the dollar index. Dollar index is bullish. If you see the dollar index breach this 90.97 area, that means that the pound and the euro most likely are under pressure, just because they're the heaviest weights in the dollar index. Now, the dollar index is a short-term bull. Overall, it's a medium and long-term bear. So that goes that coincides with our British pound US dollar long-term and medium-term forecast, meaning we're dollar bears. But in the short run, on the daily and the hourly, we are looking for a little challenge of our test of support. So another reason this dark cloud cover sell signal here, this is one of our high probable Japanese candlestick patterns. So that gives us every reason to think that the short-term short, no pun intended, is going to help us definitely to make a test and a run at support. So remember, if you want to learn how to trade that signal, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com, paperback and Kindle versions, and also subscribe to our YouTube channel, Forex Trading Unlocked, and also go to our website, forex-trading-unlocked.com, and if you do, you can also get a snippet on the book High Probable Japanese Candlestick Patterns to read. So with that being said, good luck in the trading week ahead. We hope that this has been helpful. Always check out forex-trading-unlocked.com
also US dollar JPY. You know what else is going to happen? You're probably going to see
Euro US dollar Forex market analysis for February 1st through the 5th, 2021. Before we get into that, we want to just remind you that this webinar is for illustrative and educational 6 months only. By using our disclaimer here. Excuse me. Then we have a little promotion here. Please like and follow us on YouTube. Forex Trading Unlocked is our channel.
Where's the money going?
Pass it on to your friends in the trading community, and also check out the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com. yen and paperback and Kindle versions is going down. One of the reasons why is because you'll learn how to trade the signal we're about to look at right now. All right, so we have the Forex-trading-unlocked.com website pulled up, which you should go there for all your Forex trading information and needs. We have the workstation page also pulled up. We have a Euro-US dollar chart, and as you can see, we had a bearish engulfing line sell signal that was triggered in the beginning of January. Since then, we had made a lower move low, a lower move high, and now we are chopping around for direction. We had a sell signal, this bearish engulfing line, obviously. We had our original risk level was up here at $23.53. Now we have our stop adjusted at $1.22 even. We have two trades on. One is targeting $1.1975. The other one is targeting at $1.1889. This downside target range is probably the extreme of what I think you're going to see as far as a break in the euro. Let's take a look at the dollar index real quick and you'll see why. As you can see, the dollar index looks like an upside down version of the euro. Usually that's because the euro is the biggest component in the dollar index. Not that they're identical though. However, should this dollar index continue to be a bull, which we think they will be, and get above this 90.97 area, well then that would mean that the euro US dollar most likely would be heading down through this $1.2050 level, and that would have us leaning on our $1.1975 first target zone. That would be a good kind of like buffer zone, and I think it would probably chop around and still get down to $1.1889, especially if you see an unwinding in the pound, the Swiss, and a bunch of the other major currency crosses versus the dollar. So once again, we have an overall short-term turn in the market confirmed with a bearish engulfing line sell signal. Remember, you can learn how to trade these signals on your own and apply it to your own systems by reading the book High Probable Japanese Candlestick Patterns, available on Amazon.com, and some Kindle and paperback versions. Also, if you watch our videos, if you're subscribed to our YouTube channel or you go to our YouTube channel, there's all kinds of lessons that we give that gives you information on how to add these signals to your trading plan. So once again, we are short from $1.2268. Looking for that first target of $1.1975, and I believe over the next 2 to 3 weeks we have a good chance at least hitting the first target, maybe even this week, by the end of the week. As you can see, this downward sloping resistance is pretty steep, so we're going to come out by attrition today on Sunday night when the markets open up. It'll be interesting to see what goes on, only if we get above, once again, like I said, $1.2196. Would that confirm higher move highs after a higher move low, which right now it's consolidating because we made this lower move low, lower move high, and then we came down here and made a higher move low. So the question is, as long as we stay below $1.2196, we have a chance of taking out this $1.20 half, and then that would be definitely bearish and confirm our theory right now that we're going to definitely come down and challenge this $1.1975 support band. We'll see what happens. We have a lot of things going on in the world. Now remember, there's a commodity inflation trade that's driving a lot of currencies and giving them strength. So you're finding strength in the Australian dollar, New Zealand dollar, commodity countries. Also, oil has been helping the Canada and the pound also stay strong versus the dollar. So there's probably going to be a good divergence going on now. The dollar index is going to start to be hard to use as a gauge for any individual currency. You have to look on their own merits. And you got to remember also, Brexit's over now. The UK does not have to help fund all these countries in the EU. Right now, Italy is bankrupt and in complete shambles between their politics and their finances. Germany has to bail them out without the help of the UK now. So the stress on Germany and the UK is going to start to show in the whole UK as a whole, and we'll see how that pans out. And that's why I think that right now you can see this correction to the downside be pressured. Okay, so we don't really have anything else to say right now because the markets haven't opened yet. So we'll be updating what's going on with the Euro US dollar as the week unfolds. But right now, as we head into Sunday night's trade and when the European markets open up, we still are a little bit bearish, looking for a pressuring of support down targeting that $19.75 level. Once again, please check us out and sign up. Subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. And also, should you want to just see what the book is like, you can go to our any of our pages on forex-trading-unlocked.com. If you go to products, courses, and services, you look at the little tabs that come up. It says High Probable Japanese Candlestick Patterns. If you go to that page, it will give you the ability to check out the book and read a little bit of it first and see if you are interested in it. All right, with that being said, good luck in your trading week ahead. I think the Euro US dollar bears are going to be on the right side of the market. Looks like a sell rally forecast, at least in the short run. So good luck.
And also check out the book High Probable Japanese Candlestick.
This is Teddy Kegstedt from Forex Trading Unlocked, and we are here for a weekly Forex market analysis for February 1st to the 5th, Forex 2021. Before we get into it, I wanted to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. Also, please subscribe to our YouTube channel, Forex Trading Unlocked, and also pass it on to your friends in the Forex and trading environment. Also, check out the book High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. During this video, we will be showing you all kinds of Japanese candlestick patterns that are shaping up in the marketplace. All right, so with that, let's start our video now.
Today it's a little bit of a mixed bag.
We are at the Forex-Trading-Unlocked.com website. We already have the workstation page pulled up, and whenever you come to our workstation page or any of our pages, you can always tweet them out just like this. You know, you hit that little thing and helps to spread the word about what we got going on here at Forex-Trading-Unlocked.com. All right, so we have the dollar index. The week ended a little bit higher. Dollar bulls are pressing higher move highs and higher move lows. We had a bullish engulfing line that sparked a low back at the beginning of January. As we head into February, we are looking to challenge resistance here at this 90.97 area. Should we breach this level, that would confirm higher move highs and have the dollar index looking for a pressuring move up to 91.73. I think 92.36 will cap any short-term bullish move to the upside. I don't expect this to happen in just a couple days. I think this is something that would probably take about 1 to 3 weeks to manifest. There are reasons that will support the dollar index, and we're going to go into it as we look at these different currency crosses. One of the things you want to look out for is the 30-year Treasury bonds. If they stay above $170, that'll probably make sure that the dollar index will not get any further than this upper range. Should you see the Treasury market start to collapse again and pressure lows, especially if they get below 168 towards $167, that would definitely fuel a surge into this target zone, and then you'll probably see the dollar index chop around this area. Remember, overall, long term, we are a bear, but in the short run, higher move highs and higher move lows confirms a short-term bullish trend. All right, Euro US dollar. This is the #1 biggest weight in the dollar index. As you can see, we had a bearish engulfing line sell signal that was triggered back in the early beginning of January. We have made lower move lows and lower move highs, and now we are chopping around looking for a slide down towards this target area. We have a position where we shorted at $1.2268, and we adjusted our stop down to $1.22 even. We have these two downside targets for both of our trades, 119.75 being the initial one, downside target number 2 being one. Oops, this is the dollar number here. We got to correct this. This is not a 188, it's a 118.89. There we go. That makes more sense. Okay, so this target zone here is where I think you will see this move get pressed into over the next couple of sessions. Especially if you see the dollar index climbing, that's probably because the euro is falling. Now the euro and the UK have a lot of things things that have been settled in post-Brexit already, but there's a divergence going on. Oil is helping to keep the pound up. The EU has a lot of things that are weighing on its in its economic and political divisions right now. Italy's collapsing, their government's collapsing, they're completely broke. Germany's going to have to bail out all these countries, and now without the aid of the UK, it puts a lot more stress on Germany, which is the engine of the euro. So we'll see how this pans out. I would expect to see the euro probably more likely than anything continue lower and make a test of this $1.1975 down to $1.1890 basically. Once it gets down there, that's kind of where the dollar index would be in that little upper band where I just pointed out to you. Should it stabilize, should the euro US dollar stabilize in this area, that would be one of the things that could hold back the dollar index. But if you see all the other currencies falling apart as well and dollar strength running through across the currency crosses, then I would expect this trend to get pushed out even further. But first things first, right now in the short run, we're targeting $1.1975, new or move lows. Remember, it was kind of quiet to end the week. We'll see how it starts tonight in the Sunday's trade, but I believe that over the next couple of days, you'll probably see it go lower. British pound, U.S. dollar next on our list. This thing is buffering up against the highs. Key pivot levels. If we challenge $1.3758, it may just kind of breach it a little bit and fall apart and go sideways. It could also instigate another major move higher. However, the UK has its own woes. Like I said, oil is really the only thing I think holding up the pound because the UK, obviously British Petroleum being one of the biggest oil producers in the world. Now, we know that they are no longer going to be expanding or looking for any new drilling around the US, that's for sure, because the current president has eliminated any future permits of drilling. So that is going to come to a close, but that also supports the price of oil. So that's going to probably most likely keep the pound from falling down like the euro may, even though they have all their own economic woes. The thing is that the UK does not have to contribute to all these European Union countries anymore. So I think that's why you're seeing the pound show strength and divergence between the euro and the pound. Now let's go on to the US dollar, CHF, meaning the Swiss. This had a bullish engulfing line buy signal at the beginning of the month of January. We have been buffering up against resistance. This key pivot level at 89.23 I think is the level to watch. A breach of this level confirms new fresh buying and momentum that should pressure around this 89.78 area. This is another key pivot level. However, I'm pretty sure that if we make a higher move high now, that this upside target zone is going to probably come into play for sure. I mean, not for sure, but you know what I'm saying. It's most likely that if the dollar index is rallying, if the euro continues to break and the pound stays where it's at or goes lower, there's a good chance that the U.S. dollar Swiss will also rebound up to this area. We are not, once again, if it comes up to here, that would kind of put the dollar index in that upside target zone as well. This is where you'll probably most likely see the bulls run out of gas and then a sideways trade develop, especially with the Swiss. If there's any market that most likely will not unwind, it will be most likely the U.S. dollar Swiss. All right, U.S. dollar JPY. Let's go to the other side of the world and see what's going on in the Asiatic trade zone. All right. We had a big breakout here in the Japanese yen. We had a piercing line buy signal that occurred at the beginning of January, sparking this low. We've made a higher move. We made a lower move high, followed by a higher move low, and we confirmed higher move highs in the last 2 trading days of last week, especially crossing this pivot here. This confirmed and closed above this line, not just blowing through the higher move highs, but really showing momentum. So this target zone that we have up here is starting to look more and more reachable, especially as the dollar bulls continue to press through these currency crosses. Notice this yellow line here. This yellow line here is a trend line. It's a downward sloping resistance line that comes in from all the way back when this market started falling apart in February of 2020. So we are in a 1-year bear market with the U.S. dollar versus the yen. Have we bottomed? Short term, obviously we have. Will we continue to make a run for higher move highs? I think yes. I think in the short run, over the next 2, maybe upwards of 5 weeks, we'll gradually trade into this upside target zone and then most likely come off of this resistance line. This would also put the dollar index in that higher area like we started out the video. You could realistically see these major currency crosses as they fall apart versus the dollar. This is a corrective move, by the way. We're not bullish the dollar overall. We're just looking for the short-term correction to continue to press on. And by the way, if you hear a snowblower out there, it's because I'm broadcasting in Chicagoland and we've gotten a foot of snow in the past, like, I don't know, 18 hours, something like that. Probably even a little bit less. All right, so let's look at the Australian dollar, U.S. dollar. Now, price of oil has been helping Australia out for a little bit, but this market has been also rallying for the past year against the U.S. dollar, and this one doesn't want to stop. At least that's the way it seemed to be reacting. But it had a dark cloud cover sell signal. That's another high probable Japanese candlestick pattern. That sell signal was triggered also at the beginning of January. So when you see the dollar index, when it has a sell signal or a buy signal, it's very likely that in a lot of your major crosses, should that bottom or top be a good level, that you will see these also happen in these other currencies. Now, unlike the euro and the yen, the Australian dollar is not breaking that hard. However, it did start to tip into our downside target area here of 76.41. We are now looking for a continuation of lower move lows towards 74.07, somewhere to bottom in this area. As you can see, the market made a high and made a higher move low, then a lower move high, and then consistently lower move lows and lower move highs moving into the last trading days of last week, settling just below here of our downside target number 1. This one, because of oil and it's a commodity-driven country, and because of the current inflation in commodities, especially ones that they produce, that's, I think, giving you a little bit of strength. So even though the bears are trying to hit this market, and they probably will continue to over the next week or two, to even upwards of 5 weeks, I would not expect a severe slide in the Australian U.S. dollar. Even if the dollar pounds, no pun intended, the pound, the euro, and all these other currencies, and I mean really hits it, like starts blowing through our target levels, then you may see an increased correction with the Australian dollar. But if oil continues to rally and a bunch of other raw commodities continue to go up in price, you're not going to see, I believe, a severe enough slide in Australian dollar, U.S. dollar. Now let's look at the New Zealand dollar, U.S. dollar. As you can see, the New Zealand dollar, U.S. dollar also had a dark cloud cover sell signal at the beginning of January, and now it has made lower move lows and lower move highs. It's pretty neutral as well, just like the Australian dollar. You can see our downside target area here that is down around 69.14 to 68.22. It's probably going to take a little while to reach this area. Like the Australia, it has a lot of commodity-driven reasons to hold it up. So we'll see. This 72.45, I would say, is a key pivot level. Should the market get above here, it will be challenging the high that was set back in January, and then all bets are off the table. So just like Australian dollar, I think you're going to see a divergence between Australian dollar and New Zealand dollar, meaning that they could actually rally while all the other currencies globally are falling apart versus the dollar, meaning because of the commodity rally that's going on in place and the things that they produce. All right, now let's look at the U.S. dollar Canada. This is an interesting bottom that's occurred. We had a head and shoulders here in a violation back on Wednesday with a close that confirmed strength, because we had a head and shoulders violation. See this red line here? That confirmed the breakout to the upside. Also, as you can see, we have these pivots, real type 3 pivots here. The market pierced, but did not settle above this previous high, but it's right there. The fact that it is a head and shoulders buy signal, that gives us a very good reason to believe that the U.S. dollar Canada will continue to press forward all the way up to this target zone. When this head and shoulders formation came through, it also took out this downward sloping resistance, which was keeping the bearish trend intact. This market has been trading lower for a long time. We're not major bulls here, but I think that especially since we have the head and shoulders formation and we've sustained a trade up around these key pivots here from basically $1.2790 to $1.2841, $1.61. Expect a lot of choppy trading in this area. A breach, though, however, of the previous high now, so that was the move high that was set on Thursday. Anything above there, we are definitely going to be bullish, looking for a rally into our target zone over here. All right, so pretty clear on that. Now, for all of you that were looking and thinking about, hey, get vaccines or whatever, however your point is on that, we're not going to go into that, but I know people are thinking about spring break, aren't they? I know the college kids are. So the U.S. dollar Mexican peso was getting beaten up harshly into January. Had a nice bounce here. By the way, this is your risk level down here. And you know what we have here? Here's another reason why you got to read that book, High Probable Japanese Candlestick Patterns, because right here we have a bullish engulfing line right there. That's what started this rally here. Put this here. Bullish and
the Australian dollar, U.S. dollar.
Golfing.
As you can see today, we poked a higher move high after a lower move low. That puts us on the neutral campaign.
All right.
However,
so that is the base for our rally now going on in the peso. The key thing was, see this last lower move high? We took that out last week on Tuesday it was, and then continued to press higher. Friday, this was key coming out of this 2026 to 2039 band here. Above here, this is not only short-term bullish, but that pierced through us all the way up into our upside target zone. Now we are going to widen that up a little bit. So I think that 2079 is probably going to be the cap for this trade, at least in the short run. Now, once again, should the dollar really be rallying against the currencies, then you might see the peso back up around 22 pesos to a dollar. So the nice thing is, if you are planning on going down to Mexico anytime soon, your exchange rate is going to be pretty good. You'll get it above 20 pesos to a dollar, which that alone is better than paying 19, 17, 16, which is where it was a year ago. You know, where it dipped. So it's good to see where it's at for those who are looking to go on vacation. So the key thing is, I think you really want to watch out for the Euro-US dollar once again, as we have these sell signals in place. We are pushing these levels are not far. If you look at the market settled at $21.32, so you're looking at basically a little bit more than $1.50 break in the euro, and that would then once again probably push the dollar index where we started higher. So as you can see, this upside correction zone for all these markets where they're trading right now, whether they have to go up or down, meaning that they are, whichever way that is in the correlation with the dollar being bullish, U.S. dollar bulls pushing up into this upside correction zone should continue to lay pressure on all those currencies and help the dollar index climb up to that level. So just remember always, once again, to watch our videos on YouTube. You can do that by subscribing to our YouTube channel, Forex Trading Unlocked. And also remember to read the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. And with that, you can learn how to apply these buy and sell signals to your own trading. And it works in the Forex market, stock market, option market, you name it, it works in all of them. All you got to do is have a good trading plan and follow the rules.
Now we have the New Zealand dollar, U.S. dollar.
Thank you very much for your time here. Forex Trading Unlocked, always check us out for your...
I would key off of this 71.37 level. A failure from here will have us back on the 70.94, and then we can probably see this correction
Trading Unlocked, and
down
we're here
towards the 69
February
area.
For the February 1st to the 5th dollar index Forex market analysis. And before we get into
even if we
that,
just go sideways, eventually we'll bounce off this.
Remind you that this video is for illustrative and educational purposes only. Also, please subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the short run probable Japanese candlestick patterns available on Amazon.com in paperback and Kindle version.
37 area.
That
Failure here.
Let's get into what you are here for.
It's a higher
path,
and
here we
put
go.
us back on
We
the
have our Forex-Trading-Unlocked.com website pulled up,
we're waiting for a
and we already have the workstation page up, and we will toggle down to our chart of the dollar index.
Monday's trading is
As you can see, in early January, the dollar index had a bullish engulfing line buy signal. It's something you can learn how to trade a signal like that in the book High Probable Japanese Candlestick Patterns. And since that low and that buy signal, the market, the index rather, has made higher move highs and higher move lows, which is indicative of a short-term bullish trend. Momentum is not very fierce. However, with higher move highs and higher move lows, we have to continue to believe that the short-term trend is in place. Right now, we are looking for a challenge of this 90-97 area here, a breakout. Following this arrow would push us up into this upside corrective target zone. The mere fact that if we take out this level, that would mean higher move highs after a higher move low, and stretching this, what I am saying right now, is only a correction. We are not bullish the U.S. dollar overall, but there are some reasons why you would want to look to be more of a dollar bull in the short run over the next, like, say, probably 2 to 5 weeks. Most of it being what's going on with the pound and the euro, and even a little bit with the yen. So we know that we had the Fed meeting last week, and we know that the Fed has a lot of buying to do in the Treasury market. Well, the Bank of Japan confirmed once again last week that just like they've been doing for decades, they're going to be keeping on buying their Treasury bond market, and also keeping rates super low. Then we also have what's going on with the euro in the UK due to lockdown measures and other things that are fueling a high debt load, which has continued to just accelerating at a rampant rate, as well as the fact that there's other things that are making especially the EU very vulnerable as far as we're moving forward through the first quarter of this 2021 year. The UK does have the one side that the pound has on it is the fact that oil is going up in price. As long as oil goes up, the pound may not sell off as much as the euro. However, the euro, we're looking to press that new lows, which would help to drive this dollar index up towards this 91.73 area. As far as an upside correction is concerned, I think you're going to get capped at most around this 92.36 area. Should we reach the market, reach that area, I think you're going to see a consolidation. Like I said, I'm not overly bullish the dollar, and that would put us into a good area for us to end this correction if that is all it is. So should this current bullish short-term trend be just a correction in the medium term and longer term, then this would be an area where I think you're going to find the dollar index to struggle. You'll probably see a bouncing euro at that point, and also a rallying pound. That's if that occurs. We also have an interest rate equation that's going on right now. Key off of the 30-year Treasury bond futures. If you see them sustaining a trade above $170, that would probably keep the dollar from really pressing on to higher move highs, meaning that would help to keep this capped in this upside correction target zone. Should you see a big slide in the 30-year Treasury notes, because we do have divergence between the short-term and the long-term rates, and the reason I'm saying this is because remember that interest rates are a function of currency pricing, so that will impact the dollar index, especially over the next couple months. Continue to monitor as those spreads widen, if they do. So like I said, if you see the Treasury bonds going lower, meaning higher in rates in the market rate, that will probably give a lift to the dollar and also put pressure on the pound, the euro, and the yen, and some other major currencies, at least in the short run. And that would give us help to fulfill this little theory that we're going to press this correction up to this higher zone. Should we poke into this area, then I would expect to see a lot of volatility and chopping around. This will probably be your range, this 90 cents, basically 90.03 up to 92.36. I see the dollar index getting really choppy over the next couple months in this area. So that's what we have to look forward to over the week ahead. Like I said, be very cautious and watch this 90.97. If you're a dollar bear right now and the dollar index breaches this and starts making new highs, I would use a lot of caution. So we're going to do individual videos on all the different currency crosses for the week ahead. So we're going to stop this stream, and then we will be coming up with another one in a little bit. But also just want to remind you once again to subscribe to our YouTube channel, Forex Trading Unlocked, and read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And that way you can learn how to manage these signals in the market as they occur. And
so if you want to trade this on the hourly, it's a Sleepy Holiday trade. Here it is right here.
And remember to always have a plan. And
back around.
And we are here on January
6 hours ago.
For the last
we made a higher move low, we made a lower move high, and right now we have this little breakdown of what we're looking for Monday through
I don't
Friday.
like using this so much on the intraday, especially on holiday markets and stuff like that. But I would say
this is for
you probably, if you sell against the high of the day today, and especially if we take out this low from the last hour, which was at $1.3893, you might get a nice little corrective move down to $1.3860 somewhere in this area. I don't think you're going to take out this bottom that was formed here back on Friday.
To our live active screen.
This is a steep.
We have the Forex-trading-unlock.com
that's
website
also
pulled up with the workstation page all ready to go
it,
for
so
you.
there may have been
All right,
another
let's
thing
see.
you gotta
We
watch
have
out
the
for.
Euro-US dollar
rally
chart here. Let
against
me
the
make it a
dollar
little bit
that
bigger
happened
here.
on Friday
Oops.
into today could reverse in a very big way tomorrow once the U.S. markets come back online, just because of the fact that a lot of
There we
traders
go.
could be playing
Okay,
on the
I think you
fact
can
that
see
lot
that a
of,
little bit better now, right?
People won't be working.
Okay,
in the
so how
US,
often do you
banks are
trade? Well,
closed, people
I
are
let the
traders
market
aren't gonna
come
be
to me.
paying
That's the
attention to
question here
stuff.
from
Interest
Spondy
rates aren't going to be
on
moving. things
Twitch,
like that. So
well,
this is the way
when
they
you
can
see these
push the
signals go
spreads,
off, that's when
and
I
then they'll
trade.
snap
Otherwise,
back
I don't
tomorrow
force
once,
anything. You
all
always
the
let the
other
market come
algos
to
and
you.
stuff start to kick
So
in.
let's see what's going on here. So we had
as
a
far as,
bearish
yeah,
engulfing
British
line
pound,
sell
US
signal
dollar,
that
very
was
good
triggered
for
earlier in the month.
Um,
We came short of hitting our
another
downside
drop
target
maybe on
area
the
of
hourly,
$1.1975. This is our target
you know,
1 and
I
target
would say
2.
don't risk more than the
Now,
high of
interestingly
today, you know,
enough,
so yeah, for a
we
short-term
did
little,
have an hourly sell
short
signal that was triggered
unintended,
last week on,
you
what was
probably
it,
risk
Thursday
that little area,
into
but anything above the
Friday
high of the day
that
today,
did come
you do
into
not want to get
fruition
short.
today
Just
and
remember
is
that. You're
ending.
trying
So
to
right now the euro in
trade.
on its hourly posture is very weak today. So as well as the other currencies, the dollars are getting a little bit of a boost today. So we are looking right now at this as a beginning of another wave lower. So we're looking for this low from last week to be taken out here.
This is another reason why the
This will be kind of a
hard to
critical
sell off
pivot
the
for you to
dollar.
watch out for,
If
as
the
well as
euro
the high that was
especially
set on
starts to go
Thursday
up
of last
against
week.
the dollar,
So this
and the pound is
$1.2196.
up
This would
against
have
the
us
euro,
getting
then the
a little
pound
bit more
versus the
bullish
dollar
again
is
in the
going
short
to
run.
remain
But
bullish
right
just
now,
because
medium
of
term,
that
we're neutral
correlation.
to
So that can
bearish
also
in the
give you a
short
little
run. We're
gauge.
looking for another test of
Something I
support
always tell
down to this
people, the best
$1.20 half
indicator on
area
the
right
market
here.
is the
If we can
market.
fail and
So
take
especially
out
when it
this
comes to
low, that
currencies
means
and so for
a
anyone
lower
that
move
is,
high will have been
not
established,
listening to
another
this
lower move
before,
low, which is
like,
indicative
for
of what?
instance, for
A
the pound
lower
US
moving
dollar,
trend, a bear
our friend
market,
here is looking
and
for a
lower
little
moving
break in the
trading
market.
prices.
Okay, well,
let's see.
if the
Broken
pound is
backers
strong
in
versus
there.
the
Hey,
euro,
how are you doing, man? If you guys
and
got
then
any
we go
questions
back
as we're
to
going
the
through this
euro
stuff,
versus the
you
US
just leave
dollar.
them here, and then we will
And
get
the
to them
euro
in this
US
webinar.
dollar
So
here on the
we're just
hourly
reviewing
is
the
weak,
euro US dollar
okay?
right now. We
That
still don't
means
have
that,
anything really going on with it except
if
for
the
a
pound
short
is
that we
strong versus
had
the dollar,
already in place on the
pound is
daily. Let
strong
me show you
versus
this
the
once
euro.
again.
If the euro
We have a daily
especially starts to turn
position that
positive,
was taken
then
in.
that's
This was
gonna
already
give
over
more
a week and a
credence
half
towards the
ago.
pound
We
going
sold
higher.
$1.2268, and
If
we have a
the euro
$1.22 even as
continues to
our
go
stop.
lower
So we already
versus
have
the
a profit
dollar,
on that one.
then,
Our hourly trade from
that
last
shows
week,
you
that
another
one already was
sign
hit
of how
today. We
much,
hit both our initial
strength is
targets
either coming
here
in
of
on the pound side, or
$1.2133
also how much
and
the pound is giving up on the
$1.2194
dollar side
or
as
19
well.
rather, excuse me.
Okay,
So
as
with this
far as
bearish
using
action
that
of
as
the
a
day,
gauge,
I don't know if we for the
like
rest
I
of the day. I
said,
think we
you want-
might
if you're
probably be
bearish,
riding the
the,
lows
pound
to
US
neutral
dollar, what
trading.
you
I
would
wouldn't
wanna
expect
see
very much action
would
right
be,
now.
For instance,
We do have some
the
numbers
euro
coming out the
US
rest of the
dollar
week,
continue to
and some
go
news that
down.
we're kind of
But
hanging
then you
on,
would
especially
also
like what's
want to
going on in
see,
Europe with the
British
between the
pound,
EU and
euro,
also the UK with their
you would want
lockdown
to
measures
see
and
all of a
stuff like
sudden
that.
the
So I would
pound
assume
euro
we're going to
start
see a
to
little
go
bit more
down.
under
If the
pressure.
pound
And now that
euro
we have
starts
that
to
little
go
lead
down,
up, let's go and look
also
at
the
what's
euro,
going on in the rest of
starts
Europe.
to get strength
So we have the
versus
British
US
pound,
dollar,
USD dollar.
things like that. Then you probably
All right,
will
we
see
had a sell
pound,
signal on Friday.
British
This is a
pound,
dark
US
cloud
dollar,
cover sell signal.
little
These
sell-off.
sell signals that I
Okay,
just
so
went
that's a
over
way
in
of kind of
Euro and now this
gauging
one are high
strength
probable
instead of
Japanese
using just
candlestick
indicators
patterns,
in
which you
one
can
market. Look at how it's
learn how to
faring
trade
versus
if you
the
read the
others.
book.
So,
High
meaning,
probable
once
Japanese
again,
candlestick
like,
patterns
if the
available on
pound is your focus,
Amazon.com.
look at how it's
So anyhow,
comparing to
we are
the
getting
other
follow through
big
to the downside.
currencies
They tried
especially.
to lift this
So
market
if you
higher
look at the
earlier
pound
today. yesterday and failed. So the way I'm looking at this is still an overall bull in the long term, medium term, and the short run. This is a counter trend sell signal. Now, you always want to trade the action, not the reaction, so be very cautious. But this is a low-risk sell right here, where you risk the high from Thursday. Right here, we're on $1.3745. The sell level was triggered here at $1.3675. So right now you're at a little bit 25 pips, 20 pips above, below, excuse me, where your entry price is. We took the signal on Friday just before the close. I would say that the euro one is in a much better position. Obviously, it was triggered weeks ago. If the euro does continue to go lower, then I would assume that the pound actually will start to see a little bit of a drag. Now, this market is due for a correction. It doesn't mean that I'm bearish the pound US dollar. I think you're going to notice that 2021 we're going to have a lot of trade zone issues where that's what's going to dictate the direction of these different currencies, where it's not going to be just a coronavirus trade anymore. So you're going to have the European trade zone, the Asian trade zone, and also your U.S. trade or North American, South American trade zone. And you'll see this when we get into these other markets. So, all right, so the British pound US dollar, right now we're looking for it to break down to this $1.3437 to $1.3363 area here in this downside target area. This key pivot level at $1.3524 is huge. Should we take that level out, we're very likely going to hit this downside target area. Will we reach this upward sloping support line that's been holding up the trend? Maybe, maybe not. This is not a very steep trend, so by attrition we can start to come into it. I think the big thing is that if we take out this key pivot level, that confirms a higher move high and a lower move low, which definitely puts the short-term trend on neutral to pause and definitely has it leaning on support. So we'll be watching this trade. Now, if this market gets above $1.3745, all bets are off. The bulls are in motion, and it's going to be a grind. So it's a tough long. So if you're already long right now, I would say this key pivot level, this is your risk level if you're long. If we make higher move highs, it's probably going to be a grind higher. To the downside, I think that's where you have your most reactionary of a trade that can develop in the short run, especially if we get a short-term turn. I don't see this market stretching the bull like it has, or as strongly as it has. I see it being more of a neutral trade as we head into the next couple months, unless the lockdowns really start to hit the UK, which they're all in a little bit of a crisis going on there. There's a big wave in the bond markets across the globe that is starting to shake up where currency pricing is going to be. So no matter how bearish you are on the dollar, which most of the world is, the reality is the economies around the world are in a lot of jeopardy. So, and there's a lot of debt that's is a part of that issue because of the fact that there's a lot of money that hasn't been paid over the past 6 months, going on a year now in a lot of parts of the world. So we'll see how that impacts the currency prices as we go along. We're just looking at it technically. All right, we had a bullish engulfing line buy signal in the Swiss US dollar Swiss trade a couple weeks ago in the beginning of the month, and now today, look at this. Now this is significant. When you have the Swiss, which is, you have your three flight to quality currencies. You have the US dollar, you have the Swiss, and you have the yen, or the three different trade zones. The fact that we don't have that big of a move in either the pound or the euro, but the Swiss has a big rally, that's a show of strength for the dollar. We fell off of these highs last week. We've been buttoned up, but we couldn't get above this key level of 89.23. This is a good area that if we breach this week, we could see a challenge of this 89.78. We have this upside target zone. This is a medium-term directional target zone. We're not looking for this to rally in a couple days. This most likely, should this be a bottom here, and you already have a potential inverted head and shoulders going on right here, which makes this key pivot level huge. We get above here, odds are we're going to have a breakout that should get us up into this upside target zone. But you're looking at being into March, maybe even into April by the time it gets there. I mean, I don't think you're going to see a rally like this, how this slid here. I doubt you're going to see a big rally like that, especially if the pound and the euro don't start to really bang new lows. Now, if the pound starts to collapse and the euro starts to really hit new lows and takes out our lower target zone, then there's a good chance that for sure we'll see the U.S. dollar Swiss maintaining a probably neutral trade once it gets into this area. We're not looking for any run at parity or any major dollar strength, but we are looking for a U.S. dollar rally when it comes to European trade zone. Now let's go and jump over across the other side of the water.
Forex trends. Forex futures options and binary options plays.
Okay, now we got the signal in right. Okay, so we had a piercing line buy signal that also occurred in this market at the beginning of January that is continuing to give us something to look at. This market overall is a long-term bear. We are just short-term looking for this correction to continue, especially after last week's little turn of events. It's higher today, not as much as the other markets. Remember, we were saying how with the Swiss, that's a flight to quality currency, so is the yen when it comes to the Asian currencies. So this one right here, it gapped open higher. It did come and fill the gap today, so that's good, and it's staying positive. This market, after making a lower move high, made a higher move low. So this is the low that you have to watch out for, the one from Thursday. If we fall from here, odds are this bearish market continues to go lower. Trading above $1.331, though, however, keeps this market very positive. At least where it should start to continue to batter resistance. I don't think it's going to be an explosive rally, but I got every reason to believe that, especially if we take out this 104.41 area, that we will gradually make our way up into this upside target zone here. This is probably the extent of what we'll see. We're not looking for any major bull, but the dollar's been beaten up for quite some time, and it's looking, I think, right now set up for a nice corrective move in the dollar for the next few months. All right, so we have the dark cloud cover sell signal happening in the Australian dollar. The thing that's holding up Australian dollar, I think, is commodity pricing. You have to realize that since it made this high, it made a higher move low, a lower move high, a lower move low, a lower move high, so that means it's already in a neutral category. This is the area we're looking for it to come down to because of the commodity factor and pricing there. No matter how strong the dollar is, it's going to be hard for the Australian dollar to gain strength. So we are negative. We are looking for a failure here of 76.41 to confirm weakness. 74.07 down here is about the extent of our corrective slide if we get one. It has been a fairly steep climb just in the past couple months, even though this has been in a rally for a year now. And that's the other thing too. Like, we're not trying to call a top. You never try and call a top or a bottom. But for a short-term neutral to corrective period, it's very likely that we could be heading into that, especially as now that we have a lot of Brexit overs, U.S. elections are over, etc., etc., etc.
Target right here. And to give you a little bit of an idea about that, we're going to pull up the US dollar on our Ninja Trader.
So New Zealand dollar, U.S. dollar. Now this one, ironically, after making a higher move low, made its lower move high, lower move low, lower move high, and it's still looking a little bit worse than the Australian dollar. This is probably because of the dominant trade that Australia has with China and them gobbling up their commodities and with the pricing of things right now. New Zealand is also commodity driven, but it's not under, it has a little bit more reason to have a little more volatility. So as far as being such a tight trade, I think that this downside target area here is a little more likely to see a sell-off here. And should you get the New Zealand dollar down in this area, and the Australian dollar probably won't be hitting the dollar or being hit as hard by the dollar. If New Zealand gets down to here, I would expect this to be a very good target zone for it to bounce off of. This was a steep trend. You can see that we've taken out already one trend line here where we had this low and then this lower move high. Now we made this lower move low. We fall through by attrition no matter what in the next couple days just by going sideways. But this next low is key. If we take out this low here from last week at 70.89, I think you're going to see a nice little pop, hitting support rather. All right, now let's look at the U.S. dollar.
If you are bullish, or if you're looking for
Canadian
a breakout play,
so the U.S. dollar, Canadian dollar, this has been in a free fall for a year. This one as well, we're looking for a potential, I would say, more neutral trade than bullish trade. Here's another reason being commodity prices are going up, oil especially being one of them. Now we have this issue with the XL pipeline. And that's a whole, that's going to take a little bit longer to, I think, really impact the Canadians as well as the U.S., but it is impacting things. Dollar strength is going to be rough against the Canadian dollar, especially as we start cutting production of oil and we keep doing what we're doing right now in the past couple of weeks. So that's probably why you're getting this lift. I wouldn't expect a major rally in the U.S. dollar Canada. This is the key area to get above. It's a little jumbly, this band, $1.2841 down to $1.2830, or excuse me, $1.2790. This whole area is going to be really choppy. You can see we're buffing up against it right now. Now, the thing you got to take into account is we've been making lower move lows and lower move highs. If we get into this band, we come off of a lower move low and we make a higher move high. It doesn't make us bullish. It means we're bullish in the short run, obviously, but I'd say most likely you'll see a neutral trade develop. Now let's look at the U.S. dollar Mexican peso. We had a buy signal here triggered a few days ago. This is a bullish engulfing line back here, and boy, did it pop. This is the one reason why I think you're going to see more of this dollar correction is solid. This currency has beaten up the dollar for the past few months as well, and this was on a tear against the dollar before coronavirus. But then it got all the way up to, what was it, 25 pesos to a dollar back in the spring. Now here we are riding these lows. I would say in front of spring break and whatever, and the fact that there's the surging of coronavirus is less likely to have tourism going to Mexico. So I think that in the short run, you have a really good chance at hitting this upside target zone. We're just below these two key pivots here at 20 pesos, 20.26 pesos and 20.39 pesos to a dollar. This little resistance band here, trading above here, should build, meaning buying momentum would start to fuel a rally that definitely, I believe, could hit this 20.79 peso area. That's when it'll probably run out of gas and go sideways for a little bit. If there is a true rally in the dollar, though, then this would be the reason, one of the markets that will be showing that. We're going to look at the Dixie real quick. So the dollar index, which gave us a bullish engulfing line buy signal back in the beginning of January, so far, as you can see, we made a lower move high, a higher move low, a higher move high, and right now we've made a higher move low. As long as we do not take out the lows set last week in the dollar index, we have a good chance at driving this dollar index up to this 91.73, up to 92.36 as far as the index value is concerned. That would be just in line with what we need to defend this dollar strength, okay? Meaning that the euro, the pound should be under pressure. The Swiss should have a nice corrective move into that one area where I told you we'll probably end up seeing a sideways trade develop. Okay, so, and should that occur, I would think that you're probably going to see the same thing happen with the yen, as well as with the Australian dollar and the New Zealand dollar. But we're no longer on that. If you're a dollar bearer, that you are buying all the rest of the world's currencies, there is a divergence. So don't be surprised if all of a sudden you see strength against the Australian dollar, New Zealand dollar, and the yen, and then weakness against the pound and the Swiss and the euro. So, and just also like we have the North and South American trade zones that are, I mean, we're only dealing with three currencies there, just like with Europe. And the thing is that we will definitely be seeing more of an impact on that trade zone because of, like, you think about coffee, a lot of the commodity pricings. You have a lot of mining in South America. As these things happen, a lot of your lesser currencies like Brazilian Royale, et cetera, are going to impact the U.S. dollar as well. You have coffee prices that are rising, potential bad situation for crops, meaning higher pricing for commodities. Brazilian Royale being a bull against the dollar doesn't help. So, you know, that's what we'll see if these things start to come back into place. And I think you're going to see that we are going to see that divergence, and especially you're going to start to see there's not shortages because of shortages, it's going to be shortages because of pricing that's going to develop as we head into the rest of 2020. So let's go back to the Euro US dollar. As we started out here, we haven't really had much of a movement in the day. A little bit more positive than we first started. We'll see how things go with that.
Let's see, any questions out there?
That's a normal thing
you
to
guys
happen
have any
on
questions
any given day.
on
And
Twitch?
even in a long-term
Let's
trend
see
basis,
about
just
you
because
two,
a lot
if
of
you guys
currencies
got
are
any
bearish
questions
against the
over
dollar
here.
doesn't mean that certain ones won't be bullish. The pound right now is a aggressive monthly,
on YouTube
weekly,
with any
daily,
questions,
and
huh?
hourly
Boy, you
bull.
guys don't have
Unless
very
you
many
have a
questions
really valid
today, huh?
sell signal,
That's
I would
crazy.
say
So
to
anyhow,
keep
we have
yourself
all
in
these signals
buy
that you
dip
guys can look
posture,
at
meaning
today.
wait for a correction,
And the question now is what will
buy
happen?
signal.
Well, now remember,
slope of the
today's
trend
kind
for
of a
this
quiet
market is
day
not
for
too
numbers.
steep.
We
It's
now
been
have finally
grinding,
got
it's
the
buffering
balancing
new
of the
highs.
inauguration and things
we do
like
have
that.
today some selling
So,
action, which is
we're
helping
going to start to see some stability, I think, and I think we're going to start to see markets free flowing, which means that we're not going to be so reliant on just the mainstream media push of one view or another. Elections are off the table now. It's about actions. We have a new president. Let's see what he's going to do. We already have seen some action, and it's definitely starting to send a shakeup. It also has put a stop on the dollar bears being able to pound the U.S. dollar. I don't know if you've noticed this, but the dollar bottomed, like we showed you with the dollar index back at the beginning of January. So this is not necessarily the beginning of a big bull market by any means, but we are probably set up to where over the next month or two it will be in the better interest to follow dollar bulls and dollar bears, and especially as certain commodity pricing start to get out of whack. So we'll see how these things develop. Let's see, Broken Doctor, do you do short-term trades? I do, absolutely. Remember I showed you the hourly trade that we had on here. This was a trade that we put on the 22nd. We had gotten short here. What was it? Around 4 a.m. What it was? So that was, no, it was in the middle of the night. Excuse me, back on the 22nd. Kind of rode this on Friday. Took a little heat this morning, Sunday night when the market first opened up, but then it fell out of bed with a nice little move. I mean, it was up at $1.2180. Now it's trading at $1.2135 after hitting $1.2111. It's not bad. Short term, with the way it's setting up on the hourly, we are now done with this trade. So in fact, this thing here, hourly trade, set up, we can start to erase all this stuff. So yeah, I do short-term and long-term trades. It all depends on
this market is
the signal. So for instance, typically I do daily, hourly I do, but I have a lot more of a systematic method, more of a discounting than, which keeps me out of more trades and gets me into more trades. So mostly I manage trades though I'm planning on having on for at least 3 to probably 8 days, sometimes upwards of a couple weeks. I also trade options too and option spreads, so I use time decay that I'm looking to capitalize on. So it all depends, but when I get these signals, that's when I'll jump on them. Like for instance, with this euro US dollar signal, excuse me, when this bearish engulfing line came in, I shorted this market a couple contracts so I had different targets. So I had these 2 targets right there. So those are, one's a shorter term, one's a longer term, obviously, trade. The risk was the same on both contracts. At the same time, I also traded in the futures and also some binary options, and I did a credit spread in the futures market as well that I sold, meaning that I took money right off the bat. I knew what my risk was if this market would have rallied, which it didn't. So the credit spreads came out. Those were nice little winners. I already exited those and the futures contract, especially because when we were coming into the election, I didn't want to have that kind of volatility risk, whereas with the futures pricing versus the cash FX pricings for liquidity. So yeah, so that I think should answer your question as far as how often I trade. But no, I don't just trade just to trade, and I don't just start looking for things for no reason. Like I wait for my setups. I have a plan in place, so when certain signals get triggered, I know exactly how to find my risk, how to define my targets, my trade entry, and then what to do after. It's very robotic, and that's what you have to do and maintain that kind of outlook. So let's see.
Short-term turn on an hourly basis and on a short-term daily basis. for 25 minutes into this webinar, so I think we're probably going to lose some people, or no one's going to want to watch it for much longer than this one. So anyhow, since there's no question, we reviewed all those markets. Oh, actually, you know what? Let us look at one last market. This is something that's very interesting. I know a lot of you guys, you watch the cryptocurrencies. So when you go to our forex-trading-unlock.com website, and you go along the navigation bar, you go down to this is just a Bitcoin only page, and you can always put the symbol in on any one of the charts on the site. But look at this, it's pretty interesting. So if you look at this on a, let's get the volume down so you can see this. Alright, so the middle of January was right around this time here, right before Bitcoin totally topped out. That's when the dollar bottomed. Then a couple of days later, Bitcoin tops out, and since then it made a higher move low, a lower move high, and a lower move low. So this is the opposite of the dollar index right now, almost. You know, like it's kind of funny how cryptocurrencies, and especially like Bitcoin and stuff that are heavily watched, they didn't have enough time to have enough data to really gauge the volatility and the order flow of these markets. Now that they're maturing, they're still infants, but they are maturing. You can start to look at these things. So right now you can see that the Bitcoin was up higher on the day and now is falling back, and I think that's probably because of the retreat. In fact, why don't we just check something out here? If we look at the hourly, okay, yeah, so currency markets opened up, and then the dollar had a nice little rally. So this little spike here in Bitcoin is because of the pause now in the dollar as the trading day starts to unload. But look at how it's fallen back from 34. This is a nice little range. This thing trades like a little, it's crazy. So all right, well, anyhow, we got that out of the way. So for Bitcoin, though, let's go to this Dixie chart. It came off a higher move high, so we were looking for a So here, this is where it bottomed, and then where it made this higher move low, that's where Bitcoin topped. And now, as you can see, this is kind of like this buffering area. It's like the reverse of the Bitcoin chart for this last like week and a half. So a bullish move here for the dollar would most likely mean that the Bitcoin is going to have a little bit of a sell-off. So just to throw that one into here, I'm sure some of you guys look at the cryptos as well. So anyhow, with that being said, I want to thank you guys very much. We're going to have a couple other webinars dedicated to some of these currencies across the day, and we also have a signal that we're going to put up here. Yesterday, it established a so hang in there. We will be back in just today. No one can deny that.
Oh, everyone is steady catch that, and
the market has made a consecutive, made a higher move low, a higher move high, made a higher move low.
Trading signal analysis for January 21st through 22nd.
The thing about this bearish engulfing line sell signal here is it took out. It made its target to the downside.
So, remind you that this is for illustrating educational purposes.
We can look at this little thing here. Let's go to our Ninja Trader platform.
Analysis. We just want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com and
we have a target of 90.34.
All right, we have the Forex-Trading-Unlocked.com website pulled up already. We're going to skip past the economic calendar. The dollar index yesterday held its ground, and today it's now back under pressure. We did have a buy signal back on the 7th of January, and we are targeting this 91.73 to 92.36.
If you read the book High Probable Japanese Candlestick Patterns,
right now, today, the dollar's under pressure, and we're going to take a look at it. The Euro-US dollar, which is the biggest weight, is up today. So is the pound, and everyone is pretty much hitting the dollar. So, but remember that overall, all these markets have been making lower move lows and lower move highs. So you have to view this as a short-term correction on the intraday. There are some reasons to kind of maybe believe that we're running out of gas.
If it takes out this high,
we do have a sell signal that was triggered here on the 7th of January. That was when the dollar index bottomed. So we have $1.1975 down to $1.1889 as our price targets for the Euro-US dollar right now. Our risk level right now is $1.2053 at this high. Any trading above there definitely has us back on the long-term bullish campaign, which we are overall bullish all these markets against the dollar. But
right now we are in a short-term correction. The dollar has been getting beaten up for months. We now have passed the inauguration date in the U.S., so now we'll see what kind of things happen with the markets. We're heading into the weekend. We'll see what things happen over the next few days just as we get things rolling. I don't expect to have any major news because we're rejoining all these accords, and now they're going to set meetings, and those have to be set made up for the future, which probably won't be happening until the next month or two. And then it also has to depend on the coronavirus, how they're going to handle all this. So we'll see how this goes. But the Euro-US dollar is in a bullish mode on the intraday level. It is pushing resistance, but as you can see, it's coming off the highs from today. Now let's take a look at the British pound, US dollar. Now the pound, unlike the euro, has had little corrective breaks, but it has been in a higher move high, higher move low situation for a while. It keeps pressing on to new highs like it did yesterday and now today, following through. This, I think, is where you're getting your biggest drawback on the dollar index as far as an indicator, is because the pound is one of the biggest weights, second biggest weight next to the euro. So the fact that it's nailing new highs is really putting a little bit of a crimp on the dollar bulls, if you will. So I wouldn't try and fight this one. We now have divergence in currencies. Europe and is all excited about working with Biden, so we'll see how things go. But the UK lockdowns and everything else is also weighing on their economy, and it's not doing the best of help for them. So we'll see how this works out. Right now, the trend is your friend. If you're long, stay long and keep working your risk. I would say that this last swing move low here, this would be the area to stay long against. Anything above here stays bullish. Anything below here would be bearish, at least in the short run for a corrective move. So that would be your key pivot right here around $35.24. Interestingly enough, and this is something you need to watch, the Swiss came butting off a key resistance here, and we had a buy signal back on this over the yen. So when all the currencies turn pretty much. So we're looking for this to bounce back and challenge this key pivot level. If it gets above here, that would be a very good indication that dollar strength is coming into play to push a correction. Now, I'm not bullish the dollar overall for a very long time. It's very likely to see a extended correction yet, at least for probably the next month or so, especially because if you watch interest rates, which you should, if you're a currency trader, the 30-year Treasury bond keeps on bashing support and pushing weekly lows. So I think while the short terms are hitting, scratching the ceiling on highs that they can't penetrate anymore because they've hit the top of the curve. So that is a big deal for currency pricing, and there's no way that that's not going to cause some sort of an impact with the dollar, and that's probably why you're seeing this bounce in the dollar now in the later part of the day. Remember, Europe is closed now, Asian markets have been closed for a while, so it's just a U.S. trade, and I think now the dollar bulls are starting to take a little profit, and I think the bears, your weak shorts, are going to start to get really swallowed up. So be very cautious with this. We still are in a buy mode. It's been making higher move highs and higher move lows, so right now there's no reason to think that, with that being said, that the U.S. dollar still has a chance to be a bull. Now we have divergence in currencies, so start to look at the trading zones on their own merit, meaning that you have the euro, the pound, and the Swiss as your euro zone. Now we're going to look at the Japanese yen, the Australian dollar, and the New Zealand dollar. These will be your Asiatic trade zones. Now, if the dollar is a bull versus most currencies, now it's been kind of where a lot of the currencies have been trending together against or with the dollar. However, the yen has been on its own for the most part, and it usually goes the other way when most currencies are going up. And this is why I think you need to think about why you might see a correction, or not a correction, but a bounce back in dollar buying against other currencies. Look at the US dollar yen. It had a buy signal back around the same time as these other currencies did. Now the interesting thing is that the longer term picture with this one is it's still making lower move lows and lower move highs. So unless it gets above that 104.41 area here by this arrow, there's no reason to think that this is going to be even coming near this upside target zone. However, should this dollar correction be something that can manifest itself truly for the next month or so, then we may be bottoming now and getting ready to challenge this 104 area and then come back up towards this 105.36 area. Am I overall a bull with the dollar versus the Japanese yen? No, not at all. But I think in the short run, there is a good chance that we could push a corrective move up into those levels.
We have a shoulder.
Another reason it supports this is the Australian dollar, US dollar, which is now rallying once again over the past couple sessions. It's been making lower move lows and lower move highs, unless this Australian dollar takes out this last swing high over here around 78.05. I don't see much strength coming into this currency. I see it coming back to test support and settle down more in towards the 76.41 area. Now, the one thing that Australian dollar and New Zealand dollar have going for them, especially the Australian dollar, is they're commodity-rich countries. That's one of the major exports, and especially for Australia with China. If there's a resurgence of buying in the economy and China gets their engine going again, then that's good for Australia. And also with the fact that there's a inflation going on in the commodity markets. So that will probably give credence to have a stronger Australian dollar regardless of what's going on with the dollar versus other countries and stuff like that. So we have a true, we're going back to our trade zone plays now, which we haven't had in a while. Brexit's over, U.S. elections are stable, are done now. Now we can get back to different areas of the world, what's going on, trying to get everything out of coronavirus or whatever it is, new world, whatever it's going to be. But you're going to have to go back to trade zone methodologies and outlooks when it comes to the currencies now. So since these are making lower move lows and lower move highs, that's indicative of what? A bearish trend. So right now, unless we pierce this 78.05 to make a higher move high, we are definitely looking at this as a corrective move, looking for it to fall back apart. The New Zealand dollar, US dollar, we had a sell signal. Now this one's much more extreme, and that's why I said, like, for instance, Australia, because of their commodity-driven economy, they may not fall so much against the dollar, say like New Zealand dollar does and the Japanese yen does, as far as the trade zone is concerned. So in this one here has been making lower move lows and lower move highs. As you can see, it did not make a higher move high yet. If it takes out the 72.45, then I would say that it's looking to continue this bull trend. Remember, this has been a very steep trend here. So I would say if we move this,
you start to see a rally in gold.
You know that right now they're trading an inverse trend line in here,
relationship where gold goes up.
This is a more sustainable trend here. It's not so steep. So for it to continue up in this little corridor, absolutely that's possible. But it's got to reach the 72.45 first. Trading below there has us targeting this downside target area. Now let's look at the US dollar. Mexican peso. Spring break's coming up. I'm sure all the college kids want to know how much it's going to cost to buy the peso. Well, don't try and catch a falling knife, my friends. If this is bottoming, this would be your target zone up as an extreme 20 pesos, 20.79. I don't know if we can get there right now with the way this bear market is going. Lower move lows and lower move highs. You got to breach this high right here above 20.26 pesos to the dollar. And then even there, I think it's going to get really sketchy. If it can sustain a trade in this area, then I see and if there's any real major dollar strength, like for instance the dollar index starts really screaming and there's a big turnaround in the pound and stuff like that, maybe then you'll see a bounce. But right now it looks like if you're looking to go on spring break, you may be seeing newer move lows before you see higher move highs. So our risk level for any I would say risky longs that want to try and get in, I would say don't be long below this 19.54 level, because anything below here, the peso could be down at 16 pesos to the dollar in a heartbeat. So now let's look at the US dollar Canada, which especially with the pipeline agreement and stuff like that, that doesn't bode well for Canada. Well, Canada's doing well because oil's high right now. and especially with this other stuff going on, it's going to make things a little bit more inflationary over there. So I don't know if we're going to be able to catch a rally. This little area here, these last two highs is our buffer zone and key pivot area the market has to get above just to stay neutral, not even bullish. This market has been in a free fall for a while, and there's no reason to think that this is not going to continue. I mean, the slope of this trend is not severe, so there's no reason to even, I mean, by attrition we may come out of this downward sloping resistance line, but then that has us in sideways. It doesn't really have us getting bullish, so I would use caution on any type of thought or idea about trying to get long that market. So Euro US dollar, where we started off, as you can see, it's not doing very much. Now let's just look at the hourly real quick, just to give you a little gauge of something here. We have
with that, if that is true, and you do continue to see
this daily chart here, we pull up the Fibonacci levels here. So we have the same, we have a trade that's been going on since we had this bearish engulfing line where we initially sold $1.2268. We had a stop level that was above here at the high at $1.2349. Now it's been lowered down to $1.22 even. It's very possible that between now and Friday's close tomorrow that we could have a spike and get stopped out on this trade. Ironically, if you take this
so anything above
high here down to this low right here, that would be a 50% retracement, which that right there would be a great selling level. So it's very likely that if we do get another surge tomorrow that we'll get stopped out, and it may may stop right around that area and then come back and make new lows. But we don't want to be let a winner turn into a loser, so we got a profit on the trade. It's the right way to manage it, especially because we've already hit halfway between where our stop is now and where our downside target level is. So we have two downside targets here, so we'll be getting out of one at $1.1975, and at that point we'll definitely lower the stop to an extreme level for the second trade down to $1.1889. I don't know with the strength so some of these other currencies, especially with the Swiss and the pound, unless they turn around again. If the pound falls off its highs and if the Swiss starts to go back up and start challenging those upper levels like we were looking at earlier, then I find it hard to believe that the euro would be challenged, would be stopped out, and then it would be coming to hit new lows. So we'll be definitely watching this low right here. This will be a key little spot that we need to fall through to confirm weakness and get us back down on the track to get down to this downside target zone. So that's what we're looking at so far for the rest of the week. We don't have any questions in the chat box. So with that, just want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And then you can learn how to trade some of those signals like we were looking at on those charts, like the bearish and bullish engulfing lines and things like that. So with that being said, good luck with all your trading. Make sure you always keep your money management rules in check and have a plan, and we will talk to you soon. And always leave some questions on our chat.
Yesterday we had a bullish engulfing
line for Forex Trading Unlocked, and we are here with a Forex market analysis for the week of January 17th through the 22nd. So we have a lot of interesting trading signals going on in the market. So real quick, let's just get to our disclaimer to remind you that this webinar is for illustrating and educational purposes only. And just to let you know also that please, if you subscribe to our YouTube channel, if you have not already, Forex Trading Unlocked. And also, there's a book called High Probable Japanese Candlestick Patterns that I wrote that right now, if you go on Amazon.com, you can get the Kindle version for free for 1 month. Check it out. So that's available today and today only. And there's also a bunch of high probable Japanese trading candlestick patterns that we're going to be going over. So right now we have the forex-trading-unlocked.com website pulled up, the workstation page, and we have the dollar index, which check this out. So we had a buy signal the other day.
bullish
we had our bullish engulfing line
engulfing
buy signal yesterday,
line.
and as a price projection
Buy
point,
signal.
we have $1.
Now, what is significant about this signal? Well, it's one of the strongest signals that you can get after especially a long trend in either direction, going up or down, as far as being an engulfing line. Now, where is this going to go? How much of an impact can this have on the dollar index? Well, let's just take a look at this last high up here and bring it down to here. And let's pull up just on a Fibonacci basis. If we go on a Fibonacci basis from this last low and we get a decent correction in the dollar, which remember the dollar has been beaten up for a very long time, and I know that I am not necessarily a dollar bull, but when you've been going down for basically a year, usually you get a nice little corrective bounce. We've had a couple, but not very strong. So anyhow, right now we have this little target area that we're fixed on right now. It's for our upside target zone for the dollar index. So this is our 50% level. This is our 0.618 Fibonacci line. From this current big wave down, we have this bullish engulfing line. Now, if you read the book, High Probable Japanese Candlestick Patterns, this is not how you set your targets. This is a longer range, kind of just trying to figure out how an index, because this is not an actual currency, it's the weight of the euro and the pound predominantly, and then obviously all the other global currencies. So speaking of that, let's get into it and see what kind of signals we have going on right now. All right, so we have the euro, US dollar. We had a bearish engulfing line sell signal that was triggered a little over a week and a half ago, and Friday of this prior trading week, boy, did the market end on its butt. Now remember, we have a holiday market in the United States where we have some limited trading for certain markets on Monday. So as the world comes online on Sunday for the Asian and European markets, it'll be interesting to see how much volume and volatility we really have in front of that. So I would expect most of your trading action to occur probably from Monday night into Wednesday as we head into the inauguration in the U.S. After that, then I will see once the inauguration is over what kind of reaction we get in Asia and Europe with their markets, and that will probably set the tone for the dollar for probably at least a couple weeks for direction. But right now we have this bearish correction. We've taken out this upward sloping line. Now remember, the euro-US dollar had a big move. I mean, from November up into the beginning of 2021, it had a move from $1.16 all the way up to $1.23 plus. So that's a huge move in just a short amount of time. That was a bigger range, more volatility and more of a range in that 2-month period than we had in the whole year and a half before 2020. So the market is definitely swinging, and this is why you're getting a big kick in the dollar index. So you've had a nice move in the euro versus the dollar already. It's a 3-handle move already, and it's hanging on support. Now, this upward trend was pretty steep, so I think where we're coming in, especially at this target one in the downside target range of around $1.1975, this is most likely where you'll see most of your support come in, at least as far as the way we're looking at things right now. Now, this target number 2 here, $1.1889, I think that's most likely going to be the extreme for any type of sell-off that you have currently, just because unless we got to get through the election and whatever. So the next couple days, I think there's a good probability that we could hit this $1.1975, but I think that absolutely target 2 is going to be the extreme for any downside correction in the short run. Because remember, this is overall a bull. We're looking at a corrective move right now. We are not looking at this as a change in trend. So we have the dollar index that is giving us a buy signal. So that's overall, as far as the index against most currencies, it's giving dollar strength. The euro-US dollar right now is showing us for sure lower move lows and lower move highs on an intraday basis, which confirms the short-term trend is bearish. Intermediate term and long-term trend obviously are bullish, that's why we are looking at this as a corrective move. A short-term top obviously is established, and we'll key off of this high up here also as far as our breakout level to the upside. This is our risk right here. Anything above here, it is a major bull again.
2171 over the next 2 sessions as you go into expiration.
All right, so that's for our euro-US dollar.
And
now let's go on
FX
to the
traders,
British pound,
short this right now,
U.S. dollar. Now the pound, interestingly enough, topped out 2 sessions ago and was not chasing the dollar bulls running from the dollar bulls like the other markets have. So, but we did have a bearish engulfing line sell signal to end the trading week on Friday. We have 2 downside target areas. This initial $34.23 down to $33.51, I think, is the initial support where it definitely has us in the short-term bearish mode. Intermediate and long-term are very bullish for the pound U.S. dollar, but with the increased lockdowns, this may be the beginning of a corrective wave where we're going to start to be neutral to lower, and even though there may be dollar bears out there, I think that we have to see how the transition of power happens in the U.S. this week, but the lockdowns aren't ending in the U.K. anytime soon. At least that's the way the news was looking this weekend with the surge in the hospitalization rate. So hopefully that does start to subside a little bit, because that would be good for everybody. And the people don't want people getting sick, but right now the way the numbers are looking, I think it's going to weigh on the pound. We've gotten into 2021. Post-Brexit deals have pretty much come to fruition. Now it's everyone trying to see how they can stay healthy and defend against this unseen virus. All right, now let's look at the U.S. dollar Swiss. For the other case in the European trading zone, this had a bullish engulfing line buy signal over a week and a half ago, just like the euro had a buy signal, or for the dollar versus those currencies rather. Right now, this is trading under a key pivot level here at 89.23. I think you're going to see a lot of resistance and jittering there. If you see a huge sell-off in the pound, especially, and the euro, then I think you probably have a good chance of piercing this key pivot level. Closing above it and sustained trading is really necessary, though. So it may be a grind. You got to look at this. We had this low back here. This could be an interference level right here. I would be very cautious right here. This could be very tough to go back to the sustain a trade to get through here, so we may spike at this initial 90.26 target zone, but unless the dollar really gets a raging bullish move against a lot of other currencies, I think the Swiss is going to hold pretty steady. And we'll see how that manifests over the next week. It's going to be interesting. Like I said, this week we have a holiday market, we have
especially with the yen having that reversal
transition of power also in the U.S. That's setting us so it's going to be definitely interfering with global liquidity over the next few sessions, but we have lots of opportunities. Now let's look at the U.S. dollar JPY. Once again, we have another reason why the dollar index is bullish, because we have a nice bounce in the yen. The U.S. dollar yen has been nothing but a bearish trade for quite some time.
So those would be options
that make this a little clearer. So as you can see, it's been trending, making lower move lows and lower move highs for quite some time. So what we're going to do is we're going to key off of this high from last week. If we can get above this level here, then that confirms strength and higher move highs, which would have us targeting this upside target zone here. 105.36 here, I think, is where you're going to start to run into a lot of resistance. It's going to get really toppy and choppy here. If for an extreme, I would say 106.23 is going to put a cap on any corrective move here. Now, does that mean that this market's getting ready for a turn? No, but like I said, the U.S. dollar is due for a nice correction. So this would be a good area for the dollar and the yen to pretty much run out of gas, and if there's an extended correction. It may not get there, though. This may right now just be establishing a lower move high. If we get into this upper part of the target zone, that would be higher move highs, confirming at least a neutral market. Overall, we are not bullish the dollar versus the yen in the short to intermediate term, at least right now. There's no real reason to even think about any change in trend. And it has to do more with global politics and everything else, because we're pretty stable in Japan. Interesting here, Australian dollar, US dollar is finally starting to show some weakness. We have a dark cloud cover sell signal that occurred just a little over a week ago. Right now it is hovering below these lows. So this is tough. Australian dollar, US dollar has some things going for it as far as variables of pricing that doesn't really exist in a lot of other markets. One of the biggest things that Australia has going on right now is there's a boom in the commodity markets, especially in a lot of precious metals and ores that Australia produces. So with the global demand increasing for a lot of this stuff, and with China coming back online, if they truly are producing an output that they say they are, that's strong for Australian economy. As long as there's no big lockdown measures that come into place and their trade with China continues to flow, it's going to support the Australian dollar. So short term here, we are a bear. We're going to take this here from the high, and we're just going to go down to right around here. And this is where I think you have to just look at this on the basis of this. We're going to look
US dollar Swiss
at the 50% line.
So for your futures and futures
And
options,
then we're also going to take this a little bit lower. It's a bull target at 90.48.
So for any binary options, you just got to be looking to stay above this.
So we're just going to give you two downside targets here for this market.
Even the low from today, I would say be a buyer.
Very hard to say that this trend is going to really be broken for any extended period of time, just because of how bullish it is, and it's not just geopolitical issues. Now, as you can see, it's hovering along this slope here. This is not the steepest slope right here. It's fairly level. By attrition, we're coming through it, not just by breaking
March
markets.
futures contract.
So I would say that you're probably going to see the bulk of your trading
and we're going to raise our risk up to the low from yesterday. Okay, so the low from yesterday, this is a bullish engulfing line right here, by the way, also. So that is a buy signal right there. So this is a higher move low after a higher move high. We have an accelerated
So pretty much here, where we're in this little zone here, that's only because of the fact that the CRB is holding up this market. If the CRB starts to fall apart, if you start to see gold and silver really start to tank, if you see oil really start to fall back on its lows, if you see especially a lot of the
line right here,
food is also something, grain markets and stuff like that impact them as well. If we start to see a correction there, then I think you'll see weakness in the Australian dollar for a nice corrective slide.
Right. See this little
unless there's major dollar strength that comes in for whatever reason that really rams all the currencies. This is one where we're not looking for a lot on a correction. Now let's look at the New Zealand dollar, US dollar.
So now we're anticipating
we have the New Zealand dollar, US dollar. We have a dark cloud cover as well. This market here is not on quite the same campaign as Australian dollar. Reason being is that they're not so reliant on China trades as Australia.
So
the slope of this market also is not too bad. By attrition, it will be coming through it, which it has. It has made lower move lows as of Friday, and this is also a very powerful sell.
Now let's go to the US dollar yen.
So I think that what you're seeing here is a little release. This downside target area with 69.14 pretty much being the buffer. I think you're going to get choppy down here. If you're short and you can hang on to this first target level, I would say take your profit and don't get greedy on this one. Now, like I said, if there's a huge dollar strength surge for some reason, that could hammer all the other currencies and blow off a little bit more of a volatility to the downside. But that's only if you have a real strong resurgence in the dollar, which I don't think that's what's going on right now. I think right now it is just a corrective rally in the dollar, which every top and bottom starts as a correction, but right now, because of the trend, the overall trend, they're telling us that right now it is just a correction. So let's look at this area right here for any selling pressure to kind of really unload. And one of the key levels to really watch out for, I think, would be this last low here. If we fall through here, you got a good shot at hitting this. If it gets below 70.05, 70 even basically, you got a good shot extending the downside momentum to 69.14. Aggressive bears, 68.22, but keep your stops tight. And once you get down to 69.14, definitely use 70 even as your risk to stay. You do not want to be long in case you get a slingshot back. This market could be, here's the thing is too, is if this is only a dollar correction, which it's being viewed as, once it does start to bottom, just like you can see now how it's really turned really fierce. All these currencies gave signals within days of each other and are all helping to lift the dollar index right now. It's because it's been beaten down for months. So we'll see how this manifests over the next couple sessions in the next week, but that's really what we're looking at right now. Now let's look at the North American trade zone. U.S. dollar, Mexican peso. We got spring break coming up. I'm sure lots of people are wondering, like, is it going to be cheap to go down to Mexico? I don't know. I'll be lucky if we can go to Mexico. First of all, we've got to hopefully get everything opening up. So, but what we do have here is a bullish engulfing line buy signal that happened. The low from the prior day is your risk level down there at 19.60 pesos to the dollar. This market could really go sideways for the next couple months, and it would not be surprising. We have a buy level here of 20 pesos, even basically. Right now, it's a losing trade, our risk, but it did not fall through our risk level. So right now, we're still long this trade. We're looking for another rally up to
U.S. dollar. Remember, we don't have
lower target
anything
zone
going
around
on with this one
20.5 to 20.79 pesos to the dollar.
No action there whatsoever.
It would be not the hardest thing to achieve. So if the dollar continues strength into the next week or two, I would think that you're going to have a good chance of seeing this upside target zone be reached. That's probably all you're going to see, because then we're coming into spring break time, and like let's put a little vertical line. Let's just go from
so you want to be aggressively a bull, looking for a continuation of upside momentum and a breach of this downward sloping resistance. Breach here would take us off the bearish trend.
So from here, I would say you're most likely going to see us buffer off this upper zone here and then stabilize around 20 pesos to the dollar. So we do have a buy signal in place. Aggressive bulls right now, you don't have very much risk. You can buy the peso at 99.77 and you're risking 99.60 as not a lot. So for aggressive bulls, you're getting another chance to buy in at this buy signal. One thing about bullish engulfing lines or engulfing lines in general, where they get you into the trade, you've already hit a big gush. So sometimes the market retreats and gives you a second chance to buy in before we take out another wave higher. One of the key levels to watch out for is the high from last week. Anything above here confirms our upside breakout and our buy signal and has us pushing into this upside target zone. So we'll see. Once again, it is going to be a holiday market starting off the week in the United States, which will help to probably slow things down. U.S. dollar Canada, look at this on Friday. Finally, a bullish engulfing line buy signal. Now, this is where I really am starting to say that you probably want to watch the dollar continue its correction, kind of in a grind of a way for the next few sessions.
So those are some trades you can find for the U.S. dollar Canada.
Once that happens, who knows? It's going to be very volatile. But the short-term trend in this holiday trade, I would expect this little bullish buy signal that happened on Friday to give some follow-through into this key resistance area. We have this last high from last week that we need to get above. This $27.90 to $28.30, I think, is the huge area to look at with this key pivot, which is just above it. So if we can get above here, which I think it's going to be tough, this could be holding what holds back this bounce, and as we go sideways. But the U.S. dollar Canada has been in a free fall for a while. The breach of this area, this key resistance area, definitely would have us on a rally campaign and looking for a corrective move that extends all the way up to $1.30.06. And then it'll probably be touch and go if there, like I said, if there develops a very major bullish move and momentum across the marketplace, then you might see some of these signals hit streams. Otherwise, I think you're going to stay at some of these lower target ranges first. Let's see how they react, and then look for further follow-through after that.
Remember also
so once again, the Euro-US dollar, it's when it started all this stuff, it's the biggest weight in the dollar index. And as you can see, these other markets are coming in line with that, where they're starting to pull back versus the dollar. These could all just be profit-taking corrective moves. Remember, right now we're not looking for a bottom in the dollar and a big dollar bull to come back. We're just bullish the dollar in the short run as we head into the next trading week and into the transition of power in the U.S. Once we get through Wednesday, it will be a crazy week for sure. But after this week, you're going to start to see stabilization, we will be able to start to have direction for sure. Since the election is over, the transition of power is over, and then shabam, we can get back to just focusing on currency movements, geopolitical things. Brexit's over, folks. Remember Brexit? We talked about that for years. So we're done with those topics. We are moving on, which is nice. And remember, once again, since you listen to this presentation with all these high probable Japanese candlestick patterns, check out the book on Amazon.com in paperback and Kindle versions. And thank our listeners who are checking out this video today, Sunday, January 17th. You can get this book for free in Kindle version for 1 month. Why are we a bear? Check it out at Amazon.com. We really appreciate your time once again. This is Teddy Keckstedt for Forex Trading Unlocked. Good luck with your trading and the euro versus the yen.
Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on January the 9th with a little Forex market, net market week of January 11th through the 15th coming up. So before we get into it, I just want to pull up our disclaimer real quick to remind you that this is for illustrative and educational purposes only. And also, before, if you haven't already done so, subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com, paperback and Kindle versions. We're actually going to start off here at the Forex-Trading-Unlocked.com website. We have the workstation page pulled up already. And we have the euro US dollar. It ended the week on our note. The dollar actually got a little bit of a bounce Thursday into Friday's trading. Right now we have a bearish engulfing line sell signal that was triggered on Thursday. And we had a nice little follow-through break that happened on Friday. As you can see, the short-term trend is very vertical from the beginning of November to the beginning of January. We went from $1.16 all the way up to over $1.23 in the euro US dollar currency cross, and it's quite the move. You're having a $7 range in just 2 months. That's very, very, very extreme. So, and what we have now is we had a higher move high that was set a few sessions ago, and then on Friday we made a lower move low. So we have the sell signal from Thursday. Friday we made this lower move low. Now we didn't settle below $1.2215, so this can be our big directional pivot with $1.1974 down to $1.1882 as our target band to the downside. So right now we have a little bit of a spark of bullishness. Now remember, every time this market's pulled back a little bit off its highs, it grinds its way higher. So this market isn't a bull market. It's been overall making higher move highs and higher move lows. This is kind of an intraday thing, so we'll see how this carries through. If we continue to get follow through and especially get below this like $21.20 to $21.75 area, another sell-off like we had on Thursday and Friday, if we get that on Monday into Tuesday, then that's probably a good indication that besides the short-term turn, we have a good chance of pushing a nice size correction down towards this $1.18 level. Remember, it seems like a big move because, I mean, the euro US dollar was trapped in a $5 range for over a year and a half. Now, with the advent of 2020, this thing's been swinging all over the place, and I think that this is just a sign of things to come. We could be getting set up for some other major trends, obviously, in the currencies this year. We have to wait for the U.S. inauguration and everything to get through in January, towards the end of January. Plus, we have to see how the lockdown measures in the U.K. and the EU are going to impact the economies over there, because it seems like it's starting to finally hit those things. All right, now let's look at the British pound U.S. dollar. So we had a sell signal in the euro U.S. dollar on Thursday. The British pound started trading lower already a week ago. This one has been grinding lower. It's been a major bull versus the dollar for months now. The overall trend is not as severe as the euro. However, it's still pretty wide range. I mean, we have an upside breakout level of $1.3703. Back above here, we have higher move highs confirming the trend. As far as buying into this slide right now, I would wait for a valid signal because it looks like we are grinding this correction lower, but as you can see, this market, it'll spike down and it flies right back. So I don't know if the dollar has really turned yet. Once again, we have to see how things happen with the lockdown measures in the UK and also in the EU. And remember,
remember, I know that the Scottish issue with the UK is pretty much brushed under the rug, and I think it is pretty much that kind of a matter as well. But as long as it is still newsworthy, it's probably a little tension on the pound. And also, I think the argument's ridiculous because I don't see how Scotland would be able to maintain itself without the UK as a source of resources, for one, especially financial ones. So right now, we're a little bit bearish on this one in the short run, especially on the hourly, in the short term, a couple days going into the new trading week. We'll see what happens. I think that if the euro-US dollar continues its plunge, and if the dollar continues to maintain strength versus most other currencies, which, remember, the dollar's been beaten down for so long now that we're going to have bounces. So right now, we may be in one of the, and there's only been a 2-day bounce, you know. In this case, with the pound, it's been a 5-day bounce. But even still, it's grinding. It's holding on this. It's trying to hold this support here. So is it going to flip back to the upside? We don't know. We'll see. We're waiting for a signal here. So let's look at the U.S. dollar Swiss. Let's look at our flight to quality currency and see what's going on here. Well, interestingly enough, the dollar has had a nice rally versus the Swiss over the last 2 sessions, which ironically, because of the euro move, it's not typically we're going to have an opposite reaction. That would be ironic if you had an opposite reaction in the Swiss. So this is kind of coinciding with the euro, as well as the little bit of heat that the pound is taking as well. So is this a bullish sign for the Swiss, U.S. dollar Swiss? Probably not. I would say that even if we have strength in the dollar versus the euro and the pound, don't expect that much out of this one. This is pretty beaten up. I would be surprised if you see this thing making a run for parity anytime soon. But even though this isn't a big downtrend, it's not in that steep of a downtrend, and just by time and attrition, I could see us get back. If we take out this 189.20 level here, that would be a nice sign of neutral potential, you know, where I would say that we could probably push a higher range back up to this 90 to 91 cent area, and then start to bobble down between 91 cents and 87 cents as the dollar and the Swiss probably will find some sort of stable range, I would say, in the first couple months of the year to see how the transition of power in the United States goes, as well as the fact that we have transition of all kinds of stuff in the EU and the UK. Now let's look at the other flight to quality currency on the other side of the pond, on the other pond. We have the U.S. dollar, Japanese yen, which has had a nice little follow-through move to the upside. This one started already back on Wednesday. And interestingly enough, on Wednesday when the market was railing, it was pretty strong, and you see typically a divergence when the dollar is not in play, meaning that, say that the euro and the pound are going up versus the dollar on any given day. At that point, typically, if they're not really a dollar-related move, the U.S. dollar yen will go the opposite way. Doesn't mean that it's going to trend overall, but typically on the day, if you have a weak dollar versus many currencies, you'll see the dollar rally versus the yen. And conversely, if you see a dollar rally versus other currencies like the euro and the pound and the Swiss, then typically you'll see the U.S. dollar actually go down versus the yen. It's just a fundamental reaction of how these currencies will move when they're not, like I said, not being dollar-driven. Now, when it's a dollar-driven trade, obviously then that's a totally different story. I mean, you can see that the U.S. dollar-yen has been in a bearish trend for months now with the yen as well. It wasn't that long ago that the dollar was very strong versus the yen. Right now, not so. So, and that's something that we'll have to watch for the next couple months, and I think it'll be interesting to see if we're stabilizing the yen now and the dollar relationship. I think you're going to have to really key off of gold. Also, interest rates, 30-year and 10-year notes, watch them. They've started to kick up their heels the last 2 sessions. It's very important. Remember, interest rates are a function of currencies. The 30-year bond is in play right now. Excuse me. That is a very, very big deal. So the 30-year, no matter what, sets the tone for interest rates all across the board, all across the globe as well. And that has to deal with it with the currency pricing. So if we have rising yields and rising bond prices, that's going to definitely impact the dollar. And that could be why you're seeing the spike in the dollar right now, is that because the market is dictating much higher rates on the U.S. dollar, is a reason to all of a sudden have money in dollars because of the interest rate. So it's a carry trade thing. All right, let's see. We got Jericho here on the mic here. Hi, GBT short the next 2 weeks. Any thoughts? Okay, Jericho, this one here is for you. We're going to look at the pound Swiss. So we looked at the pound dollar. Let's really go back to review that real quick so we can see. The pound is weakening versus the dollar. So now if the dollar is gaining strength on the Swiss, then I would say that the British pound Swiss should be going lower. Just my, let's see. We've had the last 2 sessions, yeah, a little spike there. Looks like a kind of a neutral trade. Now here's the thing is, the Swiss, because the dollar has been in play, that's why there's such a major trend. The Swiss versus the pound, here's the thing is that Brexit doesn't really impact very much with Switzerland. Okay, even being part of the EU, it's still kind of irrelevant because of their own currency. So I think that's why, I mean, if you look at this webinar is over the course of December, you've had a decent range in this one, in this market, but you found a nice bottom here in the middle of December. Since then, you've been making higher move highs and higher move lows off of this low. However, you haven't taken out this high here. So let's see, you want to know short on the H2 out next week. Okay, so let's see, we'll put this level right here. This is going to be our key upside breakout level as far as risk. If you're short, I don't know how long you've been short, if you're short around the close or whatever, but I would say anything above 21.24, you're definitely going to be on the wrong side. Cautious with that one because you have these highs up. You take this high out here, you're looking at a confirmation on the short run over a few weeks that the trend is definitely bullish with momentum looking to breach resistance and continue higher. So then 122 and taking out these highs becomes very likely. But you want to see where to go maybe on this trade. Let's say you're short from the close. So here's your risk level. I would say minimally, and this will be a good support area, would be the 50% level.
And we're kind of coasting. We had
there we go. Right around there, and then we'll take this to right about there. Okay, so this here, if you're short right now, I would say is your initial target area, right into this little spot here. Should we slide down into here, which would be good for you? You're short, obviously. I want to see you make some money on this trade. I would be cautious. This will probably be an area where you're going to start to see some consolidation, just because you can see it over here back in October. So between this $1.18 to $1.19 area, if it just bounces off of this, this is going to probably be good support to where it's going to come back and make a challenge of these highs again. In which case, I would say make sure you're keeping your stops tight as you move forward over the next week or so. And then also, I do like your trade because the pound, if the lockdowns continue in the UK, which I don't see them not continuing, at least for a little bit longer, and we haven't seen what kind of on the economy. In the short run, I would say you'd be kind of obtuse to think that it's not going to have a negative impact and a drag on the UK. They are not as big nor as resilient or have the abilities to bounce out of things like, say, we can in the United States, or even the EU can absorb because they are bigger. It doesn't mean that they don't have things that they can do economically, but I would say you're probably going to see the pound continue to be under pressure with the Swiss too, because the Swiss and the U.S. dollar probably are not going to, like I said earlier, are not going to be as impacted as much as, say, the pound and the euro. So, yeah, I like your short here on the British pound Swiss going into the new week. You want to take a look at the hourly real quick? Let's see.
Now, a few hours ago, this was a sell signal right here at $1.21.5.
Okay, so here we have the hourly. All right, so this is nice here. So you want to key off of this last high here at $1.20.37, and we settled right where we need to get below. So this would be, I would say, the warming up range between here as far as on the hourly is concerned, and if we get below here, that would be a big deal. And if you look at this on a trend line basis, here's the trend. It's not that steep of a trend, but I could easily see that the pound Swiss taking out this area, testing this upward sloping support line, and especially if we can keep on
basically since Friday
pressuring support down to here. If you take out $1.1968, all bets are off on pound Swiss, which that would be good for your short. So there's some numbers for you. I hope you got something out of that. Any other questions on any other markets there, Jericho? You got any other positions on besides the pound Swiss?
So that's 32 ticks plus those 14. That's
a
40.
Let's go back to the daily
move for the futures contract, for the March futures contract.
All right, so there's your target range there, from $1.19.01 down to $1.18.46. It's not a bad little range there. If you look at it, if it takes, let's say, a week and a half to get down there, I would say maybe. You know, I mean, the thing about the pound with any currency and any currency cross with the pound, excuse me, they can. There's always a decent range on most days, and when the pound kicks up, it typically is very low. There's a lot of potential, definitely to the short side. Just be careful. Like I said, anything above $1.21.24 probably is not going to be in a good way. All right, so let's use US dollar JPY. All right, so we ended coming here by the US dollar yen. We are still right here. We settled above this big pivot right here, above this high. So we made a lower move low and a higher move high. This is not bullish, but what it is setting us up for maybe a challenge of this downward sloping resistance line, or at least a sideways to higher trade over the next few sessions into the next week. This is had a big bounce, as you can see how this one here accelerated. Look at how big, strong this rally was. It hung out for a couple days, and then it's been trending lower ever since. Is that going to be the case right now? Who knows? I do believe that as long as we can hold trading above $1, at 103.90 here, 104 even, that you're probably going to see this market drift sideways and try and make a challenge of this downward sloping yellow resistance line. Not much upside am I looking for, but like I said, I think in the short run you have a good chance at going sideways to higher.
You're long this. Currently still long the euro US dollar. We've raised our stops to right here.
We have the Australian dollar US dollar here, which is just, by the way, continues to hang under its highs. This thing is such a bull. Now here's the thing about the Australian dollar. You're going to start to see, I think, in 2021 a major divergence in currencies, meaning that let's say we have a pound and euro sell-off because of the economies slowing down over in Europe. Okay, that would shake up that trade zone. That would be that would impact the dollar, would impact the Swiss, it would impact the pound and the euro. However, the Australian dollar, Australia and New Zealand are commodity countries, and right now we have a big, you're welcome, Jericho. We have a very big rally going on in all of the physical commodities. Meaning that you have coffee that's rallying, you have natural gas that is going up, gasoline is going up, oil is going up, wheat futures are going up, corn futures, soybean futures, live hogs, live cattle, gold, silver. Now gold had a little sell-off, so did silver, but if you look at copper prices right now, it's insane. Now you got to realize that because Australia and New Zealand are commodity countries, meaning commodity driven, that's what their biggest export is. So that being said, this is impacting the Australian dollar because so much is done in Australian dollars when it comes to gold and what have you. So because gold is strong and because oil is strong, because all these different things are rallying, that means that Australian dollar has some credence to remain a bull versus the dollar. So I would be very careful of any sell-off in the Australian dollar, U.S. dollar. It would be only if there would be big problems in Australia, such as with their economy or something like that. The slope of this rally is fairly steep. It could be a little bit more, a little lower of a slope would probably give it a better chance at being a nice strong bull for a longer period of time. But this thing can start to go sideways, bounce off of it, and just continue higher. Like it looks like it's going to continue to do so. I would look, if you're going to buy this thing, I would wait for a slide and then wait for a buy signal, and I would really use caution trying to sell into this thing. The trend of this market has been swallowing up the bears for a while. I mean, you never had a chance to make money on the short side on this market except for a couple times in the past 2 months, like literally. So I'd be very cautious. The fact that it didn't make new highs on Friday and it's just kind of holding while the other ones seem to be more correcting, that just gives credence to the strength in the Australian dollar. Let's see, do you think copper will become worth more than silver? All right, you know what? That's a really good question, and why don't we take a look at that? So when you go on the forex-trading-unlock.com website, you go to markets, and you go to, since that's a commodity, and you want to look at the metals, we're going to go to commodities, okay? So we're going to take a look at copper and silver real quick. These do have an impact on the currencies. So, very good question. I like it when I get questions like this one. Okay, so here we have our metals chart. So we're going to take a look at copper real quick.
Definitely a factor.
All right, so we are pulling up the copper chart.
Key off of the high. It made a higher move high once again. This thing is a bull.
Now, I don't know, Johnny Garb, if you're familiar with TFNN.com. They're my guys down in Florida. Every Wednesday I do a Forex spot for them. But the one-head guy, Tommy O'Brien, he's a big gold guy and metal guy. And we've been talking about this copper rally already for months. You know, back already in October, where I was saying, with gold and silver going, I'm like, and then with the industrial growth of potentially coming back online in 2021, we were looking at how copper, especially because of supply chain issues, could have some big rallies. Obviously it has. So let's see what's going on here.
That's probably
so
the extreme
copper on the daily. Let's go to the monthly.
If we were to have
now this is the futures. Okay, so this gives you an example of what kind of a move this thing has had just in the past couple of months. So back in March, in just 9 months, this copper has gone from just under, I mean, it had a low of 197.25, and now here it's at 367. Now let's pull up a silver. You want to know more than silver. Okay, now copper becoming more expensive than silver is going to be a little bit tough. Here's the main reason for it is that silver, especially in kind of like the old school way of protecting yourself from risky environments. I know that the millennials are into buying Bitcoin, but gold and silver is still something that people buy. Silver obviously took a dump, as you can see. Now, here's the thing you have to look at. Okay, so silver.
Any real, I would say,
if you look at this, okay,
yet that we can
so
look at for the upside,
back around
except for
2011, 2012, we had got all the way back up there. We were at $49. Now, silver tends to spike and eventually hits a point where it's not going to grow anymore. But you have the potential right now. Let's just say that silver went from where it is now up to these highs. You're looking at 24 to 48, so you're looking at literally a 100% return. So now let's look on a relative basis Do I think that copper can become worth more than silver? Absolutely. Okay, so now here's what I mean. All right, so we take copper. Historically, especially going back in the last like around 20 years, the high is up here at $4.50, something like that. Silver, $4.50. If you look at this long-term chart here, we've made consecutive longer-term higher highs and higher lows. This is super long-term. Okay, so if we're at 367 right now, to double would be at $7, and that is very, very reachable. Basically, because if you look at it from here, from this high to this low down here, if we were to project from this low up beyond this high in a super long term, you're looking at copper being up around between $5 and upwards of $7. Could that happen? Absolutely. It totally can happen. And I would say that, see, here's the thing is especially with all of the repairs that need to be done and catching up on, remember, the United States and the EU have been in big lockdowns for, at least half a year for the most part. There's especially when schools start coming back online and what have you, buildings that haven't been used really properly are going to have all kinds of issues. You can't just let buildings go idle, let alone warehouses and what have you. So yeah, I think you're going to see a big jump and see copper around $7. So on a relative basis, yeah, do I see copper going to $50 an ounce? No, that would be extreme. And I think if copper's at $50 an ounce, you're going to see silver at $150 an ounce. But I think in a relative basis, you could probably see a higher return. Okay, Jack, let's see. One, I asked because copper has become harder to get, especially since it's being used in EVs. Yeah, so now then there's a technology aspect. Here's the one problem I have with that one, though, is market's correct. I mean, the more expensive that copper becomes, and they're not going to just replace copper, but they may. I mean, copper can't get more expensive than silver because you would start using silver, and even like a lot of gold alloys and stuff like that. So, I mean, like you still use in especially high-end components and technology and stuff like that, like satellites. They don't use copper in satellites unless it's, well, they do, but they use a lot more gold and platinum. So, but I do hear you with the EV technology, but remember, here's the thing is that whole industry is changing so radically that, I mean, now you're going to have cars that besides, being electric and charge, where you have charging stations either at your home and what have you, now they're going to be able to charge themselves with their own solar cells built into the carbon fiber bodies and stuff like that. Like, the technology is changing so rapidly that I think in the short run, yeah, the run on copper for technology looks like it's a big scare. But then it's also the cost. You got to remember is the more it costs to make something, the less people are going to buy. So there's kind of a caveat there that you have to be. There's a pinnacle point where you're going to have diminishing returns. So that's another thing too, is that you can't get ahead of yourself. All these things have to be made, delivered, and being in use. So, and that's another problem too. But I do like you being bullish overall. I think that your outlook with the technology idea is on the right side of this trade. But here's the thing is that that's because of technology and construction, and that's where demand is. And now this is where copper could become an issue. Is you have copper's being mined, a lot of it comes out of South America. Okay, with the plummeting dollar versus a lot of these South American countries, that is driving up the price of copper as well. So it's not just the fact that there's been a demand function. Like this whole rally in copper right now that you're seeing isn't because of demand, and it's not because of technology. This is because of a move. That's what's going on here. The dollar's gotten beaten down so much. It's why coffee is going to become very expensive. You know, companies like Starbucks in the year ahead are looking to have a very tough time remaining as profitable as they are. That's why they have such a diverse menu, and also, you know, have smoothies and don't just sell coffee anymore, because coffee itself is becoming more and more expensive for them, you know, and there's no way to hedge themselves out of it, because it is what it is, you know. So, all right, cool. So we got those questions answered. Back to the Australian dollar, which we were just talking about. So as you can see, it's hovering below the highs at 78.19, and like I said, it has to break out one way or the other. I think above it, it's just, you can't fight this bull. If you're long, I would say keep your stops below 76.43 here. Anything in this territory sets us up for sideways to lower. New Zealand dollar, US dollar is also looking a little bit like it wants to at least pause for the cause. This here actually is a sell signal. We have what is called a 3.
We'll take a look at that one in a little bit. So anyhow, US
3 inside down sell signal here. This is a 3 pattern sell signal. It's a high probable Japanese candlestick pattern. Let me write this down here so you can see it. 3 inside down sell signal. All right, so for the Asiatic trading zone, we do have one market with a sell signal, which is a 3 inside down sell signal. Where does this have us targeting? Well, initially it would be this upward sloping medium trend line, cutting the trend and holding it up, and it's not that steep of a slope. So even if we were to fall through this, I think you would have something like, this, where it's more like by attrition, by time, or just slightly falls through it and then it wraps back up and sweeps back up again. This is also in a similar situation like the Australian dollar is. I would be very cautious. Anything that takes out the high from Wednesday here, 73.19, or anything above here, this thing is a bull. You cannot fade this thing. But right now, this has a short-term sell signal. Does that mean that the Australian dollar is going to go with it to the downside? Maybe, maybe not. I think that you got to still take this one on its own. New Zealand is not Australia, and vice versa. They're in similar situations, but Australia, I think, is a little bit more reactionary to China and some other things, whereas New Zealand is not quite as heavy weighted on that. Gives them a little bit more leeway. And then I think also you got to realize that dollar strength, if it is coming into the market, probably would have more of an influence on the New Zealand dollar than it would on the Australian dollar, especially in the midst of a major commodity rally that's going on right now. All right, now let's go to the U.S. dollar, Canada, come to the United States, and now we'll see what's going on to the northern border and then the southern border. So U.S. dollar Canada had a little bit of a bounce, just like the other currencies, but pretty neutral to lower. This thing is a bear. It's been trending lower for a long time. It made lower move lows this week. Anything to the upside right now is considered a correction. This downward sloping resistance line, even if we get through it, I think it'll be more from sideways trading going into February than a rally. Only if we get above $1.2964 do I see this market even remotely going up to higher levels. All right, can I do the NZD-JPY? Yeah, Johnny, I can totally do that. So we got the Canada. There's nothing really there, like I said, except for those pivots. NZD, JPY. All right, this one is for you, Johnny. NZD, JPY. All right, this one is a major bull. Okay, so this is interesting because I'd like to know where you're living, because you're trading cool crosses. Most people don't, definitely in the United States, don't talk about crosses like this. New Zealand dollar, Japanese yen here, you can see the strength. Now, this is kind of, you can see kind of why this trend is evolving this way and it is so strong. The New Zealand dollar is strong versus the dollar, okay? And the yen is strong versus the dollar overall as well. So it's normally you could look for weakness and strength there's a triangle of crosses. So in this case it would be the New Zealand dollar, the yen, and the U.S. dollar. But how do we find out New Zealand dollar JPY? Like how much of a bull is this thing? Okay, well the key to this one is to go and look at
here. If you're not familiar with that pattern,
the NZD versus
candlestick patterns that I've written
the euro.
on Amazon, or you can just Google,
okay, so we have strength in the New Zealand dollar versus the euro. It's been going lower, trending lower, but in the short run, it's been a bull over the past week and a half. So let's look at the New Zealand dollar versus the British pound.
For the
New Zealand dollar versus the pound, same thing. It's gaining strength, starting to look very strong. Now let's look at the New Zealand dollar versus the Australian dollar. And the reason we're breaking this down, oh, you're in Florida. Okay, Johnny, cool. So if you're in Florida, you might know those guys from TFNN.com. They're pretty popular down there. All right, now we have New Zealand dollar, Australian dollar. Now this is where it's pretty neutral. It's very, very neutral. It's kind of ironic how New Zealand dollar has been trending versus most currencies and swinging just like the Australian dollar, but against each other. That's because they're pretty much locked in the same environment. They're both commodity countries. They're both often, well, not in the middle of nowhere, but I think you know what I mean. So, all right, so as far as here, this one doesn't give us any indication of strength. It just pretty much has it, but doesn't have it as being weak either. So then we go to New Zealand dollar versus the Canada. Remember, the Canada, they're very close to us. All right, so New Zealand dollar is being strong versus the Canada. So, okay, so let's look at these currencies, where the strength is and where the weakness is. So you like the New Zealand dollar, yen, okay? So as far as strength for the New Zealand dollar, that is there because any other major currencies, for the most part, it's very strong. So now we got to look at, let's go back to the U.S. dollar JPY again, just to take a look at this to remind you where the strength is and where the weakness is. So U.S. dollar yen, and this is on a monthly.
So I don't. I try to keep winners.
Okay.
I try
on a daily. Here we go. So here we have the strength here in the U.S. dollar and the yen. Now let's just do JPY over euro. We're setting the cross to find the strength and the weakness.
All right.
So the yen is strong versus the dollar. And the yen is weak versus the euro. Okay. So that means that the yen isn't necessarily, I mean, it's a flight to quality currency, but it doesn't mean that it's a totally strong bull. So if the yen is weak versus the euro, and the New Zealand dollar is strong versus the euro, remember, so New Zealand dollar,
a short-term sell signal.
Euro.
And then if we could take out this low from a couple days
once
ago,
again, if the New Zealand dollar, if the yen is weak versus the New Zealand dollar, and then we have New Zealand dollar strong versus the euro, excuse me, if the yen is weaker versus New Zealand is stronger than the euro, then the New Zealand dollar, JPY,
so key off to 78
will probably continue its trend.
Above here.
So I would say that you're seeing it spike here. I would be careful about selling into this. I think that's probably what you're looking to do, is to short it. The strength is in this market, so I would look to buy a dip. If anything, probably look for, let's see, find a 50% here between. Oops.
So basically, we have to settle just where we're at or lower right now for this to be
running a little slow here. Okay, there we go.
And daily sell
so just eyeballing it really quick.
78.22 as just above that as your risk for your stop.
There we go.
Which is actually
so yeah, down in the 74, 171 area. This would be a good little correction. So if you're short, I would say this would be a nice short-term target to the downside. This here is low. Would be your key breakout level to the downside. If we take this out, that's a lower move low after a lower move high and a big spike. Markets go out like they come in. This is a pretty strong rally. I could see at least correcting into this area. So, and let's see, maybe,
it's going to be hard to not be a dollar bull.
Yeah, there's no.
The only thing,
I mean, longer term,
if we have an extreme rally in oil, that would hold up the Australian dollar.
Yeah, see, this area is comes right into a 0.236 area. And this low here, this critical low here, is right around a 0.382. So harmonically, yeah, you could see it, the market get back down into this. If it took out this area back down to 72, I don't think it would get below 71. But yeah, I think right now I'd be very cautious being a bear here with this New Zealand dollar yen. You might see a couple-day break, but I don't think it's going to last for very long, at least from what we looked at. Remember, the best indicator for any market is the market, so looking at those crosses, the strength seems to be in the New Zealand dollar versus the yen. So, now, if all of a sudden there's a major move in the yen, and here's the thing is, the Japanese aren't exactly making waves when it comes to the world of finance the past year. They're very stable. They're trying to ride the coronavirus thing and trying to just get output back online and have people, you know, buying stuff because that's what they need. They're an island, you know. So, and
we always have.
It'll be interesting to see how things pan out. The good thing is they're stable. They're probably one of the most stable currencies out there.
But here,
so the trend, like I said, is pretty reliable, and that's what I would stick with right now. Okay. So I think we got that one. Now let's go back to U.S. dollar, Mexican peso. So for one last little thing we're going to look at here, we're going to look at the U.S. dollar, Mexican peso. We had a big buy signal on Thursday. We had a bullish engulfing line. So this thing was has been beaten down for months. I would not try and catch a falling knife. I think that you're going to see a short-term bottom here. And here's the reason why. I'm going to go with besides
before I go on,
the fact that this is a bullish
the oil numbers.
And oops,
and Tom O'Brien, the host of the
show,
they always go over them, and then we end up usually
golfing line,
talking about how to.
And this is a buy signal.
Markets. So Australia being a big oil exporter, and now with the U.S. being
here we go.
All
right.
Down,
so why would the U.S. dollar Mexican peso maybe start to bottom right now? Well, what if spring break doesn't happen?
So we are no longer
I'm just saying,
sending oil to
Japan. Is there
for
traveling to Mexico? Yeah, there's traveling to Mexico. Is it going to stay? Well, they may not allow us to come into the country. It depends. It depends on how coronavirus grows, especially with the new strain. And I think that you're going to have to see wave 2 because that's just what's going to happen no matter what. Doesn't matter what your take is on the situation or how the world's going to handle it, but lockdowns are. So, and if that's the case, it's going to be very hard for the U.S. dollar Mexican peso to stay where it's at, meaning that while everything was looking like travel was going to open up and what have you, the peso went from up at around 24, 23 pesos back down to 20 pesos and bobbling around in this area because everyone's like, oh, people are going to Mexico, they're going there for Christmas, people are traveling. Well, yeah, but how much? Not very many. And the question is how many college kids are going to be traveling to Mexico for spring break? They pay for it on their own. Yeah, the ones who have to wait for mommy and daddy to pay for it, well, there's probably going to be all kinds of issues with that, I'm sure. So I think that could be the spike. And we're going to see how this is going to be with the dollar. I think we'll find out over the next week or two, once the election has been completely done and we have a new president in the United States, then we will see whether or not what kind of lockdown measures are going to be imposed. Should they be what they've already stated? You're going to have a 150-day mandatory federal mask ruling and lockdowns on a bunch of businesses and restrictions. If those things are closed, people don't have jobs, people don't have money to travel to Mexico. It's just that simple. So, and they rely on the U.S. tourism and U.S. dollars. So, with that being said, I think you're going to probably see the Mexican peso continue to grind its way higher, back up to like 22 to upwards of 22.5 pesos to the dollar. So, if you were planning a vacation, the good thing is you'll probably be able to buy your pesos at a better price in the next month, 2 months, as we get towards spring break time. So for those of you who are going to go, I think you're going to arguably get a cheaper rate on your trip and be able to pay for more with less money because of the conversion of the dollar and the Mexican peso. This would also kind of have to mean that there's a little bit of a dollar rally, which the dollar's been beaten up so much as we make a changeover into the new president, and especially since we went over the metals and also the interest rates, that we are going to probably see more buying of dollars just because of the, and as we move into the next month or two. Are there Chinese currencies on Forex? Well, there is the yuan and the Hong Kong dollar. So, in fact, if you go to our website, forex-trading-unlocked.com, when you go to, oops, not this one.
So New Zealand dollar, U.S. dollar, we need to wait for a
signal. Let's
signal.
go to
U.S. dollar, Canada.
Here, okay.
Another
so
oil-driven
here.
trade here.
All right, so you go to markets again, and then you go to the Forex thing.
Potential bullish engulfing line forming.
This Forex page here has all the markets where you can just click on the different currency crosses versus each other. You just got to toggle down. So for Hong Kong dollar and the Chinese yuan, we have these. So as you can see, the U.S. dollar, Chinese yuan has been in a free fall.
Or higher today on the close.
So this is the Chinese, and then we also have the Hong Kong dollar.
Line buy signal. Now we will give you targets to the upside once we establish that buy signal. We have not established the buy signal yet. So
now, as far as can you trade these? Absolutely. I don't know what broker you have.
We got a lot to still cover here.
So there's limitations. I know that there's no futures.
We will be doing
would only be in the cash and the FX market. As you can see, a lot of volatility in the Hong Kong dollar here. Very spiky. So I would be very cautious trading this one, that's for sure. And then here's the other thing too: is when it comes to Chinese currencies, they fix they're not free floating currencies, and they are what they basically say they are. So
if you go to LinkedIn,
you know, that's a whole other story of whatever. Here's interesting to look at though. Look at the obviously the Chinese yuan and also the Hong Kong dollar
on Wednesdays, we put it out there. We put out our
radically different. I mean, the Chinese yuan has a much more stable trading over days and months than does the Hong Kong dollar. But then remember, Hong Kong has been in complete chaos for a year, so that could probably have something to do with it. But let's look at the monthly,
Forex and also futures,
just to get an idea of strength and weakness.
Follow us.
U.S. dollar, Hong Kong dollar.
Just go to Forex Trading Unlocked Inc. or just Forex Trading Unlocked, and you'll find our company page. And as you can see, we have just over
in 2020 alone
followers throughout the industry.
Dropped huge.
We have an event that's tomorrow at 10 a.m.
That was just
you guys are
monstrous.
Around, I want
drop
to share this
value.
with you right now. I'm
so
give you the link to
and
this.
here's the irony of it all is that because of this big drop like this, and this big drop like this,
and you will be
all the goods from China become more expensive. Isn't that great? So the Chinese aren't exactly, I'm sure, liking the fact that the U.S. dollar is tanking right now, or has been for months, and that their currencies have been relatively super strong versus ours, because that means that while we had, I wouldn't say trade restrictions, but now that there's fairer tariffs on Chinese goods, with the compilation of a weak U.S. dollar, that means that everything from China's gotten super expensive.
Unlocked when you go to our website here, you can
pretty interesting. So we'll see how this impacts the currencies as we move into 2021. So it's nice to actually get some good questions like that, Johnny Garb. Thank you very much. So, but yeah, the Chinese currencies, as you can see, they've been overwhelming the dollar as well. And who knows, maybe we're starting to find, I mean, this is a big drop, so I don't know. Who knows, maybe we're going to start to see a rally unfold. Remember that currencies trend, and we do have a new president coming in, and, well, I guess supposedly 11 days. We'll find out. So New Zealand dollar, JPY, we looked at that. Let's go back to the Euro US dollar, just to end and remind you that we do have one sell signal here, bearish engulfing line, and this is going to be a key one. If the dollar dollar index is going to get a bounce.
263 people.
Let's just do this on
So
an
if you
end
guys
note.
that are watching right now,
It's going to be
join it,
because
all you
of
guys
a
show
turn
up,
in the
there'll be
euro
over
and the pound.
270
And then
Forex traders to interact
the one thing
with
we have
tomorrow,
going on here is
through
that in the
our,
dollar
YouTube
index,
and Twitch streams and
we
live
have
flash,
a
wherever
bullish
you are watching us. We will be
engulfing
sending
line
out to all of you guys. This is not a restrictive thing. You do not have to pay for it, but it will bring together a large group of like-minded Forex traders and futures traders that are.
Does that mean we're going to have a big bounce in the U.S. dollar? Who the hell knows? But no, I think we are going to have a nice correction that's going to probably follow through for the next, I would say, half a week to a week.
Information to relay out to you.
And like I said, it's a correction. So that's all that we are looking for right now. It could be the very bottom of the dollar for the next 2 years for all we know. But right now, it is just the start of a. You'll see how bullish this dollar can become, or whether or not we just can get. Who knows? Maybe it's profit taking. You know, you got to realize you got. All these markets are overheated already. I mean, we're just into the first, we're heading into the second trading week of the year. So we'll see how things go. Let's see. With that, I'm just going to remind you real quick once again that if you haven't subscribed to our YouTube channel, to do that, please, and pass it on to your friends, and check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And for those of you that are still listening, Johnny Garb, this is you, and maybe Jericho. If you want to check out this book for free, starting on Wednesday the 13th through the 17th for 5 days, you can get the Kindle version for free to use for a month. So you'll be able to check out the book and read it if you want.
Remember, I told you
it doesn't cost you.
Because of the pound.
That from Forex Trading Unlocked, and we are here with a Forex trading market analysis for January 5th through the 8th, 2021. Before we get into it, real quick, we want to show you our disclaimer. Our disclaimer just wants to remind you that this webinar is for illustrative and educational purposes only.
Because of the pound's
and with that, I want to just remind you to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the patterns available on Amazon.com in paperback and Kindle versions. And just to let you know, from January 13th through the 17th, we will be running a free Kindle promotion on Amazon for the book, so you can get the book for free for a month to check out. All right, with that, let's go to our live action screen. We have the www.forex-trading-unlocked.com website pulled up. We have the workstation page pulled up already. And as you can see, we have the euro to US dollar market pulled up here also as well. There was a bearish engulfing line sell signal that ended the year of 2020. So far, we've been buffering up against these highs, trying to make a breakout and push that signal apart. So far, it has failed. Today, the market has not made as high a move high as it did yesterday. In fact, what we're going to do is pull up another Forex-trading-unlocked.com website page. At the nav bar, we're going to pull up the Forex trading workstation.
An upward trend, corrective trend for sure.
We're going to toggle down to this page.
Strength is coming in with a lot of the other.
As this chart is loading, we're going to make it
it's a mixed bag of goods when it comes to commodities.
See what's going on here. So as you can see, the hourly failed to make a new high yesterday. Had a correction back down to here. There's a little gap from Friday that still is there at the bottom of the range from Friday's close. Now, as you can see, we've been rallying since yesterday afternoon into this morning's session. We had made lows up until a few hours ago when we made a higher move high and a lower move low. Right now, we're trailing right underneath this resistance area, trying to poke through $1.2290 and make a new higher move high on the hourly. Right now, it seems like we are riding this upward sloping trend line here that's been holding the daily chart intact. That's a pretty severe slope, and just by attrition, we're falling through it. Does that mean it's bearish? Absolutely not. We need a failure from this $1.2127 area for that to become the reality. Any trading below there would definitely have us targeting this downside target area. $1.1955 is the ideal target, but somewhere between this $1.2040 down to $1.1872 is the range. Remember, volatility has been pretty extreme. We have back here at the beginning of November, the Euro-US dollar was trading right around $1.16 even. Now it's trading $1.23, or excuse me, $1.2287 as we talk right now. That's a lot higher. That's a big move that's occurred in just the past 2 months. So we'll see what happens, but right now, dollar weakness is definitely coming into play because of the strength in the U.S. dollar. Speaking of strength in the European currency, let's check out what's going on with the British pound. The British pound here, as you can see, had made a higher move high yesterday and settled lower. Is that negative? This thing's been grinding higher for quite some time. I would be very careful trying to fade this bull right now. Brexit is over. We're in the post-Brexit, but the lockdowns are getting pretty severe in the UK as things get more extreme with the coronavirus lockdowns in the UK and the EU. You have to think that it's going to start to be a dredge on their economies. No matter what's going on with Brexit, that's irrelevant. It has to probably weigh on the pound eventually. Does that mean it's starting right now? No. Right now it's positive. So right now the dollar is under pressure. It's under pressure versus most of the currencies today. But the dollar had a big rally yesterday. I think that's because of the U.S. stock market sell-off, the reaction to the beginning of the new year. So, and now we're having a little bit more of a stabilizing of things. Remember, the stock market now has been open for 2 hours. European markets and Asian markets are closed. So now we're going to see what happens with the U.S. equity markets and see if they balance out from yesterday's market reaction. Perhaps we get a very strong
all right, so weekly Treasury bonds
buying
up here. Let's move
pressure that comes in because it's a new year. Maybe not. Maybe expectations right now are still going to be very negative. We'll see. We still have the U.S. elections that are going to be confirmed
This
tomorrow.
is where it settled, making
that has yet to be done, and we know
yesterday.
that there's probably going to be a little chaos in Washington that could disturb the dollar for a while.
We're trading at
And I think that's what you're seeing is that until we have the inauguration now of Biden for the U.S. presidency, I think you're going to see still a little volatility in the dollar.
And so
now, I wouldn't say that him coming into office is going to all of a sudden turn it into a bull, because that's definitely not the case. But we may see at least a little bit of a balancing once we have confirmation of leadership in the United States. With the UK, though, however, the lockdowns are expected to weigh on the pound. But we're waiting for a breakout. This market keeps on banging new highs, so a challenge of $1.3703 has it targeting $1.38 even. Below here, we're looking for a correction, but I would not try and sell into this rally, just like you don't want to catch a falling knife. You don't want to try and get in front of this freight train. All the bears pretty much have been rewarded with losses and not gains over the past few months, so be very cautious. Is this a sell signal here from yesterday? Not really, just because it made a higher move high with a lower close. That's a classical bar charting short-term reversal signal, but as you can see, the market's higher on the day today. Maybe let's take a look at the hourly real quick for the British pound US dollar. Do we have any questions out there? So far we have no questions out there in the audience. Okay, that's good. It's quiet out there in Forex land.
Higher prices.
The hourly here is making higher move highs and higher move lows, grinding from the bottom it made last week, or excuse me, yesterday. Obviously, this didn't have a gap like the euro did on the hourly. It's not trying to fill anything there. But as you can see, even though we've been trading higher since yesterday afternoon, we could be pushing the extreme on this. So there was quite a slide to start off the new year. That doesn't mean that this was could have been just a little balancing going on before we make a run at no highs. Anything can happen. But let's see what happens. That's what we need to do now, is look for a swing trade to develop over the next day or so to give us the true direction. Blasting up to new highs for sure would put us at a very, very big bullish stance, and expect a lot more buying to come in. But potentially right now we have a chance to have a correction right now and at least get a little cleaning out, get back down to say $1.3460 area down here, and then come back and make a run for new highs. So we're not very bearish here. We have no reason to sell it, but just in case, let's kind of come up with a little area for you here. I would say that right here, this one, if we're going to have a break
before the refining process.
$1.3416. This would be your target area right here. We'll see what happens. I'm not bearish. This is not a sell signal here. This, if anything, would become just an area to look for a bounce. And if you look at this here,
transport, no matter what. there's an interest rate for that because
move this in here, and that starts to come right into
they don't pay
this
right
area
away.
and hold up at $1.3416. So this is a good little spot
the delivery
you
or
can
the
expect
holding,
to see maybe
but there's also an interest rate.
a bounce.
Basically, it's finance.
So we're not bearish. Remember, that is definitely not the case here.
And as you pay that,
U.S. dollar Swiss. Let's see what's going on here. Okay, no questions. Okay, we definitely have viewers today. We just don't have any questions yet. Okay,
exchanging
that's
cash
fine.
that
That is totally fine.
So they do it in that fashion. So the cost to carry
This one
variable
real
now
quick.
is going to go up. So any
Sorry
excess
about that. Just
oil,
wanted to check out.
food,
Okay,
sitting
so
anywhere
U.S. dollar
in
Swiss.
tr-
What do we
that
have
is
going
either
on
in
here?
transit or being
Well,
held
I'll tell you what we got
before,
going on here.
delivery
This
date.
is a
The
bear.
cost of
It
that
is a
going
very
up. Now,
bearish,
obviously, if that
very
cost goes
bearish
up,
market
who does
here.
that impact?
So
That
what do we
impacts the
do with that?
consumer.
Well,
So that will hit you at
89.18
the
here.
food
This
price-
is our
at the
pivot.
food
We
counter.
have this downward
If it
sloping
hits you at the
resistance
gas
coming in
pump
here.
trying to get to the
This
food
is keeping the
counter,
trend
it's going to
intact. I think
impact
if
you
we can
refinancing.
get
If
above
you did not
89.18,
refinance
which
your
would be the
homes
series of
over the
highs here,
past,
you can
you
see
had
how
the best
the market was
chances
buffering,
ever
buffering,
up
buffering, and then
until November of last year.
it fell
If you-
apart. So
actually,
this is definitely a
basically,
key
it was when
resistance
COVID hit.
area
You
now.
didn't refinance
If we were
between
to
the
get a
spring and the
rally
fall
above
of
here and it
2020,
gets a nice little
you are
new move
probably
up
not
into these
going to
this
see
area
those
here.
rates again.
We are
The-
by no
the
means
only
getting
thing that
bullish
would
this
change
market. This
things
market
if
is
all
a
of a
major
sudden
bear,
Biden says, you know what,
but
we're
a
gonna
correction at
start
some
pumping
point. I mean,
oil
you can see
again,
it
we're
has
gonna
had them.
open up the
and
pipeline.
it has not really had one for 2
months.
months.
We have to actually
So
think about
I
how
think,
we
like I
make the
said, with the
transition
election
from oil instead of just cutting
issues with the
oil and
United States
destroying
until the
jobs.
20th, which is
That's-
15
we
days
have to-
away.
that smart thing would
Once
be
the
is to
inauguration
transition away
happens,
from oil, which is what
I
we've
think you
been
might
doing
start to see at
slowly.
least short-term
That's why
correction in
oil's
the dollar.
going down in price,
And that would be a
it's
rally to
keeping
sell.
inflation
So
at
just to
bay.
remind you
So
on that
remember,
one,
your
because the
economists,
trend
they always
overall
say
for the
we
U.S.
need to
dollar is going to be
maintain
down
inflation.
most
You know
likely
why
for
you
the
need to
next
maintain
3
inflation?
to 4
Because
years.
that's what the
All right, now let's go and look at the
view of
U.S.
how
dollar
things are supposed to
Japanese
be.
yen and see what's going on. So
You
our
think
first
you
flight
should
to
pay more
quality
for
currency
Apple
that we
every-
looked at
every
was the
year
Swiss.
from moving forward,
That's in
or
the
anything
hole.
that you buy
Now we
just
have the
because
Japanese
time goes
yen,
by?
U.S. dollar
No,
yen.
that's the most
This is in the
ridiculous
hole
concept in
also.
the
So
world,
right
but
now
that's
your
not
flight to
even getting
quality
into
is going
why
into
economists
Swiss.
have that
It's
because
going
more
into the
political
yen.
than anything.
And it's now I wouldn't
So
say
it's
flight
about
to
trying
quality
break
when
the
it
free
comes to
market.
the
So it puts an artificial
Euro,
inflated,
US
forced
dollar, or the pound
inflational
dollar.
strain on the market.
Those are
This
not
is done
flight to
by
quality
design.
currencies.
So as these
But the
things
fact
all add
that
up, so right now we
the
basically
yen
have
and
a
the
war
Swiss
in the
are
market,
also
in the free
pounding
market
new
system
lows.
that is pushing
That's very
and driving
significant. It means that
shortages
all the
and
rest,
also
as
higher
those are
prices.
strong
This is
versus
not
the
a political
dollar, all
view.
the other,
This
well,
is just math of how things
especially
work.
because the
It's
pound and the
dynamics
Swiss
of how markets
aren't
move,
trending in
how
that kind of a
supply chains
direction.
are
So let
interrupted,
alone the
and
yen
how
versus other
currencies are
currencies.
impacted by
This
it.
is a dollar move.
So, as
So what are we looking
talking
for?
right now, we're getting
Only
a
if we get a
nice
rally
rally
above
here in the,
$1.390,
dollar.
$1.4
So,
even here,
talked
we
about a
even
bunch of
start to think
trading
about
signals
having
that
a,
are forming today.
I would say, sideways
Also,
trade develop,
we've
not
got you
a
the link here
true
for
trend. I
tomorrow's,
think you could probably see some consolidation
webinar.
back
Remember,
around
tomorrow,
that
10
level. As you
o'clock.
can
It's
see,
now
we
5
had
to
that
4
going
minutes
on
after
for
10.
the
So
month
this
of
time
November
tomorrow,
for the
24
most part in
hours
here.
from now, we
This
will be
area has
having
now
this,
kind of become resistant, so I think if
All right,
we
we got
get
some questions
pierced
here.
back
How are
into
we
it,
trading on
that
this,
would be
tumble on
about
the
all you can
buy?
expect
Next
from
to
it.
me, so this is one,
Today, obviously, it's getting hammered, and I would not try and fade this move. It made a lower move low today. I mean, it could turn around and bounce. Anything is possible, but I would seriously be very cautious when it comes to trying to catch a falling knife here. Like I said, with the other markets, don't try and fade these trends. Wait for a signal. Do not try and push this. So, U.S. dollar, Japanese yen, we are still bearish. We're looking to sell rallies right now. Lower move lows, lower move highs, keep on happening. That's the trend. All right, Australian dollar, U.S. dollar, same trading area of the world here. Look at this, pounding new highs. So as you can see, the dollar, after having had a nice start to the year yesterday, has since turned around because the dollar bears just will have nothing of it, it seems. So now we're in a very precarious situation where we definitely need to wait for signals. And when it comes to the dollar, you're looking at a sell rally forecast against most currencies in the short run right now. That is the mode. As you can see, our directional pivot here at 77.45 is right around where the market is trading. Or excuse me, 77.52.
What do we have here with the gold? And then we have this little double arrow here. This is our pivot. Above here, we're looking to keep on pressing highs. Below here, not that we're bearish, but this is a very steep trend here. It's most likely we're going to come down and touch this support line somewhere. It could just happen by attrition, by going sideways over the next couple days. But like I said, I think you have to be careful about trying to fade the U.S. dollar right now. So Australian dollar, U.S. dollar, this trend continues to pound the dollar.
The gold and yen.
Interestingly enough, the New Zealand dollar, U.S. dollar is mimicking the same thing. They are pretty much in tandem right now. I don't think that the Australian dollar is as strong as the New Zealand dollar's trend is. This one, just like all of them, a nice correction would be something that is normal and we're expecting to have happen right now, but right now the trend is just so fierce against the dollar. It's tough to sell this one too, so I would say be very cautious trying to sell into this. If you are fighting a very tough battle that has obviously killed people in the, as far as being short for the past 2 months for sure, without having very many opportunities to capitalize on it. So I'm not saying to only buy this market and try and sell it and then sell it, but I just would say be very, very cautious selling into it. Look for your moves, make sure you have a signal, be disciplined. Otherwise, this isn't a buy-break forecast from New Zealand dollar, U.S. dollar. U.S. dollar, Canada. Oops, not Canada. Canada. It is. This market here made a little low yesterday, and as you can see, is back at the bottom of its range here for the body of trading yesterday. So this is significant. The bulk of the trading yesterday is where we have had for today, and now we're leaning on the lower part of it. Could we fall through and hit support again? Absolutely. Are we finding a bottom? Who knows? We don't have a signal right now. What we do know is that after having made a lower move high, we made a lower move low to start the year off, and now we are consolidating and trying to figure out what we're going to do. I would say, once again, wait for a signal. There is no defined market action here to take against this trend, and I certainly wouldn't try and fade it. It's been very strong against the dollar. Until the election is, the U.S. election, excuse me, the U.S. inauguration happens on the 20th, I think we're still going to see this trend into sideways develop over the next week and a half as the change of leadership happens in the United States, and then after that, like it's not going to become a dollar bull. But it wouldn't surprise me to see as these lockdowns continue and the new things going on with the new presidency and the new, we already know what's going to happen as far as presidential mandates. They're going to come down in 15 days. So, and when that happens, it's most likely guaranteed to. I'm not going to put a positive or negative spin on anything because I can't forecast what will or will not occur for sure, but I am positive that we will see a big volatile shakeup in the market. Not necessarily being bearish or bullish, but we will have some very big swings, especially because it's going to hit the currency markets, because the interest rate markets don't have any room to go anywhere right now. So, and we're in the midst of some major bond auctioning going off over the next 3 to 6 months as the national debt, and actually 12 months, because this year the U.S. Treasury has close to $6 trillion in debt coming due that has to be refinanced. So that's besides what has to be just sold off because they need revenue. The U.S. government has $6 trillion that it has to pay this year off on its debt. And we know that's going to come through the issuing of new debt just to roll it over. They're just going to refinance it, which is at these lower rates, which for the taxpayer, I guess, is technically a fundamentally good economic thing. So, but we'll see what happens. U.S. dollar. Now, for all these people that are ready to go on vacation and think that the vaccine's going to change everything, look at the peso. It's stabilized since we've had all this vaccine talk. It's set a range pretty much bobbing around 20 pesos to the dollar. That's not the worst. I mean, considering you could have had a really good deal on pesos a few months ago, getting up to upwards of 25 pesos to the dollar. Now, still a better deal than what it was a year ago when this market actually originally was looking like a totally different thing.
So
I
on
mean,
the
look at
hourly
this.
short term
Let's
here,
go back to, this is
for the next
February of
hours,
a year ago. This market was just below where it was,
I think you're going to
but
have
it looked like it really wanted to tank. It got all the way up to 26 pesos to the dollar, and here we are trading at around 20, just at 1992. So 20 pesos to dollar, pretty stable, not much to look for here. I think you're seeing a basing. We'll see what happens with the once again the new leadership. I think then when you see that happen, that you're going to probably see the peso drop back down to around 17 pesos to the dollar, I would say, by springtime. And definitely as we push at least into March, you'll probably see this peso around 19 to 18.5 pesos to the dollar, as long as, unless dollar strength really starts to come back into the market. So let's go look at the Euro US dollar where we started this webinar. Once again, not a lot going on here. We have the bearish engulfing line sell signal from a couple days ago. We're sitting below the highs. On the hourly, we're coming on 11 o'clock. So we're going to confirm higher move highs already. That's been done on the hourly. The key is we'll continue to pressure resistance. I think the trading is probably done for most of the day. I don't think we're going to see much. It's more likely than not going to settle into a little range trade down to a dollar. This is the pound. Excuse me, wrong one. Euro US dollar, both look pretty much the same right now. Here we go. $22.92 here, excuse me. Somewhere around here, you should probably see it bobbling. I don't think you're going to see much below $1.2280 the rest of today. If you do, then that would have us looking to set newer move lows. You had to take out this area right here. This is the key. We got to take out the low from 2 hours ago. Under $1.2254, we get some selling action going back on, and then we can see, hopefully, that this will turn around and maybe make a run for this $21.27 over the next couple days. With that being said, I want to say thank you very much for watching us today. Don't forget to subscribe to our YouTube channel, Forex Trading Unlocked, and check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And if you can wait until the 13th of January, next Wednesday, for 5 days, we'll be having a free Kindle book promotion, and you can get this book and read it for free off of
where it bottomed right there.
Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a Forex Trading Signals and Analysis webinar for December 28th through the 31st.
Wagging the tail, or is the tail wagging the dog on any given day?
We will be winding it down. There's Monday through Thursday. Remember, it's interesting right now. Especially
the U.S. dollar yen, or Thursday, the yen over the dollar is making new lows.
Ending of the
this one's bounced
year
back.
Closing of the holiday markets all around the world. So definitely, as you hit Thursday afternoon, Thursday
U.S. dollar,
Wednesday evening going into Thursday afternoon.
You're probably going to be hard pressed to get a big
very dry. The computers will be off, and the volumes will probably drop off significantly. So hopefully,
that, and especially all the rest of you. Remember, I think one of you guys, Captain Will, you said you show the
everybody's ready
indicator you use. Well. I just, as you see, I use the markets to figure out my pricing and direction.
This webinar is for
I do show you the indicators that I use, and as you can see, the yen, U.S. dollar yen, is also a good indicator for the dollar. That's why I mentioned the show that I'm on Wednesdays, because the one head guy from TFNN.com, or Tom O'Brien, he has a gold report, so not to give him just a plug today, but I am. And those guys are great, and we talk about these things. That's why he brings me on the show.
So for a live action screen here, we have the Euro
why we
US
have
dollar
this relationship with the yen.
And I think pretty much between $1.2274 and $1.24,
if you want to know what the market, you're going to see like the question Captain Will.
Range trade.
A lot of people ask me, and these are veteran to brand new traders,
ends
say,
also
what is your favorite indicator? What do you use
to their deals for the most
is
part?
Your best way to indicate which way the markets are going?
And are ready for
always say the same
Brexit,
thing.
which is what we'll be talking about next year.
The market and the markets are the best indicators of market direction. It's price action.
All right, we got a new question nuts. In fact, I've been dealing with a lot of people in some of the other stream and webinar sites do on other outlets like TFNN.com and stuff. And we're looking forward to the
Actually, that is not off topic. It's a Forex question.
Brexit will be a thing of the past.
Absolutely.
So we'll be talking about post-Brexit.
So, let me
put up the vertical line here so you can see how
you go to our YouTube channel
into the year.
Forex Trading Unlocked.
This mouse is giving me a little problem.
What
is going on? It's jumping all over.
Okay, this is our screen here for Forex Trading Unlocked.
There we go. So Brexit. So
as
we
down here,
trade
featured channels
today into
the NADEX.
Thursday
we
once
do
again.
work with them.
I don't
The
expect
NADEX is
very
owned
much.
by
If we get above
IG.
122.74,
is
then maybe we can push all the way up to
platforms that
towards
you can use,
124 even.
in the United States.
I don't
to trade,
think you're going to get a lot of follow through on any moves. So
we
this week. However, if we do take out
FX,
$21.29, then I think we will have a good shot.
Forex.com. They are based out of
probably take us down
that's
to
Gain
about
Capital, which is now actually FC Stone.
So
actually
now
took
let's
them
look
over.
at the hourly real quick. So I had an hourly
is,
sell signal.
One of the only character. I don't know if you're in the U.S. or not.
Today.
You can, if you're a U.S. citizen, you can only trade through Forex.com, IG, or Oando. If you're not going to trade with Forex.com,
had a little bit of bounce a couple hours ago, a few hours ago, but now it's coming back.
Futures,
and it's
FCM,
profitable. We're looking for a slide that should get down to about this
IG is a very good platform. I happen to be the ones that own the NADEX, which are binary options.
It's a holiday market.
It's a binary options exchange, and if you are FX traders, and if you do trade
the British pound US
binary
dollar
options
also in a range
globally,
trade.
I highly suggest
a little bit lower on the
that
day,
you
and I think that's kind of where you're getting a little bit of
binary
a
options. You
lift
only
in the
trade
dollars
NADEX
because
options
I
or
think
the CBOE.
for the most part, the
binary
rally,
options
or
because one, they're regulated,
bearish,
and two, you get the real
dollar
pricing
slide
and
that
real
has
deal.
occurred over the past couple of weeks,
spreads
especially
are really
last
bad
week.
with other
I think was
platforms,
due
but
to
IG, as far as Forex pricing and solid
almost
company,
every currency out
absolutely.
there. So that strength in the
Ideal, like I said,
pound,
with the NADEX, which is
since
a
it was
company
stronger
they
than these
own.
other currencies,
So as far
and
as
it was also
FX,
stronger
in fact,
versus
if you
the dollar,
go
that put the dollar
on
under a lot
my
of stress.
YouTube channel, Forex Trading
Now I think
Unlocked,
the pound is
we
getting
have
kind of in
a whole thing here for
pause
NADEX.
mode
So
now
the
that Brexit
playlist.
is declared.
So if you pull up this NADEX, you pull up a full playlist, and you can sort them and see all of the different webinars that I've
so
done
anyhow,
for
for the
NADEX
British pound
exchange,
US dollar
which, like
here,
I said, once again, is owned by IG.
As we
So
head
yeah,
into
I
Brexit,
do.
probably
I do endorse
sideways.
them.
If we get
However,
above
I
that
don't have
$1.3622
a partnership relationship
then I
with them.
think
Like I
new
do
moves highs could take us
Forex.com.
up to about
But as far
$1.3780,
as
maybe
a good
$1.38
competitor and what have you, I have
for
to
an
say,
extreme.
yeah, I endorse
As
them
far
for
as the
sure.
correction
You know,
to the
I would
downside,
say
I
I don't
think
have
that any
anything bad
bearish
to say
action is
about
going to
them.
have a tough time
As
getting
far
below
as
that
Oando,
$1.3190 level.
globally, they're very, very
However,
big.
if we do
I am
fail
not
there,
a fan
then
of them
I would say
because
we'll
of
probably
issues they've
grind
had over
lower,
the past,
or we can
and
see
I'm
a
not
correction
really
back
happy
down
with
to
a lot
that
of
129,
how they treat
even
the customers,
128.5
especially
area.
when the markets are really
This would
flying
take
all
us
over the
into
place.
the middle of
But
January
they are one
towards
of
February
the only
for a
deals
move
in
like
town
this,
if you are
but
a
it wouldn't
U.S.
be such a
citizen.
surprise that now that
Kiki
Brexit
Boo
is
Bear, I
going
don't
to
know
be
if you're
done
outside of the
and
U.S.
post-Brexit as
then
well as
absolutely stick with IG
turnover
or
presence in the
Forex.com.
United
Please
States
do
that
not
we
go
might
with
have at least
any
a
other
short-term
carrier.
correction.
You're
until we
less
have the
likely
inauguration
to get
in the
good
US, which would
latency
put us
for
at,
one.
January
which is a
20th.
big deal. Your
So let's look
spreads
at
will
the
be
US
wider.
dollar.
Don't be fooled by
US dollar.
them giving you better margin deals and better
Swiss.
leverage on your.
So the U.S. dollar Swiss
the different
is
size of positions
also
that
in
you
a
can
kind of a
have.
sideways
So,
grind.
cool. You're welcome, Kiki
However,
Boo Bear.
unlike the other
And,
ones, this
please,
one
if
has
you haven't
gotten a
already,
lot of strength.
subscribe
Now,
to our
the dollar
YouTube
has been
channel and our
getting
Twitch
crushed
channel,
by the
and
Swiss
definitely
over
follow
the
us.
past
Whenever you
6-7
got time
months.
on Forex-trading-unlocked.com.
A short-term correction bringing us
Any
back
questions
up
you
towards
got?
about 90
Just
cents.
spit them out while you're on
Would
the
not
chat
be a
here, and even when we stream, there's times when we
move.
stream out
I kinda
replays
like
of
it. I
videos,
think that, since today
and we check our chat room.
fell just
Sometimes
below
we're around while
these
we're doing work
highs
and it's
here around
playing, and we'll
89.20.
interact with
I
you,
think
and then there's
that
other
if we
times
get
where
through
we'll just
the
read back on
89.20
it, and
area,
we'll bring
we'll
them
take
up
those
in
highs
our
out because
next
we've already tried to
videos or
push
where
through
they
it
are
3
put.
times now,
So
including
let's see.
today.
Any other questions?
That would be
on
enough to give
YouTube
us, I
or
think, enough
Twitch? It doesn't
momentum
look like
to
there's
push up to
nothing
that 90
there.
cent
You guys have
area.
been great so
As
far. We
as any
appreciate
extreme,
this
I think 90.5
interaction
would be
today.
as far as
So
you could go.
that's okay. So
But
we
right
got
now,
a
like I
nice
said,
little
around
lesson
90
here
even
on
would be
the
where I think
gold
we could go.
and
So
the
if we
yen.
get
In
above
fact, for all you
89.20
guys that
and
are
push
watching
new
here
move
today,
highs, then
when we talk
US
tomorrow,
dollar
I'm going to make a
strength
special
should
note
propel
about
probably
that,
up to
about
around that area
doing the
before we
gold
see
yen
some resistance and more
cross trade. This will
sideways
be a
action.
good discussion where
Now
other
remember, it's the end of
traders
the
that are
year.
veteran traders in the
Probably
gold
not
markets
going to
and
see
the commodity
anything
markets,
this week,
and,
but like
even
I
the
said, but
yen.
if we
I
get
think,
above that and can
from the
sustain a
list, there's
trade
definitely
there,
some
that
old
probably
CME,
is indicative
currency
of enough
traders
bullish
that are
strength to keep
gonna
pressing
hopefully
new
be
move highs in the
chiming
short
in
run.
and giving
giving us a little bit of commentary. You might have some jokes.
Overall, this market is a bear, so be very careful trying to buy into this little area here. Keep your stops tight, and believe me, anything below 88.24 is very bearish.
We're all about that here, so
especially with our own buddies from the floor.
All right, so let's see. Let's go and look at what's going on with the euro, U.S. dollar.
We are for the most part. Remember, it is a holiday
today,
week.
It's turnaround Tuesday. It still continues to go on.
Friday,
the U.S. dollar is moving in a nice way. Oh, you know, we never did. We never looked at the dollar index
we've
chart.
seen.
Can you believe that?
So far today is probably going to be what you're
all
going to
right,
see.
So we have
today.
Here February the 15th. This was yesterday's action.
You never know, but the U.S. markets have been open for now almost an hour and a half, and like I said, everyone's on holiday. It's very thin volume, so use caution unless you're in a trade. I would just wait until next week and then
remember that this market has been making higher move highs and higher move lows. It has not taken out this low right here that it made back on January the 22nd.
So anyhow, with this market, let's see. Once
trend
again,
is your friend. Remember, overall, this kind of like dollar is a bear. But I think
another challenge of these highs,
is going to be the game plan. Now, as far as rallying significantly,
pushing this
I would say as long as remember the British pound, U.S. dollar, as long as this raging bull continues,
banging new move lows. Remember, this market is in a bear market right now. It's in a short-term corrective rally.
Of where you're going.
So use caution
if you're long. Let's do a quick lap around the world
because the shorts are probably trying
questions. All right, so we're looking at the pound U.S. dollar.
Once I said, if you do get above this 103.91, confirming new move highs after higher move lows in the short term,
$39.5
why not press this rally up
as your risk level, a couple pips above it,
up to 105
because if the market gets above
heavy
there,
resistance comes in,
and
most likely we
want to
will
try and
start
catch
to
a falling
buckle and
knife.
come
You don't
back
want to try and
gravitate
in front of a one-way freight train
on the upside. So this would be pretty much a key directional pivot, I think.
Wait for a signal. We don't have a valid sell signal yet.
Australian dollar, U.S. dollar.
They don't always work.
Asiatic
if you read the book, High Probable
the Australian dollar
patterns,
bull versus U.S.
which
dollar
I told you about
quite some time.
They don't always work.
A little skittish.
We had a
sell signal. Hesitant to sell into this.
We had a sell signal.
It's a low risk sell against the 76.42 level. But anything above here confirms higher move highs and strength and continuation of a monstrous bull trend. So do not jump in front of a freight train. I would wait for a signal.
Okay, so
but anything below 74.61 does confirm newer move lows for an extended correction.
Typically,
targeting around the 70.
When this came into play, this first one,
right now, this is a very tough call.
The ruling of how
Australian
I
dollar
trade these signals
and use those. Strong bull.
Captain Williams, want to know what's my indicator? My indicator is usually these patterns.
So let's look at the New Zealand dollar.
When these things came in here, this one you were selling it in the hole right off the bat. Never really had much.
New Zealand dollar, U.S. dollar.
This one here, pretty much the same thing
like
the
Australian dollar.
However,
I think if we get a rally above
the rules that are in my
71.72,
book, there are times when you do not
that this market will be.
And one of the reasons is
in
the oil trade. Remember how I've been talking about oil and interest rates? Now, a lot of people are like, why is he always bringing this
the Australian dollar
into the mix? Well, all the experienced
New Zealand
guys
dollar
has
the
like
potential
to
really
interrelated.
Get
when the oil market was rallying like it was, and knowing that on January the 20th,
probably pressing up towards 74
there was going to be executive orders that would already start to mess with the oil industry, because that was the only thing that was promised, and it was delivered. That's where these signals failed. So when this came in front of this, I knew the inauguration was coming.
Fundamental basis
just
out of the whole economics.
And this came in also right after the inauguration.
Aspects
did not
of how they stand. They're kind of
this one came in.
I wouldn't say Switzerland out there, but they're not
right
susceptible
now, to be quite honest
swings
with you,
in the economy like
I don't
Australia
care
is,
what sell signal there is for the British pound and U.S. dollar moving forward.
Well.
As long as oil is going higher,
happens,
the only signal
right now,
I will use for the British pound
if
US
we do
dollar
get
is a buy signal,
break below 70 or 3 here, confirming
waiting
new
for a
lows.
sell-off.
Then I'd say maybe we can press this correction down to 69, down to 68 cents here, somewhere around
So that is the only way I would
U.S.
trade
dollar,
the British
Canada,
pound,
let's see what's going on here.
Being a bear right now, I think you have
U.S. dollar, Canada, a little firm around the day. This one had a nice bounce off these lows, but remember this market's been getting hammered for the past 8 months.
Collapse
use a lot of caution being a buyer here.
If you collapse in oil prices and a change in the posturing of oil,
below here
do not jump in front of
bearish
freight
action
train.
against
You're going
the dollar.
to get chopped up.
I think there's going to be some issues when it comes to
no matter what,
Canada,
downside, but they are going to turn on your face so fast. And I would look for a lot of binary 2021 futures options,
not so much because of what happens to
really
the dollar
to
with
light
other
up.
currencies, but I think just the relationships and trade between U.S. and Canada
on any
are
pound
going
US
to
dollar
cause a lot of stress factors. Probably we could either see the U.S. dollar Canada
6 to 24
explode,
months at least,
back
maybe
to the
even
downside, really
36
pressing
months.
weakness,
You know,
US
I would
dollar
say
versus
until
the Canada,
basically
or
the 2024
if we
election,
can get a trade, especially
you can
above
look
this
to be
$1.29
a
area,
bull
and get
for
back
oil,
towards this
a bear for
$1.32.
interest rates,
That would be
and
enough
a
strength
bull for the
to
pound
show
US dollar.
that we could probably
like I
press
said,
the correction into the
pound
next
is the
6
second
months
biggest
and see
weight
a
in the
nice
dollar
balanced
index.
dollar
So
versus the Canada,
even if the dollar
no
index
matter how it's doing
rises,
versus
it will
the
not
euro.
rise
So
that strong.
the
because of
coronavirus
pound.
trade more
You
and
get a
more is
sell-off
off
in
the table.
You'll see the dollar
I
index
think the
pop like there's
geopolitical and
probably,
economic environment is
you'll
going
be
to
like, now what's going
control
on?
more of the
all of a
action
sudden
going on with the
reaction
dollar
from
and the
that
currencies
weight
over the
on
next few
dollar
months,
index.
especially as
But
we
that
head
remains
into
to be seen.
2021.
So
and
remember,
the first
these things
quarter,
don't always work. If you read
just
the book
because
High
interest
Probable
rate
Japanese
environment
Candlestick
right now
Patterns, we have
is
a
so,
whole discussion on
I
money
wouldn't say
management and
predictable,
how to
but
manage
stable.
these
We know
trades.
that the U.S. 30
And then you
year
would
is
see
pretty
where
much,
if you
even though
pay
it
attention to certain
higher
things like
rates,
that,
higher
that's when you
yields,
just
and press
get off
the
the table.
price lower.
Now where we
It
didn't
is having a little
not
bit of a
follow
rubber
the
band
signals
effect
was
because
in
the
the
short-term
euro
rates
US
can't
dollar,
budge because rates are
where we
so
had
low right now.
this bearish
And
engulfing
let's see
line
where the
back here
euro
at the
US
beginning of
dollar is
January.
right
Do we
now.
care about oil prices when it comes to the euro?
When we started the
Absolutely
video,
not. Do we
it
care
was
about the
trading
U.S. president
just
when
a
it
few
comes to the
pips higher
EU?
than where it was.
Absolutely not.
The
So
hourly
this
sell
is a
signal,
free-flowing
remember,
currency.
crossed the hour.
That's
The 10
why no
o'clock
matter
just
what
opened
oil
up.
does,
So yeah,
the interest
pretty
rate
much just
equation
a few
is
pips
definitely
lower
in
than we
play
first started this
for
webinar.
the euro,
Remember,
without
our
a
first
doubt.
hourly target
And a little
was
bit
hit.
with the pound
We're
too,
not
but the
expecting
oil
to have
outweighs
much
the
more
interest
of
rates when it comes to the
volatility
pound. When it comes
come
to
into
the
the
euro,
market, so I would
oil is not an
really use
issue
caution.
except for the
If
fact
you
that
discuss
rising
a
oil
trade,
prices
remember this is a
screw
webinar
the
for
EU because the EU doesn't have
educational
oil.
information
Now that the
purposes
UK
only.
is no
We're in the
longer
trade,
part of
we're
the
working
EU.
it.
They will get
And odds
zero
are
breaks
that,
on
since
oil,
we're already
discounted
in it
value buys.
for a nice
That's
little
off the
amount
table
here,
now.
I think it's going to be time
Big difference
for
now.
us
Post-Brexit,
to see our stop.
they're allies, but they are now going to be competitors and also
We should
have
probably
edges that
lower
they
it
have to
down to
work on people.
35.
So, that being said, we have the euro back trending
so we've
lower
already
right
made
now.
these hourly here. We
Coming
made
off
this
its higher highs. We'll see how the follow through is tomorrow. I think tomorrow with the oil numbers, that's going to be the big
so we'll see what happens
thing
with
to
this.
watch
if we
out
continue
for.
to go
And
lower and
especially
take
it'll be
out
at
the
this time
first
tomorrow
target
when
level,
we're talking
we
during
have
our
a good
webinar.
chance at taking out this low here,
The
which will
Forex
be our
trading
next
trading
little
strategies
line
live
of
webinar that we'll be
defense.
doing at 10 a.m.
So on
And
the
it'll be for
hourly,
about an hour, from
anything
about 10 to
above
11
or
o'clock
below
tomorrow
there,
that we'll be doing this. So
that
for
will
any of you
have
guys
us
that have time tomorrow,
looking for
please, all you got to do is go to our
YouTube
YouTube channel. We'll be streaming it, or on Twitch.
over there.
If you're not already a subscriber, you can just go to our channels and watch it there. Or if you're a subscriber, you'll get
So
the
this
email link, so you'll have a little
$21.92.
warning every time.
If we take this level out for
and
sure,
then also remember
not
on
only
the
will we have
LinkedIn
a
page, if you
break
follow
even
us
stop,
on
and we're going
LinkedIn
to have
for
it as
Forex
a
Trading
profit
Unlocked, you
stop
can
also.
find out
So
our
we'll
strategies.
have to monitor that as
Excuse
the
me,
course of the
the
day
sign-up
goes.
link for here.
So once again,
It'll
just
give
to
you
remind you, let's
direct
see, we have a
access to it
question
as
here.
well.
Do you do
All right, so
this
now let's go and see
regularly?
what's going on with U.S.
So
dollar
for the-
Swiss real quick.
I do.
Okay, still
I
making
do
higher
do
move
this
highs. Now
regularly.
here's a
If you
nice
go
little
to
thing
our
that's going on here.
YouTube channel,
Positive
Forex
close
Trading
like this
Unlocked. You will
helps
see,
really solidify
besides
this bottom
hopefully you
here.
subscribe to it.
At
You'll
least
see
in
that
the
we
short
put
run.
weekly
It will
videos out
raise
for
this
broad-based
right here,
analysis
this
for the
88.36
Forex
level
currency
to
crosses.
this level right
And then we
here.
also, like,
Okay,
after I'm
and
done
will
with this
be
video, I
key
will be
to
doing
figuring
a
out whether or
special
not
one with
dollar
just the
strength is gonna
hourly
remain or
trade
if it's
being
not gonna
monitored, so
remain.
you can see it
I'm
in real
looking at right
time
now that you're most
as
likely going to
we
see some
adjust
follow through
the
over
prices
the next
instead of
trade.
the stops actually
Trading
now,
days
and
or the
see if we
next
can
two trading days.
hit
Into
that second,
Thursday
target
afternoon.
level.
After
So
that,
if you have any
Friday,
other
I don't know.
questions,
We'll
let
have to
me
see
know.
between now and Friday. A lot's going to
So
happen. We have to
hopefully
wait
that
for unemployment
answered
claims
your
on Friday
question.
as
We
well.
definitely will
This
be
is another
doing more
big
after
thing,
the
too.
first of the year
Okay.
because of the holidays.
Unemployment.
There's probably
I've
not
been a
going to be
bond
much to
trader
talk about,
since I
especially if we
started
fall into
trading
a real
30 years
sleepy
ago.
trade tonight.
Unemployment
tomorrow,
is one of the
if it
biggest
becomes
becomes like a super sideways trade.
When it comes to economic numbers and stuff like that,
it is what it is. There's nothing to talk about.
I look at them, but I don't give them as much credence as I do as far as I always say, well, if it affects the bonds, then it will affect the currencies. If it doesn't impact the bonds, it's not going to do anything to the currencies.
Subjective while things are going
Tomorrow,
on.
Thursday's unemployment claim number is huge. Now here's the thing: it's going higher. It's going
higher.
Here we
got the market
just
ticking a little lower, a few more pips lower since we started this webinar.
Ironically, what is going to happen with the Treasury bonds if unemployment claims go higher? You're probably going to see the Treasury bonds trading down around $100. If they're trading now at 164.14, in fact, we can go and look at that.
They're actually at 164.09 right now. So the U.S. Treasury bonds now are at 164.09. That's where they're now trading. They will most likely be trading, and I'm going to put this down on a weekly basis. So look at this. See this high right here? This is big. I told everyone 167 down to 168 is the key threshold. Trading below that really has this interest rate on edge. This is a multi-month, multi-year low now. Okay, this is a big deal. This is a big, huge thing as far as what's going to go on with the treasury markets and currencies. A higher unemployment rate on Thursday, higher unemployment claims will probably have us trading down to, I would say, around.
And if you go to that, you can see as you scan down the page, we have our uploads, which shows you our most recent loads and ones that we've done like last week and now this week. And then we have our playlist. If you go down a little lower, and if you go to today's lessons, that will be updated later on today.
So this would be a very good area around 161.30, 162 to see.
And then
the
we have
market
other ones
back
like
down
trading lessons.
This would be probably we're going to start to see a little bit of basing, kind of like what you have here, and spiking around. But overall, this trend is now going lower. We spiked high back in March
some other things which you can
of
check out on that.
2020.
Do you have any other questions?
This high right here,
we will be
that's
having
probably
the
it.
Euro
Most
US
likely
dollar
that's
trade
done. Remember how I said if you didn't refinance between the spring and fall of 2020, this here in August, when they were talking about record low interest rates, never been that low before. The Treasury bonds at that point were $183. Now they're at $164.
The videos,
it's a $20 move in the bond market, folks. That's huge. A $20 move in the bond market, that is a monstrous trend directional move.
Great.
The high is in. It's over. Hate to tell you, folks, we may see a rally over the next year or so.
The euro or
if
whatever,
the buying that the Fed has to come in and do, that'll get it back up to this 176, maybe 180 area, which I'm hoping it really does, because I'm looking for the real long-term short. Like I've already been short, and I've been nibbling around on this thing. I'm looking for one last rally to the upside to sell into, and then I'm short for the next 3 to 4 years.
After the first of the year, we'll have some really interesting webinars coming up that I think you'll like. We're going to have a couple educational webinars, which I will post on Twitch and YouTube as well.
Also, US dollar JPY. You know what else is going to happen? You're probably going to see
you just
this also continue to rally to the upside.
Well, that's good. The main thing I can definitely tell you, which is the smartest thing to do if you just started trading Forex or studying Forex, is your time for one.
Especially as interest rates collapse.
Best lessons I learned from one of my mentors and early traders that I worked for when I was a kid on the trading floor was that the markets will always be here. The question is, will you? So you want to always have a plan, stick to it, don't get emotional, and remember that the market's not here to beat you.
If the yen is going down
you're here
against
to
the dollar
use it as an
and the Swiss is
opportunity,
going against the dollar, that means there's flight to quality in what? The U.S. dollar. As much as there's dollar bears out there and everyone's bearish to dollar, that's the biggest thing.
It is definitely in a bullish posture. Like right now, we have the sell signal on the hourly. I would use caution at these levels right now.
US dollar. Once again, we'll take a look at this one.
It's had a
potential
very
bearish
strong
engulfing
run.
line sell signal forming.
We have a lot of things that are going to happen next week after the first of the year. Remember, we have balancing like all the books are closed for all the traders, all the funds and stuff like that. So come next week, it's going to get very volatile. So expect some swings. So whether you're long or short, I would just let you know a size that's proportionate to your capital.
Maybe talking about the rupee tomorrow.
If you have a very small account size, I hope you're trading the minis or micros and not trading the full contracts, because you're going to take some probably some very volatile swings, just because the euro US dollar just in the month of November into December had more of a range than it did for almost a year and a half before 2020, and not to mention the range it's had in 2020.
New Zealand dollar, US dollar still quiet on the day.
Just get ready for it.
Trade. We'll have something to talk about, I'm sure, tomorrow. But right now, who knows? Nothing really to look at it right now. know, it's quiet. Gotta wait for a signal. U.S. dollar peso still up on its highs. We'll be talking That's great. about this one tomorrow. If you and, have what the strategies spring breakers that have to you look forward to are as far as confident a in, cost reduction, then my best suggestion to you cheaper is for just them be to go out disciplined and about pay sticking for to them. t-shirts and beer. Remember the strategy and for that U.S. you dollar are Canada,
looking at,
remember
and
we
if
do
you
have
like
the
it,
oil trade that's on the table, so it's
then
going to be hard.
there's a
Look at
reason
this
why
as
you
anything more
have
than a
faith in
short-term
it, whether
buy
you
signal
tested it
should
first or
happen.
whatever, or watched
If it closes where it's
just
at
remember
right
that
now,
when
that
you
would
apply
confirm a
it
bullish
to
engulfing line buy
maintain your
signal.
discipline and
And
stick to the
here's the key.
strategy. Don't try and reinvent
buy
it.
signal
Don't
like
try and
this
alter it. Just
would be
follow it.
We made this
So,
higher.
and,
We made a lower move
my,
low after a.
Best
we made this
advice
lower
I
move
could
low
also
here
say
back
is
to
that
the
make
end
sure
of
that
January.
whatever
We
broker
made
you
this
have,
lower
that
move
you're
high
with a
at the end
viable
of January after a
broker,
week
so
and a
that you're
half.
getting
And then
good
today
clearing, that
we
you're
made this low
besides
higher
your
move
connectivity,
low. Well,
hopefully
a
being
higher
solid,
move
that
low
you're getting
after
good
a
pricing.
higher
So
move high
especially
is
with a
indicative
tight spread,
of
because
what? A
all
neutralizing
reliable
of the trend.
and
So short
honest
term on the
brokers now,
hourly
the spreads are
and
very,
into
very
the
tight.
daily, we are
So,
looking for a
and,
corrective
good
move
luck,
to
and
the
hopefully you
upside.
subscribe
Remember,
to our
we are
YouTube
bearish to
channel and
US
follow
dollar,
our
Canadian
stuff,
dollar.
and
But
learn
when
some
you have
stuff
an
to help you out as
ABC
you grow in your
correction
trading
now,
career.
looking for a D wave
So,
up,
and,
with the buy
definitely our
signal
videos
like
we'll
that,
have
with a
coming up
higher
for,
move low after
like I said
a
earlier, was
lower
in
move
January
high.
that we are planning some
These things
nice
together
instructional
all spell
videos for the different
short-term
Forex
buy.
markets. Like we're going to show you
Is it
how,
going to be,
I don't know
for
what
the
kind of
next
indicators or system
month?
you're using right
I
now,
don't know about
but
that,
one of the
but
best
I would
ways
say let's
to
look at the next few sessions
gauge
going
a
into
market
Thursday
and
and Friday's
strength.
trade.
Like for instance,
for that to
let's see,
happen.
for Snow Fizzy, I don't know
And
if you're still
also,
there, but if you
let's
are,
look
do a
at,
little
remember we
breakdown.
have
I'll give you
the
guys a little quick lesson if you like.
USD, since
So
we're
let's
talking about that.
go to Forex
Oh, look at this. Gold came back already since the
trading-unlock.com.
yen is
There's a
hanging on
great
its new
way.
move
I always
highs.
said the
Gold is
best
slipping.
indicator for any
We'll be
market
talking about this
is the
gold
market.
US
So
dollar
the
trade
reason
also
why is that
tomorrow
the market
during
is
our
always
video,
in real
during our
time.
live
So let's go
freestyle
over
event.
here. We go
And
down
let's
to
see, who
NAB
knows,
buyer
maybe
markets
if the
to
yen
Forex.
continues to make new
When we pull
highs
up
tomorrow,
this
then we should
page,
see
we
gold
can
back
toggle
around
down
the
and it has all these
1784 level.
currency
Don't you think,
crosses
guys?
grouped
That'll be
in a
interesting to
row.
talk about. So we have
the
this
euro.
video to
We
refer
got our
back
buddy
to.
here, Snow Fizzy. Okay, we're gonna
to see
check
what we
this
were
out.
talking
So
about
you're
today,
long
so
the
we can
euro
see if we
US
were right or
dollars.
wrong
If you want to
tomorrow.
know whether
It'll be very
the
interesting
euro
to
really
see.
has
All right,
strength,
so
I'm
back
assuming
to the
euro US dollar is
dollar
probably
for
the
one
only
last
currency
look,
you
and
look
then we're
at.
gonna call it a
But
day.
the euro
Since we don't have
has a
any more
cross
questions from
versus
you
other
guys, I wanna
currencies,
thank
just
you
like
very
the
much
dollar
for your
does.
participating.
So let's take a look at the
Remember,
euro New Zealand dollar real
anytime
quick.
you want to
And I'll
get
show you what I
information,
mean
go
by
to
using the indicator, the markets as an
forex-trading-unlock.com.
indicator,
Also,
and
remember
also
to
in real
check
time.
out our Forex
All right,
trading
so
strategies live
Euro New
tomorrow at
Zealand
10 a.m.
dollar
Central
here.
Standard Time.
It's pulling up this
Wednesday,
chart.
February the 17th. You have the link on
Okay.
The
Here we
chat
go.
boxes
As you can
here
see,
and,
the
Twitch,
Euro New
also
Zealand
on
dollar
YouTube.
has been trending
Please sign
higher
up and
since
check it
the
out.
end of
Tomorrow
November,
will be a
making
very
it
interesting,
had this
fun event,
lower move
and
high,
we'll,
higher
have
move
a lot
low.
more
Now
Forex
it's made a
stuff to
higher
talk to
move
you guys
high,
about.
higher move
So
low, and look,
that
it's got a
being
nice
said,
rally
just wanna
going on
remind
right
you
now.
really quick, once
So
again, if you
euro
haven't
strength
read the
right
book,
now,
High Probable
it's showing
Japanese
strength
Candlestick
versus
Patterns,
the New
check it
Zealand
out. It's
dollar.
available
Remember,
on
New Zealand dollar
Amazon.com.
is showing
In
strength
Kindle
versus the
and
US
paperback
dollar.
versions,
So
if you're
that's
an
where
Amazon
you
Prime
would see
reader, you can
pressure
read it at your
on
leisure.
the dollar versus
High
the euro.
Probable
So being
Japanese
long the
Candlestick
euro
Patterns,
right
learn how
now,
to apply
right there,
these,
there's one market
patterns
that's
that work
reinforcing
in
your
all
long.
markets, Forex, stock,
Let's look at the
equity,
Euro
and,
Canada.
options.
So let's see if you're
And
if you're
futures
gonna
markets, binary
just if you
option
don't
markets,
if you haven't caught
ETFs,
on to
you
what
name
I'm
it, these
showing
signals
you
work.
already,
They even
I
work
think
for
you will
Bitcoin,
as we get
folks.
through this one
And
and
we
the
may
next
even
one.
talk about Bitcoin
So remember,
tomorrow as
you're
well.
long the euro
We didn't wanna do
US
that
dollar,
today
and you want to
because
know
it's
if there's
just,
a reason to
we
have
just
strength in
wanna
there.
get to it.
Well, here's the euro
So,
Canada.
thank you
Look
very
at
much
this.
once
It's been
again. I'm
rallying
Teddy
since
Texted
even
from
before
Forex
New
Trading
Zealand is
Unlocked,
earlier in
and we will
November and
see you
continued to rally, making higher move
Hello
highs
everyone,
and
this is
higher
Teddy
move
Texted, and
lows.
welcome to
Look
Forex
at the rally that
Trading,
it's having today. It's
Forex
coming off of a
market
higher
analysis
move
for the
low,
week
very
of
strong,
February 15th
showing
lots of bullish momentum for the euro versus the Canada.
Just to remind
What's the Canada doing? Well, right now the U.S. dollar has actually been kind of strong versus the Canada, but only over the past like week and a half. Otherwise, it's been buried by it over the longer term, just like this one is going
and
the
also
other
check
way.
out the
So
book High
Euro
Probable
Canada
Japanese
strong.
Candlestick Patterns
That means
available on
euro
Amazon.com.
strong over the
Paperback
dollar,
and
meaning
Kindle
being
versions.
bullish is good.
All right,
Okay,
now we have,
so that supports your your position right now. Now remember, we have a short-term hourly signal going on. It's not a long-term signal. That's why we have it only on that. So now Euro Australian dollar. So if you're still with me here,
dollar
Snow Flizzy,
index
let's see what's going on here.
Okay, so we have
So the
last
Euro
week where the
Australian
market kinda
dollar
settled,
also
the broad-based
is showing
FX
strength.
markets
Now
were
this
settled
one,
kinda neutral
unlike the New
after
Zealand dollar, look at
yesterday's
this was
trading, but
totally
first two
getting
definitely
crushed.
unloaded.
But this is a big buy sign right here, especially on the daily. If you read my book, High Probable Japanese Candlestick Patterns, which is available on Amazon.com and Kindle and paperback versions, this right here is a bullish engulfing line.
Target zones, some of them hit their extreme target 2s, and some of them just pierced into the target 1.
Let's say that the Euro Australian dollar was to settle today like this. That would be a very bullish indication in the short run for the Euro. It would probably get another
the short term, obviously,
probably one more day to 2 more days of upside momentum.
Bearish.
Okay, so that reinforces your Euro US dollar position once again, because the dollar is weak versus the Australian dollar.
Right here.
Now we have the Euro Swiss. This is a tough one because of Brexit. The Swiss is very neutral. The Brexit thing doesn't really impact them very much. But look at this. Euro Swiss. Euro has had a lot of strength versus the Swiss. What does the dollar now have versus the Swiss? It doesn't have any strength. It's been getting crushed versus the Swiss. So that is a good thing.
You have to remember, U.S. markets are closed. European markets will be closing soon.
Okay, so you think you're still with me, hanging in here, so no more questions. Hopefully this is sinking in here, and it's definitely one of the easiest ways to double check your position, or either while you're in it and see if it's still strong, or excuse me, before you get into it to see if it's a viable thing. Euro Japanese yen. This is another one. Look at how strong the euro is versus the yen. We know that the dollar is in a bear market versus the Japanese yen. This is huge for the euro yen, or excuse me, for the euro US dollar. The more the dollar gets crushed by the yen, and the stronger the euro is over the yen, the more that gives strength to the euro over the US dollar. You can always look at it as like a triangle where the momentum of two dictates where the other one's going to go versus both of them, because you can see it. So the one, we know where it's at. So since we know that the euro is up versus the yen, and the yen is up versus the dollar, that the dollar that most likely will put a cap typically running weaker to the euro. So our short-term hourly sell signal here, remember, when we have it on the day, the euro is up. See what I'm saying? So our signal right now is after the momentum, it's already shot through it today. That's why it's doing what it's doing. So, and now let's see. Oh yeah, we already went through all those cross rates.
It's starting to sag. So here's the thing:
nice little lesson for you, Flizzy. You can definitely go, since you subscribe to our YouTube channel. Once we're done with this stream, which we're going to end in a couple minutes, and then turn on the hourly signal for you to watch. Remember, this is the daily here. Making higher move highs, higher move lows. We're looking for this to take out this 122.74 and rally. So that reinforces your position. However, it's a holiday market, so be careful. It may take a couple days to ride through that. Anything below $1.21.29 though, very bearish. I hope you're not long there, at least in the short run. And this has a like I said, the first tower, we don't even hit the hourly on this one, we got it on the other one. So on the hourly, we hit our first target, so this trade may be over, and no matter what, if we get stopped out of the second one, we're going to be a winner on the day for the two. And if it breaks down to here, well then that would be, we'll get obviously hit 2 bangs for our buck and probably be done for the week. We're not expecting much to go over the next, much trending over the next couple days. And once again, if the Euro bull is here, our short here is not going to last for very much longer. It'll last into today and then round back up and start rallying. So I think you don't have any more questions for you guys, so I want to thank you guys very much. And once again,
that is why you're seeing the euro kind of weak against the dollar
stuff
as well.
Remember to go to our Forex Trading Unlocked YouTube channel, check out our older videos.
So this is showing you how much strength there is in the British pound.
And also read the book, High Probable Japanese
So I think this is one of the, since it's the second biggest weight in the dollar index, it's going to make the dollar index
also go to Forex-Trading-Unlocked.com
this is trending so
for all your Forex needs and information. And
as far as long-term projections, how far can this go? Well,
in the future,
anyone's guess is
thanks for subscribing to our YouTube channel. We appreciate
have a lot of issues with lockdowns and things like that. So
help you with your trading.
For the most part, this is commodity driven.
Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Monday, December 21st, 2020 with the pound dollar weekly market analysis
before you'll see it with
and before we get into it, we just want to
the pound is going to be
probably a very choppy
this webinar is
for illustrative and educational purposes.
You might start to see
only.
moves like this, where we'll see a
With
harsh
that,
sell-off,
pull
and
up
then get
our
like choppy
quick
like
plug
this.
to remind
and
you
then
to subscribe to our
most likely
YouTube
not
channel,
continue
Forex
to
Trading
trend
Unlocked,
higher,
and
but
also check
develop
out the
a
book High
very
Probable
wide
Japanese
range trade, which
Candlestick
would be
Patterns,
indicative of
available on
pound strength versus other
Amazon.com
currencies,
in
meaning
paperback
that if the
and
pound
Kindle
is strong
version.
versus
The
the
euro
euro,
will
the
be
Swiss,
running
and
a
other currencies,
post-holiday,
not so much against the
little
dollar. You'll
event
have
for a
sell-offs
week where you can download it for free if you're an
when the
Amazon
other
Prime
currencies gain a
member,
little
check it
strength.
out.
You'll see
All
a
right,
nice pound,
with that being
US
said, we
dollar
have the
sell-off,
Forex-trading-unlocked.com website
on those other
up,
currencies. That's
and
where
we're
you
going to
probably have to
scoop
look
down.
for
We're on the
bottom,
workstation page.
with the pound US dollar.
We have the
meaning
euro
that we will still
US dollar
probably
chart
continue
already
higher
pulled
move
up. Real
highs and
quick,
higher
let's look at
move
the
lows,
hourly.
which is
As you
indicative
can
of
see, the
what
market
a
gapped
bullish
to the
trend.
downside
Careful trying to
and
fade this.
hit support
Now let's
pretty
look at
hard.
the
It
US
got all the way
dollar
down
Swiss.
to $1.2129
Last
before
week, except
finding
for
support
Monday,
and
there was
bouncing.
really
And
not
as you can
much,
see
or
now,
excuse me,
it's
Tuesday,
pretty
there
much
wasn't
only
that much
slightly
of a
lower on the
trade
day
that
for this,
hammered this market. We
the
did have a sell
range
signal
that's
here,
had so far since it opened
short-term
last
one.
night. And it is hovering just below this
hit
key
its target,
support level
actually.
on the hourly. We had a
So
sell signal that was triggered last week,
at
back up
88.90.
here,
This is
and
maybe
it
key
was a
support.
nice little trade that followed through
I
today,
wouldn't
and now
expect
it's
much
done.
today
We're waiting for the
because,
next
like I said,
signal.
because of
So
the
right now we
holiday,
have the market
if
in
it
an
falls
hourly
below here, then
upswing
your
over the
target
past
will
few
be
hours.
this
However,
level
it is
here.
only a
This will be
corrective
a key
move. As you
low.
can see,
Most
this market
likely
spiked
because
lower
you're
with
gonna
a
have
nice
basing
gap here,
because of the
and
amount of
also
trading
if
that's
you
happening
look at
in
it,
this
as far as
area
we
right
came
here.
off this higher move
So,
high, we
across
may have
here,
tagged
I
a
think
higher
around
move low
88.32
already
to
today
38
and
is
set
still
the bottom
support
for the
band.
week. We're
You're gonna
coming
find a lot
right
of
into
support.
this
So maybe
upward
we still
sloping
dip down
support
to
line.
there. So this
It's a
might be
pretty
good
steep
place to
slope,
look
but it's
for a
not
buying
that
area.
vertical,
It
and
does look
especially
like
over the
the
next
US
couple
dollar
days
Swiss
as we
is
head into
starting
the
to set
holiday
a
and
base.
Brexit. Remember, that is coming up
The
on the
overall trend
31st.
is
So we have
bear,
this little
so use
timeline where
caution,
you can expect it
but
to pretty
we
much
had
go
signals
sideways,
giving
but
the
we're going to key
dollar
off
some
this
strength.
$1.2180
I think that you'll
pivot
start
right
to
here
see,
for upside and
at
downward
least with
direction.
some nice little swings
A
that we
failure
have
from
when
a
it sells off and
$1.2060.
dollar weakness comes
This
into
would be
play.
the significant
Be
level
very
one
careful
because
to
it
keep
would
your
be making
stops
a lower
tight on
move
your
low,
longs, and,
which would take us off
definitely be
the
careful with your
short-term
shorts 'cause this
bullish
can grind
forecast,
higher.
even
So
though
we'll see how
long-term
this
and
works.
medium
Right
term
now
we
we
are
don't
definitely
have a
bullish.
signal. We hit our
We're looking
downside
for a
target
short-term
last week.
correction.
It's a holiday
We may
market
have
right
already
now. We're
seen
gonna
it
have to
over
really
between
gauge
yesterday,
things
between
more
Friday's
tomorrow.
trade going
Right
into
now, or if we get
the early
some
morning
decent
trade.
trade that develops,
Especially if you look
US
at the
market's
symmetry
open
from this
in
high to
6
this
more
low.
minutes.
It matches this
Okay,
last swing
so
high
let's
to this
cruise
last
on
low
over
pretty much.
to
So we're going to watch and key off to the
Japan.
movement from today.
Now,
I think
yen,
that most of today's
their
trading
markets were open
is
today,
pretty
obviously.
much
You
done
can see, look
for
at
the
this,
day
US
as far
dollar
as
got a pop
where you're going to
against
see a
the
lot of
yen.
volume. The
This
European
is,
markets are
I
closed
would
now.
say
It's just the
probably
U.S.
because
markets that
we
are
have a
open
good
for the
inverse
remainder of the
relationship
trading session. On the
um,
hourly, we
mm,
do have a little gap
that
to fill up
while,
here. But right
say, the
now,
pound
I
and the
think
euro
for the
could be
most
strong
part, you're
against
probably
the
much
dollar,
done
and
for the
even the
day.
Australian
So these are the
dollar, New
levels that we're
Zealand
keying
dollar
off of. Any
doesn't
breach
necessarily
of the
mean that the
high
yen
up
will be,
here that was set last
especially
week
with the
will
rising
keep
price
this
of
bullish
oil.
momentum
So
building
remember when I
as this
said we have
market
a
tries to break
commodity-driven
through the
trade on the
$1.23 area and push
well,
up towards a
now that we will no longer
$1.24.
be exporting
The
oil
overall
anymore
trend
in
is
the US,
definitely bullish.
That's also a big
right
deal
now
for Japan
because of the
it
hourly,
limits
the
their
sell
ability
signal that
to
was
get
already
supply
come to
from yet
fruition.
another
We
global
may have seen
carrier
the extent of
and
that
producer,
correction. So right now we're
which
waiting for
puts
either
also
another
geopolitical
trade setup
tensions
on the
more,
hourly, which we do not
on the
have
stage for them,
currently.
because
The one thing
we
about
have
the
very
hourly
good
is we made
dynamics between Japan and the
successive
United
lower
States,
move
have
lows and lower
for
move
many
highs.
decades,
So this
and
key
even over
support
the
area at
past recent 10,
$1.2225
15
is key. If you're in
years,
aggressive bear,
because
this is
of the
probably
fact
where you
that
want to sell
the
against right now.
administration has
Let's
now
take a look
cutting
at
off oil
the British pound
exports
US dollar, which is
and,
also coming
production
into the
in the US.
Brexit
This
deadline.
will put a
this
strain on
right
Japan
there.
because obviously
Now
they're an
here's
island, they
a
don't have
interesting
oil.
thing is
And, as
we
much
had a
as they
dark
have been
cloud
going,
cover sell
in
signal that
towards
had
the green
occurred on
stuff,
Friday
if
with the sell signal going right into the close. Boy, did that happen fast. Not only did we blow into our downside target area for the hourly trade and the short-term daily trade, it penetrated the extended downside target area already. You can see that the low came in here at around $1.3186, and we had that area as $1.3262 down to $1.3039 in this area here. This dynamics of it just don't work right have now. Me believing that most likely, even though this isn't a bull trend in the intermediate and long term, short term, obviously because of the daily signal and the hourly movement, it's in a short term corrective bear pattern. This last swing low here at $1.3148 is propping up the market. That's also right by our $1.3262 downside target, extended target. So if the market can maintain the low that it planted today and trade sideways into Brexit, it will be a neutral to higher trade, most likely setting up for the rest of the year. We blew through our targets, so there's nothing left in this trade left, unless you want to really penetrate down towards this $1.30, $39, which it may still do. But however, on the daily, we've had quite a move. And I would say if you got in on this signal like we did, take the money and run. You've already hit this. We already had our downside target pegged in one here and also here at $1.3262. So we're out of this one. We're waiting to see what happens. Remember, it's a holiday week this week and next week. You have shortened trading sessions, shortened trading days. Volume's going to thin out. We're end of the quarter, end of the year. You have a lot of people that are taking off, a lot of traders. There's only going to be the algos trading for the most part, and a lot of people who are just bored, and that doesn't make for a good trading environment. So we've hit our downside targets here, so we're just going to have to wait for a signal now with the pound. We may be done for the week already. It's Monday, but when the holiday ends on a week on a Friday, you know, you have a Thursday, Friday holiday coming into it. Everyone's going to be done by Wednesday, so which is pretty means that Thursday. Tomorrow is actually Thursday as far as most traders are concerned. U.S. dollar Swiss got a nice little bounce today after it's been battering the dollar. But even that one is falling back again today. Right now, this thing is a bear. There's no even reason to even start to begin to try and catch a falling knife. Wait for a valid buy signal. The only thing that this market kind of has going for it is the fact that it took out this high right here today. So it made a lower move low, and it made a higher move high on the daily basis. Does that mean that we're bullish? Absolutely not. Could we be setting up for a little pause? Yeah, that's very possible. So key off the low from last Thursday around 88.21. Between there and 89.11, expect a sideways chop. Brexit doesn't really interfere too much with the Swiss. This is just a matter of balancing. I think you're more likely to see this market go sideways than to see a rally. This downward sloping resistance here that's holding the trend in place probably will continue to do so. U.S. dollar Japanese yen fell out of bed the other day, just like the dollar did with most other currencies. As you can see, Friday it stabilized, and today, which had a nice little bounce too, and it's pretty much unchanged on the day. This is the one currency where I think you're going to probably see the trend, no matter what, remaining to be weaker, meaning that the yen is going to be stronger versus the dollar. If you look at the velocity of money, especially with the velocity of how it's been printed between the EU, most other nations, and the United States, Japan saw negative interest rates and already gone through all this stuff in the 90s. They have rebounded to some degree and have, gone sideways for the most part for decades. Their market is strong. It is resilient, and there's not much more that they can do. We know that as far as the yen policy, they're going to keep it pretty much the way it's been. They also are not propping up the debt markets. That's when you might start to see some squeezing and printing of money. So that in itself, you see, especially with the euro, the pound, and the dollar, their value has decreased at a much higher rate over the past few years, and especially this year, than the yen has. So that's where I think you're going to see a lot of strength remain in the yen over the overall trend. Back to the euro, but right now we're looking for a short-term signal to either the downside or the upside, and there's nothing really happening here. It's holiday markets. I think that the yen's going to drift and be choppy, as you can see today's indecisive trade. There's really not much to be left on the table for now. We wait until this afternoon or this evening in the U.S. when the Asian markets come back online, and then I see a move back at that time. Right now, we have a short-term low that's in place. It's a lower move swing low, so we're looking for a lower swing high that somehow will come in around this 103.93, which it fell just short of today already. This may be it for as far as a correction. But if you look at the downward sloping resistance line here, we could get up to about a 104.27. I doubt 104.60 is going to happen. Should we get to above 104.60, that would take us off of the totally be short. Well, short run, it would have us in a bullish to neutral stance. Still intermediate and long term, we're a bear this market, but as we head into the end of the year, fourth quarter, you might see a little correction in dollar strength come into the market. So there's a lot of things that are going on globally, and there's, as you have the balancing for year end, you may see a spike and all of a sudden dollar buying, and it will be more for liquidation than anything else. Now we have the Australian dollar, US dollar that took out this swing low. This was a key pivot area at 75.08. It bounced up through that, took out the upward sloping support that was holding up this trend, and now look at where it is. It's only slightly lower on the day, but there's a big gap between the close from Friday and this morning when they opened up, or Sunday night rather. We've had a lot of volatility also. Since Thursday, look at how the market has come back from 76.37 all the way down to 74.63. That's a big move considering there really isn't any major news going on in the currency environment and the financial environment. As we head into the holidays, I'd expect more swings like this.
The only thing I think you have to watch about
this is a bull. I mean, even though it took out this swing low here, overall, it's just coming off a major swing high. I would say you're more likely in a neutral to bullish posture still, no matter what. Short run on the hourly basis, maybe you're going to be in on an hourly basis, you're still in a bearish trend. But I'd be very cautious being a bear at these levels, especially any violation of this high, or any violation of this low from here, from today. That would be huge and confirming a negative bias in the short run. The high from last Thursday, I think around 76.39, though, is your real key for direction. Only if we get above that, would that confirm strength.
Now we have the New Zealand dollar,
as we head into the end of the year and head into 2021. Can you believe that?
I would key
New Zealand dollar, US dollar is acting pretty much the same as the Australian dollar. I would key off of the low set today, as well as the high that was set last Thursday. Any breach of 71.71 would have us on the rally track for sure. Once again, the momentum to the upside is very extreme. I think that over the next couple days and in the next 2 weeks, you're probably going to see more sideways chop than anything else. But use caution. If we take out the low from today, that is significant. That would mean that we will come off of a higher move high, made a higher move low, then a lower move high, and then a lower move low, meaning that we would target the 69.47 down to 68.77 area. Don't have any questions on the chat on Twitch or on YouTube right now, so we'll continue to go through our analysis here. So we have
Monday's trading is over. Let's go to the US dollar. Mexican peso, because for all of you thinking about your
we'll go now to the US dollar
cost and what have you. The nice thing is that
so the US dollar, Canadian dollar
from Mexico yet.
This is another market that has been just hammering the US dollar. Why is this not?
Hopefully you didn't try and buy the peso then, because you get it basically almost a whole peso higher.
US dollar, Canadian dollar.
So
okay,
we'll see what's going to happen with this
okay,
one.
so
Short-term correction.
This market had breached this downward sloping resistance nicely today. It kind of was looking to try and set a bottom last week in front of some of these other currencies, and has had some nice upside momentum. You can see that it had already pegged our $29.53 first upside target level. We were looking for this to maybe get touched over the next week and a half to 2 weeks. We didn't even remotely think that it would explode to the upside for a Monday trade. I would be, like I said, use caution as we head into these holiday trading hours for the next 2 weeks. These sessions will be rough. They will be thin in volume, and I would expect some erratic moves, mostly generated by the algos. So pick your points wisely. Right now, we have the US dollar Canada in a short-term bullish correction. We may have hit the top today already. These are the key levels: $1.29.53, $1.30.34, and $1.31.75. You would have to get above the $1.31.75 up in this area to really confirm any real big bottoming issue with the US dollar Canada. And right now, with the war on the dollar, I think we're more in just an upside correction, year-end little spike where you're going to probably see a little head fake, like I said, with strength as we end and wind out our holiday season in our 2020. Let's look at the US dollar Mexican peso real quick. We had a request for that one because there's always people thinking and talking about going to Mexico. Interestingly enough, we bottomed here in the beginning of December, and we had made a
This one's trying to base. Boy, is it
lower move low, higher move low, higher move, or excuse me, lower move, or higher move high after a lower move low. Then we made a higher move low, and today we made a higher move high. This is very bearish now, I would say. Interim, as we head into the final part of this year, the next 2 weeks, expect a violent, sloppy, choppy trade somewhere between this 1974 pesos and 20.25 pesos for the dollar. I don't think you're going to see a big rally. I don't think you're going to see a severe slide either. I would say most likely you're going to see this just pretty much stabilize, especially because you're starting to see a lot of bookings for travel to Mexico, which means you're probably seeing a lot of people that are starting to buy pesos and sell dollars. So as they get ready for their trips. And now let's go back to the Euro US dollar real quick and see where we're at since we're making our wrap around. Oil is another today. So this one here, we started out with the hourly chart. As you can see, we're still bobbling below this key support and resistance level here at $1.2225. I think this market probably has run out of gas for the day. I wouldn't expect very much more, but we'll see. You never know what happens. If there's a violent sell-off and this market does sell off and settle between or under $1.2180 today, that would be a very good indication that bearish momentum will continue into the rest of the week, and maybe we'll see the slide come down and challenge this $1.2060 level of support here. Continue to monitor this one. We do not have a signal fails here. That would confirm newer move lows after a higher move high, putting this market in short-term neutral, which we're expecting it to be for the next 2 weeks anyhow, and settle into that. However, trading below $1.2060 will have us leaning on $1.2015 very quickly, I think. Anything below here, then I would say you're going to see bearish momentum build even further as it presses a break down to $1.1938, even $1.1857. Remember, this market bounced off $1.16 and rallied to $1.2275 in a heartbeat, and that was more of a range than it had for a year and a half prior to this year to begin with. Not to mention the fact that we were at $1.06 just a few months ago, 6 months ago. So that's a big rally that we're coming off the top. We're topping off of right now on an annual basis, on a monthly basis, weekly basis, daily basis, you name it. Am I trying to call a top here? Absolutely not. But I would use caution as we buffer resistance here and the dollar continues to get hammered. And then one last thing before we end this video, don't forget to check us out on Forex chat box, Forex Trading Unlocked on YouTube, subscribe to it so you know when our videos are coming out. Okay, we'll catch you up to speed. Yeah, this one here, as far as a drop, let's take a look at the hourly paperback. Okay, so if you want to trade this on the hourly, it's a sleepy holiday trade. Here it is right here.
Forex Trading Unlocked,
topped out
trading analysis,
around
trading signals and analysis.
Actually 6 hours ago.
To cover the
we made a higher move low, we made a lower move high, and right now we have this little bearish engulfing line.
The Euro Swiss, the Euro Australian
I don't like
dollar,
using this so much on the intraday,
the Euro Canadian dollar,
and stuff like that, but I would say
Bitcoin. So if you have any questions,
if you sell against the high of the day today, and especially if we take off this low from the last hour, which was at $1.3893, you might get a nice little corrective move down to $1.3860 somewhere in this area. I don't think you're going to take out this bottom that
Once
was
again, I'm
formed
Teddy
here
Keckstead.
back on
We're going to have
Friday.
this is all about the Euro cross rates.
This is a steep hourly trade here, but that's also in lieu of knowing that there was a holiday market.
Stocks, options, and binary options.
That's another thing you got to watch out for. The rally against the dollar that happened on Friday into today
was mostly
could
at the
reverse
CME
in a
and
very
also
big
at the
way
CME
tomorrow
trade
once the
when they did
U.S.
the merge.
markets come back
And
online.
also the president of Forex
Just
Trading
because
Unlocked,
of the fact
author
that
of the book,
a lot of
Probable
traders will be
Japanese
playing on the
Candlestick
fact that a
Patterns.
lot of
With that, we just want to give you our disclaimer to remind you that this webinar is for illustrative and educational purposes only.
Interest rates.
All right, today's focus is going to be Forex market analysis, trading signals in the various Euro cross rates, trade
management,
once
Forex trades, futures trades, futures options trades, binary options trades, ETF trades. All major Euro cross rates are covered. Once again, the Euro US dollar, the Euro pound, the Euro Swiss, the Euro yen, the Euro Australian dollar, the Euro New Zealand dollar, the Euro Canadian dollar,
high of
and the
today.
Euro Bitcoin.
So yeah, for short-term
maximize your Forex trading potential. Find Forex trading opportunities. Get a microscopic view of what the Euro cross rates are doing.
Above the high of the
best indicator, I've always said, is the market. And so when we're going to look at the Euro, we're going to use the other cross rates to get a bearing on what it's doing. And also have a little Forex trade management, futures options trades, binary options, and ETF
missed the beginning part.
With that, let's go to the Euro US
let's look at the pound versus the Euro, which we did earlier. This is another reason why
we have the Euro US dollar pulled up here.
All right, the Euro
we have the market has made higher move highs today.
The dollar, and the pound is up against the euro.
On the hourly basis, as you can see, we had a spike high early on in the session.
Bullish, just
since we spiked high up there, just above $1.22.10.
Something I always tell people: the best indicator of the market is the
currently
market.
trading.
So especially when it comes to currencies. So for anyone that is
on a daily basis, though, we spiked high.
Like for instance, for the pound US dollar,
higher move high after having made a higher
little
move
break
low
in the market.
Okay, well,
if the pound is strong versus the euro,
this is going to be our big bearing
and then
for
we
direction.
go back to the
if
euro
we have a failure
versus the
here,
US
then
dollar.
odds are we will be
And
pressing
the euro US
$1.1983
dollar here on the hourly
down
is
to $1.9115
okay.
areas right here.
That means
critical
that,
support would be right around this
the pound is strong versus the dollar, and the pound is strong versus the
right
euro.
Here.
If the euro especially starts to turn
and
positive,
any sell
then that's going to give more credence towards the pound going higher.
Right now, the dollar is
if the euro continues to go
grinding
lower
with
versus
most of
the
the
dollar,
currencies. See
then,
how this pans out over
that
the next
shows you
couple
another
months.
sign of how much.
Remember, we do have
either coming
Brexit,
in on the pound
which is
side,
going on,
or also how much
and
the pound is beating on the dollar side
irony
as
of it
well.
all,
Okay,
the UK
so
and
as
the
far
EU,
as using that as a gauge,
we have,
like I
if
said,
we didn't notice
you want, if you're bearish the pound US dollar, what you would want to see would be, for instance,
very short-term
the euro US dollar continue to go down.
The UK has
but then you would
solidified
also
trade
want
deals
to
and
see,
all kinds of
with the British
geopolitical
pound,
structures
euro,
as the UK regains its sovereignty with 57 plus countries,
euro start
and
to go down. If the
EU
pound euro
and its
starts to go
confederation
down,
of countries
while
has
also
yet
the euro
to really stabilize
starts to
anything and
get
is still
strength
putting
versus
up
the
a
US
fight.
dollar,
So that's pretty
things like that.
interesting how the
Then
rest of the
you
world is
probably
moving
will
forward,
see
but
that
the
the
EU
pound,
is still trying to clamor and hang
pound
on to
US
that.
dollar get a
So,
little sell-off.
not affecting the euro.
So that's a way of kind of gauging
strength
instead of using just indicators in one market.
Euro,
Look at how it's faring versus the others. So meaning, once again, like if the pound is your focus, look at how it is comparing to the other big currencies, especially. So if you look at the pound versus the Mexican peso, it's probably not going to give you a very good indicator of how it's going to do versus the dollar, just because it's the North American trade zone. There is a trade there, but that's a whole nother wide dynamic.
The euro,
the markets aren't strong in Mexico.
The euro pound, as you can see, has been
comparatively
in a
with
very volatile,
wide
range trade for the
versus
past
the U.S. Are comparable as far as business.
It topped out around was it
92.31
and had a low of 89.82
so
just a week ago.
No other questions.
A lot of
here.
territory back and forth.
Let's go back.
This is one where you can obviously see where the euro strength has started to wane. Today it's a little more positive on the day.
So
maybe that's
probably
because
we've been talking. Got a little bit
dollar.
of a lift.
But as far as this currency cross is concerned, the euro pound looks like may have set its range for the rest of the year. Remember that we do have the Brexit coming on, so this would be the 31st. I think that you're probably going to be
now. Here's the thing:
this area. Remember, next
week
trade,
once
is
again,
going to be
a
shortened holiday
there
week as well as the following
strength.
week. We're heading into the end of fourth quarter, end
especially
of 2020,
if the pound is strong
we
versus
all
the
want to
euro,
get through, and especially with the Brexit, no Brexit deals on the table still. I think you're going to see a lot of consolidation in the euro pound, not necessarily in the euro versus other currencies.
Just wanted to remind you guys, if you haven't
now we have the euro
to our YouTube
Swiss,
channel
or
or
we
our
have
Twitch
going
channel,
on the euro
please
Swiss.
do so.
So this is a different case.
And also
the euro corrected against the Swiss, and as of last week, so a nice little short-term bottom is rallied and continued to press higher move highs for the most part, except for 2 days where it settled lower, but still it made a higher move high before doing so. Today we made a higher move high. We're trading just below this $07.92 area. This, I think, is a critical pivot point. Trading above this will have a sustained bullish momentum. I think that's going to target this $08.20 to $08.40 up in this area over the next couple of weeks. The euro pound may settle into a consolidation range, but I don't think that the euro Swiss is. I think that the euro right now, in the short run, has a good chance at still maintaining upside momentum, just as it is in some versus the dollar and a couple other currencies. So the Swiss is not getting, it's making new move highs against the dollar as well, but it's been in a much steeper slope, meaning that it's been trending and really bashing the dollar for the past couple of months, whereas the euro has been creeping higher, except for obviously last month it's at a $6 move.
So that'll be a great day to chat with a lot of Forex
even
traders,
still,
a lot of
as the severity of the other ones seem to be much more drastic versus the
chime in
euro.
as we go over the markets.
Now let's see. We have the euro Swiss here. We made a lower move or higher move low. And if you see like the main chart, we've been trending higher since November. We spiked all the way up here. So we came back here. This is a higher move low, and now we're short run, still
answer them. Otherwise, we're just going to
bullish resistance.
This one,
and like I said, if we can sustain the trade above $07.92, which we're hovering just below, then I think you're going to still find a lot more buying momentum to put Forex Trading back up to this
$08.20. Appreciate you guys sharing your questions and asking. Being involved with us.
So the next currency on our agenda will be the Euro JPY.
Hello everyone, this is Teddy Keckstedt.
So the Euro JPY, what's going on in this one? Let's see.
Live webinar for you, Forex trading strategies.
Okay, the Euro Yen has kind of settled into a range trade in front of the Euro Pound. The Yen has been a little bit neutral versus the dollar. It kind of bottomed. The dollar has found a little bit of strength in the Yen, where it's been getting really crushed by most of the other currencies globally. The yen, it has not been so severe. It had already been in a bearish trend for a long time, and while the past few sessions, especially where the dollar's been getting hammered, the yen has been rather gentle on the dollar. I think that's where you can attribute this euro yen consolidation,
really quickly,
and
just
also
want to show you
with the euro pound coming into a consolidation over their trade deals. Like I said, the UK and Japan is already locked in theirs. They're one of the 57 countries that the UK has gotten pretty much through the negotiations they need to after regaining their sovereignty. The euro, however, like I said, I don't know for sure how much that changes any of their deals with Japan. I think that just because the UK
get ready to rumble
really
with the
change
Forex markets.
with them.
Let's get on with this webinar.
So in that regards, I think that gives you stability. So the Brexit, no Brexit,
simple
where
techniques
it
to
has a little wide range in the euro pound.
How to
I think in
reinforce
the
your
European,
position,
you're not going to see that very much of anything.
Actions on
Now,
potential
should
Forex
the
trades, trends,
pound
Forex futures,
start
options,
to,
and binary
excuse me,
options
should the
plays
yen
are all related,
weaken
and we'll discuss how
more
you can
against the
integrate these for
dollar,
those of you
then
that
you
are
may
not just
start to
Forex
see
traders.
the
We
euro
will have an interactive
climb
question and answer with
against
the
the
chat.
yen even
We are also
more,
gonna do a little
especially if the
freestyle
euro
market
remains
analysis,
in
so
the
if
US
you
dollar
have any questions
and its
about any
highs.
markets
You
as
know,
we go through
if
this,
we don't have a big
after I get
correction
to
in the
the
euro
mainstream
US
stuff,
dollar,
we will go
and it's
and
definitely
attack
if you
them
see
and,
the dollar
what we can
remaining
pull up
strong
for you
versus
live,
the yen,
okay?
then I
And
think
we
you're
will
going to see
help
this
you
euro
to
yen
build up
challenge
your
this
trading
$26.75 level.
arsenal for today.
Only below.
Alright.
We took a little,
So, with that,
made a little move
let's
for
get
lower
started.
move lows today, but we're holding
Okay,
positive on the
we have
day. I think that if you key off the lows from last week around $1.2576.75,
and we already
that will
have
keep the market afloat. If we have another failure here, again, like we did today, meaning euro weakness versus the yen, then I think you're going to probably see this
So we have the
correction.
dollar
We'll
index
take this market
yesterday,
down
which
below
posted
$1.25 half,
a
targeting this
short-term buy
$1.25
signal
area.
here.
The
Yesterday's
slope of
trading
this trend currently
set
is
not
rather
only
steep. even though it's wide, it's narrowing out right now.
Also established a
but we
higher
had an
move
aggressive,
low after a higher
really
move
aggressive
high.
start to this
helps to
rally.
secure
We
the
had a
bullish
decent,
trend. So we
correction
also
that
have
was
a
absorbed once
bullish
again, especially as this month has been going through since the end of November
line
into the middle of December.
buy signal.
So, is it toppy?
Okay, so
could
this is
be.
a high
We'll see.
probable
Like I
Japanese
said, you have to
candlestick
key
pattern.
off of these two levels
This
here.
here
The
is the
dollar
bullish engulfing line. So for the
126.75
index,
and
we have a
125.75
short-term buy
areas.
signal, which
Now
is
let's see
being
what we got
generated
here.
off
We
of
have
a higher move low.
This one next.
Okay, so this low is higher than this
let's
low
see
over
where we
here. So
go.
the trend
Euro
right
yen.
here, we established a
Okay.
bottom. Back here in the beginning of January, we made a lower move high. We made a higher move low, a higher move high, and now we've established a higher move low. All right, now let's get to the Euro US dollar. Okay, so now that we've established that the trend
we do.
for the dollar
pull
index
up
and the dollar
the new one.
itself is bullish, let's take a look at the Euro
So we
US
have Forex
dollar.
trading
Okay,
unlocked.
let's see
We
what's
pull up
going on
this.
here. All right, so
We go
far
to
we have,
our.
what do we have going on
Forex
here?
markets.
Today's trading. This is
That's
just
the
a
nice thing
slight
about
delay.
the
We have a lot of selling
Forex-trading
action. Now, we had a
unlocked.com
bullish engulfing line
website.
buy
Pull
signal
up
that had occurred
this little
earlier
tab here,
in February.
and now we can
Now,
go down
the thing
to
is
any of the
that it
cross
already
rates that we're
established
talking
its
about.
target right here.
Since we were talking
And to
about
give you
the
a little bit of
euro.
an idea about that, we're going to pull up the Euro US dollar on our Ninja Trader platform.
Let's see, we are going to
And
Euro
if you
Australian
notice
dollar.
here, we have the bullish.
Okay, the
engulfing
Euro
line mark.
Australian dollar.
And
This
last
has been
week
an
we had
interesting
hit this
trade.
line right here at
The euro,
$1.48.
all the markets that's out there,
top here. This
is getting
established
just
a lower move
crushed
high.
versus
Then
the
we made a
Australian
little bit of
dollar.
a higher move
This
low,
is very similar
and then
to
yesterday
the
we spiked
US,
making a
the
higher
Australian,
move
the US
high.
dollar,
However,
or
that
the
was
Australian
only on
dollar,
an
US
hourly and
dollar trade.
short-term daily
The Australian
basis.
dollar has been very
Yesterday's
strong
spike
versus
high
the dollar
was lower
since
than this
March.
high here.
The
So
fact
after
that
a
it's
lower
so
move
strong
low,
versus the
we
euro
established a lower move high
gives me
and
a
now,
kind of
consequently we are selling off in a
inkling
big
that we're
way.
going
I
to
mean,
see a
between
lot
the
of
high of
divergence
yesterday, we have
in the cross rates in
$1.21 and the
January.
low of
So
today is
after we get through Brexit
$1.29.
and we have the
That's a very
post-Brexit that
big
occurs,
slide
and we also now
in
we
a
have a
2-day
confirmation
session,
of the
which
election in the
resulted
U.S.
really in 24
I think you're
hours.
going to see so
Okay,
much
so our
volatility in the
downside target
currencies and
now
all
here
the different
is
some of your lesser traded
$1.1951.
cross
We're looking
rates.
for a
So we'll be
retest
doing more of
this
our in-depth
last low
analysis
over the
now
next,
of
like,
doing
3
these
to 5
breakdowns for
sessions,
each one, like the
especially
Euro
with
US
the
dollar
dollar
with
index
these other
looking
crosses
to
versus just looking
higher.
at the
Okay,
dollar versus
now,
the,
let's
the
just
pound
say
and what have you.
that
We're
we're
going to have a
wrong
much
on
more
this
micro
analysis.
outlook
Should
now
we
as
take out the
move into
high
the
from
new year.
yesterday?
So
And then
once
we're
again,
looking
the
to
Euro
challenge our
Australian
extreme
dollar,
upside
this
targets
thing
here
is
at
getting hammered. It's been trading
$21.96
lower
and
since the end of
$22.43.
October, trading
So
near,
if you are
near its
bullish,
lows right
or if
now.
you're
Now
looking
it's
for
tried
a
to spike
breakout
higher
play,
today.
if you are short,
now
you
it's
do not
falling
want to be
apart.
short.
This is where I have to
above
say,
this
like
high
when it
from
comes to
yesterday.
overall
So that's something you
Euro
want to be mindful
strength,
of.
it would take
Remember
a
that
big
the overall
rally
trend
here
for the
to
Euro-US
confirm
dollar
any
has
type
been
of
a
change
bullish
in trend with this one.
It has
So I
been
think that
rallying
while
for the past,
you're going to see Euro strength
couple months
versus the
in
dollar,
a very, very strong
it's going
way,
to be very
and
sideways
especially
versus
over
the pound and the yen, like we
transition
looked at.
into, 20 from the end of
Probably
2020 into
a little weaker
2021.
versus the
So
Swiss.
we've had a lot of
The
volatility,
Australian
and a lot of
dollar,
bullishness here, a
at
lot of
any
bearishness
upside
to the
move, I would
US
have to
dollar.
say you're going to
So
have
right
to
now
view
the
as
dollar
a
has been
corrective
what we will
move.
be
So
considering
I would
a
look
corrective phase
pretty much
on
trade
the
off of
weekly
this
because
area
in
here,
the daily
the
it's
dollar
now bullish,
61.79,
bullish,
and then the low
but
from
weekly
last
and
week
monthly for
around
sure the trend is neutral at
$1.6036.
best,
So
but still
that's for
bearish in the long run.
that
And the same
part.
is
Now let's go and finish
for
up
the
the
euro,
Asiatic
which is the number
zone.
one
And
component
once
of the
again, we'll
dollar
just go
index.
to our
Now, because of
thing
this
here, we pull
sell-off
up the
today,
euro.
this is helping
New
to drive the
Zealand
dollar
chart.
index higher.
So see how
which
fast
is
we
getting
can load this up
follow-through
on
from
the
yesterday's buy
Forex
signal on the index
website.
basis. So what does
So the
this
Euro
mean
New
for you
Zealand
traders
dollar.
out
Now
there?
this is
Okay,
a little
well,
bit
we have some
different.
key levels for the Forex.
Remember
market.
here we have the
We know
Australian
that,
dollar. It's just
right
hanging
here we
above
have
the,
this mark here at
the lows.
$1.2192.
The Euro New Zealand
However,
dollar,
that
on the
was
other
before
hand, had a nice
yesterday
bounce
and
a
today's
couple weeks ago.
follow-through. So like we showed you on
Made
the
a
Ninja
lower
Trader
move
platform,
high. Now then
this
last
is
week it
now
made a
our
higher move low,
new
and it's
risk
rallied
level.
since
So if
then.
you're short, this is the level
Today
you want to be
it
short
made a
against,
higher move high over the past few
Anything
sessions,
above
but has yet not taken out this
$1.2171
one here.
will have this
So let's
market
put this
hard
horizontal
pressed to be
ray
bearish,
right
and
here,
we'll put us back on
and
the
then we'll
rally
put another
campaign.
one
So,
here.
but
So
anything
we're short-term
below here,
bulls,
especially with
for the
today's
euro New
action
Zealand
here,
dollar,
we're looking for
this
this
correction to get
upward sloping
extended. A
support
breach of
line,
$1.7282 here.
trend
We
intact.
target this $1.74 up to $1.75 area. Failure, however, from $1.7068 would be very negative, and then I think you would see this $1.70, $1.69
now
area
the fact
getting
that it turned
penetrated
around
in
a few
very,
days later
very
and now is
quick,
having this reaction,
fashion.
this helps to follow
So let's see
through
what we
with
got.
the short-term
Next, we
trend,
have
which
the
has
Euro
been progressively
Canada.
making
So
lower
the Euro
move low,
Canada,
lower move high, lower move low.
here.
Now we have a lower move
The
high
Euro
that was
Canada
established
right here.
yesterday. Remember, the trend is
see.
your friend. You always want to try and be be mindful of where the trend is going, but you also want to be
So Euro
trying to
Canada.
trade along those parameters as well. If you trade with the trend, odds are you're going to have
widened out.
yourself in a good way.
Now the Euro Canada, this is an
If you're
interesting
trading
trade.
against
So you
the
think that
trend,
the Euro
you
US
need
dollar,
very strong
which has been a
signals.
relentless
Now,
bull,
speaking of
would look
trading
similar
against the
to
trend,
the
now
Euro
let's go
Canada
to the British pound
and not
US
so.
dollar.
This has been a very wide range
Now we're going to
trade
show you
for
this one
quite
here.
some time.
They don't always
So what does
work.
that mean?
See
Are
these
we bullish?
three black
Are we
arrows
bearish?
here?
Yeah, we don't
This
really have
trend
much of an
has been
opinion
very
on the Euro
bullish to
Canada
pound US dollar
whatsoever.
over the past few months, and
The
especially because
UK
it's
and
very
Canada, they
commodity
settled.
driven.
They're already
Now, a
settled
lot
with
of
their
people,
trade
when they
deals and
look at
things
the
like
Forex
that.
markets, they don't think
Once
about
again, I don't
commodity
think that
markets.
between the EU and
Well, they
Canada
actually
things
have a
really
huge
change
impact
very
in it.
much.
We're gonna show
So
you
there's
some
pretty much
relationships and
stability
why.
there.
First of all, let's look
there's
at the US
the
30-year
Canada
market.
is very
This
strong
is the
versus
futures
it's hard
contract
for
to,
the euro
CFTC
with the
CFTC
Canada being so strong
regulations
versus
and
the
data
dollar. It's hard for the
regulations. This
euro
has
to
be in
really
delay,
be
and we cannot show you
that
the
much
current,
stronger
pricing.
versus the Canadian.
It has to be in delay.
If
like
you
this. So
see
yesterday we had
the
the market
Canadian
making
dollar
lower
all of a
move
sudden
lows again in the Treasury
give
bond
up
market.
ground to the U.S.
The
dollar.
yield
In
is
that
stretching,
point, then I
meaning
think you
that
would see the
the
Euro
30-year
Canada
and
start
longer
to get a
terms
rally.
are
Right
demanding
now,
higher
I
market
wouldn't touch
rates,
this
while the
thing with a
short terms
10-foot
are
pole.
locked at their
It's a
ceilings.
big,
There's a
choppy
big spread
range
there.
trade.
Now, as interest rates go
basically, I would
up
say
by
if
the
you
market,
look at the
that
range
makes
over the
currencies
past few
more
months,
appealing. That also
key off
makes
of
the
these
dollar more
levels,
appealing.
somewhere between
So,
$1.54.50,
because of the big
which we're now
sell-off in
trading
the bonds
above
and
here,
follow-through
and
yesterday,
then up to $1.56.
that's most likely why we're
So
seeing
in this
this
little
start to
area
run
here
out of
between
gas here.
$1.56
Now here's the thing:
and
see these
$1.54,
arrows? Each
you're
one
not
of
gonna
these
have
was a
very
sell
much
signal.
fun.
We had a
Like I said,
bearish
it's gonna be
engulfing
for
line
range
here.
traders,
Then
not
later on
much
we
of
had
good
this
swing
dark cloud
trading
cover that turned
opportunities
here.
to
And then we had another
forward
dark
to.
cloud cover.
All right, so now
that
let's take a
occurred
look
here.
at the
So just because
euro
you get a sell
and
signal
the
or a buy signal,
Bitcoin.
it doesn't mean that
That's
it's
right.
going
You
to
can
work. You have to
buy
have
and sell
other
Bitcoin
rules
in
to
multiple
apply to
currencies,
these
the
things
euro
to make
being one of
sure
them.
that you will follow through.
So,
and get,
the
you know,
euro
these things
Bitcoin, just like the
trades for yourself.
U.S. dollar Bitcoin,
So one of the
has been
reasons
railing,
we're
making new highs,
normally at this
especially
point
today,
here,
going
when
up
this
to over
bullish or bearish
16,000,
engulfing line sell
actually
signal
over
came in,
17,000.
would normally
the high
take on
was,
a bearish trade. Now,
17,050,
oil
157
is a
euros.
very aggressive bull.
So we have the
We have a
market
commodity
pressing higher
driven,
move highs. Now here's the funny thing is,
in the currency markets,
if Bitcoin is stronger than the dollar,
last year, the
and it's stronger
coronavirus,
than the
trade
euro
definitely
dollar, meaning that's the
overwhelmed
where the
a
bull
lot of
is.
trends.
Those
It
are being
definitely
the
dictated
opposite
a lot
ones.
of dollar movement
Where would
versus
euro
all
strength come
currencies
in?
versus
Well,
instead of just
I
having
guess
a
if you
free-flowing,
see
intraday
a big
differences,
slide in
just because the
Bitcoin,
dollar's going up against one, it
then
doesn't
you
mean
will
it's not
probably
going down
see
against another. That's a
also
normal
a
thing to happen on any
little
given
bit of
day, and
relief
even
in
in
the
a
dollar
long-term
and
trend
also in
basis.
the
Just
euro,
because a lot of currencies
which
are bearish
obviously
against the dollar,
I
it
guess
doesn't mean
the
that certain
crypto
ones won't be
whales out
bullish.
there are ditching
The pound
euros
right now
and
is
also
a
dollars,
aggressive
and they're
monthly,
buying
weekly,
Bitcoin.
daily, and hourly
So at
bull.
what point
Unless
do
you have
they
a
want
really
to take
valid
a
sell
profit,
signal,
and
I
does
would
it
say
start
to
to
keep
come out the
yourself
other
in
way?
a buy
That'll be an
dip
interesting
posture,
thing
meaning
to
wait
see,
for a
won't it?
correction.
I
and
would
then
say that
look
as
to
we
buy
pressure
this
new
market
highs
and
and
on
get
a
back to
valid
above,
buy signal.
you know,
Slope
sustain
of the
above
trend
this
for this market
20,000
is not
level
too
for
steep.
the U.S.
It's been
Bitcoin,
grinding, just
and now
buffering
with
new
the,
highs.
euro,
We do
Bitcoin
have
being
today
back above
some
just
selling
around
action, which is helping to
17,000
add to our
euros
dollar
as
index
it pressures
trade.
on to
Now, while the
18,000.
euro is falling apart,
We'll see
and
if
look at
people
some
start
of these
to
other
take
major
profit. You
currencies.
remember that Bitcoin
the pound
just
is
a
the
few months
second
ago was
biggest
under
weight in the dollar
9,000
index.
euros.
While these other
So this
currencies
is a
may
very
start to
vertical
fall versus
slope.
the dollar, which that's
We've
what
had
we're
some big
expecting to
swings,
happen over the
especially see if you just look back not too long ago, back in November, this thing was all over the place. It had a high of just under 16,400 euros and got down to 13,600 before bouncing again. So no market goes in one direction. We'll see when the profit taking comes. I would expect to see some swings that whatever the short-term new high does become that you'll probably see a 1 to 2,000 euro correction at least, probably even more in the lines of 3 to 4,000 euros.
Think about
then finding some sort of a basing
to currencies and how to figure out
and
where
let's
they're
see,
going.
what else do we
You would
have
want to
here?
look at the different crosses. So for the
Euro,
British
US
pound,
dollar.
US
So let's
dollar,
go back
let's
to
take a
this
look at
one.
the
And see,
GBP.
since we're ending our webinar
Euro.
here, to find out where it's
What happens
going,
here?
where it's trading
This
at
market
right
is
now.
a
So since we've been
bull.
talking,
So what
the
does
Euro
that mean?
US dollar
That means
actually
that
has
there's a
fallen
lot of
back a
strength
little
in
bit.
the
And look at the
pound,
volume here. This is very
There's a big
interesting.
trend here.
Volume's
have
been dropping
pound,
off as we're
euro
heading towards these
strength.
holiday
Now we're gonna
markets.
look at the
Like when
British
we
pound
bottomed
versus the
the day
JPY.
after, that was when there was
Okay.
a huge spike
Today we
in
have a
buying.
short-term
That's a
sell-off.
lot. And
Well,
now we don't have very much at all. This is very
overall, with the
interesting to
bull,
see
but
how
we have a
the
reversal
volume
today.
is decreasing.
So where is that?
So
what does that mean? That means that Japanese yen
when are we
is
going to
showing
go to
strength
now?
today.
Now we're going to go to
Okay. Now this is a big thing I want you
our
to
quick
listen
reminder.
to. The pound
So,
versus the
trades
yen
to watch. The
is
Euro
bull
US
for the
dollar,
trend,
we're
but
bullish.
today it's
The Euro
reversing
pound,
and
we're
the
neutral
strength is
between
in the yen. Remember, we're trying to figure out what's gonna
0.9230
happen with the
and
pound US dollar.
0.8982.
So, now we're going
For
to
the Euro
at
Swiss, we're
British
bullish above
pound versus the Canadian
$1.075,
dollar.
targeting $1.082.
This market
For
is
the
also
Euro
an
yen, we're
aggressive
neutral
bull.
between
Today, it's slightly
$1.2675
lower.
and
Did not make a higher move high. It actually
$1.2575.
made-
For
it
the
failed to
Euro
make a higher
Australian
move high
dollar, we're
today,
bearish
and it's slightly
below
lower on the day. So it is a bull,
$1.1618,
but
targeting
with a short-term
$1.16.
reversal
For the Euro New
forming
Zealand
today.
dollar, we are bearish
Now,
below
let's look at the British
$1.7285.
pound
We're bullish above that level.
versus
The Euro Canadian, we're neutral
Australian
between
dollar.
$1.5714 and
Australian dollar overall has been
$1.5402,
in an uptrend. It's
or
bullish.
euros rather. And
Past
for the
few
Euro
days, it was
Bitcoin,
rallying
we're
into that. It
obviously
spiked
very
higher
bullish.
today, but it is
So as
lower
far as
today. So the
futures
pound
trades
is
for the Euro
weaker
US dollar,
versus the Australian
I
dollar
would say that
slightly
buying dips
today,
is the way to
meaning
look
once
at. Now here's the
again,
thing. We're
weakness.
coming into
Now,
futures and
let's-
options
now,
expiration.
think
So
about
as far
this.
as futures
The
and
pound is
options
showing
trades, I would
weakness
say
there,
until
meaning that the
we
Japanese
get
yen,
through
the Canadian
expiration
dollar,
and
and the
actually through the
Australian dollar
holidays,
are showing strength
I would
against
stay
the
out of those
pound.
markets. They're going
What
to be
is the key
very,
variable to look
very
at?
thin.
Well, we already
Okay?
know that
So
the
if
euro
you're going to
US
trade
dollar,
the Forex
remember,
markets or the
US
currency
dollar has the
markets,
strength.
the
So
Forex
it's not in
cash
euro.
is the most liquid
Okay?
and best way to
So,
go. Be very
that
leery
means
of the
that
next
the British
couple of weeks as
pound
we head into
is a
holiday
bear.
markets.
Okay, so
For
let's get
futures
back to
and
the British
options
pound,
traders,
US
if
dollar.
you're going to go into
So the
directional
pound is
trades
trending
at
lower
all, I
today
would say
and has
put
a
on
bearish outlook
vertical
going
spreads,
into
meaning a
tomorrow
credit spread
because
against
it is an
whichever
overall
direction
bull
you want to
versus
go.
major
So if you're
currencies.
bearish,
Today it's
right
reversed
now
versus
we're
the
bullish the Euro
Japanese
US
yen,
dollar.
Canadian
So
dollar, and the Australian
that would
dollar.
be
Okay?
selling
Now, we all have
the
one thing in
near
common.
puts
All
and
of these
buying further
currencies
out
that are
puts
stronger
for a
versus the
credit
pound
and
are weaker versus
watching
the
the
dollar.
time decay erode,
Okay, so
which would be fairly
listen to what I
neutral,
just said.
but it
All of
will
those
still be working a
currencies,
little bit
the
in your
pound
favor, and the
is
volatility, I
reversing
believe, as we're
against
buffering
today,
the highs.
are also
And then that would
weaker
be
versus the US
if
dollar.
you're going
So
to
that
get
gives
into the
credence
futures
to
options,
the
that's what I would do.
short-term
I'd still stay
turn
away
on
from the
hourly
futures
basis
because you're
and
going to
on a
have a lot of
short-term daily
erroneous
basis
trades because
for a
of the
sell-off
spreads
in the
unwinding.
pound US
Then there's the
dollar.
binary options.
And as far as
Obviously, we're
trend,
bullish,
you would
so I
expect
would
it to
say look to
continue,
buy dips
okay?
if
So
you see a
now
little nice
you really have
correction,
the oil
especially of
trade on the
a
table.
point, $1 to
If we
$1.50
can
in
maintain
the
this
euro.
posture with these other
Bring
currencies,
it back down towards that
then we can
$1.19
confirm the
area.
British
Look
pound
for
setting a
binary
correction
levels around there
move
to
lower.
get long.
Most likely first,
and,
we
I
need
would
to
say
take
that
out
those
this
would probably be the trades. You only have a couple
$1.3775
days left
level.
in the session.
Failure from here will then
this
have
week,
us
so be
testing
careful
this
with
upward
that. And then
sloping
also
support
next to
line,
shortened
keeping the
holiday
short-term
week, just like
trend
the following
intact.
week, if you're going
A
to trade
failure there
binaries,
will have
they
us
don't
hard-pressed
go
to be
through the
bull
whole week.
as it
They don't
starts
go
to
as
take
long
out
as the
and look
cash
out
does.
to test
So I'd be
this
very leery of the
$1.35,
binaries
66
also as we
area,
head into
okay?
the close.
So this is where we're
that
looking at
being
the
said,
British
do we have any
pound,
questions?
and
It looks
figured
like we
out
don't
that
have
through
any
different
questions
crosses from the other currencies that the pound
let's
is
see,
a
we have
short-term
anything on
bear, at
Twitch.
least
We
on the
do not
hourly
have
and the
any
daily. So now remember the
questions
dollar
on
index.
Twitch.
The euro is
Do
the
we have
biggest
any questions
influence
on
in the dollar
YouTube? Let's see,
index.
do we
The
have any
pound is
questions on
number
YouTube?
2.
Look
So
in
with
the
both of
screen.
those two falling off,
We
that will
have
help
some
the dollar
viewers, but we
index
don't
continue to
have
go higher,
any
validating the buy
questions.
signal in the
So it looks
index
like we're
yesterday.
all
So remember,
through
the best
with the
indicator to
Euro
use for
US
any
dollar dollar breakdown for you. But just please, just as one last reminder, remember to subscribe to Forex Trading Unlocked on YouTube, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle.
All right, so we talked about
Thank you very
the pound.
much,
Now let's
and
look at the
please
US
check
dollar
us out
swift.
at
So stay in the European
Forex-trading-unlocked.com.
trading zone.
Look at this. We have
Hello, everyone. This is Teddy
US
Keckstead
dollar
from Forex
Swiss.
Trading
We have a
Unlocked, and
big
we are
rally
here
going
for
here.
a weekly
Look
Forex
what was
analysis
established
for
also.
December
We had,
13th
see this
through the
little
18th.
arrow here? You know what that is?
Before we get into
this
our
is a bearish
analysis,
engulfing
we'd like
line
to
sell
just show you the
signal.
disclaimer to
Bearish
remind you that this webinar is for illustrative
engulfing
and educational purposes only.
line.
And before we get into it, the last thing we're going to take care of is just want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked. And also, we're going to be talking about some high probable Japanese
this bearish engulfing line sell signal today.
Which there's
It
also
came
a
off
book
a higher move
entitled
high,
Probable
so we were looking
Japanese
for a
Candlestick
corrective
Patterns,
move lower.
available on
The overall
Amazon.com
trend for the US
and
dollar
paperback
Swiss has
and
been
Kindle
bearish
versions.
since basically a
Without
year
further
ago,
ado, let's go
and
to our live
now we're in a short-term correction to the
shot
upside, a lot
screenshot
like
here.
the
We
dollar
have the
index.
Forex
The Swiss
trading
is a major currency, but
unlocked.com
not as strong in weight
website
as
pulled
the
up already,
pound or
and
the
for our market
euro.
analysis
However, the
tab,
Swiss
we've pulled
is
up
a
the
flight to quality
workstation
currency.
page.
If the flight
That's
to quality
already
currency
prepared.
is going down,
We're going to
versus
skip
the
past
dollar,
the economic
that
numbers.
means
Now
there's a
there
lot of
are
dollar
a bunch
strength. It
of
also
numbers
means
for the
flight
euro,
to
the
quality in
pound,
the dollar, which
and
also helps to
the
support
U.S. dollar and the
index.
yen.
Now you can see this up move
Not,
today
I
in the
would say,
Swiss. This is
mostly
a
medium
radical
economic numbers.
coming off of
The
this
biggest thing to be
short-term low
concerned
here.
about with
Yesterday
will
it
be,
established
Brexit
a
for
higher
the,
move
pound
low,
and the
especially
euro,
with this follow
and
through
then
today.
we
No
have
one can
the
deny
fact that
that.
we're coming into
Which
quarter
means
end
that
and
the
year
market
end
has made
very quickly.
consecutive,
We only
made a
have 2
higher
weeks
move
left in
low,
the
a
trade.
higher
Can you
move
believe
high,
that?
made a higher
That's
move
pretty
low,
crazy.
and now it's
that
looking to challenge
2020
this
is almost over, which
90.48 level.
I think
The thing
everybody's
about
ready
this
to put
bearish
a nail in the
sell
coffin
signal
on this
here
one.
is it took out.
So we have the dollar index
it made its target
chart
to the
pulled up
downside.
already, and as you can see, we have this
So,
downward sloping
and interestingly
resistance
enough,
line that has the trend has
we
been
can look
coming
at this
into over
little
the past few
thing
months,
here.
and now we're
Let's go
trading
to our
below
Ninja
it. It's
Trader
been pretty much
platform and
buffering
US dollar
the
Swiss.
dollar
All right, so
index.
if you take the
trade
low
as we've
from
been going
yesterday
through from the
and we look
high of the
for
year
a
back
risk
in March
reward
all the way
trade
down
and
to
projection,
now the low of
we
the
have
year
a target of
as we head into the end of
90.34.
2020.
So this is
right
what
now
we
it's
have
very
from
bearish. This
yesterday's
trend, newer move
reversal of
lows,
fortune,
newer move high, or
and
lower
getting our
move lows,
bullish
and lower
momentum
move
back
highs
to
is
the US
indicative
dollar
of what
Swiss.
a
So our
downward
Ninja
trending
Trader
market.
here, we put
So
when we
right now
applied
we are
this
waiting
indicator.
for
Let me
a
show you how this
signal.
indicator
Very
works,
bearish,
because
but
it's
we
actually
are
a
waiting
great
for a
little
signal.
way to
because
figure out risk
right now the
reward.
dollar
I use different
seems to be
ways of
overdone,
projecting
and we're
my
starting to
price
see some
points off of
divergence
these
in
kinds of
currencies, and
signals.
we'll go over
If
that
you
in
read the
just a
book, High
moment.
Probable
So a
Japanese
potential
Candlestick
short-term
Patterns,
bottom
you will
forming
learn
here. We
exactly how
ended
I
the
do
week
'em.
with a
All right, so
higher
when you
move
take
low
that
on the over the past week and a
high
half.
point to the low,
But
which
we
is your
failed to
risk. We
make
have
a
our
higher
entry
move
point,
high. So we're waiting
we
for
have our
at least
risk
that to
level.
put us
So
on
it
the
puts
neutral
back up to, like,
campaign.
around this
Just by attrition, I
27
think that
level
as we
right
head
here.
into
Okay, so that
the
gives
end
us
of
a
the year,
nice
let's just
little
put this here
area
so
to
we know
fall
our
right
marker.
below this
Here is
high.
our end of
So
the
if
year.
our target for that level
Brexit
is
will be
right
happening,
there,
but Brexit doesn't matter for the
and we
dollar
fall
index.
short,
But here I think we could
we
go
hit the
sideways
trade, that's a good
and pretty
deal.
much just
If it
chop
takes
around
out
this
high,
downward
we're not
sloping
looking for a
resistance
higher
line,
move high after
passing
a
through
higher
it by
move low.
attrition. Dollar
Remember,
index
the
maybe a
trend
little
is your
lower,
friend,
maybe a little
and
higher.
that's
The
what you
key
wanna
is to
pay
get above
attention
this
to, because that is
92.11
where the
area.
market is
Any
going.
rally above there, I
Okay?
think, will find
So we have
decent
the US dollar
support, not
Swiss. We
necessarily
established
being
that
bullish
right
the
now we
dollar,
have an
but
upside
being
target of somewhere
short-term
between
strength coming
90.27
back.
and
And we may
90.48.
start to see that as
Definitely
we head
a breach
into
of
the last 2 weeks
90.48
of
would
the
have
year.
us in a
All
very
right, we have the
bullish
Euro-US
mode,
dollar pulled
and I
up
would
here.
say that if this happens,
A little over a week
you are
ago, we had a
seeing the
dark
dollar
cloud
index
cover
rally,
sell
you're
signal.
probably
That's this
seeing
top.
the euro
That's
fall
where this
apart. Now the
first
British
red day
pound,
is up
remember,
here.
has the oil
Now this
trade.
dark
So
cloud cover
while
sell
the
signal has
Swiss
the market
and the
targeting
euro may continue
down
their,
to $1.1957
meaning
to
the dollar will be a bull and those
$1.1892
currencies will be
area.
a bear.
$1.1818 I think would
The
be the
British
lower
pound may not
extreme
do the
because
same.
it
Okay,
also
so
has
just
this
be very
upward sloping
mindful
support
of
line that's
what's
been
going
holding
on
this
with
trend
that.
intact.
So now let's go and look at the US
basically,
dollar
like I said, with the
JPY.
dollar index going back to
All right, the
March,
US
this
dollar
goes back to
JPY
May of
is,
this year. So
coming
this
back
trend is
today.
not
Now,
that
the irony
steep
is you've gotta
for
be
us
like,
to have a
like some
correction
people
that
out
comes
there
back
asking,
into this
well, Teddy,
target
if the dollar
area,
is so
and then
strong,
for the
why
Euro
is it
US
coming
dollar
back
to
off the
bounce and even
JPY?
make longer
Well,
term
the dollar
highs
has been very strong
is
versus
not
the
outside of the
JPY
realm
for
of
the past
possibility, I think, long term, especially with the Biden presidency. And after Brexit is over, it would be highly likely that a rally would ensue that would take the euro-US dollar above this $21.77 area and target some multi-month highs, probably be up towards $1.25 to $1.27 before it'll run out of gas for a little bit and digest.
overall, I would say you have a good chance at seeing the euro US dollar probably back trading about the 125 to 135 area sometime between the first of February and the 1st of July. That 6-month period, I think, is probably when you're going to most likely see that. So long term, we have a very bullish outlook. This has political fundamentals as well as the fact that this is in a bull market. Right now, we're looking at this sell signal as setting off a short-term correction on the daily basis. And considering we have the Brexit, no Brexit nonsense going on once again in the EU between the UK and the EU as far as coming to a deal, we know they're going to have some basic stuff that will be passed no matter what. This right now, I think, is going to restrict the euro from making higher move highs. The fact that the dollar index settled higher and is also looking a lot like the euro in an upside-down way. Now, remember, the euro is the biggest component of the dollar index. The euro stretched new highs this month all the way up to this sell signal here. We stood at a low of $1.16 and a high of $1.21.
A lot of questions.
77.
A lot of times I get the
that is a very, very strong move to all have happened within a period of just 1 month's time without any really major, I mean, the coronavirus thing is on the table, but it's not as impactful as it had been earlier in the year. So I think right now you're looking more at the Brexit situation right now. So we'll monitor this situation now. Just to give you
today, and it followed through
nicely
also
to
as far as
downside.
for the euro. Slightly off
US
its
dollar.
lows.
If you take
Here,
a look at the daily, like we have that short-term sell signal, we're reinforced on the hourly chart. We had a sell signal that had occurred right here.
With that being said, we're looking for more support testing. So why am I talking about gold?
So for Friday's trading, the market had run into a lot of resistance here, fell off the map, and then
now we go to the
ended
US
the
dollar
day lower, and definitely right below some key critical support here around $1.21.11. Any trading above here has pretty much the euro in a neutral trade up to $1.21.47, so bobbling around in this area. Below $1.21.10, this market is targeting lower levels, pretty much down to $1.20.45. Now this is on the hourly basis. Okay, so on the hourly basis, we have the euro US dollar targeting $1.20.45.
Well, I would watch
Let's go back to
excuse me,
our daily chart here, and we have it going down to $1.1957. So let's just say that we get the hourly, and that touches off. If it trades down to $1.20.45, that would mean that we will have topped over here on December 4th, come back, made a higher move low, then made a lower move high, which would be Friday's trading, and then once we take out, like I said, this 2056, hit the 2045 target, that would mean a lower move low after a lower move high. That would definitely have the euro US dollar in a short-term neutral condition, no longer on the short-term bullish trend format, which that would coincide with our daily sell signal, and then once, like I said, if it hits that hourly target, it doesn't mean it's just going to drop like a rock down to $1.1957. It may, and one thing I have to typically go out like they come in. This was a very, very radical move within a 1 month's time period. I'm not saying that over the next month we're going to drop all the way back down to $1.16.5, but it's very likely that we have a corrective move down to hit that $1.20.45 target on the hourly, which would also have us grinding probably support and then playing flirting with a slip down to this $1.1957. You may see a lot of buying pressure coming in here, so to penetrate this whole downside target area, I would say if you are a bigger bear and you're riding a position down, to take a little bit off the table at this first target area, especially if you get down to $1.1957. And then if you can lower your stops and work a trade down, because you have this upward sloping support line that comes into this downside target area. So between Brexit and the holidays, remember we have holiday markets coming up. This next week is our last full trading week of the year. After next week, we're going to have 2 holiday shortened trading weeks globally. It's going to impact the currencies as well as far as volume and stuff like that. So let's go look at the other biggest component of the dollar index, the British pound, US dollar, since we're talking about the Brexit, which we've seen some pretty funny memes and cartoons between Angela Merkel and Boris Johnson, especially one with him with a pair of scissors cutting a string, saying no Brexit, where it would have him falling off a cliff. So interesting takes that people have around the world on the politics going on there. So politics aside, remember here, December 31st, this is our Brexit marker. Now, we had a sell signal here in the British pound, just like we had one in the euro back on December the 4th. We had a little bit of choppy action this week. You can see the volatility that the pound has had, which of all the currencies, we know that the pound is one of the currencies that when it does start to swing, it has extreme ranges. This week not being any different. I mean, we can see that, what was it, just on Wednesday, the high was $1.34.78, and the low on Friday was $1.31.32. Quite a big move within a period of like just a little over 48 hours. Now, interestingly enough, our sell signal now has pretty much been completed, because on Friday we had came down and pierced our $1.32.12 upper end price target. We fell just short of hitting the $1.31.05. Now we settled above at $1.32.17, just above this point. Interestingly enough, because these commodities, just like we're looking on the euro, is that we had made this high, we came back, we made a higher move low, we rallied to make a lower move high, and now Friday confirmed a lower move low. This is pound definitely on a neutral bias for at least the short term. Now, we're not bearish at all, especially because we have already hit into our target area, and just like the euro, this has a nice evenly sloped trend going upwards. You see this upward sloping support here. This is almost like a 45 degrees, so that's a very decent trend slope as far as for the market to travel above and bounce off of. So for us to hit in this target area, and even by attrition as we go into Brexit, come into this little area on this upward sloping support line, and then to go neutral is chop around sideways or even rally back up to make potential new highs of $1.35.41 is probably, I would say, the most likely scenario. So short term, we are neutral to slightly bearish. Sell rally forecast. Lower move lows and lower move highs are indicative of a bear trend. So short term, we are bearish, but I would use caution. Look to sell rallies instead of selling into breaks, because you don't want to get caught selling in the hole. But if you start to see, especially the euro erode, let alone if there's a big play on all the other currencies, if the dollar gets a rally against that, then perhaps you can see the pound US dollar press and remove lows, and maybe even come through this support line and take out this area and target around $1.30.04, which I think would be your major extreme. This is an area where you had a lot of, it was either support or resistance, so it's pretty tight around here. I'm not expecting much of a sell-off below that, unless we get a major dollar rally, and I don't see that with a Biden administration coming in right now. U.S. dollar CHF. Let's see how this is going. Interestingly enough, what do we have here? We were a big bear. We were waiting for a signal. Guess what we got? We got a signal here. We definitely got a signal. So what happened in this day right here? We have this rally, and we settled. Let's see. As the open. Did we do it? 88.94, 88.93.9. Nope, it's not quite. Okay, so this stayed inside. So interestingly enough, we don't have a buy signal here, even though we had a very positive close. Right now, I would say you want to key off of this last high right here. Any rally above 89.47 would have us on the neutral campaign here, not necessarily the bullish campaign. Downward sloping resistance here is very strong. Now remember, this, even though we have Brexit coming on, and the Swiss is obviously in part of the EU, the Swiss currency is a flight to quality currency. So you always have remember that there's the dollar, there's the Swiss, and then there's the Japanese yen. For the European basket of currencies, the Swiss is definitely one of the earmarks for flight to quality. Right now, like I said, we are waiting for a signal. We'll see what happens over the first couple of days of the week, this week ahead, and also see if the other currencies such as the euro and the pound
anything
fall
above
off.
there,
Now, if most of the currencies fall off versus the dollar, I would expect to see this U.S. dollar Swiss continue to pressure resistance up towards this 89.47 area. If it's legitimate and there's strength, or let alone dollar strength across the board, then we would probably see a little more follow through, getting up towards this 90 even area. This last low that was stamped in here. Now we're going to take another New Zealand dollar pivot. So I think right in this area here, you'd probably be buffered and stop. Interestingly enough, though, while this market has been unwinding, it's had a lot more volatility, excuse me, volume and volatility and ranges than the euro US dollar, which is significant when a currency such as the Swiss overtakes the euro as far as those variables, because usually it trades inside the euro. It's a bigger currency. So when this is reacting like that, that tells me that it's possible that the Swiss is going to become in play soon. But we're waiting for a signal. So we really don't have anything for you there. Let's go now. If you look at this, jump around the ocean the other way and go to Japan. The U.S. dollar, Japanese yen has been in a very interesting neutral phase here. We've been waiting for a breakout upside or downside. 104.77 down to 103.65. This is a chop fest. Be very, very cautious, especially trading right around this midpoint here. I would look to, if you are a bull, look to buy against this 103.65 area. However, a failure here would mean newer move lows and have us most likely pressing this downward trend towards 103 even. Remember, the U.S. dollar, Japanese yen has been in a downtrend for quite some time, making lower move lows and lower move highs. This significant lower move low and lower move high here really confirmed how much this U.S. dollar yen doesn't want to get a big rally going on, meaning that settling into a neutral phase could be exactly what's going on. Where they don't have Brexit that they're dealing with. Everything between Japan and the U.S. is just moving along as it normally does. There's no trade deals that are going to be negotiated. Everything's been done with that. As far as production side and things like that, that's the only thing that 2021, hopefully, as things come back online, that's good for the Japanese economy and also the strength of the yen. I don't see the dollar getting a big move to the upside once again unless we break out above this 104.77 area. And then even if we do, I think you have to be mindful of the trend here, and we'll get this. If you go to our Ninja Trader chart here, so if we just use these significant levels right here, let's take this off. If we do get the breakout here, then maybe we'd be set for a neutral, short-term bullish, longer-term, medium, longer-term neutral. Because if you look at where we're trading here, from most of the fall, actually, if we go from September and we hit this area right around the midpoint of where we were bouncing around in September, that would put us right above this area where the downward sloping line is coming into. So we should probably come into a lot of heavy resistance at this area. Let me make it a little clearer with a horizontal line right there. So yeah, 105.24 area, I think you would most likely see us buffer against that first and kind of chop around as we come out of this, as we take out the longer term downward trend and start to go into a neutral trend. Once we start to develop a base there, now remember, if I'm bearish the dollar overall for next year, as we have a transition of presidents and what have you, we know we're going to have a lot of turmoil politically in the United States as far as overturning all kinds of things, which that impacts businesses. Besides the coronavirus lockdowns that have impacted businesses globally, including in the U.S. As well, we have the whole issue of how are we going to get through this winter. We don't even know if it's going to be worse than it was last spring, or if it's going to be the same or less. Right now, things aren't looking in the positive direction, at least in the short run, besides the virus vaccines that are potentially going to be released out to most of the population within the next year. So we'll see how that happens. But we're going to forget about, we can't predict anything when it comes to Mother Nature. What we can predict is what goes on in the marketplace, and especially by price action. Price action right now is showing stability as far as the US dollar yen. So as far, I don't see too much pressure to the downside unless we have a failure here at 103.65. We had a negative close. I think that the reason you have the sell-off dollar yen is because if it was just a dollar trending move that was going on Friday, you would have the dollar down versus all the currencies, or the dollar up versus most of the currencies. That wasn't the case. What we had the euro and the pound that fell apart, and the Swiss obviously also fell off, which gave the dollar index a boost. Now, when those currencies are typically falling against the dollar, it's typically when the yen goes the other way. So I would say that Friday's sell-off in the yen is probably most likely attributed to profit taking on the week, as well as the fact that the other majors were going bears versus the dollar. And so usually there's an inverse relationship, meaning that when the other currencies are bears, the yen is a bull. Okay, if that makes that's clear sense to you. And I think that's what we noticed on Friday. So we'll see what happens on Monday's opening. Now, if Monday, this sell-off, there's follow-through and we get below this 103.65, well then all bets are off. And then you're looking at the dollar being most likely a bear. And the other thing is that if it does continue to go lower, and the other currencies go higher, that means that we have the nice divergence, which means that the whole coronavirus is off the table as far as the dollar is concerned for a little while. So we'll have some interesting signals that we're waiting for. Right now we don't have one here. Now let's go and look at the other part of this trade. Australian dollar, US dollar.
As far as price levels,
you want to talk
first look for a challenge of this 2060 area. Anything above here, then we're
currency
looking to
that is
back
a
up
monster
So we're looking for a nice little move.
This one would be it.
Almost a whole peso and a half.
It's unreal what this currency is doing here. It's been a bull raging
so let's get back into some of our
how we go all the way back
as far as getting
to
trades
April.
off for you.
Remember in March when the dollar index peaked back in March, this currency bottomed, and it has been a relentless bull going all the way into Friday and then topping out. So this is a big bull. We're waiting for a signal. Did it top on Monday? Well, I don't know. If every day for the past month you were saying this is market topping, you were wrong for the most part. So I'd be very cautious with this one. So we're seeing dollar weakness here, and this is why I think the dollar index, especially when you have a sell-off in the pound and the euro, and as long as they don't make new highs versus the dollar, the middle range currencies right now, they're extremely strong versus the dollar, but even if they just sell off a little bit and have a neutral trade, that keeps the dollar index in a positive way. So it's going to be really hard to just look at the dollar index and get a gauge for strength or weakness with the dollar, because we have the currencies now that are free-flowing and starting to come back into their own way. Because remember, the first part of this year, because of the coronavirus, it was pretty much a one-way trade with most currencies either bullish or bearish versus the dollar, depending on when we look back. So with this one, we are waiting for a signal. Now, New Zealand dollar, US dollar, interestingly enough, is showing something a little bit different. We had
let's do that with the euro. So if we look at the euro
bearish engulfing line sell signal,
which we already know
a week and a half ago, and then all of a sudden we had this rally that took it out.
Is here.
So now,
so the euro is a bear versus the
what are we looking for here?
Now let's look at the euro.
We made higher move highs after a higher move low, which is indicative of what? Once again, a bullish trend. Now, this is a very vertical trend, just like the Australian dollar. So as far as being bearish, no, I would say correction is overdue, but that doesn't mean it's going to happen anytime soon. But this one here, it seems like it is the volatility as it makes a new high and now starts to come off. We'll see how it reacts next week.
This would be a sell signal.
We see a failure of these lows. This made a good support area. We bounced off and had follow through going from Wednesday into Friday. But when you look at this, if it comes back below this, here, that would mean what? A higher move high and a lower move low. that put us on a neutral bias. So definitely any trading below 70.07 here has us in a short-term corrective phase, targeting at least the 68.78 area. Any extreme break would suddenly be down to the 67.37. Most likely not going to happen. This would only be
then the
a
U.S.
case
dollar
for
will
dollar strength. Now, if we have, for whatever reason, a big turnaround in the dollar, whether it's because of geopolitical events or whatever, I can't think would really happen over the next 2 to 3 weeks just to really get the dollar bulls raging. Even if it's just for a profit, unless there's a big profit-taking move on the long-term trend traders
to the euro
at the end of the month. Just as they clear out their books and balance before they head into 2021.
The U.S.
That's
dollar
also very
strength,
possible, but those are scenarios we have 2 weeks away to wait for. So right now we're waiting for a signal.
That it also will gain strength.
A failure from $1.70.07 would be it. So if you're an aggressive bear, selling against the current high is probably a very low risk trade. However, I would not risk much beyond this high because any rally above here confirms that the strength of this market is just in place and is not gone yet. So we don't have a real valid sell signal yet. We're waiting for it, but it does look like it's getting a little toppy despite how the volatility has been handling this currency. Now let's go to the U.S. dollar Canada, see what's going on above our borders here from the United States. This is an interesting
especially with the Forex
trend. Obviously, bearish, new move lows, lower move highs, lower move lows, and we had that consistently going on into this week. However, the close on Friday has us wondering what's going to happen here. So we will see how the market reacts on Sunday into Monday. And if we get a significant show of strength, not that it has to really rally up to this $1.29 area, but if we could have another positive day on Monday, it might mean that we're starting to find another area to consolidate for the U.S. dollar Canada. I have to say that I don't see any real big fundamental reason for this market to have a big rally that would be going on for months on end. Most likely what we're going to have is a short-term correction, something like what we had back in September for a month, kind of grind higher. We're going to have like a spike into an area and then fall back off of it. I think that's most likely what we're going to see with the U.S. dollar Canada. We have to wait until the next week or so. Remember, we're heading into holiday markets as well. So that being said, with the holiday markets, we really kind of have to wait for a signal. You don't want to jump in front of a trade. But if you want a low risk buy right now, I would say that you can.
We looked at those crosses.
Get this in here.
Is a bear and why?
So we used the low from Thursday here at what is it? It's $1.2707. Yeah, so right there at $1.2707. If you are a short-term aggressive bull, this might be a nice little area to start pecking off. But I would not risk much below here. Any failure trading below $1.2707, this market's just pounding new lows. So it's a low risk buy. We don't have a buy signal. Let's see what the hourly looks like.
Dollar is a bull versus the pound.
On the hourly for the Canada,
the Australian dollar.
Well, here's what you got. You had made the lower move low, lower move high, higher move low, higher move high. So I would key off of probably this $1.2752 area on the hourly chart, and definitely a failure from $1.2720 would have us in a very big bearish way. So yeah, depending on where the market opens, you could risk somewhere between this $1.2719 and $1.2707 area, or $1.27 even.
So for
as you
any
risk anything below there, you're looking to just you're trying to catch a falling knife. But if we are going to get a short-term turn on the hourly, it looks like we're getting kind of a little signal here from the U.S. dollar Canada.
Well,
especially how this all manifests as Sunday comes before we know it, and Monday morning will too. So we've looked at these currencies around the globe. U.S. dollar TRY, we're going to give one quick look at real quick.
So
still going sideways.
Cash market.
Yeah, I think the dollar index, excuse me, once again is starting to find a basing pattern. So we'll see. We don't have any real signals there yet. But remember, we have the euro US dollar. We do have this short-term sell signal. It's still in place, and with the negative close on Friday, if we get follow through and take out this $20.58 area on the daily, that confirms lower move lows and definitely a short-term turn in the dollar index. So we'll see how that manifests. And just want to remind you to always check out forex-trading-unlock.com for your Forex trading needs. And when you want to pull up the charts, you just go along, go to the Market Analysis Education tab, hit the Workstation tab there, and then it'll pull up the charts with the numbers, and then you can do your own analysis, and you don't have to log in or anything, and you have access to all kinds of things. Not to mention, also remember to subscribe to our YouTube channel if you have not done so, Forex Trading Unlocked. And then also, if you want to learn how to trade these high probable Japanese candlestick patterns,
like this,
read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. I want to thank you for your time here today, and good luck in the trading week ahead for December 13th through the 18th. And we'll see you soon. We're going to do a couple individual videos for the euro, the Canada, the pound, a bunch after we turn this one off. So if you're viewing this one and you want to hang out, Forex Trading Unlocked, and we are here
those are our
for
trades
a
for the
weekly
European
British
currencies.
pound US dollar
Now let's go to the
analysis
US
for
dollar
December
yen
13th
once again
through the 18th.
All right, well this one,
So
remember
we
we are coming to a point
show
where
you
we're
our
looking at
disclaimer to
maybe a
remind you
short-term
that this
correction.
webinar is for illustrative
Overall, we are
and
a
educational
bull US dollar
purposes
Japanese
only.
yen, remember, because
And
of the
we're
commodity
gonna remind
aspects
you also
and
to
the
please
interest
subscribe
rate
to
aspects
Forex
as well.
Trading Unlocked
These
if you
are
have
all
not
things that
already.
play
Share it
into,
with your trading
come into
friends
play,
also. We
rather.
would appreciate it. And we're going to talk about
and
some sell signals and some buy signals. And if you want to learn how to trade some really good signals, read the book High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback
we have
and
this
Kindle
level
versions.
here. Let's go
by
and look
yours
at our
truly.
Ninja
Yes,
Trader
I wrote
chart
the book.
for our
So,
US
and
dollar.
with that, we're going to go to
US dollar
our
JPY.
live
Whoops.
action screen here.
Lost that.
We have the Forex-Trading-Unlock.com website pulled up, and we already went to our Market Analysis and Education tab and pulled up the
US dollar
Workstation
yen.
page.
We
Our
took out
Workstation
that
page here
high
has a bunch of the
previously
economic
yesterday,
number calendars and
setting
a bunch
higher
of other
move
things
high.
on the
Obviously,
page, but
today
we're going to
trading
focus
a
in
little
on the
bit
chart
lower.
that we already have
Our
prepared
upside
for you.
target off of this,
The British pound US
low
dollar has been in
is
a
our
bullish
Ninja
mode
Trader,
since middle of September and
reward
actually going
trading,
all the way back
projector.
to
That took that
March.
out, obviously, because we made
Interestingly
higher move highs,
enough,
so
let's
we've
see
already
how
accelerated
these things
through,
are
and
shaping
as far as
up and what's
upside
going on.
targets,
Now
we have
remember
longer-term
that the
targets,
British
but we're
pound
looking
US
for a
dollar
short-term
is
swing
one
back
of
and a
the
break to
biggest
buy.
components
So,
of the
meaning
dollar
right now,
index.
Especially
Longer
if we can
term
see a little
trend,
pullback
look at
in
what
oil,
happened
and we do have
as
a rally
of
in the interest
Friday.
rates. So
We
that could
have
be one of the
this
reasons
trend
why
here
we're
from
seeing a
September and
little slight
October. That's
pullback. Remember,
not
it's
a
also
steep
possibly
slope. It's a pretty
profit-taking.
decent
I would
upward
expect
slope
to
to
see a
maintain
mimicking
a
of what
neutral to
happened
higher
here, where the
posture,
made
which
this
it has
high,
been
came
doing.
back, broke
But
for
then
a
we
couple
have this
days,
longer
and then
term
the turn was
trend
maybe
here.
right around.
Let's get that a little lined up a little
U.S.
bit better.
dollar strength definitely versus
And we'll
the
change
yen
the
is
color
in
of this
play.
one.
So
Let's make it
remember
yellow,
that
so
when
there we go,
look
we
at
can
the
see it.
different
All right.
currencies, you know, when we did those other
Interestingly
crosses,
enough,
we
the
did show that
long-term
there is
trend that
yen
goes
strength,
all the way back to when the
versus
dollar
other
spiked high
currencies,
and has been
in the
trending
short
lower
run, but
versus
then
the
also
pound.
longer term, not so
Friday
much.
it
So
closed
the yen has
just
a lot of
above
issues
that.
as far as,
Pretty
gaining
interesting, isn't it?
strength in any
We had a sell
capacity.
signal back here on
One of the
December
reasons why
4th.
is
December 4th
besides the
seemed to be
commodity
a little
driven aspect, the
turn
interest
for
rate,
most of the currencies that
variable
were
on their
bullish
end
versus the dollar.
is
Not
locked.
all of
They're
them,
not
because
doing
other ones are
anything.
making
So
new
their
move
rates
highs
are gonna
versus the
stay
dollar.
pretty much
Not as
at
we
the
speak
negative
because it's
rates
Saturday
and
morning right
be
now.
very low for
But
a
they
while.
have
They're
for
not
the past few
changing anything.
sessions, whereas the
Australian dollar,
pound,
US
just
dollar,
like the
remember
euro,
we
has
had the
sold
sell
off.
signal.
The
We
sell
have
signal
this
here
one
had us targeting this
targeting
$32.12
that,
area down to $1.30.04. Interestingly enough, it had come close to it a week ago, right after the sell signal came really close, and then it rallied, and it looked like it was going to fail. But what did it do?
New Zealand dollar,
Well,
US
here's what it
dollar,
did.
remember, we
It
don't
came
have
down,
anything going
almost
on
hit our
with this one
target,
whatsoever.
then it
We're
rallied
not
up,
looking for
made a
any
lower
trades
move
here,
high,
so
and
no
then as
action
of the
there
next couple
whatsoever.
sessions from Wednesday
And then we have the US dollar
into
Canada,
Friday,
which we are looking at as a
closed, this
short-term
market
bull. So
came
for your
off a
futures
lower
and
move
options
high,
traders
made a
and
lower
your
move
binary
low,
options
and then
traders,
settled right
we
on
wanna
that
key
line.
off of the
So we know
low
that if you
from
have lower move
yesterday.
lows and lower
So
move
let's
highs,
put
that's
this in
indicative of a
perspective
down
here.
trend. So short term,
So the low
on the
from
hourly,
yesterday is
we have a
definitely going to be
coinciding
your level to
sell,
key off of.
daily
So you
sell
wanna be
signal after a
aggressively
higher
bull,
move
looking
high.
for a
But from that higher
continuation
move
of
high, we've had
upside,
made lower
momentum,
move lows
and a
and
breach of
lower
this
move
downward
highs
sloping
on the
resistance.
hourly
Breach here
basis.
would
So I
take us
think
off
that
the
we're going to
bearish trend,
maintain that short-term
confirming
trend
neutralness. I
of
mean,
lower move
we have been
lows and lower
basically
move
trying to
highs on
bottom
the
for
hourly
months here.
basis.
Still making
One thing
lower
I
move
would
lows and lower move
use as
highs.
your biggest
But
guide here here for that would be watch the $33.22 area and also watch this $34. Excuse me, $34.22 $34.79 area. Trading above these two levels would have us off the short-term sell signal. Now remember, on the daily here, we already hit our downside target of $1.3212 for the sell signal, and we almost hit $1.3105, which is right in the middle of our target range. So has the signal been completed? For the most part, yes. The right thing to do here would be, if you had multiple positions on, we had two on. We took one off at the first level at $1.3212. So now we're riding one more short, hanging on, looking for $1.3105. However, we do have, we're in here at $1. Well, we didn't get in on the close here. We actually got in later, so we got in at $1.3409 here. So we're in a good spot. We've already moved break even plus a little bit, stops down to this $1.3345 area. So as long as we don't pierce that, our second trade will remain on as we look to get an extended move down towards $1.3105. So remember, on the hourly basis, we do have this market remaining in a bearish posture, and we're going to remain to do so, especially if we can take out somewhere on Sunday or Monday, this $1.3132 area. That would be a really good indication that this bearish momentum will build. Now remember this number, $1.3132. Let's go back to the daily here. So $1.3132 would be where? $1.31.
That's a nice little substantial boost that could give.
I'm just going to put that right there.
Save a couple percent on your trip. So right now we are bullish to U.S. dollar Mexican peso.
Here's our line. Look at this.
Remember the dollar
our
index.
Red line
as
for the hourly. This is a big deal. Okay, so let's go back to here. $1.3132. This is that hourly low. That is the daily low from Friday.
And also remember,
if we come below that, if we hit this, take this $1.3132. Remember that takes us below the overall slope of the trend that has kept this market in a bull market for the past 6 months. This has us definitely confirming a corrective phase if we could trade back down through this area again, making lower move lows as we come down to try and test this upper sloping support here. This is the more evenly sloped support line holding this trend intact. If we fail here, well, then we're going to be definitely looking to hammer this $1.3004. Beyond that, we have to wait and see what happens as far as any type of signal. We don't have any to go off of that. Remember, we're coming into Brexit. Odds are very good that as we get through this week, if we're going to have any real extreme move, it will happen this week, and then we'll probably start to settle into a very quiet, neutral, sideways trade where range traders are the only ones that are going to be making money as we go into the holiday market. So this week ahead is our last full trading week. The next 2 weeks after that are going to be broken up because we have the Christmas and New Year's holidays where we're going to be losing a day of trading no matter what. So that's something you need to be very mindful of, and the fact that a lot of people are on vacations and what have you and traveling. I know in this coronavirus world, people will not be traveling like they normally do, but we do know that people still will be traveling over the holidays. So since we have no questions on our chat box, we will be back with another individual Forex market weekly analysis video soon. And check out, remember to go to our YouTube channel if you have not already, to subscribe to our Forex Trading Unlocked channel, and hit the little bell too, so you know when you'll get emails of when we have new videos coming out. And check out the book High Probable Japanese Candlestick Patterns to incorporate the best buy and sell patterns into your trading systems and methodologies. And this book is available on Amazon.com in paperback and Kindle versions. And I thank you very much for your time, and always go to forex-trading-unlocked.com for all your Forex information. Everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here today for a Forex Euro-US dollar weekly analysis for December the 13th through the 18th. And before we get into that, we just want to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. So just read through that real quick. And then we also want to do a quick plug to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, please, and definitely share it with your Forex trading and other online trading friends. And if you want to also learn about the trading signal that we're going to talk about in this video, read the book High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions.
Now, as far as the tools and how we've broken down this analysis, you can easily do this all the time on your own.
Right to our
Remember, if you go to
forex-trading-unlocked.com website, where we have the
nav bar here, you can pull up
workstation page already pulled up, and all you have to do is go to the nav bar at the top of the website, any page, and you go down to hit the Forex Analysis and Education tab, and you hit the Forex Trading Unlocked Workstation tab. On that page, you can see all the economic numbers that come out for the week ahead. As far as the euro is concerned, we do have wages, labor, total trade balance, and construction output coming out on
get a page like this,
the 14th.
You can scroll down,
and then we have CPIs, retail sales for the U.S. dollar, so that might have a little bit of movement for the market for those on Monday. And then let's see what we got going in here.
We can see we're streaming live right now.
December 17th.
We also have crude oil, Brent futures daily, a couple other.
We're kind of through most of the major numbers for the beginning of the month. And we have the holiday, unemployment, and there's a couple of euro numbers that will be coming into play, but nothing really too big this in the week ahead. Now remember, this is the last full trading week ahead of us before we start to head into holiday markets. So as far as the euro is concerned, we have, what do we have?
Mentoring, trading courses, etc.
We got someone in our chat room. Rod room, awesome, and thanks. Cool. If you have any questions while we're talking about the euro US dollar,
for how to trade those patterns, or
down there, and we'll answer them as we go along. So to start off, the euro US dollar had a dark cloud cover sell signal back on December the 4th. Since then, we traded down into this current week that just passed, and we had a nice little bounce on Wednesday, rallied up and peaked on Friday, and then had a negative close. So right now we have made on a hourly basis, let's show you this.
Or from our
we have made
oops, that's not our homepage.
lower move lows and lower move highs consistently. Now we had a nice little rally from Thursday into Friday. Like I said, it peaked, and then Friday, as you can see, we ran into a wall at the top there. We have a short trade from $1.2147 that we had. Our initial stop was at $1.2175, and now we lowered it to a positive stop at $21.40. Our downside target is 20.45, so that's down below the chart here. So the risk-reward ratio on this trade is pretty strong. So right now that's in place. We have as long as the market doesn't get above this 2040, 2140 area, we'll still have it on. And I think that with the way it's settled on Friday, that we have a good shot of the market coming down at least down towards this 2090 to 2080 area sometime on Sunday into Monday night, or Monday morning rather. Now the nice thing about this is, remember when we started out, we have the daily sell signal in place. So on the hourly, we have
You go on the link here, you pull up this tab, and then
now,
you
the keynote that you want to really pay attention to is our downside target here for the hourly is 20.45. Now let's take off this hourly chart, go back to our daily here. And what happens if we hit the 20.45 area? So let's put a horizontal line right at 20.
Definitely check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com.
Make this a 45. See how easy we adjust this
Kindle versions
with our charts. You do this right on the website. No login. You can do your own analysis and figure stuff out for yourself. Anywhere you are, you just need a computer with the mouse. That's it. So once again, we have our dark cloud cover on the daily signal. We're targeting down towards $20.45 area from the hourly. Let's make this a different color since it's our hourly. We'll make this a reddish line, because anything below here would definitely have us on the sell campaign. Okay, so there we go. All right, so here's our levels and our things that we're watching. Now, Brexit is coming up on the 31st. Negotiations between the UK and the EU have started to, well, they haven't been. We've been talking about Brexit for years, actually. I actually go on a couple of different financial shows, and we were just talking about how within a couple of weeks we will no longer be using the term Brexit. We'll be using the term post-Brexit. So, but it doesn't look like they're going to have much guidelines lines hammered in by the 31st.
On that page,
Coming into a little bit of impasse between Boris Johnson and Angela Merkel. So we have the daily and the hourly to have sell signals in place. What does that mean? Well, what happens if the hourly is right? Let's just say that our short-term hourly sell signal gets followed through on Sunday into Monday, Tuesday. If it takes out this low right here that was made on Wednesday,
and you can also
then that would be very, very bearish. Why? Because that would mean that we would have made a higher move low, a lower move high, and then a lower move low, which would have us, at least in the short run, on a daily basis, it would confirm a bearish to neutral posture. Only in the short run, not the medium or longer run, but definitely in the short term. Now, since we're coming into, like I said, this is the last full trading week of the year. After that, we have 2 holiday weeks that are going to be broken up. You're not going to have a lot of market participants in the marketplace during those 2 weeks. You're going to have a lot of just algos kicking around, so it's just the machines. So make sure you pick your points and know what's going on with your levels. If you don't, you're going to get hurt. I promise you, it's not going to be a pretty thing. So our bullish breakout level will be this $21.61 area. Oops, that's not where it's at.
Trade the stock markets, Forex,
the high right here.
Currency markets,
$21.77. There we go.
Well, recently when
move that name
we had
there.
back in November,
Okay, so here, let's move this chart down a little bit. So here we have 2021, the first quarter of 2021. Where are we going to go? Who knows? But we have this upward sloping support line here that right now is keeping the trend intact. Now, it had been very steep from the beginning of November into the beginning of December, which is when we had the sell signal triggered. You should be mindful of the fact that this low back in December, or November rather, was at $1.1602. Our high a week and a half ago was $1.2177. That was more volatility and more of a range within a month's period than the euro had had for almost a year and a half before the coronavirus hit earlier this year. So it's very significant that on the yearly basis, this year, it's not the biggest range because the euro's been all over the place. But to have that kind of volatility in a month heading into Brexit and the holiday markets, we have this short-term sell signal. I think we're really ripe for a correction now that will keep this $21.77 area intact, most likely keeping us sideways to lower as we head into December 31st. December 31st, after we pass that, obviously then it will be post-Brexit. Once we're talking about post-Brexit, who knows how long they're going to have to figure out deals, but they will be, and Brexit is in full motion. So the extreme I'm looking for right now is, let's see a test of the low from last week. If we fail there, that confirms lower move lows after a lower move high, and then we will be probably pressing $1.2045 right away. A failure from $1.2045 really has us on edge then, targeting $1.1957. So now, like I said, if this happens next week and we have that kind of a trend going, that would be something that would kind of fulfill a nice short-term correction, blow off a little bit of the steam from the volatility that it's had over the past month and a half, and then probably go into a quiet neutral trade as you go into the holidays. The holidays could be volatile, they could be swinging all over the place, or they can dry up like there's no tomorrow. Always be careful of a holiday trade, especially between Christmas Eve and New Year's Eve, and especially around New Year's Eve. You're going to have the algos kicking. You're probably not going to have a lot of participants. Usually the ones that are playing around on the holidays are either traders that are extremely bored and have very bad discipline when it comes to trading, or they're newer traders that just don't have the developed the discipline yet to stay away from markets like that. So with that being said, let's go once again back to the hourly to prepare you for next week. On the hourly basis for the euro US dollar, we are looking for a follow-through break to take this market down towards $1.2090, $1.2080. If it fails from here, it should continue to press forward towards lower levels, targeting a downside target of $1.2045. But if it gets above $1.2140, we're out of this trade. But really, it has to get above $1.2177 for us to be off the bearish campaigns. Because remember that the hourly trade, once again, this is the hourly signal. This has a short from $1.2147. This is an hourly signal. So this one can be negated while the daily trade is still on. The daily trade is off if you fail from $1.2177, because this daily trade here we're in at $1.2120, or actually $1.2119. So for that one, so we have a position on the daily basis. We also have one on the hourly basis that coincide with each other, and especially if the hourly hits. Now we will take off the position with the hourly once we hit the 2045. So remember to always be disciplined. We have two trades on. This hourly trade, if it hits $1.2045, it is over. It's done. It's gone. But it doesn't mean that the daily trade is off. So we're hoping to have that get down to that lower area. And let's see, we have any questions? We don't have any questions in the chat room for our Euro US dollar weekly analysis. As the week unfolds this week, especially once we hit the 2045 area, because then we'll have to take you off the hourly and just maintain the daily, which at that point, if we do make lower move lows after having made this lower move high, the stop that we have in for the daily signal will also be brought down, because that one we have at 2175. So we got a lot of risk on that one, but we're looking for a bigger slide on the daily basis for that trade. But once it falls and makes lower move lows and hits our hourly target of $1.2045, then our $1.2119 rather trade we will bring down to a break even plus 3 to 5 pips, depending on how extreme the market is when we get to that area. So once again, we don't have any questions on the chat. If you guys want to hang around, we're going to come right back with the British pound video, but this one is our Euro US dollar weekly analysis video, so we'll be right back with the fresh one, and we will be focusing in on the British pound. So I want to thank you very much for hanging in there, and just want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, in case you haven't already. And if you want to learn how to trade that dark cloud clever sell signal that we were just talking about in the daily, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And also check out all your Forex trading needs at forex-trading-unlocked.com. We'll be back in another moment.
From your platform.
Hello everyone, this is Teddy Kekstedt from Forex Trading Unlocked, and we are here to show you a short-term sell signal that's going on in the Euro US dollar, and you can track it as the trade is going on. So here we go. You can watch our videos with the analysis that we already streamed earlier today, or you can watch this trade as it continues to manifest itself highs and higher move lows the trading day. As you can see on the daily basis, for illustrative and educational purposes only, it's already in action, so never try and chase one anyhow. Just watch and see how the results unfold. With that being said, I also want to give you a plug real quick. High Probable Japanese Candlestick Patterns available on Amazon.com in paperback and Kindle versions. You can learn how to trade the short-term
this $1.2192 here would confirm.
That being said, we have our live action screen pulled up here. You can see that we had an hourly sell signal that had occurred yesterday. We had one that had occurred on Friday that touched off this original slide. Our upside breakout level here is $1.2141, and our downside level is $1.2109, which we're trading just above right now. Our failure from here has us going down towards this $2012 area that we're looking for the market to reach over the next couple days. So with that being said, keep on watching the signal. If you have any questions, leave them in the chat, and we'll answer them when we get a chance, and also incorporate them into our next video webinar.
30-year Treasury bonds
later on. So with that being said, you just pay attention to this trade. We'll see how things are going, and we'll talk at you later. Thanks a lot. Good luck in all your trading too.
Here we go. We have the 30-year bond is down one whole full basis point plus another 14 ticks. Those would be pips in Forex terms. That's a big move for the Treasury bond market that was closed basically since Friday. And also remember that interest rates are a function of currency pricing. So even though the interest rates with the Fed and the banks are remaining restrictively low, the market is now dictating higher rates. And the fact that the Treasury bond, 30-year bond, is down another full basis point to a full handle, that's a big deal. So that's 32 ticks plus those 14. That's a 46-tick move for the futures contract, for the March futures contract, which is the front month.
which is definitely helping to give the dollar a boost. So usually there's different reasons the interest rates can make the currency swing, but it's because of the fact that the spreads are so tight with the short terms. The spread is now widening in a very big way between the very short term and the long terms. That's giving the dollar a boost. So we'll see how this is impacting these currencies. So right now we have established that this buy signal here that was part of this downside correction. Remember, the euro US dollar is an overall monthly, weekly, and daily, monthly and weekly bull. Daily, it's been in a corrective phase for a while now, since the beginning of January. And now in the beginning of February, we've gotten a nice bounce. So the question is will the big euro bull come back, or is the U.S. dollar bull going to start to come into play? Now, we have divergence in currency pricing right now with different currencies, basically because of commodity-driven reasons. So when you get to the Canada, the Australian dollar, New Zealand dollar, and those are definitely impacted because they're highly, one of their biggest products is raw commodities. So, and the U.S. is also impacted by oil, but not so much as it is these other currencies are. And we'll see how that is going. So right now we have the euro a little bit on edge on the hourly basis. It did make a higher move high. So on the daily and hourly basis, we are bullish, but right now it looks like it's starting to run out of gas. Remember, we did have the NinjaTrader platform pulled up here. Now, here's something that you might want to take into consideration, and this is why I like using this NinjaTrader. See how we've established this was our target zone. We had already hit our first target, and we were long this, currently still long the euro US dollar. We've raised our stops to right here where this low is here at this where this point is, which, by the way, if I were you, if you are currently long the euro US dollar, then this would be a, where do I want a horizontal ray. That's what I want. Okay, so here we take this low. All right, so out there. All right, so this is where around where our stop is right here. We actually have it just a few pips below this low. So today we made this higher move high. So on an hourly basis, we're still bullish, but it looks like the sell signal is starting to occur. Should we take out the low from Thursday here, which that would be a very negative indication. Let's see, the low on Thursday was it 120.81. So a failure from 120.81 would definitely have the euro US dollar back on edge in a very big way. However, we still have this making higher move highs and higher move lows. So if we take this high from the bullish engulfing line and we go to our low here, we can establish a risk reward level, and that would be up here. And we're going to pull this out. Oops. Okay. And this establishes a whole nother target. Excuse me. So for an extreme correction, so let's just say that we maintain the higher move highs and higher move lows. Remember, the trend is your friend. Currently, that is the direction. Today's sell-off could just be a profit-taking move. So 122.43 up here, that's our extended upside target. However, if we fail from here, let's get this down a little bit better here. Okay. If we fail from this low here at $1.2081, well, then we're definitely going to start to see this bullish. However, we are looking for possibly a potential turn back to support. We'll start to see why in a little bit. Now we have British pound. You want to talk about a raging bull. Do not try and fight this one, folks. One of the reasons the British pound US dollar continues to rally like it does most likely is because of the oil trade. As long as oil is progressively going higher, and I would not doubt it if we see $75 barrel oil, I would say at least by June, or at the most by June, but probably is very likely that we could see $75 a barrel by May, maybe even in April. So with the current administration stance on oil and the fact that, well, they're trying to literally put oil out of business, and so quickly. So the ramifications of that will have yet to unfold, but this is all good for British Petroleum and a bunch of other companies around the globe. So as we lock up U.S. oil, we are giving
other global companies a huge, huge, huge advantage, and this will have an impact on currency pricing when you talk about the Canadian dollar, the Australian dollar, a little bit the New Zealand dollar as well, and definitely the British pound. Most people don't think about the UK when it comes to oil, but when it comes to the UK, they're a currency giant and they're also an oil mammoth giant. So it's definitely a factor in their trade. So today I would key off of the high. It made a higher move high once again. This thing is a bull. I would say that if you are an aggressive or just getting into the market, being long this market, or if excuse me, you've already been working a position, key off the low from Thursday. Anything below $1.3775 will have you in a short-term corrective phase. Remember that this market is a bull. We have this upward sloping trend line here that's going to a support line that's going to hold up the trend. A failure from here would have us looking to target this $35.66. Even if we fail from there, we have this long-term upward sloping support line that's holding the trend intact. That's probably the extreme for any sell-off. Even if we were to have a huge bullish turn in the US dollar, meaning that there's all kinds of factors weighing that the dollar should rally against all currencies, it's not going to probably have that much of an impact on the pound. I think the pound will remain a bull for a while, especially now with the current administration, with the way things are going in the United States. I don't see any major sell-off. Now, we will have divergence, and we already started to see this, where the euro may fall against the dollar now, and the pound will continue to rally. So be very cautious trying to become a bear with the British pound US dollar. So now, one of the things that you have to take into consideration why the dollar is rallying once again is the US 30-year Treasury bond. So since we've been talking, it's actually bounced back a few ticks. It's only down one handle and 9 ticks. So that's 41 ticks altogether on the day. So, but for it to come back a couple ticks is no big deal. So, but anyhow, the British pound US dollar, this one we do not have any real, I would say, points yet that we can look at for the upside, except for it's a grinding bull, you know. So if you're long, look for some nice, just hang on and enjoy the ride. As far as any downside corrections, I would look for any nice little move that you get, a nice little sell-off. Like, for instance, if we can get down to this upward sloping support line here, that might be a good area to buy back into and look for another pop. So we're basically in a buy break forecast for the British pound US dollar, even if the dollar becomes a bull. Unless you see a big sell-off in oil and a rally in the 30-year interest rates, I don't see the pound getting any significant sell-off. Now, should all of a sudden, miraculously, the U.S. president change his point of view on oil and stop being so restrictive, then you may see a turn back to lower prices. However, we know that that's not going to be the political plan is to destroy the oil industry. So it's not going to happen as far as the U.S. So we're just going to we're going to stick with the trend and ride the oil trade. And as far as interest rates, they can keep interest rates all the way at zero all they want. The market now dictates higher rates after what we went through in 2020 and the businesses that are collapsing, with even CNBC announcing that upwards of 40% of all businesses currently still open will be shuttered before the end of the year in the United States. That does not bode well for credit, let alone the extension of credit. So expect interest rates to continue to rise, especially for any type of business lending, which will become more restrictive, which will also help to fuel more and more inflation in other commodities and other markets as we move forward. So the bull remains in the British pound US dollar. Let's see what we have going on here now with the next one. We're going to go to the US dollar Swiss. So we're going to try to here. Let's go back here. US dollar CHF. Okay. This market is coming off a nice little correction. Overall, it is a bear. The dollar is definitely a bear in all these currencies on the monthly and the weekly still. Daily, the U.S. dollar has come back a little bit over the past week and a half, but it looks like it's trying to make a turn. I think the dollar strength here is where you're going to see a little bit of a
bounce in the U.S. dollar Swiss, but this will remain to be seen. So right now we're using this low from today as our basis point. Anything below the low of today would have us hard pressed on this 88.36 level. A failure from here has the daily, weekly, monthly all coinciding, and on the short term with a bearish market. So if there's a big turn in the U.S. dollar, where for instance we have a big sell-off in oil and a rally in interest rates, then most likely you'll see the U.S. dollar Swiss start to fall back on its lows. However, with the EU having all of its financial difficulties, and now with post-Brexit where the UK does not have to contribute to bailing out Italy, Greece, and all these other countries and be following these plans that the EU wants to do moving forward, that's another reason why the pound is so strong. It doesn't have to pay for the EU anymore. It's done. It's gone. They have their own sovereignty once again. They have their issues, but they're UK issues and not the rest of Europe's issues, and they got problems over there, that's for sure. Especially because they've seen more inflation in Europe in the past month than they've seen in the past 5 years. But then also we're seeing that here in the United States as well. So, but remember, people voted for that, and that's what we got, and now that's what we have to live with. So trade accordingly. I have to say, the past couple months have been great with the oil options, I'll tell you that. That's for sure. It's almost like a layup. You just know it's going to happen, which is rare in the markets. So U.S. dollar Swiss key off the 90.48 level. Any breakout above here through resistance would bring back the bulls in a big way. This, I think, what you would get is if you continue to see oil rally and if you continue to see the 30-year interest rates pound the lows, then it will be hard for the U.S. dollar Swiss not to come back towards a bullish mode. So right now we're waiting for a signal. We had a sell signal here a couple of weeks ago. This here is a bearish engulfing line sell signal, another high probable Japanese candlestick pattern. Remember to check out the book, High Probable Japanese Candlestick Patterns, on Amazon.com. So we actually hit our first target down here. This is kind of like what the euro did. It's already hit last week to our first targets for the dollar sell-off, and now we're pretty much bobbling, trying to just kind of feel the waters, and it looks like the dollar strength is about to come back in. Speaking of dollar strength, let's take a look at this. The U.S. dollar Japanese yen. Wow, look at what it did today. It's maintaining our upward slope here. This is a nice almost 45-degree angle, very manageable correction to the upside. Remember, the U.S. dollar Japanese yen has been on a monthly and weekly bearish trend. The daily trend, obviously, higher move highs, higher move lows. We have a higher move high today, confirming the bullishness of the U.S. dollar Japanese yen trend. Especially with oil continuing to rally. I know I'm hammering these commodity numbers, but remember that commodities are also a function of currency pricing, especially with what we have going on as economies are trying to come back on full capacity. Remember, travel around the world still, I know all the U.S. airlines is hovering right around, just around 50% of what it was pre-COVID. So you're going back to 2019 or January of 2020. So we have a year now where we are looking at ahead being, can we grow with travel? Is that possible? Well, if U.S. dollar strength comes into play, it'll give more incentive for people to travel, especially to Mexico with spring break coming up. We'll take a look at that one in a little bit. So anyhow, U.S. dollar Japanese yen, what do we do with this? That's a good question. That is a very, very good question. We're going to keep on watching this trade. It is a bull. I would not try and jump in front of this freight train for sure. I don't know if there's any of you out there in the chat rooms, if you guys are U.S. dollar yen guys or not. Do any of you guys trade it? You can go ahead and jump in on the chat anytime if you want. So right now you guys are not as questioning. You got a couple nice comments, but not any questions like yesterday. And yesterday was the dead trade. Everyone's trying to force a trade on a holidays, and kept saying, like, well, there's nothing there for you guys. All right, so U.S. dollar yen, what do we have here? Like I said, we're just going to keep on following that one. Let's take a look at our Ninja Trader here. We're going to pull this one up. Let's try that extension formula. When we had this earlier buy signal down here, this was a piercing line on the daily. We used that extension tool, and it worked out really nice. So we did have a short-term buy signal here. Now this is one that if you read the book High Probable Japanese Candlestick Patterns, you would be able to see how this works. Now let's go from here to here. All right. So with this tool, it looks like right now what we've done with the yen is we've already exacerbated our upside targets. Okay, so does that mean that we can't keep on going? Absolutely not. What it means is now that I think this corrective phase with the dollar is more than just a corrective phase, but we have divergence in currencies. So remember that the dollar index, the euro and the pound are the two biggest components. So with the pound rallying, it's hard for the dollar index to look very bullish. Okay, so if the euro is neutral or even slightly higher on any given day right now, and the pound continues to make new highs, the dollar index is not going to be the best gauge for which way the other currencies are going to go. Let's see, we got a question from Captain Will. Do you show the technical indicator you use? I'm not quite sure what you're talking about from where you jumped in on that. Right now, what I use mostly is for entries, I use Japanese candlestick patterns for buy and sell signals and for continuation signals. I do have some other methods that I apply. As far as indicators that I use, I don't use very many indicators. I use those for confirmation for long-term signals, just because most indicators are lagging. So what I like to do is use the most present price action. I always say that the best indicator truly of the markets is the market. So when I look at any of these currency crosses, like for instance the dollar for the yen trade, I look at it as in reference to commodities and also relationships with other currencies. So that's what I use for most of my technical indicators. It makes it very easy as far as, because it is what it is. It doesn't get too overly done with math. That's one thing you have to be careful with when it comes to all these, like, whether they're lagging or somewhat forward moving indicators, is that the math for all of them is very similar. So over time you come up with a lot of the same results from different type of approaches because of the way it's just the dynamics of averaging, which is what most indicators are basically drawn off of, some sort of average number. So but that's what I use. I use the high probable Japanese candlestick patterns for the most part. For instance, let's go back to our euro US dollar. You know, as we can see, we have this bullish engulfing line here. If you're not familiar with that pattern, you can read the book High Probable Japanese Candlestick Patterns that I've written. It's on Amazon, or you can just Google the thing. This is not going to be a lesson today in the dynamics of each pattern, but so that's one entry. So like this got us in on this trade here. We are still long one contract. We got out last week just below this high here for the short-term target one trade. In fact, if we look at, I think I have it up on the, no, that's the yen trade. Let's see. Here we go. The Euro US dollar chart here on the Ninja Trader. Yeah, our second target here is right here around, well, it's actually $1.2115. This is $1.2119 on this chart. So we're looking for any extension here, and most would be up to this level. However, with our Ninja Trader risk reward projector, we have $1.2243 as the extreme. And I would say that for sure, if the dollar is going to be a bull versus the euro overall over the next couple months, this zone up here is the high point of what I would say you're going to get to within the next week or so before we start to see newer move lows. And with the way today's trading, it's a little choppy. It's tough right now. You're making higher move highs and higher move lows, so it's hard to fade this bear. You always want to trade with the trend, and right now this one is it's a little choppy. So like I said, we're still long. However, we raised our stop up to where this low is here. So as far as indicators, Captain Will, a lot of what I use for indicators for managing trades is definitely prior swing highs and swing lows as you work a trade. And then I have also trading rules for as far as it has to reach a certain point towards a target direction before I even put a break even or start to adjust a stop. So I don't, I try to keep winners, I try not to let a winner turn into a loser, but also you have to give a trade time. So I have certain rules for that, and as long as I stay disciplined on them, they usually average out to in a good way. All right, so let's get back to these other markets here. We left off on the yen. Australian US dollar just got an interesting little bit of action going on here. Okay, so what do we see with this? Okay, we have a potential bearish engulfing line sell signal forming today. If we head back towards the lows of the day, that would give us, on the hourly basis, a short-term sell signal. And then if we could take out this low from a couple days ago, that would have us looking to lean on this upward sloping support line. Now, this is a line that's fairly close to 45 degrees. It's a decent, nice, stable line holding the trend intact. It's very likely by attrition that we will cross through it no matter what if we just go sideways. So key off the 78.22 level, any rally above here, obviously the long-term bull is back. Right now it has been making higher move highs and higher move lows. Use caution. If you are a aggressive short, now would be the time to do it. I would wait for a lower close than, let's see, we'd have to get below 77.65. So basically we have to settle just where we're at or lower right now for this to be a short-term hourly and daily sell signal. And then you would want to be using 78.22 as just above that as your risk for your stop, which is actually a low risk short, fading the trend. Normally I would say try and find a trade with the trend. We're not trying to pick a top here. I never try and pick a top or a bottom, but with a sell signal that's valid, at least on the hourly. And remember that with interest rates going where they're at, that's going to start to put a lot of pressure on all the currencies with the dollar getting bullish like that. If we see another dollar break in the bonds tomorrow, let alone if it gets down another 1 or 2 full basis points over the next couple of days to the end of the week, it's going to be hard to not be a dollar bull. The only thing it would be is if we have an extreme rally in oil that would hold up the Australian dollar, US dollar. Now, especially if we have a pullback in oil at all this week, and we have oil numbers to come out tomorrow on Wednesday, so you got to be careful. In fact, speaking of Wednesday, if you go to, let's see, I thought I had it pulled up here for you guys. Maybe I didn't. Oh, yes, I do have it pulled up. Okay, so if you go to our website, forex-trading-unlocked.com, obviously on our homepage you can see us streaming, which we're streaming this right now, and we usually have our weekly analysis up here. And by the way, if you want to download NinjaTrader for free, you just go to our tools bar on the nav bar, hit NinjaTrader trading platform online, and you can go down here, give you information, and then you can download it for free. But what we want to see right here is if you go to our Forex market analysis page, we always have past videos we did. We actually have our streaming and recent stuff. Here we had a video from eoption.com. But here you can see us every Wednesday on tfnn.com. And we had a big discussion about interest rates and what have you. I would say if you get a chance to check out this webinar or this interview from last week. I'm tongue-tied this morning. So it was a really good discussion about what's going on with interest rates and the currency markets, and especially with gold and the equity markets. And we're on there almost every Wednesday at 9:40 on tfnn.com. So I would say if you get a chance, check it out. And you can always access it from our website as well. So anyhow, we talk about how oil comes in, and actually right before I go on that segment every Wednesday, we get the oil numbers. And Tom and Tommy O'Brien, the hosts of the show, they always go over them, and then we end up usually showing or talking about how it interrelates with the currency markets. So Australia being a big oil exporter, and now with the U.S. being basically getting shut down slowly but surely, where we are now going to be importing oil again, this is huge for Australia. It's absolutely huge. So we are no longer going to be sending oil to Japan. This is huge for what our relationship with Japan as far as the yen, and even business-wise, because stability when you have, especially we're a regulated oil producer, our tankers aren't dropping bilge into the water and all kinds of stuff. So we're not contaminating the environment like these other producers are. So on the green scale, we're going backwards, but also the ability for pricing now, it's more manipulated because we are no longer a global player. That is correct. The United States is no longer a global player in the oil industry. We are off the table. That was taken off the table. It is going away. This is huge for Australia, though. So it's going to be hard for the Australian dollar to have a major sell-off. But right now, we're looking for at least a short-term correction. Like I said, if we get a close lower where it's at right now or lower today on an hourly basis, we'll have levels for you, but we have to wait for the signal to happen. Remember, this is forming. For all we know, the market's going to reverse gears today, make new move highs, and maybe even take out this high at 78.22. But after the close today, if we don't have our video out yet for aggressive shorts, I would say use the 78.22, maybe about 78.25 as your stop if you're going to go short, and look for a nice little test of this downward sloping support line. And we'll know if we get the sell signal later on today, well, what those levels will be. But otherwise, I would say you would probably get a good chance at getting down back towards this, not 76 even, but maybe 76.20, 76.30, somewhere around here, just below this upward sloping support line, kind of stressing it. And remember, that just would have us in a neutral outlook. Now let's look at the New Zealand dollar, US dollar. Okay. All right, what do we have here? We have... Okay, oh cool. We got some nice people number on YouTube watching besides Twitch. Thank you, guys. All right, New Zealand dollar, US dollar made a higher move high today. This thing is wedging, and by attrition, it's coming through its upward sloping support line. It's holding the trend intact. Is that bearish if it gets through here? Not when it goes this way, and that's just sideways. Now remember, on the daily basis, it's been making higher move highs and higher move lows. It made a higher move high today. So key off of that, we don't have a signal here at all. Even if it was to close lower today, it's not going to be like the Australian dollar. Remember, divergence is the key to currencies this year. If you're not mindful of that, it's not going to be like last year where it was dollar-driven, whether it was a dollar bear or a dollar bull, and all the currencies reflected it. We had the coronavirus that was on the table and all kinds of other things that really just focused it on a one-way trade. There wasn't much. So, I mean, on a daily basis, you would have one up versus the other. However, the trend was very, very much a dollar-driven trade. The dollar index was basically a true reflection of dollar strength or weakness. Not so much anymore. Now we're getting back to free-floating markets. So be mindful. We're getting back to what is normal for markets behavior, whatever that really is, because it's always changing and adapting. So New Zealand dollar, US dollar, we need to wait for a signal. Now let's look at the US dollar, Canada. Another oil-driven trade here. Well, what do we have here? We have a potential bullish engulfing line forming. This has not formed yet, but look at this right here, guys. Okay, so if the market closes above $1, what is it? Right now it's trading $1.2682. $1, it needs to get above, yes, where it's at right now. If it's $1.682 or higher today on the close, that would confirm a short-term bullish engulfing line buy signal. Now, we will give you targets to the upside once we establish that buy signal. We have not established the buy signal yet. So now the good thing is for all of you guys that are paying attention today, it's close to 10 a.m. We're not going to jump off here. We got a lot to still cover here because we got some interesting stuff happening tomorrow. We will be doing a big live webinar interactive event that we've been promoting across LinkedIn and across our institutional and commercial networks, and I think you guys are going to be really interested in it. The nice thing about it is, remember I said today, these signals we've been looking at that are forming, by tomorrow they will have formed. So real quickly, I want to show you guys, and I'm going to give you guys access to this right now. If you go to LinkedIn and you go to our company page, Forex Trading Unlocked, okay, we always release our current videos. Like when we do the thing on Wednesdays, we put it out there. We put out our weekly and daily analysis. We'll even be putting out a link to this video also for you guys. So if you guys are wondering how to really get involved with Forex Trading Unlocked and get the signals and know what's going on and get access to a lot of really good Forex and also futures and other trading information, follow us on LinkedIn, and you just go to Forex Trading Unlocked Inc. or just Forex Trading Unlocked, and you'll find our company page. And as you can see, we have just under 8,900 followers throughout the industry. Well, we have an event that's tomorrow at 10 a.m. So if you guys are around, I want to share this with you right now. I'm going to give you the link to this. So you can go tomorrow and watch us for this webinar, and it costs absolutely nothing, all right? And you will be able to view us. All right, so we've got this here. I'm going to go and give this to you guys for all you Twitch followers out there. I'm going to put this out right now for you. So this is our webinar for tomorrow on February the 17th at 10 a.m. So we will be on TFNN at 9:40. You can see me live on there with talking to the guys. We're going to talk about the markets, and right after the oil numbers. Okay, that's tfnn.com. You can find them on YouTube. Like when you go to our website, also Forex Trading Unlocked. When you go to our website here, you can click on this, and you can find access to that link also, just to make sure that you are on board with that. Okay, so I just sent the link to you guys on Twitch, and now I'm going to do it to you guys on YouTube. This takes just a second. I got to cut out a couple words here. All right, let's get rid of this. This should be enough for you YouTubers. All right, for you YouTubers, there is the link also. So tomorrow, remember, at 10 a.m. Central Standard Time, which would be 9 minutes from now, it'll be 24 hours from then, we will be going over all of these signals, whether they did or did not form. It looks like right now, with the way things are going, we're going to have a lot to talk about tomorrow. And it's going to be a fun webinar, because right now we have signed up 263 people. So if you guys that are watching right now join it, if all you guys show up, that'll be over 270 Forex traders to interact with tomorrow through our YouTube and Twitch streams and Mob Crush, wherever you are watching us. We will be streaming out to all of you guys. This is not a restrictive thing. You do not have to pay for it, but it will bring together a large group of like-minded Forex traders and futures traders that are interested in swapping ideas with other traders and information about what's going on. So it'll be usually when we do things like this, we have some good questions, and we also have some good statements and information to relay out to you guys. So we'll see. You never know who's going to show up. So it could be some people who I've been active with in the business for 10 years or maybe even 25 or 30 years. Who knows? It'll be interesting to see what happens. So right now, US dollar, Canadian dollar, we are looking at a potential buy signal. Sorry about that, folks. I knew there was something I forgot, and I got turned off the landline. I didn't turn off the cell phone. Okay, so we sent you that information, and by the way, always remember to go to Forex Trading Unlocked and check out when we have these things posted also, if you're not going to follow us on LinkedIn. But we would like it if you do anyhow. So, in fact, what I'll do... Oh, actually, you got it. You'll be able to find it when you sign up, when you go to that link there. Okay, so with the US dollar, Canadian dollar, let's go now to US dollar, Mexican peso. How many of you guys are looking to go on spring break or have kids that are getting ready to go down spring break in the next month or so? I heard supposedly that schools are canceling spring break. Yeah, right, sure. Like the kids aren't going to blow off school for a week and go down to Mexico. So we do have a very bullish move here in the Mexican peso. Now, this is the interesting thing about the dollar. Remember I told you the dollar index, because of the pound and its weight on the dollar index, it's going to, for instance, if the dollar is bullish against all the currencies in the world, but the pound's going the other way, that's going to keep the dollar index from looking very bullish, the dollar, or bearish conversely if it's the other way, because of the pound's impact and weight for its influence on the index. But since we've been looking at all these smaller currencies, there's still major ones, but there's the lesser ones. The degree of dollar strength today is very impressive. So as we looked at the Canada, and now we look at the Mexican peso, this is a very big move to the upside. Now, the market has been an overall bear for almost a year. Right now, it looks like it's trying to bottom. It did make a lower move low, a lower move high, but it made a higher move low. So we're keying off this 1987 level for the peso from actually yesterday. Any trading below there has us back on the bearish campaign. Right now, I think we're more likely, as we're wedging here, to take out this downward sloping resistance line and make a challenge for $20, 20.60 pesos to the dollar. How much above here we can get? Yeah, I wouldn't get too overly bullish with this one. However, it looks like if you're getting ready to go on spring break, don't buy your pesos yet. I think you'll get a better deal over the next week or two. And especially if we do get above 20.60 pesos to the dollar, I think you're going to maintain an upward trend, corrective trend for sure, especially if dollar strength is coming in with a lot of the other markets. Now, it's a mixed bag of goods when it comes to commodities and stuff, but here's the thing is, as the pricing of inflation in oil and transportation starts to really creep into the market, the ability for U.S. consumers, even Mexican U.S. consumers, to import from Mexico will start to diminish. The cost is going to rise significantly. We know we already have food inflation. It's already creeping into your markets. Most people aren't noticing it as much because they're decreasing food sizes and keeping the pricing the same. But everything from seafood to, I don't care, even if you're a Costco customer, you can see the fact that inflation is here. So prices are either going up slightly or the prices are staying the same and the quantity is actually being reduced significantly, which is the same difference. So inflation is here. It is not going away. I think it's going to weigh a lot on the Mexican economy. They have their own basket of goods of issues, and especially as world travel, if we continue to have lockdowns like in the UK, people from the UK aren't going to Mexico, and they're not coming back with the restrictions. I mean, people are not going to put their lives on hold just to go to Mexico for a week, as much as they want to. But if it's going to mean that they have to quarantine coming back and going forward, that's how many. I mean, I know Europeans get holidays, but I don't think the people are going to spend 1 week on the beach and spend 4 or 5 weeks in a restricted hotel room, and especially for the costs of that, So these are the things that are going to weigh on the peso as we move forward. Let's see what else is going on. Now let's go back to the euro US dollar and see what's happening now. All right, well, we don't have very much action. It is going a little bit lower. It's kind of quiet on the day. Not really much to say. Let's look at the bonds right now. Oh, wow. 30-year bond down now a full handle, 24 pips. So it's making new lows. That's a big deal. That's a huge deal. Like I said, the dollar is going to get strength from that interest rate move. You know what? Since we're talking about this, let's take a look. And when you go to our navigation bar, just like when you go to Tools to download that NinjaTrader platform, you go to our markets. We're going to go past Forex. We're going to go down to Futures. And we're going to take a look at, now, due to market regulations and data regulations, unlike the FX market, which is only in a slight delay because we're streaming, we have the futures market, which can only be in delay because you have to be a paying customer to have data, to view data that's live. That's regulated for those of you that are unaware. All right, so weekly Treasury bonds are up here. Let's move to the daily. All right, the Treasury bond market was closed yesterday until the evening, and it tanked. So at $1.6506, this is where it settled, making new move lows. This was yesterday, 165.06. They're trading at 164.15 right now. So that's almost a full dollar lower than it was in the night trade last night. So that bar right there is actually today's trade continuing forward. And so that puts you at $1.14. Let's see, it's $1.64.15. So that puts it right here. So 64. So right where this line is right here. So I'll put drawing a line here just to give you an idea. 164. 14. All right. So right now, currently, this yellow line here, that's where the Treasury bonds are at right now. Look at this. Bear, bear, bear. Newer move lows, newer move lows, lower move highs, lower move lows. Indicative of what? A bearish trend. That means the dollar is going to most likely keep strength as long as the interest rates keep on puking and the oil rate keeps on going up. In fact, since we looked at the Treasury bond market, let's pull up Forex Trading Unlocked, and we'll go down here. We go down to commodities. All right, now this has all the different, we have the meats, we have the grains, we got the softs, we got the energies, we got the metals. Let's take a look at crude oil here. Crude oil as of the nightly trade. Look at this. We popped $60 a barrel on crude. If you think you're paying higher prices, which you are, than you were definitely a month and a half ago, let alone just 3 weeks ago. I mean, just in February alone, oil's gone from 52 to 60 bucks a barrel. That's a huge jump. It's almost a 10% jump in just 3 weeks, folks. That's huge. This is an accelerated rally. This is a bull. It is not going to stop. There is no, look at this forward curve here. This is so radical of a slope here, the way this is turned. You just don't see this. You just don't see this at all. Like, it's rare when you see this. And with oil right now, let's see, where is it at today? Yeah, it's going to maintain this trend. Okay, so remember, as oil continues to rally and the 30-year Treasury bonds continue to break, meaning higher interest rates, higher oil, that's going to bring in inflation. So here's the other thing too, is as interest rates go up, the cost of carry goes up. Now, I don't know if any of you are familiar with the term cost of carry. All commodities, once they leave, say, like when corn leaves the farmer's land, when oil is pumped out of the ground and it starts to be transported and moved, whether it not be even before the refining process, any physical, gold mined and transported, whatever, once it is out of the ground or harvested, there is a cost of carry, okay? And usually you have to store stuff while you're in transport, no matter what. There's an interest rate for that because you are paying forward. So when they move, they don't pay right away. So you're charged X cost for the delivery or the holding, but there's also an interest rate. It's finance. So you have to pay X amount, and as you pay that, any unpaid balances, there's an interest rate. Obviously, you understand how credit works, but it's a credit-based system for how you move commodities, because you couldn't just be exchanging cash every single time or making transactions. So they do it in that fashion. So the cost of carry variable now is going to go up. So any excess oil or food sitting anywhere that is either in transit or being held before its delivery date, the cost of that is going up. Now, obviously, if that cost goes up, who does that impact? That impacts the consumer. So that will hit you at the food price, at the food counter. It'll hit you at the gas pump trying to get to the food counter. It's going to impact you refinancing. If you did not refinance your homes over the past, you had the best chances ever up until November of last year. If you actually, basically, it was when COVID hit. If you didn't refinance between the spring and the fall of 2020, you are probably not going to see those rates again. The only thing that would change things is if all of a sudden Biden says, you know what, we're going to start pumping oil again. We're going to open up the pipeline. We got to do this slower. We have to actually think about how we make a transition from oil instead of just cutting oil and destroying jobs. That's what they have to do. That smart thing would do is to transition away from oil, which is what we've been doing slowly. That's why oil is going down in price, and it's been keeping inflation at bay. But see, remember, your economists, they always say we need to maintain inflation. You know why you need to maintain inflation? Because that's an economist's view of how things are supposed to be. Think about it. Do you think you should pay more for an apple every year from moving forward, or anything that you buy, just because time goes by? No, that's the most ridiculous concept in the world. But we're not even going to get into why economists have that, because it's more political than anything. So it's about trying to break the free market. So it puts an artificial forced inflational strain on the markets. It's done by design. So as these things all add up, so right now we basically have a war in the free market system that is pushing and driving shortages and also higher pricing. This is not a political view. This is just math of how things work. It's the dynamics of how markets move, how supply chains are interrupted, and how currencies are impacted by it. So as we are talking right now, we're getting a nice little rally here in the Euro-US dollar. So we talked about a bunch of trading signals that are forming today. We also got you the link here for tomorrow's webinar. Remember, tomorrow at 10 o'clock. It's now 4 minutes after 10. So this time tomorrow, 24 hours from now, we will be having this webinar. All right, we got some questions here. Hi, I'm new to trading. I'm just tumble on your live. Oh, nice to meet you. So this is one ton gaming. Nice to meet you, guy. You are new to trading. Cool. So keep following our videos. If you got any questions, you just go ahead. Don't be afraid to ask. Doesn't matter if you're a newbie or not. That's what we're here for. And also go to, if you haven't already, subscribe to our Twitch or YouTube channel so you know when our videos are coming out. And tomorrow especially, we got the live interactive Forex strategies webinar at 10 a.m., which is going to be on YouTube, Twitch, Mob Crush, also on Tumblr and what have you. It will be pretty good. It's going to be a highly interactive video webinar because we have, hopefully, if everyone shows up, we're going to have over 200 people online for the chat. Okay, Lolly, let's see. Sorry for being off topic, but you're thinking you look at, yeah, US dollar gold? Absolutely. For sure. All right, this is for Law-E on YouTube. All right, this one's for you. Let me pull up the US dollar XAU chart. Okay, so XAU, US dollar. All right. Okay, we got the daily here. Let's go to the weekly first. Okay, so what do we have here with the gold chart? You know, it's kind of funny. I don't know if you are catching the beginning part of the webinar. Before we have our 10 a.m. broadcast on our networks and streaming out at 9:40 Central Standard Time, I will be on tfnn.com, and the guys that run that show, we talk about the oil numbers and the currency markets because they all come out right around that time. And also, they're a big gold guy, especially the one guy. Gold is his specialty, so we always talk about that interrate relationship because the gold and the yen actually have a big relationship. So you wanted me to pull up the chart, and here it is. We got the gold market in a little bit of a retracement. Okay, so why is gold suppressed? Why is it having such a hard time lately? Well, one of the reasons is what we were talking about earlier. If you guys have been listening, when I talk about the 30-year Treasury bond and interest rates are a function of currency pricing. They're also a form of also a valuation for gold also. They do have an impact. Why is that? Because there's gold storage. It costs money to store gold. There's an interest rate factor in the cost of carry, in the production of gold, and putting it into supply, and then there's also a cost to carry of supply also, just maintaining. It's like I always tell people, I look at gold and Bitcoin as the same thing. I think that all the money in gold is through gold stocks, equipment that's used in mining. As I always say, it's like the Levi's model. It's like the miner 49ers. The money is not in the gold rush or in the gold. It's in the picks and axes, the genes, and everything that it takes for the people to produce the gold, move the gold, and maintain the gold. That's where the money's really at, because gold isn't going anywhere. That's where all your risk is. But the other things, they're not going anywhere. There's no risk in that. I mean, there's obviously a risk in mining that you run out of gold to mine and things like that. But in general, in the main focus of things, same thing with Bitcoin mining. Like, where's the money? Well, in the technology, selling that right off the bat. Those companies, anyone that makes the machines and the hardware and for those operations, there's money in that right there. Also in the power, anywhere you're selling power to where they're mining, that's a big thing too. So that's where the money is, or at least that's where you are guaranteed to have opportunities and not have to worry about the pricing. So enough of that. Where's gold going? Well, it's really sideways right here, that's for sure, huh? We don't have anything to go on here except for this. Lower move lows, lower move highs. That's the way we've been trending. As far as today so far, we are lower on the day. We bounced all the way back. So what I would do is key off of this. So this is currency too. If you look at it, the US dollar gold, that is a cross. It's just a physical versus the dollar. All right, so $1,855 here. I would say this is your upward breakout level. Let's just go with trend dynamics. All right, this is for you, Lai, and anyone else that's paying attention. Remember, the trend is always your friend. This market made a high here and made a low here. It made a lower move high-ish around here, lower move low here, lower move high. Right now we're looking for a lower move low. The trend is your friend. So we are looking for a breakout to the upside here. This would take us off the bearish trend, or we are looking for a test of 1784 and meaning going lower. Especially with the price of oil going up too, what does that do to the price of mining? That price of mining goes up. So that means that mining gold becomes more expensive, it becomes more restrictive. So until supply starts to impact supply, which might lift prices again, I think you're going to see a suppressed value in gold, because those that truly hold and produce, they don't want to hold it. They want to get rid of it. Their whole point is to find it and sell it, or mine it, mine it and produce it and sell it, or drill it and, what have you. If they can't do that, then all of a sudden it changes everything. So right now, lower move lows, lower move highs, the trend is your friend. Let's look at the hourly. Okay, so on the hourly short term here, I would say maybe for the next couple hours for the rest of the trading day, sideways, maybe even a little bit higher. I think you're going to have problems here around this 1830 level. You might have a choppy range trade between 1820 and 1830, but if we start to head south again, especially if we run out of gas here, this might be a good area to sell should we get up into that area. I'm looking more of a test of support than for a rally. So if that's kind of clear to you, especially with dollar strength, if like I said, if we can see a continuation of the trend in interest rates, where 30-year continues to press lows tomorrow, oil continues to press highs tomorrow, especially with those oil numbers coming out, well, we might see this going down. Now here, what's interesting? Since we have the gold, you're a gold guy, you want to know about the direction of gold. Let's also look at the yen chart. Let's go back to this one. So let's go JPY USD. Look at this. Instead of doing US dollar JPY, which is how we normally look at the currency, let's look at it as we did the gold price, okay? JPY USD. Looks very similar, doesn't it? Remember when I said there's a relationship between the yen and gold? The yen made a lower move low, meaning a higher move high, because if you go to US dollar JPY, this is the way we're used to looking at it. See, it's the inverse of gold. Now, you did XAU USD. If you go USD, XAU. Oh, wait, we can't do that. I'm sorry, we have to go, back to this. US dollar, XAU. Oops, what am I doing? XAU, sorry, US dollar. All right, so let's blow this up so this looks kind of clear to you. All right, so if we just go from the beginning of 2021 and we look at where we're at right now with this chart right here, now let's go back to the JPY USD. Look at that. Identical practically. I mean, not completely identical, but the waves, it's topped out here at the beginning of 2021, had a harsh break, then it had a nice little bounce, established a lower move high, and then boom, it fell out right here. So let's look at the dates here. So this is February 5th is where it bottomed right there. XAU USD. And this bottomed on February the 4th. So you can say, is the dog wagging the tail, or is the tail wagging the dog on any given day? Who knows, okay? But it's interesting right now, if the US dollar yen, or excuse me, the yen over the dollar is making new lows, this one's bounced back. I would say that you should probably be leaning on the short side of this one, because as long as the US dollar, or excuse me, the yen continues to be in its free fall versus the dollar, you're probably going to be hard pressed to get a big rally in gold. So does that help you out, Law? I hope it did. I hope you gained something out of that, and especially all the rest of you. Remember, I think one of you guys, Captain Will, you said, do you show the technical indicator you use? Well, I just, as you see, I use the markets to figure out my pricing and direction. So yes, I do show you the indicators that I use. And as you can see, the yen, US dollar yen, is also a good indicator for the dollar. That's why I mentioned the show that I'm on Wednesdays, because the head guy from TFNN.com, Tom O'Brien, he has a gold report, so not to give him just a plug today, but I am, and those guys are great, and we talk about these things. That's why he brings me on the show to explain to other people why we have this relationship with the yen and gold. So just like I always say, if you want to know what the market, just like the question Captain Will, a lot of people ask me, and these are veteran to brand new traders, they say, what is your favorite indicator? What do you use what is your best way to indicate which way the markets are going? And I always say the same thing. I'm like, I always look at the market. The market and the markets are the best indicators of market direction. It's price action. All right, we got a new question here from Kiki Boo Bear. Okay, nice name, Kiki Boo Bear. Also new here. Wasn't sure when to ask. Any thoughts on IG Forex platform off topic? Actually, that is not off topic. It's a Forex question. IG, absolutely. If you go to, let me show you this real quick. If you go to our YouTube channel, Forex Trading Unlocked, you're going to get this. Okay, this is our screen here for Forex Trading Unlocked. And then as you go down here, featured channels, the Nadex, we do work with them. The Nadex is owned by IG. IG is, there's only a few platforms that you can use in the United States to trade the markets. So we endorse FX, or not FXCM, excuse me, Forex.com. They are based out of, that's Gain Capital, which is now actually FC Stone. Actually took them over. So IG is one of the only character. I don't know if you're in the U.S. or not. You can, if you're as a U.S. citizen, you can only trade through Forex.com, IG, or Owanda. If you're not going to trade with Forex.com, which is now International FC Stone, which is originally a futures FCM. I remember them from the trading floor days. IG is a very good platform. I happen to be the ones that own the Nadex, which are binary options. It's a binaries options exchange. And if you are FX traders and if you do trade binary options globally, I highly suggest that you stop, and if you're going to trade binary options, you only trade the Nadex options or the CBOE binary options, because one, they're regulated, and two, you get the real pricing and real deal. You do not get the spreads are very bad with other platforms, but IG, as far as Forex pricing and solid company, absolutely. I deal, like I said, with the Nadex, which is a company they own. So as far as FX, in fact, if you go on my YouTube channel, Forex Trading Unlocked, we have a whole thing here for it's the Nadex. So we have a playlist. So if you pull up this Nadex, you pull up the full playlist, and you can sort them and see all of the different webinars that I've done for the Nadex exchange, which, like I said, once again, is owned by IG. So yeah, I do endorse them. However, I don't have a partnership relationship with them like I do with Forex.com. But as far as a good competitor and what have you, I have to say, yeah, I endorse them for sure. I would say I don't have anything bad to say about them. As far as Owanda, globally, they're very, very big. I am not a fan of them because of issues they've had over the past, and I'm not really happy with a lot of how they treat their customers, especially when the markets are really flying all over the place. But they are one of the only deals in town if you are a U.S. Citizen. Now, Kiki Boo Bear, I don't know if you're outside of the U.S., then absolutely stick with IG or Forex.com. Please do not go with any other carrier. You're less likely to get good latency for one, which is a big deal. Your spreads will be wider. Don't be fooled by them giving you better margin deals and better leverage on your the different size of positions that you can have. So cool. You're welcome, Kiki Boo Bear. And please, if you haven't already, subscribe to our YouTube channel and our Twitch channel, and definitely follow us, whenever you got time on forex-trading-unlock.com. And any questions you got, just spit them out while you're on the chat here. And even when we stream, there's times where we stream out replays of videos. and we check our chat room. Sometimes we're around while we're doing work and it's playing, and we will interact with you. And then there's other times where we will just read back on it, and we will bring them up in our next videos or where they are pertinent. So let's see, we have any other questions on YouTube or Twitch? It doesn't look like, or Tumblr, no. All right, you guys have been great so far. We appreciate this interaction today. So that's okay. So we got a nice little lesson here on the gold and the yen. In fact, for all you guys that are watching here today, when we talk tomorrow, I'm going to make a special note about that, about doing the gold yen cross trade. This will be a good discussion where other traders that are veteran traders from the gold markets and the commodity markets and even the yen, I think from the list there's definitely some old CME currency traders that are going to hopefully be chiming in and giving us a little bit of commentary. You might have some jokes. Every once in a while I get some of the trading floor guys, and they usually like to make a couple of comments that I usually get a couple laughs out of some people. So, but that's all fun and games, and we're all about that here, so especially with our old buddies from the floor. All right, so let's see. Let's go and look at what's going on with the Euro US dollar right now. So like I said today, this turnaround Tuesday still continues to go on. The US dollar is moving in a nice way. Oh, you know what we never did? We never looked at the dollar index chart. Can you believe that? How did we forget that? All right, so we have here February the 15th. This was yesterday's action, as you can see. Now today it actually made a little bit a lower move low, and now it is higher on the day due to what's going on with most of the currencies except for the pound. Remember that this market has been making higher move highs and higher move lows. It has not taken out this low right here that it made back on January the 22nd. Until it does, the trend is your friend. Remember, overall, the dollar is a bear. But I think neutral to higher is going to be the game plan. Now, as far as rallying significantly, I would say as long as, remember, the British pound, US dollar, as long as this raging bull continues, because of the fact that it has such a weight in the dollar index, you're not going to be able to see the dollar index carry you in the direction of where you're going. So let's do a quick lap around the world and see what's going on, and see if we get any other questions. All right, so we're looking at the pound US dollar coming off its higher move highs once again. If you're looking to be an aggressive short, I would say use this $1.39 half high as your risk level, a couple pips above it. Because if the market gets above there, I mean, this is a grind. You know, just like you don't want to try and catch a falling knife, you don't want to try and get in front of a one-way freight train to the upside, you know. And wait for a signal. We don't have a valid sell signal yet. When we do, now here's another thing. They don't always work. If you read the book, High Probable Japanese Candlestick Patterns, which I told you about, they don't always work. We had a sell signal here. We had a sell signal right here. And let's see, where else did we have one? We had one also right here. Okay, so 1, 2, 3 sell signals that did not work. Now, typically, when this came into play, this first one, by the ruling of how I usually trade these signals and use those, like Captain Will, you want to know what's my indicator? My indicator is usually these patterns. When these things came in here, this one you were selling it in the hole right off the bat, never really had much ground to work with. This one here, pretty much the same thing, it was a grind. However, if you follow the rules that are in my book, there are times when you do not take the signal. And one of the reasons is the oil trade. Remember how I've been talking about oil and interest rates? Now, a lot of people are like, why does he always bring this into the mix? Well, all the experienced guys love it because they're like, this is really all interrelated. When the oil market was railing like it was, and knowing that on January the 20th, that there was going to be executive orders that would already start to mess with the oil industry because that was the only thing that was promised, and it was delivered, that's where these signals failed. So when this came in front of this, I knew the inauguration was coming, did not take the trade. When this came in also, right after the inauguration, did not take the trade. When this one came in, did not take the trade. Right now, to be quite honest with you, I don't care what sell signal there is for the British pound US dollar moving forward. As long as oil is going higher, the only signal I will use for the British pound US dollar is a buy signal, meaning looking for a break, waiting for a sell-off, and then waiting for a buy signal, especially if oil prices remain firm to higher. So that is the only way I would trade the British pound US dollar. As far as being a bear right now, I think you have way too many influences that are going to override you. So I don't care if the euro and the Swiss and the yen all collapse against the dollar. Unless you see a collapse in oil prices and a change in the posturing of oil, do not jump in front of this freight train. You're going to get chopped up. You're going to see corrections no matter what to the downside, but they are going to turn on your face so fast. And I would look for a lot of binary and futures options spreads to really start to light up. I would think that you can make a nice monthly income on credit spreads on any pound US dollar correction now for probably the next 6 months, 6 to 24 months at least, maybe even upwards of 36 months. You know, I would say until basically the 2024 election, you can look to be a bull for oil, a bear for interest rates, and a bull for the pound US dollar. Now that, like I said, the pound is the second biggest weight in the dollar index, so even if the dollar index rises, it will not rise that strong because of the pound. You get a sell-off in the pound, you'll see the dollar index pop like there's probably, you know, you'll be like, now what's going on? Because you'll see all of a sudden a reaction from that weight on the dollar index. But that remains to be seen. So remember, these things don't always work. If you read the book, High Probable Japanese Candlestick Patterns, we have a whole discussion on money management and how to manage these trades. And then you would see where if you pay attention to certain things like that, that's when you get off the table. Now, where we didn't not follow the signals was in the euro US dollar, where we had this bearish engulfing line back here at the beginning of January. Do we care about oil prices when it comes to the euro? Absolutely not. Do we care about the US president when it comes to the EU? Absolutely not. So this is a free-flowing currency. That's why no matter what oil does, the interest rate equation is definitely in play for the euro without a doubt. And a little bit with the pound too, but the oil outweighs the interest rates when it comes to the pound. When it comes to the euro, oil is not an issue except for the fact that rising oil prices screw the EU because the EU doesn't have oil. And now that the UK is no longer part of the EU, they will get zero breaks on oil, meaning discounted, volume buys. That's off the table now. Big difference now. Post-Brexit, they're allies, but they are now going to be competitors and also have edges that they have to work on people, So, that being said, we have the euro back trending lower right now, coming off its higher move highs. We'll see how the follow-through is tomorrow. I think tomorrow with the oil numbers, that's going to be the big thing to watch out for, and especially it'll be at this time tomorrow when we're talking during our webinar, the Forex trading strategies live webinar that we will be doing at 10 a.m. And it'll be for about an hour, from about 10 to 11 o'clock tomorrow that we'll be doing this. So for any of you guys that have time tomorrow, please, all you got to do is go to our YouTube channel. We'll be streaming it, or on Twitch. If you're not already a subscriber, you can just go to our channels and watch it there. Or if you're a subscriber, you'll get the email link, so you'll have a little warning ahead of time. And then also remember, on the LinkedIn page, if you follow us on LinkedIn for Forex Trading Unlocked, you can find out our strategies